around chips, and so Nasdaq futures are a little bit weaker, but maybe some in the tech space get a boost from Applied Materials, the semis equipment company coming in with numbers that were better than expected overnight. So that's something we'll watch, the sort of interplay between those two dynamics around tech. LVMH is also in focus, an asset sale there. They're going to be selling Marc Jacobs, that label, to WHP Global. Marc Jacobs stays on as creative director at that affordable luxury label, out of interest. And Syensqo, which is a specialty chemicals business, will watch that company because some of their numbers beat estimates. Guy.
Okay, here we go. Time for the Friday session. Let's talk about some numbers. Let's show you what is going on. We're expecting a fairly weak opener this morning to be delivered by European equities. We are anticipating that we could be down by circa 0.9%, maybe a full percentage point on some of these markets this morning. The bond market is certainly unnerving the equity market this morning. You've seen that evidence out in Asia. That was the narrative there. You've seen Nasdaq futures in particular roll over stateside as well. So what are we going to get here in Europe? Europe didn't go up as much. Does it therefore go down as much? That is a question that maybe we need to ask ourselves this morning. The Danish market, I think, is closed today, so just be aware of that when you think about some of the big stocks that are going to be on the move as well. So the CAC's down by, let's call it 1%. The IBEX is down by a full 1%. The AEX in Amsterdam, let's see how tech trades there, down by 0.7%. The FTSE 100 is down by 0.6%. Overall, where does that take us? A stock 600 that is down by 0.8%, Tom. Sectors?
There's a bit of a tilt to the safety of telecoms. Currently, that is a sector that is up 0.4%. Just three sectors in positive territory, two now. Energy up 2%, of course, on the higher oil prices. So 0.4% gain coming through for telecoms. Energy up 0.2. Every other sector in negative territory. Biggest losses coming through for basic resources. That was one of the biggest losers across your sectors yesterday as well. Silver is under pressure. Copper. Gold as well. Basic resources currently down 2.7%. Banks also taking a hit, largely you would expect what's happening in the bond market. So banks as a sector down 1.6%. So basic resources, banks, real estate all facing some pretty significant selling right now. And just really one major sector in positive territory. That's telecoms. Healthcare getting a bit of lift, up 0.7% as well. Less than 0.1%, I should say. Telecoms up 0.2. But that's the picture. Basic resources really taking it on the nose right now alongside banks and real estate.
Yeah, it seems the dollar impact weighing on commodities, and as a result, some of those commodities are weaker, those prices are weaker, and so we see that sector underperform. Let's go to the gilt market, because this is interesting. We now have the market, you know, to what extent, this is an open question, to what extent are we pricing in Andy Burnham and the potential for him to become leader of the Labour Party? There are many hurdles to get through before we get to that point. But UK 10-year yields up by 11 basis points. That's a chunky number. It's double digit, but I will just throw in that this falls into a market that is already worried about inflation. Yeah. Italian BTP yields are up by 7. So do you take the difference between those two as some sort of premium for UK
is that what we're now? So the UK and the Italian bond markets are now not
the comparison that many would like, but this is a sort of yeah.
Well, the spread is there in terms of the UK 10-year at 5.1 versus BTP's at 3.84.
Yeah, so. But I think Anna's point stands is as much as the UK is up more than most this morning, but everything is up quite substantially. I think would be maybe the takeaway.
Yeah, absolutely. So still perhaps a long way to go. Timing's still unclear on the UK political narrative. We'll get more of that, more of an update on that as we go through the programme. This is a market, though, that is digesting. This is an equity market session that is digesting higher yields around the globe. Let's bring into the conversation Laurie Calvasino, RBC Capital Markets US Equity Strategy Head, who is here in London. Really nice to see you, Laurie. Thank you for being with us today. How resilient do you think the US equity story is to a higher yield environment? Give us your take.
So look, higher interest rates, whether it's Fed funds or 10-year yields, they tend to depress PE multiples. So that's something you have to take into account when you're thinking about a forecast. And I'll give you a sense of our latest numbers. Last week, we inched up our S&P 500 forecast, which is a 12-month number, not a December 31st number. We had been at 7,750. We took it up to 7,900. And the 7,900 was really derived from a valuation and earnings test, and we actually specifically bake into our PE calculation 4.5% on the 10-year yield. We've got a flat Fed, so we don't have any hikes or cuts coming, and then we've got 3.3% on inflation for CPI. And that's based on a stress test our economists did where they had it moving up much higher this year. This is all pegging off to 1Q27. And it's interesting. So the math we came up with was 79.29. That's based on earnings of 329, which is about a 5% haircut to consensus. And I apologize for all the math. I know it's early.
All right, just keeping up.
But what I would tell you is when I just take that PE assumption and I swap in 3.8 on inflation and I add a couple of hikes in and I take 10-year yields up to 5%, I lop off almost 2 points on the projected multiple. If I use the same earnings, I take the projected forecast for fair value from 7,900 down to around 7,400. Okay. Now, if I were to just take earnings down by 5% year over year instead of just taking the consensus down 5%, that would get you to 6,300. So that math really just goes to show you it is the earnings story in the U.S. that props the numbers up, that gives you a decent forecast. Interest rates, the pressure on PEs, that is a headwind to work through.
Okay, so it sounds as if you're saying, and correct me if I'm wrong, Laurie, that your stance on stocks, you're positive on US stocks, and it's resilient to some degree to a higher interest rate environment, certainly 4.5% 10-year, maybe even more. But it does rely on those earnings forecasts.
Exactly.
And what if those earnings are then threatened by a higher interest rate? Because we've got a lot of companies spending a lot of money, which is going to be costing them something.
Well, look, if you look at net debt over time, it has come down for the S&P 500. And what we also have seen in recent years is that companies have really pivoted more to long-term debt and away from variable and short-term debt. So I would argue that sort of the profitability of the S&P 500 is just less susceptible to moves in the 10-year yield than it has been in the past. The other thing that's important to understand about the resiliency of earnings, now when I mentioned that 329 number, that's a 1Q27 trailing 4Q consensus number. We basically went in and looked at the consensus, which has about 28% growth for AI-focused stocks, and we left that alone. And we went in and we looked at the market ex-AI, and we actually haircut those numbers, took the growth down from about 14% to 6%. So, and we're still coming up with a pretty decent number overall in terms of earnings growth for the S&P. So what I would tell you is there's just an inherent resilient bucket with that AI story that gets less caught up in some of these cyclical issues.
Okay. It's a lot to unpack.
It's a lot of math. I'm sorry.
Yeah, it's okay. I think I kept up.
There's more math in my meetings, so you're getting off easy.
Excellent. I'll stay here. How much of the Q1 earnings season, which was spectacular, was driven by what is a huge splurge by the hyperscalers and a deficit the government is running, which is off the scale for peacetime? We are running a massive deficit in the States, and I'm wondering what happens when that fiscal impulse starts to fade in the U.S. economy.
So, look, if you look at the industrial sector, it has been expensive forever. And I have been having conversations with U.S. equity investors, small, mid, and large, growth and value, all varieties. Everybody loves industrials in the U.S. Even my international clients love U.S. industrials. And I have been hearing about, the E is understated because the earnings power is massive because of all these things that Biden did. Infrastructure Act, the IRA, the horribly named IRA, the CHIPS Act, and now we've got the one big beautiful bill. So there has been one stimulus measure after another under both parties, and I have just had investors willing to overlook that in the industrial sector, despite my warnings that it's looking a bit overvalued. Now, what I would tell you, if you zoom back to sort of 1Q earnings, we have this one chart in our deck where, and this is simpler math, so this one will be a little bit easier.
Thank you.
But it's just a little grid, and we basically look since the beginning of April, before reporting season started, changes in 2026 earnings growth forecasts on the consensus, and then we look and also try to track sectors that have better growth projected than the S&P. It's not just tech. We've also got materials in there, and we've got energy in there, and energy is the one that's actually farthest out on the grid. So those are smaller in comparison, but you do have those commodity, inflation-driven sectors that are contributing, to this move a little bit as well.
Do you have a line? Do you have a line? Do people have a line in the sand? Your clients have a line in the sand? You get to 5% on the US 10-year.
5% is a number that just seems to spook people.
Yeah,
and
I don't know why, but
so we've looked into this in the past, and if you do a really long-term bond yield chart, and hopefully I'm not going to make my rate strategist mad,
No.
but if you just zoom out and look at a really long-term chart on 10-year yields, what you see is that if you go above 5%, my chart is no longer going to look like we're in sort of a stable interest rate environment that's kind of re-rated off the lows of post-GFC. It's going to be more of like a structurally rising rate environment. And I'll be honest, I'm just imagining this, but I think about all my analysts who cover stocks and have their Excel models, and they put in GDP assumptions and inflation assumptions, all their little macro assumptions. And I think they're going to not be too happy if we hit a 5% handle, right? Because they're going to have to dramatically change a lot of those assumptions. That's what I think is really going on.
5%. But you earlier said that 5% you'd be at 7.4, which is essentially where we are now on the S&P 500.
Yeah, if you look at the AI-related stocks, and when we look at tech specifically, we haven't done it for this AI basket exactly, but I do think this probably applies to the broader theme. You can look at the top 10 market cap names in the S&P, which is like Mag 7 plus. They really don't have balance sheets, right? If you look at net debt to cap, it's kind of like hovering around 0. So I do think there is some inherent inoculation against that interest rate move in this massive part of the market, from these interest rates moves. That's something that hits more of those kind of cyclical areas, in my opinion.
I'm going to stick to the simple math. 725 billion is the commitment at the upper end for this year in terms of the capex spend from the hyperscalers. If we get a sense that the hyperscalers are starting to slow that commitment down, how does that change your strategy, your view?
You're not going to be able to look at it at that issue just in isolation. And what I mean by that is if you look at the top 10 market cap names again in the S&P 500 and you look at their year-over-year capex growth rates, and we have this data for 4Q. We don't have it for 1Q yet. But we were essentially, sort of hitting peak rates of change, right? Maybe not exactly, but if you kind of zoom out on a 20, 30-year chart, you're looking pretty toppy. Well, we took that data, we looked at it for the S&P broadly, and we looked at it for the S&P X, those top 10 names. We looked at it for Russell 2000, Russell Midcap. Everything besides that top 10 market cap cohort in the S&P is in the very early stages of a capex recovery. So the one big beautiful bill, right, was designed to incent reshoring. I'm not an expert on the tax law, but my sense is that it didn't necessarily limit what you can spend the money on. I may be wrong on that. But what we are starting to see is those numbers creep up. So as I look at maybe, these extreme levels of capex spend in the top 10 market cap names, sure, I can make a case for hovering, slipping a little, slowing a little, just because the numbers are already so large. But what I'm really curious to see is if the rest of the market has a catch-up capex cycle. And you look at things like ISM manufacturing, now above 50 for several months in a row. ISM new orders have been perking up finally. That story has gotten completely lost with all the noise around the war, all the hype on AI and other things. I don't know if it's reshoring necessarily. It is the ISM new orders numbers are picking up. Our economists have said, there have been some tariff-related, issues baked in this. I don't know exactly what it is, but the indicators are healthy.
That's the really interesting question. How much of this stuff is coming in? Like how much are you having to import? And also, how much is the AI data center build out offsetting construction elsewhere? Is it are the two things balancing themselves out?
Right, and how far does the AI impulse go through the US economy is also something I find really interesting, Laurie. And you have a focus on small caps. You like them, but not as much as the big caps. Because I think how far the AI story gets into small caps tells us something really important about what this technology can deliver on productivity and the rest. So how far does that AI impulse go for you?
So if you think about, sort of the Russell 2000, it just doesn't have these same big chunky names that the S&P 500 has. I'm sure if I spent enough time with my small cap portfolio managers, they could tell me this story or that story benefits from AI. I don't tend to dig down into the single stock level as much anymore. But what we do know, I think it was Duke CFO survey did some work last year, and they were looking at, it wasn't small cap, large cap, but it was larger firms, smaller firms, and on some of the AI related questions, it basically showed the larger firms were right at an advantage. They were engaging more, they were doing more. I think what's interesting about the AI story right now, and this could eventually filter into small cap, is that if you put the tech companies aside, put the picks and shovels aside, look at the retailers, look at the banks, look at all, the industrial companies, all these people that could potentially use AI. they're starting to have some decent use cases. You know, a year and a half ago, we were just reading about chatbots, and I wanted to like throw my laptop out the window because it was just so annoying. I don't like chatbots. But, you know, we're starting to see, you know, retailers or apparel companies, you know, talk about design iteration in fashion. We're seeing, you know, some companies talk about specific numbers around efficiencies on things like distribution centers. Some of the market data providers, you know, who I know market data, right? But they're, you know, they're talking about the innovation process on their earnings calls as well. And you have to assume that some of that will filter, you know, into small caps as well. That's still a very early story. I don't think it's really adding much to the bottom line yet, but it's really interesting to read about, and I think it's really getting overlooked by this market.
Laura, nice to see you. I'm going to bring a calculator next time.
Okay.
Next time you come.
I can't.
We can put one on the screen.
I'll bring my marketing deck next time, and we can just
Really frightening.
A whiteboard and a...
Yeah.
But we get to talk to you and not a chatbot that represents you, so that's, you know,
I hope
excellent.
it stays that way.
Don't we all? Laurie, nice to see you. Thanks for stopping by. Really appreciate it. Laurie Calvasina, RBC Capital Markets US Equity Strategy Head. Quick look at the Core 6. Denmark is closed today, so we've taken over Nordisk Off and replaced it with Barclays. Banks are under a little bit of pressure, understandably, particularly UK banks, given what is happening in the gilt market this morning. Marc Jacobs is to be sold. Defence stocks, maybe that's a place to hide out this morning. It certainly looks like it. But ASML is the standout story to me this morning. AMAT, interesting overnight, but look at what is happening with tech this morning out of Asia into Europe, down and down hard. Let's get some more moves with Chloe Mellet.
Good morning, guys. Syensqo is having a pretty good day today. This is a specialty chemicals company that serves a wide range of end markets, including agriculture and automotive. And it's having a good day because of very strong results, with profit beating estimates. And it actually said that this quarter's profit would be the lowest of the rest of the year. So that means even further growth for that company, a very bright outlook because of strong volume, strong orders. And so we're seeing Syensqo up about 5% on the back of those strong earnings this morning. Moving on to the chip sector, which, as Guy was just mentioning, is seeing a little bit of weakness this morning. We had a very strong day yesterday on the back of Trump's visit to China, but then today it is feeling some of the impact of those weakness in equity markets across Asia, feeding through to that weakness here in Europe with ASML, ASM, all of those chip names in the red this morning. Moving on to Stellantis, which is in the green. It is up this morning slightly, up about 1%, after saying that it will be making Jeeps in China with Dongfeng. So this is a strengthening of an existing relationship which has been recently rekindled. And so this strengthening of ties with China as part of Stellantis' turnaround is seen as quite positive. And so we're up a little bit this morning. And finally, Dino, it's a supermarket chain, Dino Polska, is up very strongly this morning, about 14%. The margin beat expectations. Analysts are saying that competitive pressures have now eased, they've peaked. There's still the threat potentially of food inflation looming on the horizon, but for now the earnings are looking very strong, the results are strong, and therefore we are seeing that reflected in a very strong performance for that stock this morning.
Chloe, thank you. Chloe Melly with Stocks in Focus. We've got gilts in focus. So the gilt market, we are seeing yields up by 11 basis points on the 10-year. Last time I was comparing it to Italy, and it's 3 basis points more than Italy. If I'm less generous to the UK, it's around 5 basis points more than Germany.
Take a quick look at the pound, see what's happening there. What is sterling doing? Sterling had an advanced run yesterday at the Burnham story, which we didn't necessarily get from some of the other asset classes. And as you see, the British pound under a little bit of pressure, but the dollar is on the front foot this morning.
OK, coming up, a Bloomberg exclusive, as OpenAI's chief revenue officer says the firm's enterprise business has, quote, incredible momentum. That is next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemima Bersecci in Davos, Switzerland, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back. This is the opening trade. 20 past 8, 20 minutes into the European session. It is a feature of today's global environment that we have higher yields, and that is being factored into these markets. We see real estate on the back foot. Technology also a bit disappointed perhaps by what happened in China. So tech is down by 2%, basic resources down by 3%. Tom, a little bit of nervousness around the tech space as we look at NASDAQ futures to the downside.
Yeah, and on tech, let's get a bit more detail in terms of OpenAI and its aspirations, because that company's CFO, Sarah Fryer, says the company may raise more capital even after completing what she described as the largest private fundraising round ever, as the company races to secure computing power to meet surging AI demand.
The private markets have been incredibly generous to us, much bigger to tap than I think most people ever thought possible. I mean, $122 billion is literally the largest private fundraise ever. But there is something attractive about the public markets over time, too, because it's not just about equity, right? We want to be able to, over the long run, raise money across the whole spectrum. And the public markets are significantly bigger than the private markets.
I also caught up with the Chief Revenue Officer, Denise Dresser of OpenAI, who says the ChatGPT maker's enterprise business, which makes up 40% of its total revenue, now has, quote, incredible momentum.
As you use ChatGPT at home and you think about it for your personal life, then you want that same experience at work. And so today our enterprise business is 40% of our total revenue. It is growing. We expect it to be 50% by the end of the year, and there's incredible momentum.
And that 50-50 balance, you're comfortable with that, or you want it to be lopsided more towards enterprise?
I think we want to meet both consumers and enterprises, and the focus is, you know, especially right now, there's so much happening in the enterprise space. What we see is, I actually think we're at a tipping point in enterprise AI, because as these models advance so quickly and the innovation cycles continue to accelerate, there's this opportunity to bridge that innovation and the capability with how enterprises are thinking about adopting the capability. If you think about a couple of weeks ago, we launched GPT-5.5, which by all accounts is the most intelligent, the most intuitive, and also the most efficient model. But yet, when I'm here in Europe and actually across the globe, what I still hear from CEOs particularly is it's hard to keep up with the compounded innovation of what's happening now. And so I think the momentum, there's so much potential, really. There's kind of a vertical wall of demand in the enterprise that is left to be captured, and that's really exciting.
Does that momentum mean that you beat Anthropic on enterprise this year?
Well, what we're focused on right now is meeting the customers in where they are right now. And what I additionally hear from companies is just this transition between using AI as a productivity capability, and the real change now, Tom, is that what I hear from companies is they want to move beyond that. They want to move to bring intelligence into the complex workflows. This week, we announced a new company called the OpenAI Deployment Company. It was really designed to meet that moment, which is moving from productivity to true complex workflows requires a different operating model. So bringing a forward deployed engineer on site, working with a company so that you can understand their tools, their workflows, their systems, and then connect these models is really how you bring that true agentic capability into the enterprise. That's the real economic unlock, and we're excited about the OpenAI Deployment Company as a way to accelerate that.
What do you think investors and maybe some of your competitors miss in terms of the demand that you're seeing and your interaction with CIOs and CEOs? Is it the API use? Is it revenue per customer? Is it the contracts that you're signing around enterprise? What are investors and your competitors missing, do you think?
Well, I think what we hear from our customers, honestly, is they really love the breadth of our offering from OpenAI and the capability. For example, you can use the API, you can use ChatGPT. Codex is really having a moment right now, especially I think this is probably one thing that requires a little bit more emphasizing, but we've seen the weekly active users go from 2 million to 4 million in a matter of 30 days. And here in the UK and Germany, in fact, 9x and 10x respectively growth. 50% of that work in the UK is actually not coding, not the software development lifecycle, but knowledge work. And that is really the big opportunity, which is to transform the way the world works. And I think that's where we see so much momentum.
Does that pace of growth continue?
Yeah. Oh, I think it will accelerate. You know, the momentum around Codex right now is just accelerating through all regions. And this is the moment, actually, I think. And what I hear a lot from customers that work with us is they love, like I said, the breadth of the offering that we have, but also the way that we really lean in. We are a research and deployment company. The incredible research is on fire. The pace of acceleration can't be denied. But what we're also equally focused on is the deployment capability. And for us to bring the power of intelligence to everyone in the world and every person, we need to do both. We need to help bring the model, and we also need to help with the deployment and the adoption. And really what we hear from our customers is that is a differentiator for us in how we work with them.
OpenAI's Chief Revenue Officer, Denise Dresser, speaking to me about the demand for enterprise. It's interesting. There's a narrative out there that OpenAI has won the consumer, that Anthropic is winning on enterprise, and that Google is catching up on both fronts. And what OpenAI are really trying to make the point is enterprise is very important to them, and they are seeing that in the metrics. So 40% of the revenue now comes from enterprise. They see that going to 50% by the end of this year. They want to be serving both the consumer and the enterprise. Yeah. And interestingly, they talked a lot about agentic and that being a real pivot point in terms of the demand that comes through. There have been question marks about whether that demand was starting to slow. Yeah. They say actually that use of agentic is really starting to accelerate. And it ties back to what I think Laurie Calvasina was saying, which is that the markets, Laurie Calvasina was saying the market's underappreciating to what extent small caps now and smaller companies are starting to integrate and use AI and the potential upside that comes through from that.
If you want to monetize, you've got to go down that road, though, don't you? And that's the challenge at the moment. Now, Anthropic has kind of shown the way. So in some ways, they're playing catch up, aren't they?
They're trying to join that narrative, certainly, aren't they? Because that's the story. The story that the wider media has been telling has been around Anthropic in that particular part of the AI space. Coming up on the programme, we will digest what we've heard from China this week. President Trump leaves China after his highly anticipated summit with Xi Jinping. Was it a success? We will discuss with Charles Myers, Signum Global Advisors Chairman and Founder. That conversation is next. This is Bloomberg.
the problem we've got as an industry is when the government overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
This is the opening trade. We're 30 minutes into today's session. Happy Friday. European stocks across the benchmark are down 0.6%. Investors having to wrestle with arguably a lack of catalysts out of the China-US meetings. Bond sell-off is there absolutely front and centre as well. And in terms of the UK, the politics, of course, and that uncertainty. The FTSE 100 currently down 58 points. The DAX over in Germany dropping 181 points. And over in France, the CAC current off by 0.6%. Guy, what are you looking at?
Let's look at the details of what is happening here. Remember that you've got the Danish market out, so the numbers don't quite tally, but volume is actually a little higher this morning, which I think is interesting as the market starts to become a little nervous about what is happening in the bond market, as Tom says. But net, we are a little lower, and you can see that in terms of the figures that you've got there. Let's break it down and talk about some winners and losers and give you an idea of what is happening here. Let's talk about Polish grocers. You would have thought grocery stocks would be actually reasonably well behaved, but actually they're not. Dino Polska is up by 13%, big beat this morning. I do also wonder whether or not there's a kind of safety trade involved here, but maybe I'm stretching that a little bit too far. Anyway, that stock certainly on the move. SAP, some news out of the States overnight, maybe providing a tailwind for SAP. We're up by 1.8%, and oil stocks are higher, understandably, given what we're seeing elsewhere. But that yield story comes into play when it comes to some of the property stocks here in Europe. Unibail Rodamco Westfield, you can just about see it there, there's a lot of names, is down by 5.12% this morning. Yield plays are going to struggle as yields go higher. ASML is up, is down this morning. You would have thought actually overnight it might be up on the AMAT story, but it's not. It's down. We're down by 3.4%. Out of Asia, you've seen a lot of technology selling. That is translating into Europe. And UK banks, unsurprisingly, given the yield move we are seeing this morning, they are down. Barclays down by 2.2%.
Let's stick with that theme and get up to date on some of the other stories we're covering this morning. The cost of UK government debt jumps this morning as one of Keir Starmer's top rivals, Andy Burnham, prepares to run for Parliament, a process necessary for him to potentially topple the Prime Minister. The Manchester Mayor is the only senior UK politician to hold a net positive approval rating among voters, that is according to YouGov, and is the preferred candidate for many on the left of the Labour Party. LVMH is selling the Marc Jacobs brand to WHP Global. Jacobs, the label's founder, will continue as creative director for the affordable luxury label. The acquisition will push WHP Global's annual revenue to more than $9.5 billion. And the United Arab Emirates is building a new pipeline bypassing the Strait of Hormuz, with plans to have it in operation by 2027. According to the Emirates Media Office, the Abu Dhabi National Oil Company, that's ADNOC, will double its oil export capacity through the port of Fujairah once it completes the project. Guy.
Let's turn our attention to what has been happening kind of in a related story out in China there. President Donald Trump has wrapped up his visit to Beijing. Air Force One is currently on its way home. It was interesting in terms of what was delivered there, talking about maybe buying a little bit more American agricultural products, 200 Boeing aircraft. Not a lot, actually, in terms of what was anticipated. So expectations not maybe being delivered upon. Let's bring in Brendan Murray, who leads Bloomberg's global trade coverage. Let's talk about this summit. So the Americans like to famously contain their enemies, certainly in the sort of post-45 era. But it feels like China now wants to have a little bit of that playbook as well. It wants a volatility dampener on Trump. It wants to limit the oscillations we've seen in policy coming out. And that appeared to be the message that came out of this summit from the Chinese.
Yeah, exactly. Chinese state media came out with this phrase and called the new relationship a constructive, strategic, stable one. Doesn't sound like a title that was crafted by the China hawks in the Trump administration. I think what this reflects is that the relationship has been rebalanced in much more on the terms that China would like to see them. We will see how President Trump speaks to the media in the days to come about whether he sort of falls in line with this. But if you look at if you break it down this way, the personal relationship between the two leaders, you can both sides can claim a win there. President Xi scolded Trump on Taiwan, and President Trump got the sort of made-for-television pageantry that he likes. The substance, we still don't know. We still don't have a chips deal. We didn't really get anything on AI. There was very little discussion about critical minerals. We got the agriculture and the Boeing planes, but we got something less than half of what we thought the Boeing sales were going to be. And that, to a large degree, sounds to me like China saying, we'll buy 200, we'll see how it goes, and then we'll take it from there.
Okay, I was speculating at the beginning of the week, Brendan, or I was asking one of our correspondents in the region, are we going to get any more than headlines around soybeans? In the end, we didn't quite get a deal on more soybeans, did we? What's the agricultural story here?
Yeah, exactly. So soybeans, if you look at the soybean market yesterday, it fell pretty sharply, and I think that was the expectation in the marketplace that those were going to come up short. The beef export deal came through, but at the moment the U.S. has a severe shortage of beef, and do we really want to be shipping beef to China when the cost of ground beef is double what it was during Trump's first term? So there are some there might have been a bit of an own goal there domestically for President Trump to allow that beef arrangement to go forward, but all in all, the deliverables on the agricultural side weren't surprising, and if anything, came in less than expected.
Brendan, did we get anything on rare earths versus chips, which seem to be these kind of equally balanced pressure points from both sides?
We haven't heard anything officially from either side yet. That's not to say some of those might take longer. President Trump, as we all saw, brought a bunch of tech executives and industrialists along. So some of those still could be announced, but we didn't get anything immediately that either side could announce.
Brendan, thank you very much indeed. Bloomberg's trade czar, Brendan Murray, with the details and the context around that visit. And we get additional details, of course, from both the US and Chinese sides now that President Trump is in the air heading towards Alaska. For more analysis, Charles Mayers, chairman and founder of Signum Global Advisors, joins us now. We want to get into Iran as well with you, and maybe your take on what's happening with Venezuela when we think about the energy markets. But let's start on China and the US. Was this a win for China?
I think it was a win for both sides. You know, first, yes, China, as the host, probably got a little bit more of an advantage because President Trump did fly all the way to Beijing. Interestingly, President Trump's tone was a lot more deferential to President Xi than the other way around. I think there was a little bit of uncomfortability back in the U.S. and in Washington that Trump was so flat, so fawning, and so you know, again, complimentary, deferential, and Xi was much more kind of like, you know, serious. His demeanor was more typical and serious. However, I think that there were some positives out of this summit. First, the two sides are talking. Second, we've agreed to continue to de-escalate on trade. Third, China will commit to buy more U.S. agriculture. We'll find out how much. The big news, the new news, was China's going to buy U.S. oil. That was new. That has come out of this. That had not been agreed before. They're going to buy some more Boeing planes that you mentioned. And I would say, very importantly, and this happens in all of these bilateral summits, and the fact that we took 20 of our top CEOs over, there's a lot of commercial deals that are being done with the private sector. Last quick point, the two sides are going to keep talking. President Xi comes to Washington in September. This is all good progress.
Do we assume stability then? Through September?
Yes, absolutely. I think we'll continue to see the bilateral both steady and improving on issues around trade.
So this is a geopolitical risk that the markets can put to one side for now, US-China.
Absolutely. And I think the language around Taiwan, which would have been one of the bigger geopolitical concerns going in and coming out, was a little bit harsher, a little bit stronger and more threatening from China. But in no way did it suggest that anything is imminent or they're about to move on Taiwan. So I'd say on that big issue, it's status quo for now.
The Chinese want status quo. They want to get rid of the volatility that Trump sort of brings to the relationship. Do you think they succeeded in doing that in this trip? The language was all about trying to dampen down that volatility, trying to keep a stable relationship. You've now got this September meeting as well. Why would anything change between now and then? Is Trump being contained by China?
Well, partly. I think it's a little more nuanced than that. I would say that China, first and foremost, wants stability. They want stability around the world. They want stability in the relationship with the United States and directionally more positive developments on trade and other areas. And they also would like to see the war in Iran end, not anytime soon because they're the biggest winners. But ultimately, China is projecting, even through this bilateral meeting in Beijing, China's projecting to the world that they are the more stable and more reliable superpower, while the United States is at war in the Middle East and while we're still at war in Ukraine. So I think China's come out ahead of the summit looking much better and more stable. But the truth is the two sides and the overall bilateral is in a much better place than it's been in 20 years. The goal is to keep that going on trade, commercial deals, and geopolitically.
Why is China the biggest winner from the war in Iran?
They're the biggest winner because they can buy very heavily discounted Iranian oil. They buy 90% of Iran's oil. They can get it at a very big discount.
How do they get it?
There's other ways. It doesn't all come through the Strait of Hormuz. Secondly, the Chinese look like, again, a much more stable partner and a superpower. And thirdly, the United States is burning down or using up a lot more military hardware than we expected to fight this war in the Middle East, even taking some of that hardware out of the Indo-Pacific and moving it to the Gulf so that we can do what we think is going to happen, which is re-escalate in Iran. So on every level, China's the winner. And I think they ultimately would like the war to end at some point, but they're in no hurry. If they'd wanted the war to end, they could put enough pressure on Iran literally to get to the table and agree to reopen the strait today.
Charles, so you think that we will see a re-escalation now? So we for a while been thinking about this meeting coming up and thinking, well, maybe nothing very kinetic will happen in the run-up to it. But now the meeting is behind us. You do think then that we will have a return to military action? Will it be of a similar scale and scope as previously, or something much more contained?
So, so just the first part, the answer is our base case is the United States will have to re-escalate militarily. Secondly, no, it will not be small and contained. It is going to be a major military operation, which most people are underestimating. It'll be a combination of, and on timing, if I can, just quickly to say, if we can't get to a deal with Iran in the next 3 or 4 days, 5 days, President Trump will realize what he already knows, that Iran is just stalling in the negotiations. The only way to get to a deal is Iran has to agree to reopen the strait unconditionally. The nuclear stuff we're punting into the future. If that doesn't happen, I always say, if you think that Iran's going to reopen the strait unconditionally, we have a deal. That's very good news. We don't believe that. So the military option is going to be a much bigger campaign on two fronts. The United States and Israel take the Strait of Hormuz militarily through a combination of air, naval, and personnel. At the same time, shock and awe across Tehran on military, government, and civilian infrastructure, as well as a wave, another wave of assassinations of the leadership, including the new Ayatollah. So the objective in this, if we go back in the next 2 to 3 weeks, which is our base case, is to decapitate the regime and find a group of generals that are willing to come to the table, be pragmatic, and reopen the strait.
Okay, so, I mean, it seems as if, because last time we spoke was in March, things were still very live, and at the time there was a widely held view that this would not last very long because an off-ramp would be sought, and I think you shared that view, Charles, but things didn't quite play out that way, or it took a little bit longer for the kinetic activity to die down. Do you think there's a misunderstanding in Washington of the enemy here? Do you think people understand who they're up against and the motivations of that enemy as well?
Oh, absolutely. Look, in war, the biggest mistake you can make is to underestimate your opponent. And in this case, the United States, and Trump says this openly, really believed that Iran would capitulate in the first week. That obviously hasn't happened, and now we're 12 weeks into a war that I would argue the opponent, Iran, is even more powerful because they have a chokehold on the global oil market and therefore a chokehold on potentially on the global economy. This war has gone not to plan at all. It is off the rails. Trump needs a deal. Keep an eye on the 10-year yield. The 10-year yield's at 4.5. If it goes to 5, Trump will capitulate. He'll take any off-ramp, any language around reopening, even with a toll in the Strait of Hormuz. If price of oil goes to 120 and stays there for a week, he'll also capitulate.
Yeah. But I mean, last time you thought that 4.5 was key and that oil over 100 was key. Do you think, is Washington having to reevaluate these sort of red lines?
Yes, absolutely, because again, the war has gone so badly and we're so far in that we actually have new. Trump keeps moving the goalposts on everything from what the forcing mechanisms for him to get to a deal are, but also he keeps moving the goalposts on what an actual agreement looks like. At first it was no nukes at all. Now it's like, all right, we'll punt the nuclear discussion into the future. Now it's only about reopening the strait, and we'll maybe give you some language around toll, but we're not sure. So the war's gone really badly. Trump needs a deal. Our midterms are coming up. Price of gasoline's at $4.55. And so one good thing on this, and not that there are many good things in war, but we will not be having this conversation a month from now. We will either have, in the next 2 to 3 weeks, a deal, the diplomatic off-ramp remains, or we're going in such size and we'll decapitate the regime, and it's going to be huge, but it will be short. So we're kind of in a crossroads. I'd say the next 2 to 3 days are the most important in terms of direction of this war, off-ramp or kinetic.
I thought I was going to have a quiet weekend. Charles,
well, we're all going to be busy this weekend.
Again, Charles Myers, thank you very much indeed. Another busy weekend. How do we? Are we okay with this? Another busy weekend?
You look stressed, Guy.
Well, no, it's just kind
of... I think it's worse if you're in the region.
Yes, probably. No, that probably is true. Charles Myers, thank you very much indeed. Nice to see you. Coming up, pressure on gilts, the pound and the Prime Minister as speculation swirls around who will step up as challengers for the UK's top job. More on that next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back to the opening trade. Happy Friday. We are 49 minutes into today's session. European markets are down across the benchmark, down 0.8%. Here in the UK, the FTSE 100 has fallen 83 points, down 0.8% as well. Some heavier losses over in Germany. The DAX off by a full 1%. Yes, it is risk-off in this session, and the bond market sell-off is certainly a factor for investors, Anna.
Yeah, let's have a look at where we are on the bond market story, because this is not just a UK story, but the UK is certainly looking pretty punchy. In terms of the, where are we there? There's the 2-year yield, the 10-year yield, 30-year yield. You can see they're all heading higher, between 9 and 11 basis points across the curve. This comes amid the prospect that the Prime Minister will have to fend off rivals for the UK's top job. For more, let's bring in our UK correspondent, Lizzie Burden, who is in Downing Street. So, Lizzie, talk us through where we are now. Where do things stand for Keir Starmer?
Well, no formal challenges yet, Anna, but the bond market can see where this is headed. The Greater Manchester Mayor, Andy Burnham's already taken his first step towards toppling the Prime Minister. The MP for Makerfield, Josh Simons, announcing yesterday that he's going to stand down in order that Burnham has a chance at standing for his seat, a path back to Parliament. We've also had the Health Secretary, Wes Streeting, resigning from Cabinet. He has called on Starmer to facilitate a contest, and Starmer's former number 2, Angela Rayner, has said that she's been cleared of a tax probe and refused to rule out challenging the leader. Now, of all of them, Burnham is the man that Polymarket sees as having the highest chances replacing Starmer, but there are lots of hurdles in his way, Anna. First of all, he'd have to be approved by the National Executive Committee, even if Starmer doesn't stand in his way. Then he'd have to beat Reform at a by-election, and you can bet Reform will throw the kitchen sink at this, given Makerfield was the seat when they got their 6th highest vote share in 2024. On top of that, if Starmer can win the by-election and say, yes, I'm the man to fight Farage at the general, he'd have to get 81 Labour MPs to back him in the leadership contest. That'll be testing the patience of Labour MPs. And all of this will be testing the patience of the gilt market, the uncertainty that is about to unravel over the next few months.
Yeah, and that's the issue, isn't it, here, Lizzie? This is the next few months. Is UK policy effectively on pause here as we wait for Burnham to fight a by-election, and then we figure out how a Labour Party leadership challenge process unfolds? Like, how long are we in stasis for until we get some clarity on what is going to happen next?
Well, yeah, you hear it from officials in there, just the frustration that they're struggling to get on with government, with the distraction of this leadership contest brewing in the background. And for markets, it is a nightmare. Already you've seen gilts up sharply, yields up sharply at the open. Do need to put it into context of yesterday's drop in yields. The pound, as Anna says, down against both the dollar and the euro. It was already at a month low on cable. And all of this uncertainty only to hang over it, because the fear in markets is that you get somebody less fiscally prudent in there than Keir Starmer. That seems to be what you would get from Burnham, given his previous comments about not being in hock to the bond market. He's walked them back somewhat, but the market seemingly finding it difficult to forget.
Lizzie Burton, thank you very much indeed in Downing Street for us, of course. Let's bring in a markets perspective now as well with Bloomberg M Live strategist Adam Linton. Adam, we're seeing yields up and bonds selling off again, to Lizzie's point. Gilts in focus, of course, with energy, but also that political risk. How far does this go? Is this priced in now? Do we get to 6% at the back end of the gilt curve? What are you thinking about in terms of potential additional pressure on the gilt market, or whether or not things will settle down a bit?
Yeah, I mean, definitely yesterday when we spoke, there was an element of, why is cable still above 135? The moves in yields didn't look particularly disorderly. And I think at the time, that was there was a lot of uncertainty. We didn't know, is there going to be a leadership race? Who's going to be in it? What's their policy platform? And incrementally, we've got a little bit of further detail on that. We've now seen that Burnham has entered the fray. But, as Lizzie mentioned, there are a lot of hurdles to him be able to actually take position. And, we don't necessarily know exactly what his policy platform will be. So, yes, we've seen some increases in yields today. We've seen the pound down, but there's also bigger context. It's been an up week for global bond yields. We've seen hot inflation reports in the US and Japan. I mean, a relatively strong dollar environment. So if you look at the moves, I'd say they're not actually that disorderly at the moment. And I think there is an element of we still don't quite know exactly how this is going to play out. I mean, in conversations I've had on the desk is Andy Burnham actually going to be that left-leaning? I mean, he served as Gordon Brown. Yes, there's a comment about being hot to the bond market, but he's walked that back. So things may not actually be as bad as we were fearing at some stage. I mean, obviously, yes, things could potentially be rocky. He's going to have to win over the Labour grassroots, or any candidate is going to have to do that. So he may sound a bit more left-leaning. But for now, I'll say, if you look at the moves compared to other European benchmarks, they're not actually that extreme. So it could be more of a slow burn for UK assets.
Yes, so, and yeah, not as bad in the sense of yields going higher and borrowing costs going higher for the UK government. Bloomberg Economics, diving into some of the things he said in the past about what his policy platform would be, cutting the basic rate of income tax, but putting it up at the top end and introducing some kind of wealth tax. Also exempting defence spending from fiscal rules. I mean, we don't know. Who knows? We'll have to wait and see what he says. But it does that defence reference also takes me up. This is a world of rising yields, isn't it, at the moment? Because there are lots of governments around the world wrestling with how on earth you spend on these things, and you need to find the money from somewhere. How does this sit with the rising yield environment that we're seeing globally? Because there are other non-UK drivers.
Yeah, no, they're definitely, I mean, the big question at the moment is, isn't just a UK politics story. There's so much more going on in bond markets. We've seen that on display this week. And I think ultimately the real, release valve, if there is to be one for the market, is the Strait of Hormuz. And obviously, Trump's comments overnight, they're particularly concerning because the narrative we've been spinning is that markets, equity markets, they can keep going as long as there's progress towards a resolution, as long as there's no more kinetic action in the Middle East. That's obviously kind of been challenged, and we're kind of seeing that play out in the yield space. I mean, you've got 2 yields above 4, 10s above 4.5, and 30s above 5. I mean, is there a particular pain point for the US, at which point, Trump does make some pivot, but ultimately, will any pivot be successful? There's so much uncertainty about how this is going to play out. Making those sort of fiscal, commitments, as you were saying, is incredibly difficult in this environment, which again could actually potentially be good news for those concerned about how left-leaning a potential future Labour government could be, as ultimately the hands could ultimately be tied anyways.
Nice to see you. Thanks for stopping by. Have a great weekend. Looking forward to the weekend. Adam Linton from our Bloomberg M Live team. Busy weekend coming up. There is a Cannes Film Festival. There's a Eurovision final, which I know Tom's watching.
Did you know Guy bought a karaoke set especially for this?
I'm dressing up.
I think he's booked his trip to Austria, and that's where he's dressing up, aren't you?
Guy Johnson and Lederhosen.
He'll be there in Vienna, waving the flag.
Yeah, looking forward to it. I'm maybe going to watch the golf.
Shall I give you some Hearts Celtic stats?
Yeah, this is amazing.
This is amazing. Okay, this is tomorrow. Hearts have won the Scottish League 4 times. The last time, 1959, 1960.
Yep.
Celtic have won it 55 times.
Yes.
And this is the final tomorrow.
It's like Leicester winning, isn't it?
Yeah. It's going to be epic.
That one for our editor-in-chief.
Got to back Hearts.
Yes. It was a long time ago.
Yeah, that is it for the opening trade. The Pulse is coming up next. It's Friday, everybody. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasajja in the Lesotho Highlands, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
President Trump says his relationship with the Chinese president is very strong after a whirlwind trip to Beijing, but there are differences in their messaging on Iran. Gilts tumble. The pound heads for the worst week since 2024 as the UK heads for a drawn-out leadership battle. Plus, OpenAI says it may need to raise even more capital as it races to secure the compute power needed to meet surging demand for AI. So it's been quite a week. We have a lot of stories we need to get through. A lot of the focus, of course, will be on China, also inflation, and, of course, everything that's happening in the UK. Now, we've seen a little bit of a broad retreat, I guess, in bond markets, dragging stocks lower, putting a little bit of a halt to the artificial intelligence-fueled equity rally. I'm looking at the rate on the 10-year treasuries, continued its advance above 4.5%. The UK 10-year yield is above 5% as well. Sterling 133.65. And then we always look at Brent crude at the moment because of what's happening in the Strait of Hormuz, and you can see 107.73. Look, if you look at the markets map here in Europe, I think a lot of the focus has been in Asia with the summit between Presidents Xi and President Trump ending without any real eye-catching deals or a path to resume flows through the waterway, the Strait of Hormuz, and that's maybe also putting a little bit of a dampener. FTSE MIB down some 1.3%, as is the DAX, and then the FTSE here in the UK down 0.8%. So for the conversations that matter and the insights you need, let's get started.
makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, U.S. President Donald Trump is on his way back to the White House after a whirlwind trip to China for one of the most anticipated summits of the year. Well, President Trump had said he wanted the focus of the talks with Xi Jinping to be on trade, but few concrete deals were announced. Now, the leaders did discuss Iran, with China's foreign minister calling for the Strait of Hormuz to be reopened. In an interview, though, with Fox News, President Trump said the U.S. does not need the strait to be open at all.
We now produce more than if you combined Saudi Arabia and before the war, if you took Saudi Arabia, Russia, put them together, we're doing twice as much oil and gas as they are. Think of that. It's amazing.
Venezuela,
you know what that was?
We're two.
Called drill, baby drill, right?
Oh, well, I mean, when you really think about it, if they have a problem with Iran,
yeah,
and they need the strait more than we need it open,
we don't need it at all.
We don't need it at all.
We don't need it at all. Well, let's get straight to Minmin Lo, Bloomberg's China correspondent, who joins us now from Beijing. Minmin, so talk us through where the two leaders actually stand on the Iran war now.
Yeah, interestingly, if you look at the Chinese readout of what took place between Trump and Xi yesterday at the Great Hall of the People, the Strait of Hormuz and Iran did not appear in the Chinese readout at all. Of course, it got a lot more space in the U.S. version of the readout, with President Trump saying that China has agreed to play a bigger role in trying to bring about those peace negotiations, and that China is against the militarization of the Strait of Hormuz, that it's against the imposition of tolls in the area, and it doesn't agree that Iran should hold any nuclear weapons. We heard from the foreign ministry as well, saying that yes, they want to foster those dialogue, but again, it doesn't really offer anything new or specific in terms of what sort of leverage China is willing to use on Iran. The U.S. also says that China is willing to buy more oil and gas from the U.S., but lack of specifics in terms of volumes. And again, we asked this question to the foreign ministry earlier this afternoon at a press briefing, and the spokesperson sidestepped the question, simply saying that restoring peace is the most urgent matter right now.
Minmin, President Trump also says some fantastic trade deals have been done. Well, the U.S. trade representative told Bloomberg that he expects China to spend billions on American agriculture. So let's listen.
Coming out of this week, you heard the president today talk about the Boeings and hundreds of Boeings being purchased by China. We already have a soybean deal with them from our prior meetings of 25 million metric tons a year over the next 3 years, and we expect to also see an agreement for double-digit billion purchases of ags over the next 3 years per year. We want to focus on non-sensitive goods. We think we should be selling them. Things we think we should be buying from them, trying to facilitate trade in that area, and then from there, we'll be able to interact with our Chinese colleagues and negotiate with them.
Minmin, has President Trump secured some wins around trade?
Well, again, the specifics are a little bit lacking. We know that the U.S. has said they want to speed up the clearance of Chinese investments into the U.S. This is one potential win for China, because China has been looking to pour more capital in the U.S., but there has been a lot of scrutiny from CFIUS, for example, that has scuppered a number of Chinese deals. So that's potentially on the docket, but lack of specifics there. In terms of actual deal where we have real numbers, Boeing came through with a 200 jets deal, but that was smaller than anticipated. It's been previously reported that Boeing was eyeing a 500 jet deal, so we saw the stock fall on the back of that. No forward progress on soybean, because that was already agreed upon in Busan, and China is on track to fulfilling those 25 million metric ton of soybeans. But beef as well, we mentioned this yesterday, China approving the licenses of hundreds of these beef plants in the U.S. after allowing those licenses to lapse last year. And this is something that is quite crucial as well, although given the environment now with a sluggish consumption demand and Chinese meat producers also facing the issue of overcapacity, it remains to be seen what the actual trade volume is going to be. One major disappointment has been on the tech front, right, because there's been so much anticipation about Jensen Huang being the latest addition to that delegation, and Jamieson Greer said that tech curbs didn't really feature very heavily in the discussion between President Trump and Xi, and he said that it's going to be up to Beijing to decide whether or not to buy those H200 chips. So it doesn't seem like the two sides discussed the rolling back of tech curbs. Reuters mentioned that NVIDIA has gotten clearance to sell to some 10 Chinese tech companies, but we haven't gotten official confirmation on that front. Rare earths as well, Jamieson Greer said that he would give a passing grade to China when it comes to that, so suggesting that there is some level of satisfaction about the recovery in shipments of rare earths.
Min, thank you so much. Min Lo there in Beijing. Now, President Trump's comments, of course, on the Strait of Hormuz and everything else that Min was also really explaining are fueling inflation concerns. Shaukat Bunglawala, EMEA head of multi-asset solutions at Goldman Sachs Asset Management, joins me now. Shaukat, we've made it through Friday. It's just been a big week, like the last couple of months have been, because you have AI pulling in one direction, you have inflation concerns, and then there's an added layer of geopolitics. What do you think is driving the markets right now?
Sure. So firstly, great to be on, Francine. Thanks for having me. So I think that firstly, it's worth noting that notwithstanding what's now roughly about 10-week closure of the Strait of Hormuz, global growth's actually held up pretty well. U.S. growth is expected to come in at around 2% for the full year. We saw Q1 GDP at 2%, and in some ways that's related to the overall effect of an oil price increase, which has been considerable, not actually weighing in on growth as much as was presumably forecasted originally. Some of that's to do with, obviously, the high levels of inventory that we went in with before this particular conflict. Some of it's related to some of the physical shortages, perhaps not being able to be substituted. Jet fuels just being able to be dealt with by airlines cancelling low-value routes, which we've seen, of course, in Europe. But you've also seen this extraordinary amount of AI capex that's continuing to fuel the boom, and the fiscal policy tailwind as well. And that's resulted in global growth actually holding up reasonably well. But as you say, we are now seeing headline inflation pick up.
Yeah, do you worry about the U.S. or Europe more?
Europe, certainly. I think the overall picture in terms of the U.S., because it's got a steady labour market, overall non-farm payrolls are actually still positive. They're above expectations. Jobless claims are still pretty benign, and therefore the U.S. growth picture actually looks reasonable. Europe has got a bigger challenge. It's certainly more impacted by elevated energy prices. You've seen that with Eurozone PMIs coming down now below 50. German industrial production is surprised to the downside. And you're seeing headline inflation now through the flash estimates of around 3%. That's up from 2% at the beginning of the year. The UK, similarly, around 3.5%. And that introduces more of a policy dilemma.
Ashok, I mean, I was going to ask you about the policy dilemma because you could see quite a big divergence between what the Fed does and what the ECB. The ECB is caught between a rock and hard place, right? And they're saying it quite openly that they're not really sure what happens next.
That's fair. I think in the US, you could expect to see the Fed just stay on hold. It's got the luxury of being able to wait, given it's got a steady labour market backdrop and a reasonably resilient growth picture. Europe doesn't have that. Europe's growth in the first quarter was about 0.1% quarter on quarter. It is impacted that bit more by an energy supply shock. And you're seeing that through headline inflation. So the growth inflation mix in the UK introduces that dilemma. What we'd expect is that the ECB is going to have to increase rates. It may well expect that's going to have a downside impact on growth as well. So it may be a temporary increase, but they do have the benefit of starting from a low point. Right. Rates at 2%. It's got the ability to perhaps increase by a couple of 25 basis points hikes this year with a view of then easing next year. And that's what essentially the market's pricing.
So, Ashok, I mean, what's the danger then for the Bank of England that starts from much higher, right? Also given all of the volatility because of politics.
Yes, and the Bank of England certainly in a tough spot as well. The market's now priced in something like 3 hikes for the UK from its 3 3/4 rate. We think that's probably a little bit high, recognizing they are already in restrictive territory. It's certainly positive that the most recent prints on growth were above expectation. What we'd expect to see is the Bank of England stay on hold, wait to see more data come through, and then act accordingly. But the pricing of 3 hikes seems a little bit rich.
When you look at the Strait of Hormuz, I mean, this changes everything. It changes inflation dynamics, whether we have enough fuel for the summer. What's your base expectation? Like, as a strategist, do you have to change if the market changes, or do you just have a base case that it looks likely to get worse?
So our base case is that we're expecting constructive growth. That's one of the reasons, actually, we're still constructive on risk assets. Yeah. That does presuppose, of course, that the Strait of Hormuz does reopen.
Right.
Yes. To the extent that it doesn't, it could cause, of course, further inflation, further shifts in potential parts of policy rate, and an impact on economic growth. So the expectation of disinflationary trends re-emerging off the back end of essentially tariffs fading, this energy shock fading. We do have the benefit also of recognizing that wage inflation pressures are slowing. Shelter inflation should come down in the US as well. That should see the disinflationary trend re-emerge, and therefore the medium-term outlook is constructive. But it's worth bearing in mind that the baseline expectation of that is based on the Strait of Hormuz reopening reasonably soon.
What would you look at in AI?
So AI is interesting in the sense of course, the extraordinary contribution it's making to economic growth. In the US, we've now seen forecasts of $750 billion of spend. That's up 11% from the previous $660 billion. And it's, of course, much broader than just chips. It's this extraordinary industrial rollout with power infrastructure, with data centers, all of the energy that needs to support that huge level of electricity demand to sustain data centers. And that contributes around about 0.5% to GDP growth in the US. What's worth also bearing in mind with AI, though, beyond the AI capex, is the debate about margin pressure versus revenue growth. On the one side, you've got this huge level of capex that will result in expensive assets depreciating, so you have to see the level of revenue growth to justify that spend. Now, in the first quarter, we saw a continued acceleration of cloud revenue growth, which is positive, and that justifies some of that spend. And then secondly, you need to see a much wider adoption of AI. You're already seeing that, of course, play out, but that market is competitive as it relates to AI models. And whilst the path of monetization remains unclear, the clearest beneficiary of AI capex at the moment is semiconductors, and that's essentially what you're seeing play out in the markets.
Yeah, that's been very clear this week. Thank you so much for joining us. Shaukat Bunglawala, EMEA Head of Multi-Asset Solutions at Goldman Sachs Asset Management. Coming up, pressure on the UK Prime Minister, speculation about potential challengers for the UK's top job. Details next, and this is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary. We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The conversations that matter, the insights you need. This is a Pulse, and I'm Francie Lacqua here in London. Now, a potential challenger to the UK Prime Minister Keir Starmer's leadership has put pressure on UK gilts, but the contest is likely to be drawn out. Bloomberg opinion columnist Adrian Woolridge and Bloomberg's John Stepek are both here. So I couldn't wait, actually, to get you both on to try and talk about how British politics has changed. Now, you have some really funny pieces. I mean, funny depending on where you live. But, I mean, it's just a completely, different system, and now there's a real contest race to replace the Prime Minister.
Absolutely. The Labour government came in to replace the chaos of the Tory years, and it's replaced it with the chaos of the Labour years. I mean, it's quite an extraordinary transformation. A government with a big majority, a lot of goodwill of the people behind it to sort things out and produce chaos.
So, I mean, what I can't really 100% get to the bottom of it, I understand that Keir Starmer was a disappointment for many people, but is it a personality problem, or is it that people just want change?
I believe it's fundamentally a personality problem. I think that the British country is a centrist country. It wanted a centrist solution to its problems. It's elected a rather dull centrist politician to deliver them, and he failed to deliver. I don't think there's anything structural here. I think if you look at Canada, if you look at Australia, where you've got much better leaders, they are delivering on that agenda.
John, how long do you think, I mean, the Prime Minister is is it impossible for him to survive at this point?
I mean, I think so. I mean, obviously you can never say never. This is the problem. But the thing is, we've now got, so Andy Burnham has now got a pathway to becoming the leader. Yeah. Now, you can't take it for granted he'll definitely get elected. There was a strong showing for reform in the area where he's, trying to get elected. At the local elections, equally, he's very popular. So, chances are, he wouldn't go for it if he didn't think he had a good chance. And once he gets there, it's very clear that he will ignite a leadership election. And at that point, it seems, again, reasonably clear, although, again, Jeremy Corbyn got to power very unexpectedly in 2015. But it's likely he'll get there. And then at that point, yeah, it's kind of, Starmer's obviously toast. And even if he doesn't, it's like, well what does happen then? Because he's very much a lame duck. And one thing I would slightly take issue, I mean, I agree, I think there is a personality problem here, but also the party's very divided. So there's a kind of Corbynite end of the party, a very hard left end who are much closer to the Greens in some ways. And then there's a kind of Blairite, and there's always been that civil war.
But this is what took down the Tory party.
Oh, absolutely,
right?
Yeah, they were divided too.
And there was not. So what's taking down markets? So gilts are actually, tumbling because I guess they're worrying that the Manchester mayor, that's now, looking like he'll secure some kind of potential challenge to Keir Starmer. It's not only about political instability, it's actually what he'll do with money spent. So I spoke to him 10 days ago, and this is what he had to say about fiscal spending.
We need a 10-year approach to repairing public housing, transport, energy, crucially. That affects individual households, but businesses as well. The cost of energy in the UK is far too high. So a 10-year reform programme there. 10-year reform of the care and health system as well. That's what I think the UK needs, and I think it's better done on a collaborative basis, so that Britain is more of an investable proposition. We need to get rid of the turbulence from our politics, because that then doesn't give the markets confidence to invest.
I mean, it was only 2 weeks ago. It really feels like a lifetime. John, I guess there's just concern that he might increase public spending and with a gilt issuance. But is the next Prime Minister going to do that anyway? Out of the three that we have contenders?
I mean, to be fair, Streeting is sort of seen as the one who's least likely to do that. But equally, he's the one, I think it's fair to say, is least likely to win amongst the people who'll be voting for him. And it's pretty clear that, the FT did a piece the other day where they talked to various gilts traders, and Andy Burnham was very clearly the one they were most concerned about. And yeah, it's been a turbulent night for bonds overall because of Iran, etc., inflation, but definitely gilts have gone down a bit more than their peer group, and the pound obviously also kind of fell out of bed slightly whenever it heard that Burnham was going to have a crack at it. So clearly they are worried. And I think it's interesting. Look at that piece, the interview. At no point did they actually mention gilts. At no point did he explain how he was going to fix any of this. And when he's talking about collaboration and all of these kinds of things, he's basically talking about the public sector doing more and the private sector doing less. And that's obviously a kind of... slightly
it's just
covered up
more
way
left,
of,
right? I mean, we did mention
aye.
a little bit about public spending. What needs to happen, Adrian, now to have just a little bit more political stability? I mean, I thought naively that the fixed-term parliament meant that there was going to be stability, and it seems anything but.
One problem is it's going to take quite a long time for this to play itself out, and that means a lot of uncertainty for the markets, because Burnham has to win a by-election, and then when he gets into Parliament, he has to go through the whole leadership process, selection process. So it's not going to be resolved very rapidly. But I would counsel against the idea that the bond markets might have that Burnham is a wild man of the left. He made this very foolish comment about not being in hock to the bond markets. But he's a fairly sensible, pragmatic leftist. His mayorship of Manchester has been characterised by slow, pragmatic problem solving, much of it very popular, particularly with taking the buses into regional control, local control. He's a pragmatic politician, and one of the arguments presented against him by his own side is that he's a shapeshifter. He started out as a fairly loyal Blairite. He's cut his cloth according to his sail according to the wind, and that's actually not a bad thing to have in politics. So I wouldn't. He's not going to crash the markets or anything like that.
Adrian, I mean, you had a wonderful book actually looking at, what's been happening in politics around the world, and actually how you get back to that center that you were talking about. But is there a blueprint for, I guess politics is ruptured across Europe, here in the UK, very much so. How do you bring the two together?
I think there is a sort of blueprint, a sort of centrist blueprint. We've seen it in Australia. We've seen it in Canada. More energy production, more control of immigration, but also mix that with a pro-business sort of policies and a focus on bringing sort of order to the streets. I noticed that the mayor of San Francisco used to be a complete disaster, a complete mess. The new mayor of San Francisco has been sorting out the drug markets, closing the drug markets, dealing with the tent cities, getting some order into government. And his popularity rating is about 74%, I think, in the latest poll. So there is an agenda for a pragmatic problem-solving left with a little bit more public spending, but more focus on just making the lives of regular people better. And I think the fact that Burnham has been the mayor of Manchester, running a city, and actually doing the running, I think, rather than Boris Johnson, who sort of presided over the running of a city, actually bodes well. A lot of the problems that really upset people aren't anything to do with the bond market. They're to do with the fact there's litter strewn all over the place.
What does that, I mean, how do you explain, reform, has been doing well, but also in the polls, it's quite incredible from, where it was to where it's now. How do you explain that?
I mean, I think it's pretty simple. I think that, people have consistently voted for politicians who will tackle things and make them feel secure. Immigration is a massive issue in people's minds, and it's something that I think people in our position are often slightly squeamish about talking about, but that's something that people are worried about, and it's obviously the reason that reform are leading. Now, on the one hand, the good news for any incumbents is that immigration is falling. But that's because it went so high post-COVID. And I would be surprised if it doesn't continue to be an issue. So this idea of making people feel safer, and I think I absolutely agree with Adrian on cleaning up litter, taking kind of more a sense of control over one's borders would definitely help, and it would take some of the steam out of reform. Whether or not the current party can do that or do it convincingly is another matter. Because I think you're right about Burnham. My main question is, will he be able to corral the kind of left of the party tightly enough to make sure that they do cooperate? Because that has been the thing that, I mean, the rebellion in 2025 is what did for Starmer ultimately.
Totally.
Adrian, so you've published also this book, which is a great read, called Centrists of the World Unite. I mean, is this really a test case of the future of not only the UK, but of politics in Europe?
Oh, I think it is very much a test case for that, because the Labour Party still has a big majority and will continue to have a big majority till the next election. So it's the last chance that they really have to assert an agenda. And as I said, the problem with Starmer was that he didn't really lead the party. He just shifted from one thing to another. I don't think it was a problem with a centrist agenda. I don't think there's a great desire for a reform party agenda in this country, or for a Green Party agenda. I think there's a desire for somebody who can, clean up the mess and do things, and Starmer did that. However, if the rest of this Labour government is absorbed by internecine fighting, and if whoever succeeds Starmer doesn't get a grip on the party, then we will definitely go to a more radical direction.
Thank you both for joining us. Bloomberg opinion columnist Adrian Woolridge and John Stepek, who writes Bloomberg's Money Distilled newsletter. Coming up, well, pressure on gilts and the pound as speculation swirls about Keir Starmer's political future. We'll have a look at markets shortly. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump says his relationship with the Chinese president is very strong after a whirlwind trip to Beijing. There are differences, though, in their messaging on Iran. Gilts tumble. The pound heads for its worst week since 2024 as the UK heads for a drawn-out leadership battle. Plus, OpenAI says it may need to raise even more capital as it races to secure the compute power needed to meet surging demand for AI. So there's increasing speculation over Keir Starmer's future as the UK's Prime Minister. Let's bring in Lizzie Burden, who's outside Downing Street. Lizzie, there have been so many names mentioned as a possible challenger to the Prime Minister. Where does Andy Burnham rank, alongside the other candidates?
Well, at the moment, he's Polymarket's favourite, and according to YouGov, he's the only senior UK politician to poll positively among voters. But Francine, there are so many hurdles in his way between where he is right now as Mayor of Greater Manchester and that black door behind me. He's first of all got to be approved by the National Executive Committee of the Labour Party. Then he's got to win this by-election in Makerfield, and you can bet that Reform are going to throw the kitchen sink at it, because this was one of the seats where they did well at the 2024 general election. It was the 6th largest vote share for them at that point, in fact. And if Burnham wins this by-election, and he'll be able to say that I beat Reform then, I could beat Reform in a general election, he'd still have to get 81 Labour MPs to back him in a leadership, to get to a leadership contest, and then he'd have to fend off likely opponents like Angela Rayner, the former Deputy Prime Minister, and Wes Streeting, former Health Secretary. And so while all of this is dragging on, the uncertainty, as you say, Francine, likely to weigh on markets.
Yeah, and tell us about these markets. Could they actually, do they weigh on how people vote or on the political process?
It's hard to think that they wouldn't, given just how much turmoil we saw in markets in 2022 around Liz Truss. But at the moment, it's, even if we've seen gilts up sharply, including today, it's not stopping all of this leadership speculation. It's not stopping Burnham, Streeting and Rayner, although no one's yet put in a formal challenge. It seems like these dozens of Labour MPs who've called for Starmer to quit are more focused on the challenge that they'll be facing in the general election, in the sense that you've got opposition parties like Reform and the Greens offering more than you would perhaps be able to in government. That is the luxury of opposition, and having to care less about the bond market. But it is certainly the argument that Starmer and his Chancellor Rachel Reeves are making. You are going to plunge this country into chaos. If there is this uncertainty, it's going to push up bond yields, and in the end, who pays for that? The British voters, because it's a higher cost of living.
Lizzie, thanks so much. Lizzie Burden there at Downing Street. Now with us this morning, Tina Fordham, co-founder and geopolitical strategist at Fordham Global Insights. Tina, thank you for joining us. I mean, when you look at the UK, I guess there's a worry, and we were having also a great conversation with Adrian Woolridge. I mean, we don't really know if Andy Burnham is kind of centrist. I spoke to him about 10 days ago, and of course he says things need to change, but it doesn't mean that he's fiscally imprudent at the moment. So I don't know whether the markets are getting ahead of themselves or whether they're just worried that the process will be drawn on.
Well, I think markets are right to be worried, and they actually don't want to be trying to parse the positions of these various labor leaders who perhaps are not so well known. I mean, I'm in conversations every day with UK business leaders, and they're exhausted and frustrated. Our borrowing costs are too high. Our sort of bureaucratic burden is too heavy. And are any of these candidates going to fix it? Do they have the kind of urgency that is needed?
Yeah, so what do you think happens next? Again, does it need to be, I mean, is there any chance that Keir Starmer survives? Probably not.
Well, I mean, the knives are out for him. I wouldn't count him down yet, because in this case, right, the market does have a loaded gun, really pointed, and Labour are very sensitive to the idea of a Liz Truss moment. And so, the old James Carville saying about, I want to come back as the bond market, in this case, the gilts market, it really does give Keir Starmer something. Plus, there is just the inevitability of a slower summer, and the fact that, as Lizzie said, the steps to a leadership contest just necessarily mean procedurally that this will all take a while. And in the meantime, sterling and gilts are showing the strain.
Talk to me a little bit about what also this means. I mean, it's also in a very difficult geopolitical situation, right? So you had President Trump and Xi meeting in Beijing. I mean, if the UK is going through political turmoil and effectively Keir Starmer is a lame duck, is it more difficult for the UK to push for their interests in this kind of new geopolitical world?
Well, I think in geopolitics actually is where the Prime Minister has shown quite a steady hand and a lot of leadership, the convening power of Britain, the role that we have in NATO and working with Ukraine. But what you can also see is this kind of late-breaking realization as we get to the 10-year anniversary of Brexit next month of actually we should be closer to Europe. Actually, the special relationship hasn't helped us much in the UK. And you know, really that is a long time coming. This should have happened when this government had more political capital. And you know, look at how long it takes just to agree something on student exchanges, arguably the lowest hanging fruit.
Tina, talk to me a little bit about, you know, your main takeaway from this Xi-Trump summit. So it was kind of, you know, it was going to plan. They were quite friendly, but differences on Iran and Taiwan.
So for me, it's all about the power dynamic. And, you know, our advice to clients was that Xi Jinping would negotiate and would orchestrate this as though China holds the cards, and that's exactly what's happened. So Trump will be able to, you know, point to some successes, the orders for aircraft and perhaps some U.S. shale gas purchases. But, you know, the Chinese are very careful with their signaling. They bought as many Boeing as they bought of French jets, you know, so that's saying something. So there's just a number of these kinds of slights and messages all about showing that China's in pole position. And then that very stark warning about, you know, we can have good relations as long as you don't say boo about Taiwan. And Trump got very quiet.
I mean, how much does the U.S. need China to push things along to reopen the Strait of Hormuz? And did he get any of that behind closed doors?
Well, according to Trump, he doesn't need China, but of course he would like China. I mean, Trump would like to have something like the Gulf War coalition of the willing. It's not materializing. So, you know, China does not need to resolve what it regards as America's mistake in taking on this war without an exit plan or a strategy. You know, and if you listen to Republicans, I was in Washington 2 weeks ago, they say this was a jujitsu move against China's two cheap energy sources, Venezuela and Iran. Well, it's not really transpiring that way.
So what do you think happens next? And actually, how much does it? I mean, President Trump can say he doesn't need the strait to be, you know, reopened, but he also has midterms, and he needs oil prices and gasoline prices to go down.
Well, that's where, you know, the economists are scratching their heads about why a bigger energy shock hasn't landed. I still think that's probably coming. And of course, everyday Americans being so dependent upon, you know, gas prices at the pump really are feeling the pain. But if you contrast, you know, Trump's 35% approval ratings to Starmer's 1% approval ratings, you can see that Trump still has, you know, quite a bit of political capital. His core supporters are still there. It's hard to see how a diplomatic resolution emerges out of Iran. I think we're heading toward a kind of a frozen conflict with periodic episodes of threats and attacks. We've seen how that impacts the markets. Markets have decided they can live with this, right? They can live with a kind of a slow walk.
But yeah, can they live with it, or can they live with it thinking that actually at some point it'll be resolved? Because there was a lot of optimism in the markets.
Well, so the optimism, as we know, is fueled by AI, and, you know, the market kind of goes through various moods about this. I love, by the way, how we talk about markets as if there was a person with a mood. Yeah, you know, kind of anthropomorphized on them. I mean, the markets will care about the strait again when there is another threat. And at the moment, of course, those military assets are still concentrated there, which, of course, leaves Taiwan exposed, just going back to that point. Iran has worked out that being able to charge a toll in the Strait of Hormuz is a more effective weapon against the United States and the global economy than a nuclear deterrent ever was. So we've got a new source of uncertainty there. In the meantime, you can see plans for alternatives to the strait being discussed. They will, of course, take time, but I'm not hearing much from market participants who are worried. Government leaders, they're worried here, again, in Europe, Asia Pacific, where, you know, there's dependence.
Yeah, do we know how strong or how weak the new Iranian regime is?
What we know is that they are intact, and any sense that that the people would rise up, at least immediately. You know, people might rise up, but maybe in months or years to come, has been overturned. This regime is in charge. It is deeply institutionalized. It has, you know, many competent individuals, and I think that speculation about this leader or that leader, you know, this isn't a key man kind of a system, and that's something that Iran experts knew, but apparently not the war planners. There is a stronger presence, it seems, from the IRGC, the military wing, but they think they can outlast Trump, and I think they're right.
Tina, so the last couple of minutes, actually, SCMP is saying that President Putin will visit Beijing, and this is only days after, you know, the departure of President Trump. What can we expect from that relationship?
Well, Putin could really use a little bit of brotherly love in this friendship without limits that Russia has with China. You know, that having been around for a couple of decades, rumors really abound about Putin's political capital, but he has been really hurt by the internet ban inside Russia, because for all of the, you know, famous patience and tolerance of the Russian people, banning the internet, which was reportedly a reaction to Putin's own fears of assassination and kind of GPS targeting, has, you know, perhaps been the straw that breaks the camel's back. But Russia's very much the junior partner. And as we head into the kind of summer fighting period with Ukraine, he's going to be looking for support from China, and he'll probably get that, but highly conditional.
So interesting. Tina, thank you so much for joining us. Tina Fordham, co-founder and geopolitical strategist at Fordham Global Insights. Now, China's dominance in the supply of rare earths has been one of its key bargaining chips in global trade disputes. Bloomberg Originals has been looking at how the U.S. is working to reduce its reliance on Beijing for the critical raw materials. Here is a preview.
It doesn't look like much, but this is the prize for the rest of the world in trying to catch up with China.
We need rare earths.
China owns them, processes them, refines them, and sells them. The entire supply chain is built around Beijing.
No matter what you do, you're always kind of beholden to China.
Rare earths are really the backbone of modern technology.
China's the ballgame. They're 80 to 90% of production and processing of rare earths that go into all equipment around the world.
And China's shown it will use that dominance as geopolitical leverage.
The main use of rare earths are in these powerful, high-performance magnets.
China's capacity for magnets is vast compared to the rest of the world.
When Donald Trump returned to the White House in 2025 and rebooted the US-China trade war, China responded with export controls on rare earths that expose just how much Western manufacturing still depends on China's supply.
The automotive industry came out and not so quietly said, we are going to have to shut down factories if we cannot get these permanent magnets.
That shock set off a broader scramble to build a new supply chain from mine to magnet.
This is a story about not letting one country hold all the chips on what is a very important supply chain.
Well, and subscribers can watch that documentary in full right now and on, of course, the terminal on Bloomberg.com. It will be available later on Bloomberg Originals social media channels. Also, OpenAI says it may need more capital even after raising $122 billion in what it describes as the largest private fundraising round ever. This comes as the company races to secure the compute power needed to meet surging demand for AI. While speaking exclusively with Bloomberg, the chief financial officer, Sarah Fryer, said public markets could be an attractive option.
We're just talking about the euphoria in the market again. Anything related to compute, anything related to investment opportunities. How much do you still need to invest in compute of your own to keep the edge?
Yeah, we believe compute is a huge competitive advantage. We're going up a vertical wall of demand, as we've talked about, even just in the last 6 weeks, seeing the uptick of 5.5, our newest model, 5.5 Cyber. So everyone wants to talk to us about that model in particular. And then on the Codex side, we're seeing just incredible lift, over 4 million users now on Codex. That's up, I think it went from 3 million to 4 million in just 2 weeks. And so we need compute, and there's not a lot of compute in 2026. So we are looking out into future years and saying, what can we do to get that compute today?
How do you afford that compute?
So mostly our business model. So we have seen an incredible lift in our revenues to match just the demand that I'm talking about. On top of that, we have raised a lot of money, as you know, from an equity standpoint.
More than $120 billion. I mean, could you need more, though?
It will depend somewhat on matching the demand that we're seeing, the revenue that we'll create, and hence the cash flows, and then that gap to wanting to buy compute out into future years. So I'm not averse to raising more capital, although right now that $122 billion gives us a lot of optionality, and I think de-risks a lot of what we need to go do in the market at the moment.
So dare I ask, would you raise it in the private markets? We've just had reports that Anthropic is looking at slightly bigger valuation than yours at $900 billion and going out and raising $30 billion at least. Would you go to the private markets or would it be a public?
The private markets have been incredibly generous to us, much bigger to tap than I think most people ever thought possible. I mean, $122 billion is literally the largest private fundraise ever. But there is something attractive about the public markets over time, too, because it's not just about equity, right? We want to be able to, over the long run, raise money across the whole spectrum.
Sarah Fryer, their OpenAI's Chief Financial Officer, speaking exclusively with Caroline Hyde. Now, coming up, we'll be live at the Africa Chief Executive Forum in Rwanda, where we'll be joined by the Chief Executive of one of Africa's biggest banks. That's coming up next, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Africa's Ecobank has announced a deal with France's Proparco to mobilize more than $350 million over 3 years to help tackle growing food insecurity. It comes as the Iran war threatens even more food shortages due to rising fertilizer costs. Well, OpenAI CFO, of course, is who we were speaking to, and we'll have plenty more from Sarah Fryer. But now, let's go to our Jennifer Zabazaja, who's at the Africa Chief Executive Forum, taking place in the Rwandan capital, Kigali. Over to you, Jen.
Thanks so much, Fran. Yeah, as you were just mentioning there, EcoBank is the most geographically diverse bank on the continent. And standing by with me is Jeremy Awori, who is the CEO of EcoBank. Jeremy, thanks so much for being here. Fran was just talking about that announcement from earlier this week from the bank and Proparco. I wonder how much of that was in response to what we have seen over the past few months with the Iran war, agricultural investment.
Agricultural investment on the continent is critical. So we've been looking at this actually over the last 2 years. It's not something we started now. So we've got a very clear agriculture strategy. And we work with partners. So we work with Rabobank to develop that strategy because they're very strong in agriculture. And they're also quite well associated with Proparco. So with Proparco, we announced 300 million euros to focus on the agriculture value chain. And that's really around value addition, not just because we export too many raw materials and we don't add value. And then as a result, the continent loses out on that value. So we're investing in that value chain, value addition, you know, and also the gender lens as well to support women in agriculture.
So if that was in the works for a while, talk to us about what you have seen in terms of the trickle-down effects from the war, in terms of African finance, especially from where you sit.
We've obviously seen the impact in terms of the fuel prices. Yep. We've seen that coming through. But I think also what people don't see is that there's been an impact on fertilizer prices, right? So we've seen those go up 50, 60, 70%. We've obviously had supply disruptions, shipping insurance up. So what that has done is it's just led to inflation in many countries, or scarcity of some of the materials that are necessary in certain areas like agriculture. Importers have also suffered with increasing prices.
From a financial institution perspective, though, what is it that you're seeing that maybe concerns you at this point?
I mean, obviously, we're waiting to see how long this situation lasts. If it lasts a long time, it will have an impact on economic growth. It affects our clients because now their margins are under pressure, consumption is under pressure, so how much they sell is going to be a challenge. If FX rates start declining for some of the African markets, we could see changes even in interest rates to protect those, and also in response to inflation. That just puts pressure on companies in terms of their operating rhythm and their ability to, you know, to make profits.
Has that affected EcoBank at all at this point?
I mean, we're very diverse, like you said in the opening. So we have clients all over. So with us, we have clients who are net positive because they're oil exporters.
Sure.
And then we've got the others who are importers. So it's quite mixed, really, you know, and we watch and work with our clients on all sides.
Jeremy, I wanted to talk to you about some of the discussions that have been had over the past few days in Nairobi with France and Africa, also here in Kigali. There's been a lot of discussions about a common bloc, comparing it to maybe Europe in a certain sense. How much of that will depend on maybe moving away from dollar trade or keeping it still intact? How do you see that discussion panning out?
I think a big focus of the discussions is really around how Africa works together to leverage its scale. Working as 54 countries, each country may not be exciting enough unless you've got the big countries like Nigeria, South Africa, and Northern African countries. So financial integration is going to be important. Working together in local currencies is also going to be important. So, for example, if we can make payments for trade in local African currencies, that would help relieve the pressure on the dollar. We're also seeing trade with China, you know, being the core, our biggest trading partner. So we might see more trade and payments in Chinese yuan.
Do you see that increasing?
I think it will definitely increase over time because their level of trade is significant. So it's expensive for you to go for your local currency to dollar to renminbi, right, for making payments. Why not just settle directly? And that's something EcoBank is now working on, so that you can hold currency in yuan, and you can also make direct payments if you're purchasing imports from China.
Where does that leave the greenback, though, in terms of trade on the continent?
I think the greenback will still always continue to be the major currency. We'll see these others edging up. It will be difficult to tell how quickly. But I think one thing all these geopolitical events have shown is it's better to be diversified. So I think even central banks might diversify out their reserve currencies, you know, just to protect themselves from massive depreciation swings one way or the other, which they're not necessarily in control of.
Yeah, Jeremy, let's just finish on maybe mobilizing capital. That's also been a major theme over the past few days. What is it that's holding back some of the allocation of this capital? It seems like it is there, whether it's in dollar or renminbi. Where is it from an executive perspective? What's holding back the deployment of some of this capital?
So Africa has more than enough capital to take care of its needs. It has approximately $4 trillion. I think the problem is, and that comes from pension funds, insurance pools, investment funds, sovereign wealth funds, but it's kind of trapped in pockets. We don't see enough of that capital moving cross-border, other than maybe some of the big pension funds in South Africa, like PIC, who have invested across. So we need to see legislation change that allows those pension funds to invest in different types of assets on the continent. They can play a significant role in infrastructure because it's patient capital, but we need infrastructure projects that will give them a return. We need to see them investing in banks, because if they invest in bank capital, we can then multiply that out in terms of lending into the economy.
Do you see the involvement of France, like we saw earlier this week, potentially helping catalyze some of that?
Absolutely. I mean, there have been very good discussions in the Africa Forward conference where we were looking at very specific opportunities. You know, we as a bank committed $3 billion towards supporting trade in 3 years. We're trying to get very concrete things that we can do as companies, whether they're from France, working with African counterparts, value addition. You know, we talked about critical minerals, we talked about infrastructure, hotel industry. There's so many opportunities, but the focus was around execution and the bias to action.
We'll wait and see how those pan out. Jeremy Awori, EcoBank CEO, joining us here in Kigali at the Africa CEO Forum. Fran?
Jen, thank you so much. As ever, Jennifer Zabazaja there in Kigali. On Monday, we'll also be joined by Larry Aresta, the chief executive of Audemars Piguet, for an exclusive conversation. That's on the back of collaborations with Swatch, but just also a deep dive into the watch business. Don't miss that interview, 9:45 a.m. London time. Up next, it's Bloomberg Brief, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
On AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to, just from a historical lens, is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later on over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations, the players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Inflation angst, global stocks and bonds retreating as more data, and oil supply woes fuel concerns over price pressures. Turbulence at Westminster, gilts tumble as Prime Minister Starmer faces challengers. And It's a wrap. The Trump-Xi summit concludes with both leaders touting stronger ties. We're set up for a pretty turbulent day in markets. Let's get a check on markets around the world now, and with a lot of red across Asia already. Here's Alice French in Tokyo for the latest. Alice.
Good morning. Yes, as you say, we've had a down day here across Asia. The Nikkei having a bad day, partly on earnings disappointment. But as you say, we have had a lot of worries about inflation and oil prices really weighing on the benchmarks. You can see the Kospi down. Samsung, of course, one of those momentum AI names, also having a bad day. Now, you mentioned their bond yields, and they have been weighing on sentiment in the equity market too. We saw Japan's 30-year yield rising above 4%, really getting up there. Now, of course, this is part of a continuing trend, and we know that it's happening in the US and UK too, but really hurting sentiment here.
Absolutely, Alice. Thank you so much. Alice French there in Tokyo. Let's get to London now for a look at what's happening across Europe. Here's Louise Moon. Louise.
Morning, Ivana. Well, it's a similar story over here, but obviously with the added addition of the political turmoil. So gilt slumping, yields rising. As you see, this is being played out roughly across Europe on these wider concerns of inflation that we're seeing globally. But that political turmoil in the UK, that this potential leadership challenge for Starmer playing out in the currency, the pound weakening against the euro, and we're seeing similar moves in equities as well. So if you take a look at the FTSE 250 compared to the FTSE 100, this is the more domestically heavy equity market we're seeing here. It's up slightly, but, you know, underperforming the FTSE 100s. This is, as I say, these worries about potential leadership challenge and what that will mean for future fiscal spending.
Louise, thank you. Yes, all coming to a head today. And if we look at the picture in the United States, it also looks like that rally is going to get arrested in equities, at least, with futures pointing lower on the NASDAQ and the S&P 500. It would still be 7 weeks of gains, though, for the S&P 500 in spite of today's weakness. Now, if you look at why, look at the 10-year yield. We're above 454. Remember when we were just looking at 450 as a potential barrier? Well, we have crossed through that barrier now, and in fact, the 30-year yield is well above 5%. 507 it was hitting a little bit earlier on today. If we flip the board, we'll see why. Partially it's because of oil prices, right? We have New York crude almost at 105 a barrel, and Brent crude right back to above 109 a barrel. The dollar index as well gaining today above 99 on DXY, and that's partially thanks to weakness in sterling today. But lots going on in these markets. It is a Friday, and there is potentially a lot of de-risking happening. All right, let's get to some individual movers now. Chloe Melly is in London. Chloe.
Good morning, Bonnie. Figma is up very strongly this morning, about 10% in pre-market trading after posting better than expected results and raising its guidance. This is a design software company, and of course this is now easing those concerns around the AI disruption that had been really plaguing the software sectors. And so it seems that investors and analysts are thinking that Figma is able to really stand out amongst those software companies. Moving on to Microsoft, which is also in focus this morning after Bill Ackman's Pershing Square said that it will disclose a new position in Microsoft, and we're seeing a little bit of weakness on the back of that this morning. And finally, Applied Materials is also in focus today. We had very strong second quarter results, but it's a little bit of weakness because it is getting caught and swept up in this broader sell-off across the chip sector that we've seen in Europe and in Asia as well. And so we're up about 3%, down about 3% this morning for Applied Materials.
All right, Chloe, thank you so much. Chloe Melly there in London, and a great lineup for you this hour. We're going to catch up with JP Morgan's Kelsey Barrow on this inflation angst that we're seeing percolate through bond markets. Plus, former U.S. ambassador to China, Nicholas Burns, joins us as the Trump-Xi meeting wraps up. So a global bond sell-off intensifying as higher oil prices and the latest string of economic data stoke inflation fears. The 2-year yield at the highest since March of last year, while Japan's 30-year yield hit its highest since its debut in 1999, reaching 4% in the last couple of hours. Let's get to Bloomberg's Ven Ram for more. Ven, what happened? How come the bond market suddenly woke up in the last 12 hours?
Morning, Moni. It's the nature of bond markets to slumber and to sleep through what is a global inflationary shock, and then suddenly discover, you know what, we have got an inflation problem in our hands. We got a taste of that with the US data this week, Bonnie. I mean, headline CPI around 4%, producer prices well above 5%. That is obviously not compatible with the idea of 2% inflation. And if you look at inflation break-evens, at the front end of the US curve. They are factoring in a low inflation trajectory of well north of 3%. So the question that the bond markets are starting to ask, albeit a bit too late, is whether the Fed is in the right place. The Fed's mid rate is at 3.625. That is not compatible. It is completely inconsistent with where we are and the trajectory of inflation. So I think that the path of least resistance for yields is to go higher. I've been saying for weeks now that the 2-year yield is underpricing, the 2-year tenor is underpricing the risks of inflation, and I'm glad to see it march above 4%. I think that the 30-year yield also faces upside risks because of deficit and the inflationary import of longer-term inflationary import of this oil shock, Bonnie.
Yeah, we are at 509.40 now on the US 30-year yield. How much further can we go before this becomes a little disorderly then?
Well, I think that, if it goes anywhere towards 520, I think we will have Treasury Secretary Scott Bessent come out and say that, look, yields are unjustifiably high, but it is for the markets to price the inflationary fallout, and the US's fiscal metrics are no good. Obviously, we've got a budget deficit that is out of control. So we've got a multitude of factors weighing into this, and it's not going to be a quick and easy resolution to get it back to below 5%, which the administration has somewhat more of a comfort level with.
And absolutely, the Japanese authorities will be watching the yen as well, priced above 158 at the moment. Ven, thank you so much. That is Bloomberg's Ven Ram. Over in Beijing, both countries, the US and China, looking to stabilize their trade relationship on day 2 of the Trump-Xi summit.
Coming out of this week, you heard the president today talk about the Boeings and hundreds of Boeings being purchased by China. We already have a soybean deal with them from our prior meetings of 25 million metric tons a year over the next 3 years, and we expect to also see an agreement for double-digit billion purchases of ags over the next 3 years per year. We want to focus on non-sensitive goods. We think we should be selling them. Things we think we should be buying from them, trying to facilitate trade in that area, and then from there, we'll be able to interact with our Chinese colleagues and negotiate with them.
Joining us now from Beijing is Bloomberg's Anne-Marie Hoydern, who spoke exclusively to the US Trade Representative there, Jameson Greer. So, Anne-Marie, was the USTR happy? He touted a lot of what had been agreed upon previously and what will be done eventually, but nothing that concrete from this particular summit.
Well, trade is clearly the biggest win for this administration as they wrap up these 2 days here in Beijing. The president already off back to Washington. But what is interesting is, to your point, Vani, there's nothing quite clear in terms of the deliverables, and potentially throughout the next few weeks or maybe days, we will get a little bit more clarity on exactly what was discussed and what was agreed upon in these meetings. The president, in a Fox News interview, talked about 200 Boeings that the Chinese were willing to buy. We have not gotten confirmation from Beijing on that yet. It's also notable that going into this, the expectation that that order would be much bigger, maybe closer to 500 Boeing jets. Jameson Greer, the USTR representative, spoke to me about massive agricultural purchase. Of course, we were going to want to see the clarity of that the next few weeks and days when it comes to on the Chinese side. And then also what I took away from that conversation with Jameson Greer is that all this hype was about maybe because Jensen Huang was a last-minute addition on this trip, that chips were once again going to be back at the negotiating table. Jameson Greer said semiconductor export controls really didn't come up in terms of the bilateral discussions the president had with President Xi Jinping here in Beijing. And a lot of reporting about when and if China is going to allow their firms to purchase the H-200s. Reuters had a report that the United States greenlit Alibaba, Tencent to buy those chips. And Jameson Greer said at the end of the day, it's going to be up to the Chinese. And we have not yet got clarity from Beijing on whether or not they're going to allow those firms to buy those H-200s.
Yeah, so NVIDIA's future in China is still a little bit up in the air, and even Jensen Huang basically said, no, we weren't here for that reason. We were here to support the president. So, Anne-Marie, in terms of foreign policy then, any steps forward in terms of China help on Iran?
Well, the president continues to talk about how Xi Jinping is willing to help on Iran. He also made remarks that the Xi Jinping and China is willing to buy more U.S. crude. On Iran specifically, he talked about how Xi Jinping does not want to see a militarized Taiwan Strait. They don't want to see a toll when it comes to what's going on in Iran. They don't want to see the regime charging ships to be able to use the international waterway, and that they too agree that Iran can never get a nuclear weapon. Of course, the issue is we're getting this readout really from the White House. When you look at the Chinese readout, their main focus when it comes to national security has been Taiwan. And that is something that we have not heard yet from this White House.
All right, Anne-Marie Hordern in Beijing. Fantastic reporting. Thank you so much. Now, to other top stories trending on the terminal this morning. A group of former Wall Streeters known as Deal Team 6 is working with the Pentagon to crack China's critical minerals stranglehold. The team is racing to put together deals with billions of dollars in equity stakes, loans, and other financial tools to challenge China. Critics warn that the Pentagon's rush to do deals has led it to back unproven companies and overlook potential conflicts of interest. The United Arab Emirates will double its capacity to export crude oil, bypassing the Strait of Hormuz by next year. According to the Emirates media office, Abu Dhabi National Oil is accelerating the construction of a pipeline that runs to the port of Fujairah on the Gulf of Oman. LVMH is selling the Marc Jacobs label to WHP Global. It's a rare divestment for the luxury group. LVMH looks to capitalize on its higher-end luxury offerings, such as Louis Vuitton and Christian Dior. Coming up, gilts tumbling as Prime Minister Starmer braces for challenges. More ahead. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Versace in Davos, Switzerland, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Gilts slumping and the pound heading for its worst week since 2024 against the US dollar. That says Prime Minister Keir Starmer's rival and Mayor of Manchester, Andy Burnham, clears the path to potentially challenge Starmer for that top post. Bloomberg's Lizzie Burton joins us now from outside Downing Street. Lizzie, where does Andy Burnham rank alongside the other potential candidates?
Well, it has to be said, Vonnie, no formal challenge has been issued yet, but Burnham is Polymarket's favourite to replace Starmer, and he's the only senior UK politician who polls positively among UK voters. That said, though, there are many hurdles in his way between where he is now as Mayor of Greater Manchester and that black door. He'd still have to be cleared by the National Executive Committee of the Labour Party. He'd have to win the by-election in Makerfield, the seat that is being opened up, and he'd have to beat Reform, where they've performed well at the 2024 general election, though Burnham reportedly wants to take on Reform, so he can say, I beat them in the by-election, I could beat Farage, Nigel Farage, in the general election. But even if he managed that, Bonnie, he'd then have to get 81 Labour MPs to back him to go into the leadership contest, and then he would likely face Angela Rayner, the former Deputy Prime Minister, and Wes Streeting, the former Health Secretary, who of course resigned this week. All of this going on, all of it putting pressure on the market, given the political uncertainty.
Yeah, I mean, we're seeing the pound under severe pressure, gilt too, obviously. Is that going to impact the contest at all, given that, you know, this is the top post and sure, direction comes from the top, but the Chancellor, Rachel Reeves, has her hand on, effectively, fiscal policy too?
Yes, and the Chancellor herself has said that this leadership battle, the speculation, the chaos will be damaging, and pointing out, of course, that as you see gilt yields rising, you see the cost of living rising for ordinary Britons. Now, nonetheless, the detractors for Starmer, dozens of them calling on him to resign, looking through the market moves, we're looking at the pound heading for its worst week since 2024, and yields just keep rising. But for the detractors, they're focused on Reform and the Greens, the opposition parties that were beating them in local elections last week. Of course, it's easier to be offering goodies when you're in opposition than when you're in government, as Starmer and Reeves well know. And so it seems like these challenges are going to be inevitable.
We're just seeing a whole class of school children go into 10 Downing Street behind you, Lizzie, so I guess a lot of people think they could be potential challengers. That is Bloomberg's Lizzie Burden reporting for us outside 10 Downing Street. Coming up, in Washington, the House blocks a vote to end the war in Iran. That and what else is making headlines in your front page news next. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The market's AI boost showing no signs of slowing, at least for the week. Nvidia up 20% over the past week. Ford hitting that 20% check mark in just 2 days on a possible hyperscaler deal. Bloomberg's Tom McKenzie spoke to OpenAI CRO Denise Dresser about the return on AI spending.
So the more we invest in compute, the more intelligent and capable the models become. And that means then our customers can actually derive more value out of it, and they can do more things and deliver more economic value, and that becomes a cycle for our business. And I really do think that we've been very forward-looking in that. And then, as I mentioned, the demand is sort of a vertical wall right now as enterprises think about how they roll out not just productivity, but a true AI platform in their organization.
Tom McKenzie joins us now, anchor of Bloomberg Tech Europe. Tom, are we still in a sane phase, or have we moved a little bit out of that? It sort of reminds me of the time when everybody was becoming a blockchain company, or a Bitcoin or a crypto company, and their shares would soar. Is that what's happening?
I think to your point, when you look, Vonnie, at what's happening with Ford, you flagged this up 20% in what 2 days in terms of the energy unit, and an analyst note pointing to the potential upside there, built on a license and IP from China. Interestingly, maybe the kind of moves that we've seen in Ford in recent days suggest there's a little bit of frothiness in the market. But what you're hearing from OpenAI is that the demand is there, the demand is real, and the demand is accelerating. And for them, that justifies the spend on capex and on infrastructure, because their clients and customers are saying they need more of this, they need to integrate it more, and they want to be able to use it more. And that's certainly what we heard from the CRO, or the Chief Revenue Officer, when she was speaking yesterday. In fact, Germany and France are amongst the top 10 customers now in terms of sovereign customers for this kind of AI capability. And what OpenAI were really trying to stress was that enterprise is becoming an increasingly significant part of the revenue stream for them. So they've got 40% of their revenues come from enterprise now. They see that moving to 50% by the end of this year. They have 9 million companies paying for their products. They're really trying to reshape the narrative, and a narrative out there that Anthropic has won on enterprise. OpenAI is saying, hang on a second, we're also playing in enterprise. We've got the consumer, and we're playing in enterprise, and we are seeing that vertical wall of demand. And interestingly, the CFO of OpenAI is saying, yes, we've raised $112 billion, the biggest capital raise, the biggest fundraise in history, was how Sarah Fryer characterized it, but we could be looking for more as we build that infrastructure to meet that demand that we're seeing from our clients.
Tom, I want to ask you about yesterday's IPO. Cerebras debuting as the year's biggest IPO so far, at least. Shares were up 68%, but at one point they were up 108%. What does it say about appetite for AI companies?
Well, some of that spending that we've been talking about from OpenAI and from others is filtering down to companies like Cerebras, and clearly it's benefiting from that. Clearly investors think it will be a beneficiary. Certainly good news for Feldman, the founder, of course, of Cerebras, which offers these chips that are about the size of an A4 piece of paper. They're much bigger than other competitive chips out there, like GPUs from NVIDIA, for example. And what they specialize in is inference. So when you actually use the models, and that's why they say they have that competitive advantage and where they're seeing that demand. OpenAI uses them, and others are starting to use these Cerebras chips as well. So investors clearly think they're positioned to win, or at least build out market share there. And certainly for the founder, he's come away valued about $3.2 billion US, his stake currently in that company.
Yes, a nice day for Mr. Feldman yesterday, and shares were higher in the pre-market, down just about 0.4% now, but quite volatile. Tom, thank you so much. Bloomberg Tech Europe's Tom McKenzie there. Time now for your front page news. First up on the New York Times, the House narrowly blocking an effort to force an end to the Iran war and require President Trump to get permission from Congress to continue Middle East operations. The Times says the administration continues to defy legal deadlines, causing two vulnerable Republicans to join Democrats in that vote, which was ultimately unsuccessful. Next up on the Washington Post, the Supreme Court's decision preserving access to mail distribution of the commonly used abortion pill. The justices paused a decision by a New Orleans appeals court that had reinstated a requirement for patients to pick up the pill in person. And finally, the Financial Times reporting McKinsey plans to cut the share of profits that partners take home in cash. It's an overhaul designed to simplify pay structure, boost capital, and protect McKinsey from AI turmoil in the consulting industry. The FT says McKinsey told partners to expect a greater proportion of pay in the form of equity. Let's take a look at these markets on what's shaping up to be a pretty traumatic Friday for some, I'm sure. We have Brent crude now trading above $109 a barrel once again. As you can see, S&P futures pointed to an open lower by more than 1%. The dollar index stronger as sterling continues to weaken. Sterling at 133.36 now, down about 0.5% versus the US dollar. And yields, fascinating. The 10-year yield above 4.54 now. The 2-10 spread at about 47 basis points, flattening all the while.
Some people have written that your bank, Revolut, is worth $75 billion. Have you ever thought of taking your organization public?
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks to external investors.
So you've done secondary sales for your employees, so employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank, it's super important to have trust, and then public companies are trusted more compared to private companies. So that's the reason.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Inflation angst, global stocks and bonds retreating as more data and oil supply woes fuel concern over price pressures. And it's a wrap. The Trump Xi summit concludes with both leaders touting stronger ties. Don't miss our interview with former U.S. Ambassador to China, Nicholas Burns, as President Trump heads back to the United States. So a real change in sentiment today. Trump saying we don't need the Strait of Hormuz open. That seems to have turned the market. That and the fact that the China visit is now over and there wasn't really a huge amount in the way of deliverables. So we have S&P futures pointing to a lower open, NASDAQ 100 futures in particular. Bear in mind that's after scalding rallies all week, and we'll still likely get a 7th week of gains for the S&P in spite of today's weakness. But look at those yields. The 10-year yield very close to 454. Once we breached 450, all bets were off. We're almost at 510 on the US 30-year yield. Now, obviously, Britain is its own story, but gilt yields are also climbing. We're at 5.14 now on the 10-year yield in Britain as turmoil just continues to spread there over Keir Starmer's prime ministership. Let's take a look at oil, though, because Brent crude is very close to $110 a barrel again, and that's bringing up WTI to almost 105. That dollar index is stronger as well. DXY stronger, partially on sterling weakness. Let's get to some individual movers this Friday now. Here's Chloe Melly in London. Chloe.
Good morning, Vonnie. Figma is up this morning, about 9%, after the design software company raised its guidance and also posted better than expected results. So this is easing some fears around AI disruption, which of course has been such a big topic of conversation when talking about software over the last few months. But it seems that Figma is better positioned than some of its peers, and that therefore we're up quite strongly there. Moving on to Microsoft, which is paring some earlier losses after Bill Ackman's Pershing Square said it was taking a new stake in the company following a recent decline in the share price, saying that investors were actually underestimating the company's software. So we're down a little bit, but paring some of those earlier losses. And finally, Applied Materials is seeing quite a lot of weakness this morning, despite results that actually were very strong, and that indicates very strong AI demand. But it is getting swept up in that broader chip sector sell-off, where we've seen names in Asia and Europe be a lot weaker this morning. And so Applied Materials is getting swept up in that, and we're down about 2.5% this morning.
All right, we'll see if this is a meaningful reversal, Chloe, or if something else happens next week. That's Chloe Melly in London. The sell-off in bonds continuing to intensify, with 10-year Treasury yields now at their highest in about a year. Kelsey Barrow of JP Morgan writing, quote, "We expect the trading range for government bond yields to remain higher, but still bound by well-behaved inflation expectations and a high hurdle to start a new hiking cycle." She's fixed income portfolio manager at JP Morgan Asset Management, and she joins us now. Are you as convinced in what you wrote today, seeing these yields march ever higher, and pretty quickly too? I mean, in the last 12 hours, we've seen a real regime change, it would seem.
So it has certainly been a perfect storm. When I woke up this morning, there was a few things that I noticed. One is that oil continues to rise. There really seems to be, no ability to find a resolution in the short term to the problems in the Strait. And then also the political turmoil in the UK is also starting to bubble up again. While yields are maybe 5 or 6 basis points higher in the US, they're double that in terms of the move in the UK. And so it really has been a perfect storm to start the morning. And I think the notable thing is some of this move higher in yields has been coming on the back of more confidence around the resilience of the U.S. economy. We've had better retail sales data, for example. The jobs data has been a bit better. But today, what you're seeing is that this move higher in yields seems to be biting the equity markets a little bit.
Right, because the economy won't stay resilient if inflation really gets its claws into the U.S. consumer once again, right? And particularly if those expectations on more. We're seeing 69 basis points priced in now for the Bank of England. When do we start getting hikes really priced in for the United States, and when is the pressure on Kevin Warsh?
Yeah, so right now, what I think the market is pricing is not necessarily a base case of hikes, but it's a risk premium associated with the possibility of some type of real re-acceleration. And I think that's because, energy has been in an interesting spot. So if you were to turn back the tape to March when this conflict started and ask yourself, where would energy prices be if we were to have no resolution by now and we're moving into June, people would say energy prices should be a lot higher than they are today. And what has happened is energy prices have moved higher. Gasoline has moved higher, but you're in this uncomfortable spot where energy prices are putting upward pressure on inflation, but energy prices are not high enough or haven't been high enough yet to really get the markets to be concerned about real demand destruction. And so in this uncomfortable period, the best thing that I think the Fed has been able to do is communicate an on-hold path.
Sure, but how long will it take before the market really takes it seriously? I mean, we're at 105 now on WTI, and we've been above 100 for a long time, and there is nothing that suggests that the Strait of Hormuz is suddenly going to, quote-unquote, reopen.
Right. So here's a couple things that I'm thinking about in terms of round numbers. So we've moved to around 450 on gasoline. And what I would say there is when we talk to our retail analysts, and our retail analyst is out talking to management of companies, they're saying that at 450 on gasoline, you're seeing some substitution, but you're not necessarily seeing clear signs of demand destruction. If we head towards $5 per gallon on gasoline, that's where you start to see a little bit more pain and a little bit more friction. And so that's really what I'm going to be watching as it relates to the consumer and how they're going to manage this energy shock.
So you also said that you don't view the labor market as a source of inflation that should lead the Fed to entertain a hiking cycle. How long, though, can the Fed stay on hold for?
Yeah, so I mean, in a way, this is somewhat similar to the pattern we saw last year. 10-year yields actually peaked in the spring of last year around these similar levels. There was a similar situation where the Fed had cut in 2024 in the fourth quarter. They had paused. They had dealt with a supply shock. Last year, the supply shock was tariffs. This year, the supply shock is energy. There was questions around the extent to which policy was restrictive. There was questions around the extent to which the Fed would need to ever cut again. And the Fed ultimately was able to look through that tariff inflation and keep rates on hold for a period of time to reassess the landscape. And I will say it does feel like, in general, we're in a similar situation, and the breaking point really is the labor market. So right now, the labor market is showing stability that allows the Fed to remain on hold. The question is, where is that labor market going to break? I mentioned that I didn't see the labor market as a source of inflation. That's because wages continue to moderate. So if wages start to reaccelerate, then that's, I think, a different situation for the Fed. It's not just an energy shock.
And to a certain extent, yields at this level do some of the Fed's job for it, right? What is the next danger level that you're watching? It had been 450 and 5% for many observers. We're now reached those levels. At what point does business get crimped in the United States?
It's a difficult question. One of the things that I've been thinking about is the fact that this economy essentially has multiple R stars, so multiple neutral rates. So, there's a lot of debate about if policy is actually restrictive right now. And I would say there's a lot of parts of the economy where it's pretty clear policy is restrictive. Just look at housing. Just look at investment ex-AI. But then you look at this AI economy, and I'm not even sure that there is an R star that is restrictive for the structural demand that is emerging within the economy. And so it's a very difficult thing to say, essentially, because, you do have parts of the economy that are constrained by current levels of interest rates, but you have a very important driver of the economy, which is the AI build-out, which I don't think is at all sensitive to the Fed's interest rate policy.
Yeah, every day we seem to be seeing new sales from the AI companies into the debt markets. Kelsey, we have to leave it there, but thank you so much. Kelsey Barrow of JP Morgan Asset Management. Now to other top stories trending on the terminal this morning. Pershing Square has taken a new stake in Microsoft after a recent decline in share price. Bill Ackman said on a post on X that investors have underestimated the company's software. Pershing Square will disclose its stake in its 13F filing later today. President Trump's latest financial disclosures show tens of millions of dollars in first quarter stock and bond trades, including purchases in Nvidia, Microsoft, Oracle, Boeing, and Costco. The filings also show he unloaded holdings in Microsoft, Meta, and Amazon. The White House says independent managers handle his investments. New York lawmakers are planning a tax on cash purchases of homes over $1 million in New York City. All cash deals have increased in New York due to high mortgage costs and have accounted for more than 60% of 18,000 transactions in the first half of 2025. Coming up, We get more analysis of the Trump Xi summit from former U.S. Ambassador to China, Nicholas Burns. That's next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Coming out of this week, you heard the president today talk about the Boeings and hundreds of Boeings being purchased by China. We already have a soybean deal with them from our prior meetings of 25 million metric tons a year over the next 3 years, and we expect to also see an agreement for double-digit billion purchases of ags over the next 3 years per year. We want to focus on non-sensitive goods. We think we should be selling them, things we think we should be buying from them, trying to facilitate trade in that area, and then from there, we'll be able to interact with our Chinese colleagues and negotiate with them.
U.S. Trade Representative Jemison Greer there speaking exclusively to Bloomberg's Anne-Marie Hordern, and she joins us live now from Beijing as Presidents Trump and Xi wrap up their two-day summit. So the trade representative telling you things that maybe you already knew, Anne-Marie. What new came out of this summit?
Well, Vonnie, nothing really new, nothing concrete. We're still waiting on some more clarity, even from the items Jemison Greer talked about, the USTR representative, in terms of the agricultural agreements, the Boeing jets. We still need to understand from the Chinese side that, yes, this was agreed upon, volume size, what kind of agricultural projects, is there going to be energy flows, something else the president discussed in an interview he gave here in Beijing to Fox News. So it's very vague. We need a lot more details. Something that we know was not discussed, according to Ambassador Greer, was semiconductors. There's been a ton of fanfare and a lot of excitement for some, and some a little bit critical. Why Jensen Huang was added on this trip, and everyone thought that meant that chips were going to be back on the table. There's this Reuters report that the U.S. green-lit the H200s, which they already did in January, for some Chinese firms to buy them. And Jemison Greer made it clear that semiconductor export controls wasn't discussed in the bilateral meeting, and that it's going to be up to China to make that determination.
All right. Right, Anne-Marie, wonderful reporting out of Beijing all week. Anne-Marie Hordern in Beijing. Thank you. Joining us now is former U.S. Ambassador to China, Nicholas Burns. And thank you so much for joining us, Ambassador. As you observe the 2 days of meetings that we've had this summit, how do you see the U.S.-China relationship having evolved over the last year from when there was a freeze-off over trade to then sort of détente and now this summit?
Well, first of all, I think it's very important that President Trump went to Beijing. That might seem like an ordinary thing to do, but this is a very difficult, complicated relationship, and there's no substitute for the two leaders working together because Xi Jinping in China makes all the big decisions. They're going to meet again in September, perhaps 2 or 3 times this year. I think that was probably the most important thing that came out of this summit. It is a little bit surprising that they didn't announce a continued tariff and supply chain truce. In fact, Ambassador Greer indicated that those issues remain to be worked out. I don't expect we'll see a return to the extraordinary trade wars and supply chain wars of 2025, but they haven't worked out all of the deals there. And again, as your correspondent said, as Anne-Marie said, surprising on NVIDIA as well, Huawei just, DeepSeek, the Chinese AI firm, just announced a new model, and they use Huawei chips. And so I think the Chinese are in a situation where they don't want to rely on American chips. They don't think they're reliable, and that may account for the reason why there was no announcement on NVIDIA.
Yeah, absolutely. Can we at least say that we're not fully decoupling now, though, a prospect which would have been welcome maybe a year ago before this truce was signed?
I think that's a very important development. Scott Bessent, Secretary Bessent, said 10 days ago that the two sides had agreed not to decouple this big relationship. It was $750 billion in trade in goods and services as recently as 2024. So it's very important for the American economy, the Chinese economy, I would say the global economy, that these two economies stay integrated the way they have developed organically over the last 40 years. But there's also no question that both sides are de-risking. And that makes sense. It makes sense that the United States should not be allowing the export of sensitive dual-use technologies into the Chinese economy. That'll just help their companies compete with ours. It'll help the People's Liberation Army. And so if that's what's going forward, and Ambassador Greer did say that there'll be a board of trade and a board of investment that will work out some of these difficult economic and trade issues, that could possibly also be something positive going forward.
Yeah, we're hearing a lot from the U.S. side. It would be nice to have confirmation from the Chinese side, right? But in your estimation, how long can this trade truce last? And will China make good on its promises to not save all the critical minerals and critical rare earths for itself and to continue with its double-digit purchase of agricultural products?
Well, that was the big surprise for me from this summit. I had expected that they would at least announce a continuation of the agreement from last November in South Korea when Presidents Xi and Trump met, that they would have a supply chain truce, that neither country would take off the market critical materials such as Chinese rare earths, and a tariff truce. Not that tariffs would not be diminished, but that there be some predictability for the global market. Ambassador Greer, in the interview with Bloomberg, gave the impression that those issues need to be worked out. So let's hope that the two can succeed there.
Can I ask you about foreign policy, Ambassador Burns? Did you feel like China's position on Taiwan was a little more maybe aggressive or to the front than you would have anticipated? Or was it maybe a tactic to not have to talk about Iran, perhaps?
Well, the Chinese always raised Taiwan. I thought President Xi was particularly shrill, actually, in what he said. What he said was if the United States crosses China's red lines in Taiwan, there could be a conflict between the United States and China. That statement was meant to intimidate the United States and President Trump. And so what I'm looking for right now is, will the United States go forward with the major arms packages to Taiwan that the administration had set up but had put aside in anticipation of this meeting? No American president for half a century has allowed the Chinese government in Beijing to decide for us or to influence us over whether we fulfill our legal commitments under the Taiwan Relations Act to provide defensive military technology to Taipei. So I think that's a big question going forward, and I hope very much that the Trump administration will go forward with the arms package to show the government of China that it can't coerce us from doing what's in the American national interest.
Assuming that that's the case and the US president, isn't deterred by anything that the Chinese premier has said, will that antagonize China, or will China just be expecting that as status quo?
Oh, it will certainly antagonize them, but this has been the back and forth we've had really for half a century in Taiwan, ever since President Nixon's visit back in 1972. And so we don't want to be in a position where suddenly we effectively are blocked from doing what we have to do because of angering the Chinese government. That is part of the reason why this is the most combustible, the most difficult issue, Taiwan, in this relationship.
Ambassador Burns, strategic stability, is that our new catchphrase going forward, and is that a positive phrase for you?
It's a new Chinese catchphrase, no question. They unveiled it yesterday and again today. The Chinese like to frame big power relationships with catchy titles. I'd be a little bit wary of this, because once you agree from the Chinese side in a strategic stability construct between the two countries, then if we do anything that upsets them, they can accuse us of violating this so-called strategic stability pact. In essence, this is going to remain a very competitive relationship, militarily, especially technologically, because we both want to be first market movers in AI, quantum, biotech. And so I think you didn't hear the Trump administration repeat that phrase, which I thought was wise.
Ambassador, as it pertains to Iran, we obviously have Vladimir Putin visiting China in a few days, close relations there between the premier and Putin. And obviously, Iran continues to simmer. The US would have asked China for maybe not help, but some kind of action in terms of the Strait of Hormuz. How do you see that progressing? Does China weigh in to clear the strait or to impose some kind of a request on the Iranians?
Well, I thought it was right for President Trump to raise this issue so forthrightly. China ought to be helping the United States and the rest of the world, the Arab world, in getting the strait open with Iran, not as the tollkeeper. That's an international waterway. And it was good to hear that the Chinese position repeated that it wants the strait to be open, that it does not want Iran to become a nuclear weapons power. But these are old Chinese positions, they're not new. And I think the question remains from this particular summit, will China now weigh in and use its influence, which is considerable, with the Iranian government to push them towards a ceasefire agreement that will include the strait opens and no ship has to pay a toll to get through? I think it's going to be difficult for the Chinese to do that because they have contrary views here, or aims here. On the one hand, they want the strait to open. On the other hand, they don't want to make life easy for the United States. This is a competitive relationship. They don't want to be seen to caving into the United States because they do have a strategic relationship with Iran. So what I'm watching for is, to what extent does China actually do anything to help here? I hope they will, but I'm a little bit skeptical.
Yeah, and will we know what it is exactly they end up doing in the end anyway? When you watch the pomp and circumstance of the arrival and the ceremony and so on, did it occur to you that perhaps China has cracked President Trump and his personality in some way? Or will President Trump have seen that for perhaps what it was, an effort to, curry favor, some soft diplomacy and so on?
Well, they certainly rolled out the red carpet, but they do that for all visiting leaders, including American leaders in the past. The Chinese have a very finely hued attitude towards protocol, and they're very formal. And you saw that they can produce elaborate ceremonies to welcome foreign guests. I thought it was appropriate, frankly. And when President Xi comes to the United States, I'm sure that President Trump will reciprocate. You need to be polite. You want to honor someone else's culture in going. So I didn't think it was over the top. And I certainly thought it was appropriate to the occasion. These are the two strongest leaders in the world, the two major global economies. And so I think it's important that this channel is open between the two presidents. President Biden had a good, constructive relationship with President Xi, and President Trump does now as well. That's good for the United States because you've got to be able to work directly with President Xi Jinping in China's top-down system.
So different from the rhetoric we were hearing just more than a year ago. Ambassador, thank you so much for joining us this morning. Ambassador Nicholas Burns, former U.S. Ambassador to China. Now, look at what's ahead today. We have economic data on deck, Empire Manufacturing and Industrial Production, 8:30 and 9:15 respectively. Of course, they're pretty volatile data. We get 13F filings from the first quarter after the market closed today. And today marks Jerome Powell's last day as Federal Reserve Chair. He remains on the Fed board until January 31st, 2028. Some micro movers now before the bell. Figma up more than 8%. It's extending post-earnings gains. It boosted its revenue forecast, and its results really eased investor concerns over any AI disruption in that industry. Applied Materials off just a little bit after a jump in prices initially. The chipmaker beat the street expectations for its sales and profit forecast thanks to soaring AI demand. And then Bill Ackman posting on X that Pershing Square has taken a new stake in Microsoft, and its erased declines is now higher. Here's your macro picture for the day. We'll be watching bonds. Look at the UK 10-year yield at 5.14. The US 10-year yield, though, almost at 4.55 right now. That's it for Bloomberg Brief. Stay tuned for surveillance.
The women's semi-finals in Rome. Coco Gauff claimed her spot in her second straight championship match in the Italian capital after she took out the informed Sorana Castella. Coco becomes the youngest American to reach consecutive finals in Rome since Venus Williams back in 1999. And don't forget, you can watch all the action live daily and head on over to tennischannel.com to download the app.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Konstantin, thank you very much for joining me. How are you?
Yes, I'm fine. Thank you. Yeah, I'm doing
What you have
fine.
right now is an earnings-driven market.
Okay as well?
Want to get exposure to growth and strong economy earnings go ahead.
Earnings momentum doesn't seem like it's peaking.
If you think of what's driving these global markets right now, it's a semiconductor super cycle for the history books.
It's the casting away of fear in its entirety that will end up being the market's biggest problem at some point.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, yields up, stocks down. Global price pressure building, sending U.S. 10-year yields through 450 as borrowing costs in Japan break out to levels not seen since the late 90s. Gilts sinking to new lows, heading into a battle to topple the British Prime Minister. The bond market shaken this morning.
There are two things here. On one hand, you could say that an oil price shock would eventually be disinflationary, but only when you get demand destruction. And right now, at least in the world's biggest economies, you are not seeing that level of demand destruction because, frankly, it is in the political interest of different parties to keep demand strong. So you're seeing inflation, you're seeing it come through in the PPIs around the world. The second thing is it's not clear when this oil price shock is going to end. President Trump coming out and saying just overnight, we don't need the Strait of Hormuz open anyway. It is not our problem because we have our own oil. So how much emphasis is there on resolving this issue?
This has been building for a while. We've been talking about it continuously over the last several weeks. Check out the U.S. curve now. 2s, 10s, 30s. 10s through 450. 30s through 5%. Leadership issues in the UK. An inflation problem globally. An incoming Fed chair with a very unclear reaction function at this point. And we often say this. The market will always test the new Fed chair in different ways at different times. Maybe that test is coming slightly early.
And in fairness to him, he's not exactly coming into an easy scenario. You've got resurgent inflation globally. You've got a fiscal impulse that is to simply stimulate, not necessarily to curtail or have any kind of restraint when it comes to any kind of debt incurrence. You have very high debt loads around the world. And you have a new regime. We are not going back to zero interest rates anytime soon. And he has to fend off with a president who doesn't want to see this economy stall out and with a market that is petrified that he's going to allow inflation to become unmoored.
There's another force in the mix here that I hope we spend some time on throughout this morning, and it's the crowding out from other places. We caught up with the OpenAI CFO who wants to raise more capital, even after a massive monster raise in private markets. Alphabet on a $60 billion debt binge over the last 4 months and ultimately likely to raise more capital in the year ahead. There's some crowding out here that I think is noteworthy.
There is an insatiable demand to raise money to fund some of the hyperscaler build out. And so far, they've seen absolutely resounding demand. It seems like there isn't enough cash to be piled into these bonds. Alphabet can go around the world. It's sort of the world tour. Go to Japan, go to Switzerland, go to the European continent, raise as much cash as you can, and everyone's clamoring to give it to them. They're trying to get ahead of what they already anticipate to be some sort of saturation. And they want to avoid the saturation by spreading out the love, spreading out the debt sales. At what point does that take away from some of the government bonds that frankly have a less reliable balance sheet behind them? I mean, again, who would you rather lend your money to right now? Alphabet or, a developed market economy?
This is how the stage is set so far this morning. Crude inching higher, up by 3 to 4%. Bonds down, yields up, stocks sinking, down about 1% on the S&P 500, pulling back from all-time highs. Coming up this hour, we'll catch up with Sebastian Page of T. Rowe Price as bond yields break out, Mary Lovely of the Peterson Institute as the US and China extend their trade truce, and Dan Ives of Wedbush as Cerberus surges on its trading debut. We begin this hour with stocks sinking and bond yields breaking out. Sebastian Page of T. Rowe Price writing, we're neutral between stocks and bonds, balancing strong earnings momentum against high valuations and macro risk. Stay diversified, stay invested, and hedge inflation risk. Sebastian joins us now for more. Seb, welcome to the program. That last line's important. Hedging inflation risk. How much of a challenge now is coming from the bond market?
I think it's a meaningful challenge, Jonathan. You know, when you're in the investment business and you're at a cocktail party and someone asks you for advice or stock tips, the good thing to say is always stay invested, stay diversified. But right now I would say stay invested, stay diversified, hedge inflation risk. My message to our clients is diversify your hedges. Lisa has hinted at this. Treasuries won't do the job if we get inflation volatility. We like a portfolio of hedges. We like to hold cash, be short duration. We like real asset equities, energy companies, metal companies. We actually like hedged equities. You know, buy protection, and then you can still participate in the rally. You give up part of the upside. But what you end up with is a diversified set of hedges while staying invested, because you know what? The earnings, Jonathan, you've been talking about this on the show all week. They're amazing. We thought we'd get 13% year-over-year growth at the end of March. We're trending at 30% year-over-year growth. Those are massive, massive earnings surprises. So stay invested, stay diversified, hedge efficient.
Seb, I totally agree with you. And you and I have been talking about this over the last several months, the journey of the last 2 to 3 months. We had the energy shock. At times, we started to see a rate shock emerge. We're seeing that again, globally, not just in the US and Japan and the UK. Is that going to translate into a growth shock? Do you think we can withstand the latter?
You know, if you do get a growth shock, you will want treasuries. I'm not saying you should just remove all treasuries from your portfolio and just put all this in gold. It's a diversified set of hedges. But Jonathan, you frame this first as a chain reaction, and it's a slow-moving chain reaction. And I really like how you framed it, right? You were talking about an oil shock that leads to an inflation shock, that leads to a rate shock, that eventually tightens financial conditions, and that leads to a growth shock. I'm not too worried about the growth shock because the underlying U.S. economy is running, it looks like, at 6% nominal growth right now. And the economic surprises are trending up, not down so far this year. But this is the main risk in financial markets, Jonathan. It's the collision course between inflation and Fed policy. And you know, Jeff Gonlak will say, the way you look at this collision course, what could force the Fed's hand, despite all the politics that are going in the background, is the 2-year yield. And it's trending up this morning. It's at 4.1%, and the top Fed rate is at 3.75. There's a dissonance there.
Well, Sebastian, one speculation has been that you might want to buy the 2-year because this Fed is not going to raise rates under any condition, regardless of how hot inflation gets, unless inflation goes to 9% again. But you will see that relief valve when it comes to the long end of the yield curve in terms of yields going up and, frankly, the dollar growing weaker. Do you adhere to that kind of idea?
No, we're hedging. Look, we're hedging inflation, and I do think the Fed will have to face some very difficult decisions. My economist friends tell me never to annualize 2 monthly data points, but I'm going to do it just for fun. Annualize the last 2 CPI prints, and you get a 5% rate. You know, I'm a runner. I like to look at my watch when I'm running, and what's the pace right now? Well, the pace right now of inflation, let's say it's 4, let's say it's 4.5, let's say it's 5%. The Fed's target is 2. So you can't maintain an easing bias, at least in the short run, Lisa.
In the meantime, Sebastian, one thing that seems kind of counterintuitive in terms of your positioning is you're actually going more heavily into the U.S., kind of undiversifying some of the exposure on the equity side, and frankly concentrating a lot of your exposure to the AI trade. Why is that?
You know, we've done well with the broadening trade, and now we're taking some profits. We've reduced those positions, say, small cap and especially international, and we're moving money from international into the U.S. for a few reasons, Lisa, but it's clear that Europe is much more sensitive to the energy shock than the U.S. being a net exporter of oil. We think that the AI theme is best expressed right now amongst the many ways to express the AI theme in U.S. large cap growth stocks. The earnings for U.S. large cap growth stocks, yes, you'll say it's a high bar, but if you look at the projections for the earnings for the next 12 months, they're at like 28%. And this is an all-time high for the 25 years of data that I have on my chart. Now, this is a high bar, but those are companies that tend to meet that high bar. So you have high earnings growth, high margins, and the valuations, well, for large cap growth in the U.S., they're below the 5-year average. And the Mag 7, if you look at the equal index on Bloomberg, you know, it was at 40 at the peak. Now it's at 26. So it's not bubble-ish valuation in my mind. And so we're moving some money, especially from the international into the U.S. large cap growth segment.
That demand is going to be met with supply, and I'll tell you what I mean by that. Seb, 10 years ago, in the last decade or so, we spent a lot of time talking about so-called asset scarcity. Now we're shifting towards abundance. So let's take the big players in the US equity market. They were buying back a lot of stock, and they weren't issuing a lot of debt. That's flipped. And we're going to get several major IPOs later this year as well. As you switch from scarcity to something that looks a little bit more like abundance, how does this market handle that?
Yeah, look, those companies are transforming, and we're looking at the CapEx. It's massive. I mean, the last estimate I saw was for $3 trillion by 2028. Now, this is a stimulus for the economy, but in the end, those companies have massive margins, massive earnings growth relative to the rest of the market. And also, you know, relative to history, people like to do dot-com bubble kind of, you know, oversupply of infrastructure and overbuilding infrastructure. I think we will get there, and that's a risk. But for 6 to 12 months ahead views, I think this keeps going, Jonathan. And, you know, those companies, the margins are double. The margins are basically double what they were at the peak of the dot-com bubble. So you can't really compare the valuations here.
Seb, it's good to see you. As always, sir, thanks for being with us. Sebastian Page there at T. Rowe Price, working through some issues. We'll spend some time with Dan Ives on Cerebras. What a debut for that stock. Foaming the runway for some major IPOs set to come maybe in the next 12 months.
On one hand, you could say that the actual shares sold much higher than the original marketing price. And then you see the pop, the 68% pop. And then the follow-on today, and you think about all the billionaires that have been created, and you start thinking to yourself, was that underpriced? And what does that mean for OpenAI and for Anthropic that could come later this year?
I think that's just the thing I'm focused on at the moment. I don't think it's a massive challenge right now, but it's a story for the next 12 months. These major tech players issuing more debt. These big companies in private markets becoming public and issuing more equity. They're the kind of things that I'm laser focused on for the next 12 months.
Especially because is Cerebras truly a guide for OpenAI and Anthropic? OpenAI in particular, which has run into some snags and had some reporting about maybe slower bookings than they had expected.
Futures down this morning by 1% on the S&P 500 with an update on stories worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Good morning, John. President Trump has departed China after 2 days of talks with Xi Jinping, the Chinese president hailing the summit, touting a new bilateral relationship. Details about any commercial deals reached remain scarce and could be announced in the future. President Trump saying President Xi offered to help in getting the Strait of Hormuz reopened. Trump telling Fox News that the U.S. doesn't need it opened and that the blockade serves to help Israel and other Gulf allies. And as you all were just discussing, we are seeing Cerebras shares actually lower nearly 3% in the pre-market amid the broader chip and market sell-off. Its shares surged 68% yesterday in its trading debut, with the AI chip maker raising $5.5 billion in this year's largest IPO yet. That's your Bloomberg brief, John.
Yahara, thank you. More from Yahara later this hour. Up next on the program, maintaining a trade truce.
This has been an incredible visit. I think a lot of good has come of it. We've made some fantastic trade deals, great for both countries.
In just a moment, we'll catch up with Mary Lovely of the Peterson Institute and Anne-Marie on the ground in Beijing, China. Live from New York City this morning, good morning.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
As of Thursday's close, all-time highs on the S&P 500, heading towards a seventh consecutive weekly gain, the longest weekly winning streak potentially going all the way back to December 2023. This morning, we're taking a bite out of that gain. We're down 1% on the S&P. We're negative 1.4% on the NASDAQ 100. At the epicenter of some of the jitters this morning, these moves in the bond market, 2s, 10s, 30s stateside, 2s through 4%, 10s through 450, 30s sticking above 5%. Similar moves taking place globally, much larger moves in the UK. Leadership problems there. In Japan, really hot PPI coming out of the Japanese economy. Japanese yields at levels we haven't seen since the 1990s.
Yeah, and this comes after the hot PPI print that we got in the United States. Just to give you a sense of how hot it was, producer prices in Japan jumped 4.9% last month. That was compared to an estimate of 3%. It gives you a sense of just how much faster some of this inflationary pressure is than people expected.
12-year highs, right, out of Japan. Major numbers out of Japan, numbers that were unthinkable going back a couple of decades. Looking at the energy market, this is not helping. Brent crude higher by 3% on WTI, Brent crude up by 3% as well. The president asked about the situation in the Middle East, asked about reopening the Strait of Hormuz. This is where we really haven't moved things forward. Zero progress in the past few days.
Yeah, not only that, but he just went to, we don't need the Strait of Hormuz, especially if the allies aren't going to help, because they'd rely on it significantly more than the United States. Possibly this is why you're seeing a bigger sell-off over in Europe, since that economy is much more dependent on that. He went on to say, from a military standpoint, Iran is finished, but they're clogging up the Strait of Hormuz. A real question here about what the deliverables were. A lot of niceties between agreements between the U.S. and China about some sort of Iranian help or some sort of mutual understanding. Not seeing any details that can give people comfort this morning.
A quiet rally in the energy market throughout the whole of this week, and we add to it. WTI at 104, Brent crude closing in on 109. Under surveillance this morning, maintaining a trade truce.
This has been an incredible visit. I think a lot of good has come of it. We've made some fantastic trade deals, great for both countries. He's a man I respect greatly. Become really a friend. We've known each other now 11 years, almost 12 years. It's a long time. And we've settled a lot of different problems that other people wouldn't have been able to settle.
Here's the latest this morning. President Donald Trump and Xi Jinping announcing important trade deals. The two nations agreeing to stabilize relations without any major breakthroughs. Anne-Marie on the ground in Beijing, China, and joins us now for more. Anne-Marie, the president's own words that we've been able to settle a lot of different problems. What problems have we settled on this trip?
It's a great question, Jonathan. Lots of smiles on this trip. Not a lot of substance, at least given to the press, in terms of what Xi Jinping and President Donald Trump decided on. When it comes to trade, though, that's what this White House really wants to focus on. I spoke to Ambassador Jamieson Greer earlier this morning. He reiterated that what the president had also said to Fox News in terms of Boeing jets, but only 200, Jonathan. Remember, the expectation going into this trip was maybe an order as big as 500. Ambassador Greer also talked about massive agricultural products that China was going to be willing to buy. We're still waiting on more details, though, and clarity from the Chinese side about what exactly they are going to purchase. And then when it comes to an item like rare earths, remember, this is when the negotiations last year got really tense because China started to use rare earth licenses as a real negotiating tool. Jameson Greer said he's giving them a passing grade. So almost feels like we're going back to where this relationship was before the trade war. One place where we know there's clarity on, and a place that didn't get a whole lot of discussion, according to Ambassador Greer, was chips. Tons of speculation that semiconductors and export controls was going to be on the negotiating table because Jensen Huang's last-minute appearance on this trip, and Jameson Greer says it wasn't. Take a listen.
You want to make sure you strike a balance between national security, protecting high tech, but also making sure that we're benefiting from overseas markets. And so those are the kinds of things that went into the H200 decision. As to whether the Chinese are going to buy or not, again, they're making their own determinations. They're very committed to domestic production.
Ambassador Greer, they're making it very clear it's going to be up to China to determine whether or not they are going to buy those H200s.
Anne-Marie, fantastic conversation. Looking forward to hearing more of that later on in the program. We'll catch up with AMH in the next hour. This came from Emily Goodwin of the New York Post. You'll be told this was a great meeting. The relations between the two nations have improved. Take a listen to this. American staff took everything that the Chinese officials handed out, credentials, burner phones from White House staff, pins for delegations, collected them before we got on Air Force One and threw them in a bin at the bottom of the stairs. Nothing from China was allowed on the plane. That's the real state of the relationship between China and the United States.
There is a lot of speculation about exactly what was accomplished and potentially how tense some of these relations have remained despite some of the niceties. And that clearly is the uncertainty feeding out through a lot of the different reporting.
Joining us now to discuss, Mary Lovely of the Peterson Institute. She writes the following: the summit has succeeded in maintaining a tactical truce but failed to achieve resolution in the major irritants in the relationship. Mary joins us now for more. Mary, welcome to the program. Let's just start with those major irritants, because there will be another summit potentially in September. What are they?
Well, Anne-Marie just talked about chips. Clearly, the Chinese have balked at the U.S. export controls. They have since moved on. They are now devoted to their own development of their own domestic chips. But if we look back at the last year, we can see that the main irritants, or the most proximate irritants, were President Trump's acceleration of the tariffs that had been placed on China in his first term, and then the Chinese invoking new export controls on critical minerals. A potentially very disruptive move for U.S. industry, and the U.S. move to rearm following the war in Iran. So where did we get with any of that? As far as we know, there may have been some trade discussed, particularly by Secretary Bessent and his Chinese counterpart. But between the two principals, I think we have seen that there was no discussion of export controls and very little accomplished on the trade front. So the irritants really are still there.
Mary, I've heard conflicting reports about whether this was a good meeting or a bad meeting. Some people say at least nothing bad happened in terms of some sort of big blow up. On the flip side, there wasn't even an affirmation of some of the truces that we've seen when it comes to tariffs and rare earths over the past couple of months. What's your take on this?
Well, President Xi stressed stability, but he wasted absolutely no time in giving the American president the tongue lashing over Taiwan, which means that what we saw in China earlier this year, a sense of confidence and growing power, clearly was on display. The relationship overall was framed in exactly the terms that Beijing likes to use. The first is primacy. The U.S.-China relationship is the most important in the world. Is it the most important to the United States? What about our allies? Win-win. President Xi always likes to talk about the relationship in win-win or mutually gainful terms. Yet the President Trump, since 2017, has been talking about China as someone who's ripped the United States off. So how is that going to be win-win? And then lastly, President Xi likes to describe the relationship as one of partners, not rivals. What about the AI race? What about actions in the South China Sea? How have we suddenly become partners, and these issues that have to do with conflicting goals are suddenly papered over? So I think rather than just a visit that accomplished nothing, this actually set us back in terms of where we are with the Chinese.
In the meantime, what actually happened with all the CEOs from the United States who went over there? Do you have a sense of whether they accomplished anything or were involved in any of these meetings?
We don't have any sense of that. I think, Anne-Marie talked about how the chip sales, there's been crickets on that, so we really don't know why they stopped to pick up Jensen Huang in Alaska. The other CEOs were there, I suppose, to show their support for the U.S.-China commercial relationship, which remains important and is a good thing. But as far as addressing some of the problems these firms have experienced in serving the Chinese market, I think we've heard nothing.
Mary, what do you suppose the future is of the political question around this relationship domestically in the US? The president did such a powerful job many years ago of really highlighting how damaged people and communities were in this country from Chinese overcapacity and the hollowing out of manufacturing domestically in the US. That became a rare bipartisan issue in Washington, D.C. Is that a political priority anymore going into the midterms later this year and ultimately for the next general?
Well, I've always thought the harm was real, but the diagnosis was flawed there. We know that just attacking China is not an answer to what the U.S. needs to be doing to heal itself. So I think that now the president has decided that we need stability in this relationship, that going in an alternative route will actually cause more harm than good. We need to turn at home and say, okay, then what are we doing at home to meet the challenges that are before us, the same challenges we had before.
Mary, appreciate it. As always, Mary Lovely there of the Peterson Institute. There's a lot of building to be done. There's a lot of building being done already.
Yeah, and this, again, people talk about the reindustrialization of the United States. Where does China fit into that?
Coming up on the program, we'll catch up with Den Ives of Wedbush as tech IPOs ramp up, plus Yahira has your morning movers. Cerebrus climbing higher once again through yesterday, this morning, down 2%.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Two-day winning streak on the S&P 500, back-to-back all-time highs on the S&P, on the NASDAQ. Pulling back this morning, we're down by 1% on the S&P 500, on the NASDAQ down by 1.4, on the Russell negative 1 percentage point. In the bond market, 2s, 10s, 30s look like this. Had a warm CPI print early this week, a smoking hot PPI print in the US and in Japan. Yields up across the curve worldwide, not just stateside, up by 6 basis points on a 10-year in the US, up by 13 in Japan on a 30-year. In the UK, some real leadership issues in the UK. Check it out, the 10-year up by 15 basis points, 514 on gilts in the UK.
I never thought I would know so much about the internecine politics of a political race in the UK, but evidently now I know about Andy Burnham and Streeting, excuse me, I'm getting it, who might be running against him, and that Andy Burnham needs to have a parliamentary seat before he can become the Prime Minister, so he resigned from being the mayor. Look, all of this to say, there's a lot of uncertainty about who's going to run in the United Kingdom, and what kind of fiscal policy they're going to come out with, because Andy Burnham, I believe, has called himself part of the soft left, labeling himself as something of a socialist, and there seems to be a disbelief in the bond markets that he can resurrect himself after saying that he thinks that the bond markets have too much power. So at this point, there definitely is a bit of bond vigilantism, but it isn't just isolated to the UK. It is a global phenomenon.
I don't know where this term is coming from, the soft left. We can spend some time on that later in the programme. But yes, certainly, it's not just the UK. The UK's got its own very narrow issues, but they're shared elsewhere as well. Japan's got deficit problems. It's now got inflation problems. All of this is building. And what's interesting about this moment in the bond market, just take a step back and compare where we were 10 years ago. When you and I first met, we're talking about fixed income. The anchors around global fixed income, JGBs, German bunds. Not anymore. Anchors away, yields up. And that's been building now for several years. And it makes it very, very difficult for politicians like that to come out and say, yeah, we're not going to be beholden to the bond market. Well, I think the bond market's got something to say about that.
Because it is global, and you can't push against a steamroller. We were talking about how Japan, there was no inflation. Well, that's a different story right now. And over in Germany, there was not spending. Well, that's changed as well. There is a feeling that if there were to be some sort of economic downturn, yes, you would see the haven bid into bonds, but that could potentially be a problem child, because guess what every government's going to do? They're going to try to borrow more to fuel some sort of growth at a time when deficits are pretty high. This is a difficult time where it's hard to understand exactly what levers fiscal and monetary authorities have to change this back to a low-rate regime once again.
Good luck doing that. Stateside, the 10-year and 30-year closing at a new high for the year throughout this week, and now 2s starting to break out above 4. The 2-year, the move at the front end of the curve. Let's just isolate that just for a moment. Got an incoming Fed chair, Kevin Walsh. Got a market pushing back, a 2-year above the policy rate, and a central banker put in the position the president believes he's going to make a push to cut interest rates. This market's going to test that, and you're starting to feel that test this morning.
We've priced in a full rate hike come April of next year. Not only is this market saying, we'll take your easing bias and throw it in the trash along with any kind of burner phone. Going forward, it seems like they believe this Federal Reserve will be pressured to hike rates. Sebastian Page saying that the 2-month annualized inflation rate would be closer to 5%. What Fed can arguably look at this, say, if inflation is a choice, this is what we're choosing? That's not going to fly for markets.
4.05% on 2s so far this morning. Counting you down to the open about 3 hours away with your morning movers. Yahara has more. Hey, Yahara.
Hi, John. The names that have run up the most this year, the chip makers, are all under pressure amid this market sell-off. And it all started over in Asia with names like Samsung and SK Hynix sinking, and it's spilling over into the U.S. with NVIDIA, Broadcom, and Intel all lower, and even Cerebra's falling 3%. The newest AI chip darling surged 68% yesterday in its market debut. We have seen these sort of pullbacks before in the chip sector. It's failed to materialize into something broader, something bigger, which some are calling for. We'll see if it's different today. Also getting caught up in that sell-off is Applied Materials. Shares are down 3% after it delivered a massive beat and a raise due to AI, which is fueling 30% growth in its chip equipment business this year, helping to push margins to their widest level in 25 years, yet the market giving it no credit for that. And we end on shares of Papa John's. They are rising nearly 5% in the pre-market on a Reuters report that Earth Capital is now working with the company's largest U.S. franchisee on a potential take-private deal. This is a company that has struggled with weaker sales and tougher competition from the likes of Domino's and likely your local pizza joint. John?
Yahara, thank you. Thank you for the update. More from Yahara later this hour. On our radar this morning, President Donald Trump and Chinese leader Xi Jinping failing to reach a breakthrough on the Iran war. China calling for a reopening of the Strait of Hormuz. President Trump saying it's not a priority for the U.S.
They need the strait more than we need it open.
We don't need it at all.
We don't need it at all.
We don't need it at all.
Fair enough.
We're doing it to help Israel and to help Saudi Arabia and to help Qatar and other countries.
The president adding China agreed not to supply Iran with military equipment. Elsewhere, UK gilt yields on track for their biggest weekly increase going back to March. Prime Minister Keir Starmer facing increasing pressure to step down as fellow Labour Party members prepare a formal challenge to his leadership. And finally, Alphabet going on a record-breaking debut binge. The Google parent company raising about $3.6 billion in the largest yen-denominated bond deal by a foreign company. Alphabet tapping global debt markets for about $60 billion over the past 4 months.
Yeah, and this highlights how much companies are shifting overseas as they start to see a little bit of tiredness from U.S. investors. I don't want to overplay this because still U.S. investors have seen the outperformance of tech-related debt over the past 6 months and said we need to get a piece of that. At the same time, they don't want to end up with exhausted U.S. investors that have overly concentrated indexes and then have to go create a market over in Japan and over in Switzerland and over in the UK. What's interesting to me is there hasn't been this type of issuance from tech investors over in the likes of Japan or Switzerland or the European continent ever. This is all of a sudden skyrocketing the proportion of U.S. tech debt in those indexes, which again, how can you diversify geographically? You made this point yesterday, I thought it was really salient. How do you diversify geographically when you're exposed to the same thing everywhere you go?
You feel like you're just in the same trade everywhere, South Korea, Japan, whatever it is. As for Alphabet, I believe that number over the last 4 months is bigger than anything they've issued in the history of the company before that. That's a major switch. We mentioned this with Sebastian. I think this is going to be an important theme for the next 12 months or so. We've gone from asset scarcity to abundance. These companies weren't building, now they're building masses upon masses of things across this country and elsewhere. Now let's just isolate it to the tech sector. They were buying back a lot of equity, massive buybacks, and not issuing a lot of debt. Now things are starting to change. It's the opposite now. They're buying back less, and now they're issuing more. And on top of that, what will you see for IPOs? You're going to see more IPOs in the year ahead now from the likes of SpaceX, from Anthropic, from OpenAI. I remember coming out of the pandemic and people saying things like there was an asset scarcity. There was a scarcity of good assets. They were getting bid up by a lot of money. And now you're getting issued a lot of paper in lots of different places in the next 12 months. The forces are changing, and changing quickly.
Yeah, the one offset to that is that the bookings have been accelerating faster than the growth in debt. And the bookings have been accelerating faster than the pace of the build-out of some of this infrastructure until now. And you've seen that from Microsoft. You've seen that from Meta. Any kind of miss on the pace of bookings, the bar is that much higher for it to exceed the increase in spending. And if it doesn't, well, those shares are going to get hammered. Again, it goes to the point of how much are these becoming increasingly utilities versus, say, some of the growth stocks that they used to be. That doesn't seem to be on the radar, at least in performance, on a number of the big high flyers.
The headline act of the last 24 hours, Cerebras, delivering the best opening day since 2000. The stock jumping 68% after raising $5.5 billion in the year's largest IPO. The AI chip maker setting the tone for a year of blockbuster public offerings, including SpaceX, OpenAI, and Anthropic. Dan Ives of Wedbush writing, Cerebras is a watershed moment for the tech sector. The appetite for AI-exposed companies are high in the market. Dan joins us now for more. Dan, for an IPO of that size, of more than $4 billion, that is the best performance we've seen on a single day going back to 2000. Does it feel frothy, or is this a different moment?
Look, it doesn't. I mean, we've talked about it a lot. I mean, this is an AI revolution. And when it comes to the chip trade, that's going to continue to move higher because demand to supply, and we've talked about it from, NVIDIA, 10 to 1. And that ripple effect is across the board from inference to infrastructure. And that's what investors are focused on around the world. And this is something you said, it's really just the appetizer to what's going to be as we go into SpaceX, OpenAI, Anthropic, and others in terms of tech.
You are the bull on steroids, Dan. I think you'll be comfortable with that particular description of your approach to this market. When did you start to get nervous about what's happening here?
Look, I get the sort of view. To me, if I was sitting in an office building and just looking at a spreadsheet, okay, then maybe that's how you could sort of, the bears, that's how they're looking at it. I go, look at when I was in Asia just a few weeks ago, demand to supply has accelerated 20%, quarter over quarter. So when I see companies, if they start to slow down their pace of spending, that's where I can start to get negative. But to some extent, it just continues to increase. And I think in this 9-inning game, baseball game, 3rd inning, 1 out, man on second.
At this point, Dan, Cerebras is a bit different than OpenAI or Anthropic, given the fact that it produces chips, which it doesn't produce CPUs or GPUs. Last night, I was learning about wafers and wafer system engines, which is essentially the full page-sized chip that they sell. How much are we seeing a very different type of response in markets to the IPO of Cerebras that can't really foreshadow what we could see with some of the big IPOs coming later this year?
Sure, it's a great point. I mean, look, everyone, you can't put them all in the same bucket. But when it comes to inferencing and what we see in terms of the overall demand for the trillions of dollars spent, you need to power. And when it comes to the chips, that right now on the supply chain is not just about NVIDIA. We've talked about chip rally. We still think 15, 20% higher at least. From AMD, you've seen it go out to Intel, and obviously you've seen the reaction here. But I think it just speaks to the 2nd, 3rd, 4th derivatives around the AI trade. I mean, and that's our view. And I think software is included there. It's why I believe we'll be looking at NASDAQ 30,000 over the next 6 to 9 months. That's driven not just by big tech, by the 2nd, 3rd, 4th derivatives of what's going on in this revolution.
One thing people have noted, Dan, is that there are going to be winners and losers. You've talked about that as well. I think about some of the IPOs that are on deck and then some of the negative press around one name in particular, OpenAI, now in news with respect to a breakdown in the relationship with Apple. Are you getting a little more nervous that they're losing their thunder to Anthropic and that even with overall things really accelerating, that will be one loser potentially in the not so distant future?
Yeah, look, right now, I mean, the narrative is a bit negative, but I think that's actually much different than the reality. I think they're going to be one of the core winners when it comes to enterprise. They've obviously gone through a lot of changes relative to Microsoft and relative to some of these deals. You see the Apple news, the Musk trial. So we're going through one of those periods. But when I think about winners over the long term, I mean, they're at the centerpiece. And even though Anthropic right now, clearly the best model and what they've done is almost historical, I think you cannot paint these companies with a brush just based on near-term news. This is just the beginning, and OpenAI is going to be one of the foundations of the AI revolution.
Hey, Dan, it's good to catch up, as always. What a move in yesterday's session. Dan Ives there of Wedbush. Happening right now on Air Force One. The president just engaging with reporters, getting some headlines from that particular conversation, saying she and I agree on trade very much. He didn't ask China for favors when it comes to Iran. He goes on to say, on Taiwan, we'll make a determination about arms sales to Taiwan. We think we'll be fine on the issue of Taiwan.
That's probably not enough detail to give people any sense of exactly what's going on. That could mean a couple of things, including that was part of the discussions and that could be revisited. There already have been arms sales that have been promised to Taiwan. Will the U.S. go through with those particular transactions?
We'll try and get you some more on this. The president on Air Force One making his way back to the United States. Let's give you an update on stories worldwide this morning with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. Well, as President Trump departs China, another world leader is coming. The South China Morning Post reporting Russian President Vladimir Putin will visit Beijing next Wednesday. This will be Putin's first trip abroad this year. Meanwhile, we are seeing shares of Boeing falling just slightly as investors react with some disappointment to President Trump's announcement that China agreed to buy 200 Boeing jets in a multi-billion-dollar deal. Bloomberg Intelligence reports the market had been expecting an order of 300 aircraft or more. And Apple and OpenAI's partnership is on the rocks. Sources telling us here at Bloomberg, the AI startup is exploring possible legal actions after not seeing the expected benefits from its deal. No final decision has been made. That's your Bloomberg Brief. John.
Yahara, thank you. More from Yahara in the next hour. Up next on the programme, the UK's leadership revolt.
We are stuck in a world of governments that don't focus enough on growth. It's all going to be quite drawn out, and if we got to an end conclusion, we would still have a Labour government that at the moment is fixated on lots of things that don't include growing the economy more quickly.
We'll have that conversation in just a moment with Jayati Bharadwaj of TD Securities, live from New York City. You're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement. Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Right now on Air Force One, the president conducting a conversation with reporters, getting a readout of that, just some headlines dropping across the Bloomberg terminal. I'm going to share some more of these headlines with you. What's interesting here is what the president is telling us wasn't discussed with the Chinese. We didn't discuss tariffs with China. We didn't talk about the H200 chip coming out of NVIDIA that we were talking about through this week. Didn't discuss that either. It's curious that they didn't talk about tariffs. It seems almost difficult to believe that didn't come up in conversations.
And it checks out with some of the commentary about some of the purchase commitments from from Xi Jinping to the United States, whether it's GE engines or whether it's soybeans. But what President Trump was saying they talked about Taiwan is sure to raise a lot of eyebrows, saying that he doesn't want to see a fight over Taiwan, that would be a strong confrontation. and we'll see what we're going to do when it comes to arms sales.
We'll come back to these headlines throughout this morning. Equities this morning down by 0.8% on the S&P, negative by more than 1% on the Nasdaq. Some weight on the tape born in the bond market this morning. Yields up across the curve, not just stateside, but in the UK by a whole lot more. Check out the UK. The UK up by double digits on a session. The 10-year right now up by 13, 14 basis points, 513 on 10s. Under surveillance this morning, the UK's leadership revolt.
We are stuck in a world of governments that don't focus enough on growth. It's all going to be quite drawn out, and if we got to an end conclusion, we would still have a Labour government that at the moment is fixated on lots of things that don't include growing the economy more quickly. We don't look like escaping this until someone comes in and says, we need more growth.
So here's the latest this morning in UK markets. Yields up, the pound nearing its worst week since 24. A potential challenge from Manchester Mayor Andy Burnham casting doubt on Prime Minister Keir Starmer's political future. Joining us now from Downing Street, Bloomberg's Lizzie Burden. Lizzie, just describe the characters involved and set the stage for the next couple of weeks in British politics.
Well, no formal challenge has been made yet, John, but Andy Burnham taking the first step to topple Keir Starmer here. He is known as the King of the North, very popular as Greater Manchester Mayor. He's Polymarket odds favourite to replace Starmer. He's the only senior UK politician who polls positively among voters, according to YouGov, a polling organisation. And yes, he's got past the first step. There is a seat opening up for him to stand in, but there are so many hurdles in the way. He's still got to be approved by Labour's National Executive Committee. He's got to win this by-election, and Reform are going to throw the kitchen sink at this election. It was a seat where they had the sixth highest vote share across the country back in 2024, but apparently Burnham wants to stand against Reform so that he can say, I beat Nigel Farage in a by-election, I can beat him in a general election. If he does manage to win the by-election, then he's got to have 81 Labour MPs back him in a leadership, to get to a leadership contest, and then he'd likely be standing against the former number 2, Angela Rayner, and maybe the former Health Secretary, Wes Streeting, although curiously, notably, in just the past few minutes, John, Wes Streeting has posted on X that Andy Burnham has the best chance of winning this by-election. We need our best players on the pitch. There's no doubt Andy Burnham is one of them. So keeping his cards close to his chest in the sense that he isn't challenging Starmer yet. He's actually backing Burnham in this by-election.
Lizzie, appreciate the update. Lizzie Burden there, covering the UK politics for us. You see it playing out pretty clearly in UK assets. The future is uncertain. It's unclear, Bramo, as to whether Andy Burnham even wins the by-election. There's a couple of hurdles to get through before we even talk about taking over from Keir Starmer.
That said, the longer this goes on, the more uncertainty there is around the fiscal backdrop of the UK, and that it's not helping either the bond picture or, frankly, the currency.
Here's the take from Jayati Balawach of TD Securities writing the following. We expect the pound to remain under pressure versus the US dollar and the euro as political friction plays out in the UK. Jayati joins us now for more. Jayati, good morning.
Good morning.
What is specifically a UK problem right now? Because we see global bond yields rising, but in the UK much more so. What's specific about the UK issues?
As we were just discussing, it's clearly the political risk premium playing out in there, especially after Burnham yesterday, because there's a massive risk premium associated with him. He's clearly very popular, but he's popular because he's talking about a lot of fiscal easing policies. He talks about housing projects, infrastructure projects, social spending, public welfare programs. All of them cost money, which is something that gilt markets do not like, given that UK's debt to GDP is surprisingly very high for the economy. That usually raises concern if the UK can balloon up that deficit, given their potential growth is, let's say, lower than the US economy. So that is what's weighing on the pound and gilts right now.
How much is the U.S. unique in terms of avoiding this type of dynamic? We've seen sort of little signs around the margins that different types of policies could unleash this type of reaction. Do you see that in the cards in terms of some sort of Fed reaction to higher inflation leading to a response to the dollar?
So that's a very good question, because I think the U.S. up until, let's say, 2025, would not trade like an emerging market, which the UK is, which is where even if there were any fiscal concerns in the US, markets would just ignore it off, and then treasuries were a lot more resilient. Since the last 1.5 years, a lot of things have changed, and you have seen a little bit of signs of that emerging market trading behavior in the US and the US dollar as well, which is where around the One Big Beautiful Bill, treasuries did start getting a little bit of concern. So that's something very different from the last year. Even right now in the conflict, you can see that the dollar is really struggling to rally. US treasuries, are selling off. There's so much inflation concern, but the broad dollar as a whole is really struggling to meaningfully rally and behave like the safe haven it was. Even if you go back to 2022, which is when we had the last big oil price shock, the dollar massively rallied in that year. If you look at how it is trading right now, it's very mediocre compared to that.
How much is this a story about policy, and how much is this a story about the debt overhang in developed markets that is dwarfing some emerging markets and leading, frankly, to a more haven-type trading in a number of emerging currencies versus the developed ones?
I think I wouldn't say that's the debt concern in the U.S. is not the main driver. I think the main driver has been that the U.S., instead of being shielded from the global shocks of the world, has now become the driving, emanating source of it, thanks to U.S. policy. There's so much uncertainty coming from the U.S. instead of the U.S. being shielded from the global shocks. I think that has led to a big perception shift around people just blindly pulling money into U.S. assets and then also doing it in the U.S. dollar. So we've seen marginal allocation of global wallets now go to equities outside the U.S., to global commodities. That's a big shift. And clearly the deficit profile, I think, has been marginal chips in the armor. You've not seen one big move in Treasury suddenly, but there's been clear chips in the U.S. armor over the last year and a half.
You're at no cuts for this year now, right, over at the Federal Reserve?
Yeah.
That's a change from you guys.
Yes, that is
true. What changed?
Honestly, the incoming data in the U.S. has been more resilient. The labor market side of the story is staying stable, unemployment rate stays stable. With that, inflation has clearly started surprising to the upside. The PPI report recently was a big surprise to the upside. And interestingly, while you're seeing that in energy as you should, some of the core services side also remain resilient. So that forms a picture where the Fed should not be in a hurry to ease interest rates again. Clearly, in the last Fed meeting, the bias had already started to shift because there was a hawkish dissent which had not been noted in quite some time. With the energy price shock and the fact that the U.S. economy remains resilient, the Fed should not be in a hurry to ease interest rates, which I'm sure will be a problem for Warsh, given the person who appointed him wants him to do.
You're not alone on that call either. That list is getting longer and longer. Jad, it's good to see you. Thank you. Jadi Balaraj there of TD Securities. Coming up next, Alistair Pinder of HSBC, Henrietta Trays of Veda Partners, Lorraine Hutchinson of Bank of America, Subhashira Chappa of SocGen. The second hour of Bloomberg Surveillance just around the corner.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility. There's still room to maneuver. We do see opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Labor market is still in this balanced environment, whereas inflation is moving away from the 2% target.
It's a pretty good economy, but that doesn't mean there's not tensions.
For the vast majority of this Federal Reserve, just doing nothing is tightening.
The case for a rate cut here gets tougher and tougher.
There's a greater probability priced in of a hike.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Here's the price action this Friday morning. We're negative by 0.8%. We've had quite a run. We were poised for a 7th consecutive weekly gain on the S&P 500. This morning, we take a bite out of that rally. On the Nasdaq, down by 1 full percentage point. Some of the nervousness in fixed income. Yields up across the curve. 2s north of 4%. 10s through 450. Your 10-year this morning of 5 basis points.
Yeah, Lori Calvasina of RBC Capital said earlier this morning that when we start getting to about 5%, all of a sudden it's risk off completely, and it really throws away some of the bull cases. That said, there's 1-2 punch here. On one hand, you've got inflation that seems to be resurgent around the world, yields going higher. On the other hand, people are getting a little nervous after the likes of NVIDIA rallied 20% in the past 7 trading sessions, adding $900 billion of value to their market capitalization. When they add a Berkshire Hathaway to their valuation in 7 trading days, people start to say maybe this is getting a little heady.
Catching a flight to China is worth $100 billion of market cap.
I mean, clearly.
More than $100 billion.
More. I mean, it's a pretty lucrative plane trip.
That's the tech move. We'll talk lots about that throughout this morning. Also, this bond move. The energy story, really hot PPI coming out of Japan, the leadership issues in the UK, the uncertainty, the lack of clarity around the reaction function of an incoming Fed chair. This is really important. Kevin Walsh is getting an early test from the bond market. The yield on the 2-year, just to isolate that point of the curve, trading above the policy rate of the Federal Reserve. Starting to think more and more about the risk, maybe not the base case, but the risk of a rate hike.
It is feasible to have an easing bias when you have disinflation. When you have reacceleration of inflation, it becomes a very different proposition. And reacceleration and inflation led by myriad different factors. This isn't just energy. When you strip out energy and food, you still see inflation running hot, tied in part to the hyperscaler spending and other materials and mining equipment. So you're looking at all of this and you're saying, what happens if the Fed doesn't hike rates? Well, that's the long end of the yield curve. And oh, by the way, this is global. As you've mentioned before, there aren't sort of the linchpins of Japanese bonds at 0% with them owning the market. You take a step back. We have ended the zero rate regime, and we are so far away from that. And how much are monetary policymakers prepared to enter a stagflationary type of feel?
Enter geopolitics. Let's talk about this. The president having a little gaggle on Air Force One right now, a conversation with reporters, getting more and more headlines from this. Lots on Taiwan. We'll spend some time on that, but this just crossed. On Iran, on enriched material. If we don't get the nuclear dust, we'll go in. The President of the United States just moments ago.
Yeah, one thing after another that's giving people the jitters that maybe the ceasefire is irrevocably broken, or at least that we seem to be entering a more fraught scenario. This also comes with the president saying that we don't need the Strait of Hormuz, also saying that they've been militarily defeated already, but still there's that issue of the Strait of Hormuz. very mixed messages coming from the president. Either way, the bar for re-escalation seems to have gotten a lot lower, especially with the deliverables from this meeting in China.
Anne-Marie's still in Beijing, in China. We'll catch up with her in about 10 minutes' time on those particular comments coming from the president. They continue. There's headlines keep dropping across the Bloomberg. Crude right now, Brent around 108, WTI around 103. Coming up this hour, we'll catch up with Alistair Pinder of HSBC, with stocks under pressure from higher bond yields. Henry Trades of Vader Partners as President Donald Trump concludes his meetings in China, and Subhadra Chappa of SocGen, with Kevin Warsh set to take over the top of the Fed. We begin this hour with stocks pulling back from record highs as bond yields push higher. Alistair Pinder of HSBC still bullish, writing, we revise our year-end price target on the S&P to 76.50 on, we've heard this so many times, earnings strength, but we could see it breaching 8K. Alistair joins us now for more. Alistair, good morning. Good to see you.
Thanks for having us.
Seen so many upgrades to price targets. Can you just take a step back before we get into all of the details? How stellar, impressive has this earnings season been?
It's been amazing. I mean, to put it into context, we're getting, 27% earnings growth for the S&P 500 this year. That's going to be its strongest really since post-COVID. The number of companies that are beating has also, basically been since post-COVID highs. And I think the really interesting aspect here, this is just not just a tech or Mag 7 story. Strip out tech and Mag 7, you're still getting 13, 14% earnings growth from these companies. Again, very resilient, much higher than expectations. So it's the breadth of earnings which has been the most surprising to us. But again, what continues to drive the market higher here is the tech and the AI narrative.
There's a phrase that I'm going to borrow from a colleague of yours at HSBC, danger zone. Max
Danger
Kettner
zone, yeah.
Talks about the danger zone. Are we in the danger zone in the bond market?
We are. We're in the danger zone. And this is the trade-off now for markets, which is as soon as we get, the US 10-year bond yield pushing above 4.5%, the market's going to have to weigh the challenge between higher bond yields squeezing valuations and the earnings numbers, which have been so phenomenal. But it is a concern, and that is the downside risk here, that if we don't get oil coming down, if we don't see clear signs of de-escalation in the Middle East and progress towards opening the Strait of Hormuz, if this continues through June, July, the downside starts becoming more apparent for the S&P 500 here.
So just taking your advice, I'm looking right now at a 10-year yield of 4.53%, and I'm ready to hit sell. Why shouldn't I, right? I mean, if we're in the danger zone, why is that not the logical response?
I guess our view is, and our base case is, that there will be some normalization of the Strait of Hormuz in the next month or so. Our view is that oil will start to creep back down towards the end of the year, and that should start to put some of the pressure off bond yields. So, the base case here is that the market is already pricing in a pretty panicky kind of scenario, and we don't think we're there just yet. I think that, what makes us more concerned is, again, if this persists throughout the summer. And, from an economic perspective, a good way to frame it is that, US consumers have received almost $50 billion in tax refunds this year. More so than 2025. The cost of oil at $100 a barrel is $14 billion every month. So back of the envelope math is like, if we continue to get oil at 100 until June, July, that to me is when things start to turn a lot more negative. The impact on the US consumer, the impact on the US economy starts to turn more negative, and that's when we might see more serious earnings downgrades.
One of the biggest debates right now seems to be putting Paul Quincy versus Sebastian Page. Paul Quincy tried to diversify away from AI in different geographies, but also different types of companies. Seb really doubling down, saying ultimately he wants to get more into AI and more into the US specifically. Where do you sit on the whole diversification issue?
I mean, in a global context, we're overweight emerging markets and we're overweight the US, so we kind of like a bit of both. In the emerging market side, though, we're still playing, tech. We're overweight Taiwan. We're also overweight materials in LATAM, which benefit, by the way, from all of this AI capex spend, from higher copper demand, higher aluminium demand. So, I'm actually leaning into AI almost everywhere. I think what we are really focused on, though, in a global context is two things. One is AI adoption. I think that's how you diversify. Go into the banks, which are clearly using AI, seeing productivity benefits from this. And the other theme as well is trying to avoid these stocks which are going to be disrupted by AI. So again, some of these sectors like SaaS, et cetera, where we think there's going to be an overhang, whether it's true or not, I think it's hard to disprove in this current environment, but we want to avoid the areas which we think there's going to be fears around disruption. So in the kind of diversification perspective, I'm fine diversifying out of the tech, but when we go into the, X-tech names, I still want to be looking into the areas that get the biggest, productivity gains from AI adoption.
When I hear EM, I always smile. because it doesn't mean what it used to mean. It's now 2 countries, 3 names making up a quarter of the index. The MSCI EM index. Taiwan Semiconductors, 14%, a little bit more than that. Samsung, it's about 6% of the index. SK Hynix is a little more than 4% of the index. We're reducing things down to just a handful of names. I just got this note from CIBC, Chris Harvey. I'm sure you know him. Chris said this, by our calculation, this is SPX. SPX attribution. Tech and communication services have accounted for 90% of the returns of SPX since the end of Jan until yesterday. On an individual basis, 9 names accounted for roughly 90% of the return over that period until yesterday, with NVIDIA responsible for 20 to 25% of the overall return. Do you think that's a problem? Is that necessarily a problem?
I mean, you know, I do laugh about this conversation about concentration because everyone says it's a risk. I'm like, well, it's a risk in both ways, downside and upside. If you think that this concentration, the names that are driving, you know, the upside here are going to continue to outperform, that's great. And so you take the EM story, and it's kind of funny because you're saying that, you know, EM is not what it used to be. I would disagree a little bit. What was EM in 2000 to 2010? It was a commodity cycle. Well, DRAM and semiconductors are the commodity of the AI era.
Smart.
So is it not just that we're in a different kind of commodity play here for emerging markets? And I'm totally bullish on that. And so I'm totally leaning into this. If I think there's going to be more capex from the hyperscalers, $150 billion in capex estimates just being added for 2027 and 2028, 20% of that goes to the Korean memory names. I'm leaning into this. So I don't have any issue, particularly when, you know, the Korean stocks and the Korean memory names trade on 6 times earnings. To me, it feels like a bit of no-brainer to go into that.
As prices go up of those commodities, those new commodities, how elastic is that demand for these particular goods?
I mean, it's completely priced inelastic. I mean, you're seeing, you know, the memory names basically saying they're entering into 3 to 5 year long-term agreements with the hyperscalers because there's so much demand for it right now. And why that's so important is because it reduces the, you know, price volatility, and it gives us much more earnings visibility than we've ever had before. 3 to 5 years of, you know, the big hyperscalers saying, hey, we're going to take out all of your supply. To me, that is a very bullish narrative here.
Alistair, good to see you. Appreciate the framing. Interesting stuff. Great response. Alistair Pinder there of HSBC on the insatiable demand for some of these goods in tech right now.
And we've seen it in terms of pricing power. I mean, just how elastic is it? Pretty inelastic, it seems like. And they're being given a long rope when it comes to debt investors that are investing in some of these issues. I think one of the skepticisms here is we don't know what we're building toward. We don't know the end point. When is it going to be enough AI? When are we going to reach some sort of equilibrium where things stop moving at such a rapid pace? We have to keep spending this much on infrastructure. That's one overhang, I think, that's leading to a little bit of anxiety.
From capacity constrained to over constrained, and that's the bus, right? That's the overcapacity, that's the bust.
Yeah, or just what does the world look like? I mean, not to go all existential, but these are the questions that a lot of people say. What is the ultimate existence of humans in this AI world? I know this sounds science fiction. No, but this is actually, I mean, I don't mean in a negative way. I mean, truly, you know, where do they fit in the world that's controlled by, you know,
robots and AI? On the NASDAQ right now, down by 1.2% on the NASDAQ 100. It was going so well. On the S&P 500, down by 0.9, with an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. An Indian-flagged ship sinking in the Strait of Hormuz this week after coming under attack near the coast of Oman. The Wall Street Journal reporting India's foreign ministry says Omani authorities rescued all the crew after the attack without saying who was behind it. The U.S. House narrowly rejecting an effort to stop the war in Iran and remove U.S. troops from the region. President Trump saying hostilities officially ended at the 60-day mark, a declaration that could help the administration avoid seeking congressional approval for its operation. And U.S. Trade Representative Jamieson Greer expects the U.S. and China to restore ties for agricultural products. Greer telling our own Anne-Marie Hordern in Beijing that a new trade deal could open the door for U.S. businesses.
And we expect to also see an agreement for double-digit billion purchases of ags over the next 3 years per year coming out of this visit. And that's more general. That's aggregate. That's not just soybeans. That's everything else.
Greer also confirming that 2 countries will establish a board of trade to oversee a cut down on $30 billion worth of tariffs on goods. That's your Bloomberg Brief, John.
Yahara, thank you. Thanks for the update. Up next on the program, tariffs on the back burner.
President Xi's an incredible guy. Got along, made a lot of great trade deals. They're paying tariffs. They're paying substantial tariffs, but we didn't discuss.
Up next, we'll catch up with Anne-Marie, plus Henrietta Trays of Vader Partners from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Just a bit softer here. We're down by 0.9 on the S&P 500. On the Nasdaq 100, down by 1.25. Record highs coming into Friday, heading towards a decent, robust week of gains. But running into this in the bond market. 2s, 10s, 30s, yields creeping higher. Stateside up by 5 basis points on 10s through 450, approaching 5.1 on a 30-year. Jitters in the UK around the leadership race, much bigger moves there, but also big moves in Japan as well. The backdrop globally, if all these countries have got anything in common right now, it's higher energy prices and limited fiscal space.
Yeah, right now it seems like when people see higher PPI prices and significantly higher, I think it's fair to say these are huge beats when it comes to some of the inflation rates in the United States and over in Japan. People are saying, what's the offset to this? Probably there will be the desire to have more fiscal spending, even though there isn't necessarily the headroom for it.
Elsewhere, the summit wrapping up between the US leader and the Chinese leader. The President Donald Trump making his way back to the US on Air Force One, engaging with reporters just moments ago. Check out some of these comments. Under surveillance this morning, tariffs on the back burner.
President Xi's an incredible guy. Got along, made a lot of great trade deals, including over 200 planes for Boeing with a promise of 750 planes. We didn't discuss tariffs. I mean, they're paying tariffs. They're paying substantial tariffs, but we didn't discuss it.
So here's the latest this morning. Tariffs failing to make the agenda during a summit between President Donald Trump and Chinese leader Xi Jinping. President Trump offering more details of the talks as he returns to Washington from Beijing. Anne-Marie has more. Anne-Marie, some intriguing comments on a range of issues. Let's start with Taiwan. What did you make of what the president had to say in the last hour?
Well, the president definitely wanted to make sure he was socializing the issue of Taiwan in a very delicate manner, but he really pulled back the curtain and brought reporters into the discussions. He said that, of course, it came up. He was asked about the 6 assurances from President Ronald Reagan in 1982 that you would not consult China in regards to arms sales to Taiwan. He said, 1982 was a long way away. She wanted to talk about, what am I supposed to do? Not engage. And he said, though, when he was asked, would the United States defend Taiwan? And he said he's the only person meeting him, President Donald Trump, that knows that. And he said he was asked about it today as well by Xi Jinping. Xi Jinping asked him, would you defend Taiwan? And he said he will, in the coming days, make a decision about the arms sales, that $14 billion package that's been in the docket that was not approved before this trip. He said he'll be making that decision in the coming days. So that is something we should be on the lookout for. But he said, you know, who wants a war right now, 9,500 miles away?
Anne-Marie, the Chinese leader is a dictator. The U.S. leader is accountable to the electorate in the U.S. and in Washington, D.C. I imagine there's members of Congress who have their own thoughts about what should happen here. What is the president going to arrive back to in Washington, given this exchange?
Well, Jonathan, before the president left Washington for this trip, he got a letter from a number of senators, Democrats and Republicans, that wanted him to move ahead quickly on the $14 billion package that's waiting in the wings when it comes to the arms sale to Taiwan. We should note it is not unprecedented for former presidents as well to not immediately clear an arms package ahead of a big trip with the Chinese leader. You don't want to really mess with the imbalance of how this trip, potentially some of the deliverables you want to get out of this trip. It's a very sensitive, delicate issue. So that is not unprecedented. What is going to be interesting, as you note, is what kind of pressure the president gets when he lands in Washington, D.C., based off this exchange, given the fact that clearly Xi Jinping made Taiwan their red line. I go back to what happened yesterday. The meeting wasn't even over, and what we had from the Chinese readout was that Taiwan needs to be handled appropriately, and if mishandled, that could lead to conflict and a dangerous situation between Washington and Beijing.
Anne-Marie with the latest in Beijing. Anne-Marie, thanks for your work over the past week or so. Just fantastic. Henrietta Trace of Veda Partners joins us around the table here in New York. Henrietta, good morning.
Great to be here, guys.
How does Congress respond to what we've just heard?
Congress is not going to take this happily. There are so many more China hawks that still exist in both the House and the Senate side, and their first reaction to this China summit is going to be, why are we talking about Taiwan? We should be talking about soybeans. We should be talking about investments. There are tariffs across $350 billion worth of goods, and instead we're talking about arms sales to Taiwan, which is very much China leading the direction of the conversation, leading this overall meeting. And that's going to be the core takeaway for members.
What do you make of the trade agreements that were reached in terms of the 200 Boeing planes versus the initially believed 500 planes and some of the agricultural purchases? How are those stacking up in the United States?
Well, I really want to see the details on the soybean side. I think it's really critical, especially for farmers who saw a 46% increase in bankruptcies in 2025, that they have, under President Trump from his first term to his second term, seen major shifts in soy purchases. China has cut us off. The deal that Ambassador Lighthizer reached in 2020, when they had their first major trade agreement, was for 142 million tons of soy over 2 years. The deal that Secretary Bessent reached last year was for 87 million tons of soy over 4 years. That's a 69% drop. And now here we don't have any details of any soy purchases. The farmers are in a bad way, and that's a problem for Republicans across the board.
The message coming out of these meetings is that the priority is some of these purchase agreements, right? That the idea is to get engines and to get planes and to get soybeans. It isn't necessarily on having a hard stance with Taiwan, staking a geopolitical place in the world versus China. Is that where things are shifting among the populace in the United States?
I'm glad you asked. I look at this data all the time to see if there's a chance that Americans care about foreign policy. It does not register on Americans' radar. They care about inflation, prices, the economy, and then way down at like 11th, anything foreign policy related. They do not concern themselves with Taiwan. That is a core issue, as you point out, John, with the members of Congress and China hawks and defense hawks, but it doesn't register on an American public that feels very pessimistic about their finances, about their job prospects, and is overall anxious.
Local issues. I see this play out in the UK as well. When you see particular leaders talk about these big global issues, foreign leaders talking about the US leader, I don't think in the UK, for instance, UK is a great example of this, by the way. When you start moaning about what's happening abroad and the mistakes other leaders are making internationally, people feel ignored at home because they want their local issues taken care of. Are we going to take care of those issues going into the midterm? Are we going to see more specificities when it comes to those kind of things?
I think it's important to look at the bills that are being introduced, as you point out, and I think there's two that I would highlight for the average American. One is, how long is this war going to go on? How long are gas prices going to be so elevated? And there is a war powers resolution that allows the president to perpetuate the war through September 1st. That is the shortest duration authorization of military force that I've seen. There's other proposals out there for 12 months. And then the second piece is the gas tax holiday. And the gas tax holiday does not have enough support to pass, but it's informative to look at the dates associated with it and how long lawmakers think that gas prices are going to be high for. The bill that was introduced this week by a Republican in the House lasts through December 15th. They are expecting this to go on for a long while.
This is the federal gas holiday. What are they doing at the state level to achieve something similar?
Different states are doing different things, and in some cases they have a higher gas tax, so it's helpful. Georgia, for instance, has a 33-cent gas tax. They've already suspended theirs. Oftentimes states are doing 30, 60, 90-day suspensions, but the federal level, the votes aren't there at the federal level, so the president would have to act the executive order, which most other administrations have determined they cannot.
Just to bring it full circle, at what point does Taiwan become a local issue when it has to do with chips? I mean, it's one thing to say this is just a geopolitical issue. It's another thing when suddenly this becomes a massive market issue and, frankly, every electronic product issue that everybody has in this country. At what point is that connection drawn?
Well, I mean, I think the PPI data really tells you that there's going to be those costs that cycle through, and it, whether it's the Strait or whether it's Taiwan, that's in your refrigerator, that's in your telephone. You're going to need to buy all those things, and costs for there from PPI data being released, it's a 60 to 90-day lag before it starts hitting consumers. So it's coming for the American public. Maybe they won't recognize that it's due to Taiwan or maybe even the Strait, but they'll feel the pain, and it'll continue to register in the inflation data.
Henrietta, it's good to see you, as always. Thank you. Henrietta Trays of Vader Partners. I'm sure they're able to draw the dots. It's pretty obvious. The question they're asking is, why are you there? And convincing the American public that you should be there is the hardest task right now.
Especially because our reserves are down, right? I mean, how much have the munitions been depleted as a result of some of what's been going on in Iran? Questions of different troops that have been deployed for months and months and months on the sea. Where is the willingness, especially with the cost already rising for that military incursion? Again, questions that people want to know. How much did Xi Jinping take advantage of that fact?
It gets difficult to offset that at the federal level, not just in the US, but in places like the UK, across Europe, in Germany, to issue more debt when you see the pushback coming from the debt market at the same time. It's almost like a perfect storm right now in fixed income, pushing back.
Well, Torsten Slok made this point yesterday. I thought it was really important, which is if there is another economic downturn, where is the ammunition going to come from on the fiscal side? And how much are bonds going to act as a haven as they have in the past if there is this push-pull between fiscal stimulus, inflation, and so much debt sloshing around?
Well, thank goodness we're done with the hantavirus now, right?
Well,
we're done with that. We moved on.
We have, although there was a story about how just natural sickness is actually on the rise on cruises.
We don't have to shut down the economy.
No,
good.
We're good. No hanta.
Lorraine Hutchinson of Bank of America up next.
weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Equity futures right now pulling back from all-time highs. We're down by 0.9% on the S&P. Coming into Friday, as of Thursday at the close, up for a 7th consecutive week. The longest weekly winning streak going back to December 2023. Will we undo that, upend it with these moves? We'll see. We're taking a bite out of that move so far. We're down by 1.3% on the Nasdaq 100. Driven by these moves in fixed income, yields higher, stateside and worldwide, on 10s right now through 450. Of 5 basis points on the session, near the highs of the year on 10s and 30s, and worldwide, levels we haven't seen in decades over in Japan.
Unclear exactly what the lever is going to be for monetary policymakers to constrain this. You see the Bank of Japan refrain from hiking rates again, even though people expected them to do so. And here in the United States, there's an expectation that the new Fed chair, who is going to come in possibly next week after today being the last day of Jerome Powell's term, coming in will not have the desire to hike rates either, despite what we're seeing in the bond markets. These two factors really adding to the mood in markets.
Let me bring up the US curve again and just think about where we are right now. So twos, as we've stated repeatedly through the week, trading above where the policy rate is at the Federal Reserve. This is going to be a really interesting moment for the incoming Fed Chair, Kevin Warsh. What does he choose to prioritize? If he tries to clarify his reaction function and anchor the front end of the curve closer to where the policy rate is, where does that leave 10s and 30s? And how vague is he going to be about what he wants to achieve with the balance sheet at the same time? So we talked about this repeatedly too, that every central bank chief gets their test in the market. Always happened to Powell, happened to Yellen, seen it abroad, happened to Lagarde. Is that moment starting to build for Warsh very early on, before he even gets in the seat?
He comes into a fraught moment where suddenly the dual mandate of the Federal Reserve is very much potentially in conflict, although people are saying they're seeing green shoots in the labor market. And this is someone who has traditionally been a hawk. I think it is important to reiterate that. So his reaction function has actually been to hike rates in the past. How much has that changed in the Trump era?
Turns up 5 basis points, 4.53 this morning, 2 hours away from the cash open, the opening bell just around the corner. Danny Berger has your morning movers. Hey, Danny.
Hey, John. Some of those higher bond yields are taking some of the air out of the hottest trades. The hottest trade, of course, being a lot of the chips and semis on that record run. So a few things going on, that being one of them, too. Cerebras, we got this blockbuster IPO yesterday. It rallied 68%. It's down just about 1%, so not nearly enough to undo the huge rally. But again, a lot of optimism. Some of that comes out. We also end the U.S.-China trip without any meaningful deals around chips, around NVIDIA, for example. So most of the sector down this morning. Intel getting hit the hardest, down 4.3%. Elsewhere this morning, Figma reporting earnings, and shares are up nearly 11%. It's all about their AI-driven offerings. They have Figma Make, a tool that enterprises can use, and they did cite a lot of large enterprise adoption, so positivity there, up 10.5%. Elsewhere in earnings, Gemini, the Winklevoss twins, crypto exchange, also reported earnings. It's rallying a lot, not necessarily on the numbers, but a strategic investment from the twins themselves, $100 million at $14 a share, so significantly higher than where they're trading. Evercore points out that were it not for that, shares would likely be lower because the earnings missed on a lot of key metrics, but those shares up 20.5% in the pre-market, John.
Danny, thank you. Appreciate it. Do you remember the whip around over at Blackstone?
Oh, yeah.
That came up with all that money? That's the whip around over at Gemini. It's not bad, is it? Some deep pockets there.
I mean, when you start thinking about some of these founders, I mean, wasn't it the founder of Cerebras now is a $3 billion man overnight? Yeah. It's sort of, you know, other worlds.
It's
other worlds.
Pretty impressive. Not our world. Pretty impressive, nevertheless. On our radar this morning, President Donald Trump offering more details of talks with his Chinese counterpart Xi Jinping. The president telling reporters on Air Force One just moments ago he's made no commitment over Taiwan and would make a decision over arms sales soon. Controversial. Elsewhere, OpenAI CFO Sarah Fryer telling us here at Bloomberg the company may need to raise more capital to meet surging AI demand.
We have seen an incredible lift in our revenues to match just the demand that I'm talking about. On top of that, we have raised a lot of money. I am not averse to raising more capital, although right now that $122 billion gives us a lot of optionality.
Fryer adding that future fundraising will depend on the gap between computing power needs and what OpenAI can afford. And finally, Bramo mentioned it, Cerebras Systems soaring more than 68% in its highly anticipated public debut. It's the largest IPO so far this year, as appetite for AI data centers and the chips running them continue to grow. That stock down just marginally this morning by 1.6%.
Yeah, but as you were noting, the best debut of its kind in decades. And what we're seeing right now in markets is a really warm reception for a chip maker. And this is the key. It's a chip maker. This is not OpenAI. This is not Anthropic. This isn't SpaceX, although it potentially sets the stage for a really profitable moment for them as well later this year when they IPO. Nonetheless, they sit at the epicenter of the spending boom from the hyperscalers. They make a different kind of chip than CPU or GPU. I was looking at its clients. Guess who's in there? Yes, Amazon Web Services, but also OpenAI. So how much are these all integrated as well and relying on one another to continue to profit as they build out the AI?
In one word, very. We'll talk about the K-shaped consumer in a moment. The K-shaped market as well. There are companies that have access to the market right now, both public and private, that can raise tons of money, can come to an IPO, come public and have a move like that on its debut. Alphabet can tap the bond market here, there and everywhere, met with fantastic demand. I just wonder how bifurcated that is. The AI ecosystem, so to speak, and then everybody else.
Well, you've seen that with some of the potential losers from AI, with the SaaScopolis or this software as a service that potentially gets undermined as a result of people using AI to build their own rather than to buy their own. So going forward, this is going to be the debate. How much dispersion should there be? Who are the winners in the AI sphere going to be? And will the appetite remain for all of the other much, much bigger IPOs, it should be said, that are on the schedule for later this year?
That's the K-shaped market. Let's talk about the K-shaped economy. Turning to retail, investors awaiting earnings next week for another reading on consumer spending. Lorraine Hutchinson of Bank of America writing, we expect TJX, Ross and Burlington to speak to a strong start to the year supported by elevated tax refunds and trade down driven by gas inflation. Lorraine joins us now for more. Lorraine, good morning.
Hi, good morning.
It's good to see how squeezed the consumers right now.
Not as squeezed as I think people fear. And remember, we're getting first quarter earnings, so it's a little bit of a backward-looking data point, but consumers were receiving very high levels of tax refunds throughout the first quarter. So that served to more than offset any squeeze they felt from gasoline. I think what's really important, and brace yourselves for a big week next week, the forward outlook is, as these tailwinds wane, what happens? Because gas prices are still very high.
What do you think happens?
The wallet. I think that the consumer takes a little bit of a decelerating trend. I think they trade down. I think they use their dollars a little more wisely, and they really search for value.
TJX, the last time they had a down year, I think you've got to go back to, 2008? Something like that. They've had a fantastic run.
I didn't say TJX would be down.
No, I'm going to say they're going to have another up year.
No, I think absolutely not. And when you look at, we've gone back 20 years and looked at times when gas prices spiked. And you look at clothing spending, it falls. Jewelry spending, it falls. Off-price retail behaves much more like a necessity and goes at its normal trajectory. And the reason is their customer may have to trade down, and then an upper income customer trades down into their stores looking for that value, right? Everybody's wallets are squeezed. They end up taking share.
How much are we seeing a K-shaped retail sector? And it doesn't have to do with necessarily the income strata of the clients as much as the success of management teams to really put forward a story that either works or really doesn't.
Yeah, I mean, what we've seen in a time of a little bit of consumer duress over the past year or so is that if your brand is hot, you are really able to get that share of wallet. You know, the Coach brand is a great example of that, right? They just put up a 29% growth rate in North America. I don't think any of us would have expected that a few years ago, but they made some great investments in marketing. They've really elevated their brand, and they've been successful. You can contrast that with a lot of other players, both in the handbag and footwear space. They're not seeing the same success.
Well, I'm going to talk about Nike and Lululemon, for example, which have been underperforming, and we've talked about it a lot on the show. John's been talking about Nike and how they really lost some of their vigor of the athletic heartbeat that they used to be driven by. Going forward, how much can we look at earnings as giving a read on the consumer versus a read on strategy, given the results that we've had so far and given the consumer spending numbers that we've seen from some of the big cards?
Yeah, the results have been so bifurcated, right? You'll see retailer, even footwear retailers like On Holdings or Hoka putting up growth, and then you see Nike putting up declines. So it's really a big share shift, and I wouldn't use Nike as a gauge for the consumer. Nike just didn't innovate like it needed to. And when you have competition nipping at your heels, you really need good product. They relied on some of their old stalwarts instead of really going out and doing what Nike usually does, which is lead the market with innovation.
You don't want to be apologizing. I just feel like Nike as a brand has completely lost its attitude. And we were talking in the commercial break before we came on about the Boston Marathon and that commercial they had, walking tolerated, right? Old school Nike sort of get at it, do it, get aggressive. And then they were apologizing for the walking tolerated. People were offended. They pulled the ad and went with something else. That's kind of where Nike's at today. That is not what Nike used to be. What changed at that company?
Look, they're much bigger, and they now target not just runners, but walkers. And I think they need to remember that. So what changed? They've had a few different management teams come in. And again, I think they lost their focus a little bit on sport. They got into a lot more casual, a lifestyle product, and now they're actually completely refocused on performance product. It will take more time because that's a smaller part of the market, but I think it is the right strategy for them.
From a branding perspective, who's got it right now? We mentioned American Eagle, sort of unapologetic, offended some people, did not apologize, sales went up. Who's got it right at the moment?
I think there are several brands. Ralph Lauren, Coach is certainly having a bit of a moment. Birkenstock put up really strong growth earlier this week. So there are some brands that are doing quite well. The Gap brand is showing a resurgence that I certainly hadn't predicted, but it's been really fun to watch. So yeah, there are several of them with great marketing and good product, and they're kind of coming back from where they used to be.
I think about the Gap CEO, Bramo, you talk to him a lot. He just sort of personifies the brand whenever he walks into the room. Whenever he sits alongside us, he's like, that is the Gap.
Also, he had this to say about American Eagle. He said that you shouldn't shy away from controversy. You should meet the cultural moment. And he is a big believer in telling a story using cat's eye with dances and denim and trying to meet sort of the cultural ideas of the time. You have to kind of lean in at a time where increasingly it's storytelling beyond everything else. And it has to be delivered in sort of viral memes versus some sort of billboard that delivers a message that you have to adhere to.
Nike just seems scared, and that's not what that brand used to be.
Ultimately, it does come down to how do you compete and how do you be edgy. Right now, I was seeing New Balance trying to be edgy when I walked into a store, and I was thinking to myself,
it's crazy what that was to us as kids, right?
You think about, Dad, your sneakers are over here.
30 years ago.
I know, and now they're like platform sneakers with new colors, and, get yours today.
Lorraine, it's good to see you. Thanks for being here. Thank you. Lorraine Hutchinson there of Bank of America. I was thinking the same thing, New Balance, honestly. They were the things that were on sale. You'd never get me a New Balance as a kid.
I went into a Foot Locker recently with a child who needed new shoes desperately. And there were shoes that looked like moon boots. And there were things that were like, 5 feet tall. And they looked like, Tesla trucks. And, whatever. People at least are trying new things. And then you saw Nike, and it was just sort of sitting there in the corner. It's sort of, how do you get your brand out there in your face, even if it isn't the most attractive to everyone?
Like a World Cup coming up as well. Usually they've selected the player with the biggest attitude a ton of flair, they get behind them. I don't see any of that happening with that brand right now.
Maybe they're filming it. Maybe I'm part of it. You just don't know.
Clock is ticking. I hope you are. I look forward to that. All right.
Nobody needs that.
Let's get you an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. President Trump speaking to reporters on Air Force One as he returns to the U.S. from China. Trump discussing his talks with Xi that covered the war in Iran, as well as the situation with Taiwan.
On Iran, it's very interesting. He feels strongly they can't have a nuclear weapon. He wants them to open up the strait. On Taiwan, he does not want to see a fight for independence because that would be a very strong confrontation.
Trump going on to say he will make a decision about arms sales to Taiwan soon. Cuba has run out of the fuel oil it needs to keep its power plants running. President Miguel Diaz-Canel blames President Donald Trump, posting on X that the dramatic decline in conditions is due to what he calls the genocidal U.S. energy blockade. And LVMH is selling the Marc Jacobs brand to a venture between WHP Global and G3 Apparel Group. The deal coming as LVMH looks to capitalize on its higher-end luxury brands, including Louis Vuitton and Christian Dior. A lot of letters there. That's your Bloomberg Brief, John.
Hey, Yahara, thank you. Appreciate it. Thank you very much. Up next, hoping for a transitory transition.
Transitions are important, and I think that, it is maybe helpful to have someone there to give advice, but I still think it's important that it be a transition because you want to have there be very clearly one chairman.
Up next, we'll catch up with Subhadra Japa of SocGen, live from New York City. This is Bloomberg Surveillance.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
bringing you up to the minute news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Stocks just off session lows, down 1% on the S&P 500. Negative across the board here. On the Nasdaq 100, we're down by 1.4. Welcome to the Federal Reserve, Kevin Walsh. Check it out. In the bond market, 2s, 10s, 30s, 2s, north of 4%. That was a bit of a ceiling for this bond market for a while. We've broken through it. Up by 3 basis points today at the front end of the curve, up by 5 to 6 at the longer end of the curve. The 30-year yield just feels a little bit untethered at the moment. 5.1% on 30s this morning.
Unclear exactly what's going to pull it into check, and ultimately it comes down to who is Kevin Walsh, what's his reaction function going to be? Will he be willing to hike rates in the face of inflation that seems to be reaccelerating?
Day one on the job, under surveillance this morning, hoping for a transitory transition.
Transitions are important, and I think that, it is maybe helpful to have someone there to give advice, but I still think it's important that it be a transition because you want to have people's loyalties undivided. You want to have there be very clearly one chairman. You want to have a place where there's no question about who's in charge, and there's no talk of rival factions and things being split.
So here's the latest this morning. Jay Powell's term at the top of the Federal Reserve coming to a close, opening the door to incoming Fed Chair Kevin Walsh. Subhadra Chapter of SocGen writing the U.S. economy remains resilient despite higher inflation, which should keep the Fed on hold for the remainder of the year and possibly even longer. Subhadra joins us now for more. Subhadra, good morning.
Good morning.
To see you. We've talked about this repeatedly this morning. The market often tests a new leader. Is that test beginning a little bit earlier?
Absolutely. I think the bond market's not only just testing the Fed leadership, it's also putting Congress on notice because you're starting to be concerned about higher debt and deficits, which I think is what's playing out in the very long end. In the very front end, the market's starting to price in hikes. What is really, really going to be important for Kevin Walsh is keeping inflation expectations in check. When inflation expectations start to get a bit unhinged, then he has a problem in his hands. So I think, it's very, very important for the Fed to change its bias from easing to neutral and be ready to act if needed.
So in June, that's the opportunity to do that. They also have to put out forecasts. So just describe, and I know it's early, and June even now, we're sort of mid-May, June feels ages away, but when we get to that meeting, what's that SCP going to look like?
It's going to be very interesting. I don't see how the regional Fed presidents change their forecasts meaningfully. If anything, they're going to continue to show a bias towards higher inflation. I think the labor market's still relatively stable. So you're not going to see perhaps a significant rise in the unemployment rate. Growth is going to be interesting. Last time I was expecting maybe they'll start showing, concerns that growth might start to trend lower. That didn't really happen. If anything, you're seeing significant amount of investment in CapEx coming from the hyperscalers for not just this year, but for the next several years. That's continuing to support growth in the U.S.
Would you rather buy at the front end with the belief that the Fed is not going to hike rates no matter what, or the long end, believing that this Fed is more likely to hike rates than a lot of people think?
If I had to make a choice, I would say the front end, but I'm starting to get a bit concerned because bond yields definitely feel like they're getting a bit unhinged. I think we should be really paying attention to the signal that we're getting from the bond market because the bond market's actually starting to say, pay attention to all the dynamics that are happening. Higher oil prices, the potential impact of debt and deficits, not just in the U.S., but globally, and then the overall, picture of this war is not getting resolved anytime soon. The presumption in the markets was that we get through, it'll be a short conflict, and then oil prices start to trend lower. But the longer this drags on and the longer oil prices remain high, I think that really sends a very strong message for both Congress as well as the Fed chair to be much more vigilant.
Can this message be dampened by a Fed Treasury accord?
I think it's too soon for that accord to be put in place. I mean, I think it's going to take months to come up with some sort of a framework that makes sense to be able to deal with this issue. I mean, as it stands, the Fed is somewhat working with the Treasury in the sense that the Treasury is issuing a lot more bills. The Fed is buying more bills and trying to reduce the average maturity of its SOMA portfolio. I'm not sure what else they can do over the near term on that front.
That's the challenge. You can't play the same hand twice. My memory's a bit hazy, but was at the back end of 23 when we saw the changes from Janet Yellen at the Treasury to move the issuance.
Yeah.
And ultimately, the corrective action from the Treasury helped yields to top and then to decline. You can't do that a second time. So what kind of corrective action could we see from the Treasury in response to this kind of thing?
Not really a whole lot. I mean, I think what you really need happening is on the policy front. The Fed's going to have to show some sort of a bias to hike if we see inflation expectations getting unhinged. And more importantly, it's going to be on the trajectory for debt and deficits. To me, that's an under-discussed topic. If you look at the Trump administration's ask on what they want for fiscal year 2027 for defense spending, you're looking at the defense spending going from close to $1 trillion to $1.5 trillion. Extrapolated over the next 10 years, you get some really, really big numbers for debt and deficits. On the other side, there's just no willingness to address that issue. There's not going to be any near-term increases in taxes. We're not going to be able to grow our way out of it. So it's just going to continue to get worse. And the longer interest rates remain high, your debt financing costs go higher. So that's what I'm really concerned about.
You've alluded to this a few times now, so can I sort of spell it out? Do you believe the best way to keep long-end yields anchored is to threaten to hike front-end rates?
Yeah.
Do you think that's an understanding that's shared on the committee?
You mean the FOMC?
Do you think they get that?
I think that there are some hawkish members in the committee. We saw the dissents at the last meeting. They clearly want to change the bias. They want to be prepared to hike if needed. The question is whether the chair and the doves in the committee get the same message.
How many doves are left, just out of interest? How much company is Kevin Walsh going to have? If Kevin Walsh is indeed a dove, because we really don't know that until we hear from him in the seat at the Federal Reserve in the news conference. How much company has he got?
We know that a few of the governors, Waller, as well as Michelle Bowman, maybe Powell, are on the same page. Regional Fed presidents are starting to fray. You do have people like Mary Daly, who's a bit more on the dovish side, but broadly speaking, I think the consensus is starting to slowly move towards at least a neutral stance on policy.
Some real pushback from Michael Barr in the last 24 hours as well. Pretty explicit about what he thinks the major risk is here.
Yeah, and he's just one of a number. We've heard, of course, from the Minneapolis Fed president, from the Boston Fed president, from Kansas City Fed president, Eric Schmidt, who said that he saw continued inflation as the most pressing risk to the economy. So it doesn't seem like this is a Fed that can remain an easing bias. Do they understand that they need to actually adopt a hiking bias in order to tame the long end of the yield curve? June's going to be an interesting one.
I'm just envisioning that June meeting and TK around the table with us saying OBE, overtaken by events, and that event right now, if it was today, would be in the bond market.
Yeah, and then the counter event will be in the Truth Social market. So again, this is the conflicting issue. Are markets conflicting right now? Because at the front end of the yield curve, there is a real belief in a hiking bias at the Federal Reserve. Is that adopted by equity markets? Have they adopted a real hiking bias in terms of their understanding of rates?
Subhadra, it's good to see you. Thanks for being here.
Good to see you
Subhadra Shapper there of SocGen. Coming up, Eureka Hoffman-Bachadi of UBS, Tom Mortensen of Baird, Erin McLaughlin of the Conference Board, plus Scott Cronin of Citi. The third hour of Bloomberg Surveillance just around the corner.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions.
a poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersecci. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
What you have right now is an earnings-driven market.
People want to get exposure to growth and strong economy earnings go ahead.
Earnings momentum doesn't seem like it's peaking.
If you think of what's driving these global markets right now, it's a semiconductor super cycle for the history books.
It's the casting away of fear in its entirety that will end up being the market's biggest problem at some point.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. And your scores, the price action looks like this, pulling back from all-time highs. We're negative across the board. We're down 1% on the S&P, down by 1.5 on the NASDAQ. With these moves in the bond market, some new numbers for you, north of 450 on 10s, up by 6 basis points, and 90 minutes out from the cash open in equities, yields making new highs for the session on 30s, pushing 5.1%.
People are getting a little bit more concerned as they see a yield curve steepening on the margin, even as we're pricing in rate hikes, at least in the margin, by April of next year. That's according to the 2-year yield being above the Fed funds rate currently. You start looking at this, what is it portraying? A bit of unmoored inflation. We're getting that hotter than expected PPI prints around the world, and a lack of monetary policy response to offset any kind of inflationary pressure. And it's not just who the new Fed chair is, but it is a global issue. There is a desire not to stymie any kind of economic growth, even amid inflationary shock after inflationary shock.
Look at the issues globally right now. Leadership issues in the UK. PPI, the hottest in 12 years. Over in Japan, deficit problems there. The lack of fiscal space across the continent in places like Europe. Then in the US, right now in the US, allflation and no stack. So you're not even having growth get hit, which might support the bond market. You're getting hot reads on CPI, on PPI, and the economy right now is pretty resilient. So the bond market's going to keep pushing and keep pushing and keep pushing. And at some point, the test arrives at a doorstep of Chairman Walsh. And I think that test has come a lot earlier than expected.
Yeah, in June, they're going to have to really move either to a neutral bias or even a hiking bias in order to meet the moment that we're seeing expressed in markets. If they maintain their easing bias, that would be a shock. If you take a step back, there is a sea change underway. You were talking about when you and I used to talk about the linchpins in the bond market, negative yields around the world, Japan not moving, them owning their bond market. We're now at a phase where we've seen decades of financialization of markets, and now we're going back to industrialization. We got to pay for that. And we're seeing bond sales up the wazoo to try to pay for that. And all of a sudden, all of that capital that people have had has to go to work. And that is a new regime, and suddenly you got to pay up for that money. So there is a structural overlay that also leads this to be a higher yield environment in a more natural way.
It was a different world. There was a lot of stock buybacks, plenty of capital returns, not much capex, driven by the biggest companies on the planet doing something very, very different. Now it's changed. Now you're going to start to see more debt issuance, Alphabet on a massive 4-month spree, $60 billion worth. On top of that, more IPOs. This is where the story starts to change in the equity market as well. The members of the S&P are still the same big contributors, the same big names that we've been talking about for the last 10 years, but they're different, and they're doing different things. They're spending less on capital returns, they're spending more on investment, and they're now tapping the bond market. And Alphabet's a really interesting example of that, because now they're looking for different pockets of liquidities in different markets, going to Canada, to Japan, to Switzerland, to the UK, just trying to find more and more space to make sure this market doesn't push back.
And they've been received really well. I mean, the numbers are massive, and yet their balance sheet's that much more massive, and people around the world really want to get into their debt because, frankly, it's a good opportunity, and tech debt has outperformed. It's the dispersion, the K-shaped in both consumers and also in companies and also in debt issuers, where suddenly you're going to have a number of names that cannot raise money, that cannot refinance, and what is going to happen to those companies? So can you see a default cycle within a boom market? Can you see this kind of shakeout at a time of otherwise strength? So these are some of the reasons why people are getting very excited about active management.
Cheat guide to today's session so far. Bond yields near session highs, equities near session lows. On the S&P, we're down by about 1%. On the Nasdaq, negative by 1.5. Coming up this hour, we'll catch up with Ulrika Hoffman-Bachardy of UBS, with stocks cooling off from their record-breaking run. Ted Mortensen of Baird on risks that could impact the tech sector, and Scott Croner of Citi on why his preferred AI trade is the Nasdaq 100. What a rip-roaring rally we've seen there through this year. We begin this hour with stocks sliding and global bonds selling off as inflation fears ramp up. Ulrika Hoffman-Bachardy of UBS writing, after a decade of mega-cap dominance reinforced by passive investing, it's now time for active. Ulrika joins us now for more. Ulrika, good morning.
Good morning.
Let's talk about that statement there, that quote. That's important. What's changing, do you believe, that leads to this moment?
Yeah, I think we're at a precipice of new leadership in the equity markets. If you look at the Max 7 this year, it's quite a dispersed picture. You talked about dispersion. We also see this underneath the surface in equities. So 2 of the Max 7 are down. We have, of course, 2 real leaders that are outperforming the Nasdaq, but we haven't seen this before. And so we think AI is increasingly the dividing line between winners and losers in the equity market. And what we're saying is AI is tech, but tech is not AI. And so for us, just investing in the Nasdaq 100 is not sufficient. We want to invest in the AI leaders, and those are companies that are in the semi-supply chain, but also, of course, cloud computing.
Can we build on that a little bit more? We needed the bust in .com to establish the ultimate winners of that era. Do you need the bust in this one, or are we already establishing who the winners might be?
So I think that's a great question. I think so far, when we look at AI, we have been in the opening game of the AI chess. Anybody can win in the opening game. I think now we are starting to enter the middle game of AI. And in the middle game, some players, some pieces are falling off the board. And I think we'll see that increasingly in the course of this year.
I'll name some of the companies that are struggling at the moment. You named some that are down on the year. Meta's struggling. Microsoft's struggling. Alphabet is really not struggling. I don't expect you to be single name specific, but just describe the kind of companies that are succeeding and the attributes they have, and the ones that are struggling and the attributes they don't have. That's the dividing line between one and the other.
We increasingly focus on the physical economy, because if you think about what happened with software, could happen to other parts of the digital economy. If we have more agentic AI, what role will the internet play? Is it going to be a transaction layer, or is it going to be still optimizing for human attention, right? The internet right now is optimizing, converting our attention into transactions. But if agents execute more and more of our consumption decisions, how is that model of advertising going to evolve? So for us, those are some fundamental questions. So we prefer the physical sectors in general not just in AI, but also in industrials, materials, utilities, that are empowering this AI revolution.
How concerned are you about yields in the bond space that are creeping higher, as a lot of the expansion plans are predicated on being able to raise money in a relatively cost-efficient way in the bond market?
You always have to watch yields. I mean, the Achilles heel to any prolonged equity market bull run are rates. So definitely worth watching. Oil, of course, we have now Kevin Warsh coming in. He wants to think about shrinking the balance sheet. Those are all issues that are weighing on the long end. But we do think that we'll see one more cut this year. Kevin Warsh is coming to the Fed at the point where it's been most divisive since 1992. And we think that's going to continue. So we don't see a rate hike or cut. It's just going to be gridlock in our view for the next few months until December.
There are a number of bond traders that are shaking their heads out there who are listening to this and saying, that's not what we're seeing and that's not what we're pricing. Just to do a bit of scenario analysis here, if the Fed were to adopt a hiking bias or actually were to signal that that was a very likely possibility, how much would that dampen your view for equities to keep rallying?
I think we need to see a little bit more than one hike. If you look back at 99-2000, right, it took 5 hikes for the NASDAQ to turn. So it would certainly be concerning, but it probably wouldn't change our base case.
So I guess that here's a question. If you're expecting yields to go down, and it wouldn't matter if yields would go higher, what would shake your confidence, given the fact that we're seeing certain companies that are clearly struggling, and there is this issue of how long run rates can really keep expanding at the pace they have been?
I think you need to see a sustained increase in rates, and quite a bit higher than what we have right now. Maybe the 10-year above 5 would be more of an issue for us. But I think at this levels, we still expect 4.25 by year end. Again, if the economy starts to slow, which is what we are expecting in the fourth quarter, where the fiscal stimulus is going to fade, we probably have some pressure on the labor market from AI. All of these things together for us suggest that we may at least, our base case is that we have one more cut in December. Not before then. Powell by that time might have also left. That may give room for another opening on this. Who knows? Right? So there's a lot of variables that we are looking at, but that's at least a possibility.
Some of this, of course, is highly dependent on why you think yields are rising. And I've been reading some of your past comments, your previous comments, that maybe we are on the cusp of a cyclical upswing in this economy. Do you think we are, and what's powering that?
We think there are 3 pillars to this current upswing. One, of course, is fiscal expansion globally, the 4 largest economies in the world fiscally stimulating. Then secondly, we have this AI CapEx boom. AI CapEx in the US is 2.5% of GDP now and rising. And then thirdly, the consumer is still spending. We saw retail sales up 0.5% month over month. So you have the governments, the corporates, and the consumer spending. To your point, if rates go significantly higher, all those 3 may be called into question. So we're watching, but it's not our base case.
It's hard to fight. It's good to see you. Thank you. Thanks for being here. Ulrike Hoffmann-Bachali there of UBS. 10's at 450. HSBC has called that the danger zone. UBS just saying that maybe that needs to be closer to 5% to be a real threat to this equity market.
Yeah, Lori Calvasina of RBC saying the same thing. 5% really is the key trigger point for some sort of material selling. Either way, you raise a good point, John, which is it depends why. And if you do see a reacceleration in the economy, does that come with commensurate acceleration in the labor market, as well as potentially consumers' ability to absorb some of those price increases? That's the structural dilemma a lot of people are analyzing.
That's an important moment for the incoming Fed chair. If you shift to neutral from an easing bias, how do you communicate it? If you're just worried about inflation, that doesn't sound great. But if growth is better too, that's a better story to tell.
It's a better story to tell as long as consumers are participating. That's why it's such a fraught moment. If people are losing their jobs because of AI and they aren't able to spend anything, well then, is this really one that you want to hike into and then crimp their borrowing power all the more?
Yields up 7 basis points on 10s, approaching 455 with an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. President Trump speaking to reporters on Air Force One as he returns to the U.S. from China. Trump discussing his talks with Xi that covered the war in Iran, as well as the situation with Taiwan.
On Iran, it's very interesting. He feels strongly they can't have a nuclear weapon. He wants them to open up the strait. On Taiwan, he does not want to see a fight for independence because that would be a very strong confrontation.
Trump going on to say he will make a decision about arms sales to Taiwan soon. The president also Also saying he discussed AI guardrails with Xi during the summit, including NVIDIA's H200 chips. Trump says China hasn't approved purchases because they want to develop their own. And Apple and OpenAI's partnership is on the rocks. Sources telling us here at Bloomberg, the AI startup is exploring possible legal actions after not seeing the expected benefits from its deal with the iPhone maker. No final decision has been made. That's your Bloomberg Brief. John?
Yeah, Hira, thank you. Thanks for the update. Up next on the program, the Morning Calls Plus. We'll catch up with Ted Mortensen of Baird on what could threaten the historic rally in chip makers. From New York City this morning, good morning.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
We think that the AI theme is best expressed right now amongst the many ways to express the AI theme in U.S. large cap growth. You have high earnings growth, high margins, and the valuations, well, for large cap growth in the U.S., they're below the 5-year average. It's not bubble-ish valuation in my mind.
Well, here's the move this morning, pulling back. An equity market rally stalling, running into some problems in the bond market. Futures down by 1.2% on the S&P. Session lows down by 1.7% on the NASDAQ. Europe getting hammered in today's session, approaching the back end of that particular close over in Europe. In the bond market stateside, Treasuries, 2s, 10s, 30s, yields up across the curve, up 4 basis points on 2s, 4%, 10s, up 7 basis points, 4.55 on 30s, 5.1%. That's the move stateside, highs of the year. Check out the global move on a German 10-year, the highest since 2011. On a UK 10-year, the highest since 2008. On a Japanese 10-year, the highest since 1997. We've got a global bond market problem.
And part of that is because some of these economies are even more affected by higher oil prices. The suggestions this morning are potentially escalatory, with President Trump saying that his bar essentially is a lot lower to go in, but also a question of whether the Strait of Hormuz will be reopened at any point if, as President Trump said, it's not our problem. You're seeing oil prices go up. You're seeing PPI come in hotter than expected around the world. And in tandem, you're seeing bond yields rise to the highest levels in decades.
Look at the UK. Honestly, just bring up that board again. 17 basis point move. That is not a pretty picture, is it? And every single time this happens, you see a much bigger move in the UK. It's on the edge of being something else. Not quite DM, it's something else right now. And that's a problem for leadership in that country.
It was the conversation we had before where it's increasingly acting like an emerging economy, especially given the uncertainty around the leadership. Keir Starmer potentially being challenged by Andy Burnham, the Manchester mayor, who has said in the past that the bond market shouldn't have the control that it does over the market. This is the bond market's response, or at least it shouldn't have as much control over policy. Well, the bond market's response this morning is, okay, let's see how much you can handle.
That's slamming the brakes on the equity market rally. That's the price action. Let's get you some morning calls. First up, HSBC upgrading Cisco to buy, highlighting stronger AI infrastructure momentum. Your second call from Citi, raising its price target on Applied Materials, noting increased earnings visibility. And finally, JP Morgan raising its price target on Dow, citing the reversal of memory-related concerns. Elsewhere, the SOX index surging 70% so far this year as demand races past supply. Bloomberg's Ed Ludlow joins us now for more. Ed, welcome to the program. Some jitters in the tech space this morning, but wow, what a rally we've seen over the last month or so.
Yeah, and so we start to ask, why did the rally sort of stop from Monday night onwards? You know, there were very broad-based reasons, shortage in memory, a very broad-based AI-fueled rally in that 70% until the beginning of May. And then that first 2 weeks of May, John spent more time looking at charts than I normally do, but if you go back to sort of the end of March, NVIDIA is the biggest contributor to a lot of that, right? Not just for the SOX, but for the S&P 500 and NASDAQ 100 as well. And the more recent enthusiasm in NVIDIA was that the president would go to China, irrespective of whether Jensen was on the plane or not. He ended up being on the plane and achieved something of substance. And if you look at the markets in the moment, you know, one session a market does not make, but there's clearly a disappointment in the here and now of what actually was achieved. And Yahira gave us the comments from the president that while H200 was discussed, you know, China wants to support its own domestic industry. So that's a big part of it. But also the bar's now a little bit higher. So instead of going from increments of like, is NVIDIA a $5 trillion company or a $6 trillion company, you know, we're very much focused on the fact that it hit 5.5 trillion, and that was a bit of a ceiling in the moment. We're in overbought territory for much of that, not just in your NVIDIAs, but some of the large caps, like your prior guest mentioned in that clip, and some of the smaller names in the semi-industry as well. We've kind of hit a top for now.
What's $500 billion between friends, eh, Bramo?
Well, we'll
a couple of days of trading?
Let's do a whip around and we'll see what we can raise. To me, the idea that you can raise $900 billion, or at least, or you could increase your market cap in 7 trading sessions is bonkers.
Ed, thank you, buddy. Looking forward to the program. Ed Ludlow on Bloomberg Technology, coming to you in a few hours' time. Ted Mortensen of Baird writing the following: there's a hoarding of semiconductor supply ahead of price increases. Few are concerned about double or triple ordering. Shortages are a real concern. Ted joins us now for more. Ted, welcome back to the program. Good to hear from you. That's a provocative statement for us all to think about. How are you thinking about that, just in terms of the price action that you're anticipating in the months and quarters ahead?
Well, it's truly been a melt-up. I mean, on your previous guest, Ed put it well. I mean, if you look at the stocks, it's up 70% year to date. But more importantly, if you look at since April 7th, the stocks is up 52%. Actually, that's a pretty good multiple years of performance in a month. So we've had this real melt-up. I think the other thing is, where I talk to my clients, if you look at the semiconductor index in relationship to U.S. GDP, during the dot-com bubble, we were probably 15%. The semiconductor complex was 15% of the GDP. If you look at the global financial crisis, call it 7%. If you look at COVID, we were at roughly 25%. Today, we're at 50% of GDP. So there's a fair amount of good news based upon the really, really strong fundamentals. I sit on 70-plus conference calls during earnings season, and there's been 25 bellwethers that have actually killed it on earnings. So the macro's strong, but I think there's roughly 6 or 7 macros that the street's really not looking around the corner on.
What are those macros that you're thinking of?
Well, number one, I would say inflation. Every single call, and you know, you've talked about it all morning on the 2 and the 5, the 10s, the Japan and the UK yields. Inflation in tech is everywhere, and I think everybody knows it's in memory, but it's everywhere from substrates to commodity ICs to just availability. Number two, I think if you look at models, Where my worry is just in the EU and EMA, it's 30% roughly of all diversified tech companies. If they're having problems from the economy side, I think a lot of these models could be stale over the long term. Number three is shortages. If you listen to the microchip call, Steve Sanghi basically said his die inventory is going to be depleted in a few months. We're running into, because of the Straits of Hormuz issue, as a contributor, we are running into some shortages. Could we see kind of a COVID golden screw issue happen in Q3? Possible. Number four, and I think this is the one that people kind of put on the back burner, but since the robust infrastructure built on data centers, access to power is getting much more difficult. And the last two is just more of the Iranian conflict. The street is totally bought into this taco trade.
Ted, I'm wondering also where Taiwan ranks on this, given the fact that we just came from the meeting between Xi Jinping and President Trump, and there are real questions over China's desires when it comes to Taiwan. Is that entering into anybody's minds these days on earnings calls or anything else?
No. Right now, everybody's overweight TSM because they control all the advanced logic production basically in the world, and they've perfected 3 and 2 nanometers, so everybody's there. I don't think the geopolitical's right now into the semiconductor thought process.
Ted, do you think it should be?
I think over time it should be. It all depends what happens in the next couple months, in the Ukrainian conflict and the Iranian conflict, and if it gets spicy, I think the scenarios may change.
Ted, just a final question. You went through a range of potential constraints, shortages, power constraints. We've been talking about the potential of capital constraints as well, maybe some pushback in financial markets. Lots of people are having this debate right now about what we might hit first. What do you think we might hit first?
I think it's the capital restraints. I mean, just from the buy side perspective, look what happened yesterday with Cerberus. I mean, but look who's coming. You possibly have SpaceX coming relatively soon, followed by Anthropic. I mean, you've got a lot of very significant tech IPOs coming. My worry is that we drain the liquidity of the equity markets, and it becomes much more difficult. There's going to have to be some PMs that really look at their portfolios and see what they have to sell to fund some of these IPOs.
Interesting. It's kind of where my mind's going as well, Ted. It's good to hear from you. Thank you, sir. Ted Mortensen there of Baird. We've been talking about this throughout this morning, going from asset scarcity coming out of the pandemic to maybe just sort of abundance. All of this issuance in the debt market, all of this issuance in the public equity market as well in the year to come.
Yeah, and what Ted was just saying there, if someone wants to get in on OpenAI or on SpaceX when it actually does go public, do they have to sell Meta in order to do so, right? Are they going to have to sell Microsoft shares? I mean, how do they make room for this? And how exactly are the indexes going to be composed? Is this going to be now 30% of the weight, these new IPOs that suddenly are going to come and subsume liquidity from other areas? It's a real question. It's a different dynamic.
That's the supply on the horizon so far. Just tracking demand. Demand for the IPO, solid, performance good. The one we saw yesterday, demand for the debt from the hyperscalers, solid so far. We just keep tracking the demand, see how it stacks up against the wall of supply that might still be coming. Coming up on the program, Erin McLaughlin at the conference board as pressure builds on the US consumer, plus Danny has your morning movers. Cerberus pulling back following a blockbuster debut trading day.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The open about 60 minutes away. The state of play, futures down, just off session lows. We're down 1.2 on the S&P, on the NASDAQ down by 1.7. Jonathan Krinsky over at BTIG, publishing just moments ago on SPX, and the record dispersion we're seeing. Now 8.56 above, 8.56% above the 50-day moving average. Only 47% of the names are above their respective 50 DMAs. This is by far the widest divergence on record. We've seen all the superlatives over the last week about this market, concentration, dispersion. Things have got really, really narrow.
You haven't seen bad breath like this in a long time, and I'm not talking about eating gum. It's this question of, can you have a sustainable rally driven by just a couple of names? I believe NVIDIA and Micron account for a significant proportion of all the gains so far this year. Just two names that increasingly are driving this. So at what point does that threaten this? And at what point, you asked this before, is it a feature or a bug? On one hand, people could say it's a feature and let's just pile in, and ultimately that has been what's been ruling so far this year.
Well, upend in the equity market isn't really that this morning. It's this. It's the bond market. Stateside Treasury yields are near the highs of the year, up by 7 basis points on 10s at 4.55. The move elsewhere, going international, even bigger in certain places. So highs of the year stateside. In Germany, the highest level we've seen since 2011. In the UK, since 08. In Japan, the Japanese 10-year, overnight, the highest since 1997. Some major moves internationally.
These are the economies that are actually more exposed to the increase in commodity costs stemming from the Strait of Hormuz. And you've seen this in hotter than expected PPI prints in Japan, following the one that we saw in the United States. In the U.S., there are buffers. We're an oil exporter. We are an oil producer. That isn't the case in Japan, that isn't the case in the European continent, and that isn't the case in the United Kingdom. So it becomes that much more of a stressor at a time where there is fiscal limitations with respect to the deficit, and frankly, a lack of will on the part of monetary policymakers to stave this off from a demand destruction side by raising rates.
Wherever I look right now, I just see capital needs and supply. This has been a feature of the program this morning. Wherever I look, that's all I see. Alphabet tapping the Japanese bond market, going to the debt market, raising $60 billion in the last 4 months across a range of regions. Sarah Fryer of OpenAI, the CFO, speaking to Bloomberg, saying, yes, we've just had a record round of fundraising in private markets, but we might have to go again. The Treasury market, big deficits here stateside, even with a strong economy, and that's been the new normal now for a number of years. Japan's got its own problems. The UK's got its own problems. Germany in the mix in the last 12 months, pledging to supply more. Wherever you look, the IPOs, supply, 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 a wall of it in the next 12 months.
Building is expensive. There have been decades where we have not been building, where it has been fiscal expansion, monetary repression, and this idea that we are living in a financialized market. You put your market into stocks or into bonds, you're going to gain money, and that's it, and you can go on your way. The bill's coming due. You have to build stuff in order to keep the economy going in an AI era, and increasingly, that is what we're seeing. Right now, there is enough capital out there to fuel that. The fear is, what happens when there's not, or if there's not? And that ultimately hasn't happened, but you're seeing just people begin to raise that possibility.
So far, demand's been good. Demand has met the moment, but there's a wall of supply on the horizon we'll keep on tracking. And for the man at the top of the Federal Reserve, now Kevin Walsh, an interesting first day at work for him. 1 hour away from the cash open, let's get you some morning movers. Danny Berger has more. Hey, Danny.
Hey, John, perhaps the poster child of wanting and finding a way to fundraise is Cerebras and their blockbuster IPO yesterday, the AI chip maker rallying 68%. Some of the air coming out of that this morning, as it does the entirety of the semis trade. Cerebras down 2.9%. Intel's one of the worst performing, down 5%. Higher bond yields just weighing on this rally that's been record-breaking in some measures. And you have the outcome of the U.S.-China trips. No necessarily big action when it comes to semiconductors and NVIDIA itself, which is down 3%. Elsewhere this morning, Dexcom, they are a glucose monitoring device maker for diabetes and for others. They reported earnings and they were pretty strong, but the excitement here is that Elliott is taking a stake in Dexcom. They've already appointed board members. They're pushing them to make more efforts to expand their margins. We're going to have the CEO on open interest in the 10 a.m. hour, and those shares are up 5.5%. Finally, Papa John's. Those shares also moving significantly higher, up nearly 10%. The firm Earth, alongside one of the biggest franchise owners of Papa John's, reportedly in talks to take Papa John's private, that according to Reuters. So again, those shares rallying pre-market, John.
Danny, thank you for the latest. Danny Berger there, more from Danny around the opening bell as her and Matt Miller guide you through the open in the next hour or so. A new era taking shape with the Federal Reserve. Fed Chair Jay Powell ending an 8-year tenure as Kevin Walsh steps into a Fed facing an uncertain path ahead. Mike McKee joins us now for more. Mike, welcome to the program. You and I have talked about this with various leaders at the top of various central banks. They all face their own test. Is that test already brewing in this bond market for Kevin Walsh?
Oh, it absolutely is. And with the economy being where it is, it's going to be a real challenge. Let me start with some good news, bad news. The good news for Kevin Walsh is the Empire Index from the New York Fed, manufacturing in the New York Fed region, comes in at a 4-year high of 19.6. But prices paid, the bad news, is at a 4-year high of 62.6. So as Kevin Walsh comes in, this is Powell's last official day as chair, and he will be staying on as a governor until who knows when. We don't know when Walsh is going to actually be sworn in. Sometime in the next few days, depends on when the paperwork gets done. And his first Fed meeting is June 16th and 17th, so everybody's going to be keeping an eye on that. But he walks in with these black clouds of inflation hanging over his head and Donald Trump's tweets hanging over his head. He's got to contend with the fact that inflation is moving away from its 2% target, and we had those dissents at the last meeting from members of the committee he's now going to oversee, saying they think they should be warning people, maybe we have to raise rates. Plus, as far as the inflation is concerned, we've got more tariffs coming up this summer. And out there, the Justice Department still lurks. Jay Powell staying on because of that. And there's the question of whether the Fed can remain independent. And what about his plans to shrink the balance sheet? That's his signature move other than with interest rates. And already, we're seeing a lot of pushback from the people he's going to be working with. Michael Barr last night, shrinking the balance sheet is the wrong objective. And of course, Chris Waller recently saying that the scarce reserves regime would be stupid and massively inefficient. I don't have a lot of confidence in the idea of shrinking the balance sheet, according to John Williams, the New York Fed president. So at this point, he's got a lot of opposition in a lot of areas, and he's got a lot of economic problems that would prevent cutting interest rates anytime soon. So he's wanted this job for a long time, and now he gets it, for better or for worse.
Baptism of fire may be in the bond market. Michael, thank you, sir. Appreciate it. Consumer confidence sitting near all-time lows as inflationary pressures continue to build. Aaron McLaughlin of the Conference Board writing, we are seeing more cracks because of tariffs and oil and gas prices escalation will be baked in for months, even if the Strait is open tomorrow. Aaron joins us now for more. Aaron, good morning. It's good to see you. We've been talking about markets facing a positive supply shock. The economy is experiencing a series of negative supply shocks. So you've got a lot of individual companies raising a lot of capital, pushing demand into a supply-constrained economy. Doesn't all of that just equal inflation for the next 12 months?
Absolutely. Unfortunately, U.S. consumers are dealing with the shock from tariffs, which are still in the supply chain, and now an oil shock. And we don't expect tariffs to go away, and we don't expect the oil shock to resolve anytime soon.
Where are the higher prices showing up now, and where do you expect them to show up in the future?
Okay, so we know high prices are showing up at the pump, but they're also showing up for companies with diesel fuel, and jet fuel has doubled, since the beginning of the year. We're seeing higher prices with food, and we expect that to continue. Now, that's obvious because food needs to be transported, right? The cost of transportation is going up. But food is also packaged, and so many things are packaged. So all those petrochemicals that come into plastics, that go to those Asian markets, come back to the U.S., those are under increasing pressure due to the Strait of Hormuz.
That said, it seems like consumers are still buying. It seems like there hasn't been a huge pushback in terms of consumers going on strike or limiting their purchases, at least not in aggregate. We just got retail sales that showed that still demand. So at what point, or are you starting to see already some pushback or consumers that might be withdrawing some cash from this?
Right. So when we look at yesterday's retail sales numbers and we take into consideration the inflationary portion of it, they are slowing down. So we're already seeing retail sales slow down. We know that consumers, more than 95% of Americans drive to work. So they need to buy gasoline. They're still going to buy food. Our consumer confidence index still has, the last thing people want to cut back on is sort of restaurants and bars and takeout food and pet care, as I was telling you all earlier. So we know that they're still going to prioritize some of that, but it's some of the larger purchases that we know folks are going to cut back on. We also know that it's consumers that are around $125,000 annual income and up that are the ones that have really, keeping the economy going, and they're the ones that have kept the economy going for the last few years.
How much has the perception of inflation changed over the past 7 years or so? There was a time when it was predictable what prices would be at any given time. Then post-pandemic, that was flipping around all over the place, a huge inflationary wave. And now it seems like it's harder to gauge what anything's going to cost at any given time, so people don't really know. So a lot of companies can kick things up if they want to.
Yes.
How much has the psychology around this changed?
I think consumers, certainly pre-pandemic, inflation really wasn't on their mind at all. And so the pandemic was sort of shocked the consumer into realizing that this is a problem. But part of the issue is that even when we saw it sort of come down, these other shocks have been in place. And I think consumers are, becoming very wary because they know that there's probably more shocks to come. And a lot of that is driven by geopolitical issues. We are dealing with the unknown. For example, if we have a series of hurricanes and we see natural gas and oil exports and markets in our Gulf, impacted by that this summer or fall, that could be another shock. And so there's the known and the unknown, and there's a lot out there.
And yet Kevin Walsh calls inflation a choice. So what is his North Star going to be in the next several months, the next several quarters?
Well, we don't expect the Fed to cut. We know that that the Fed and our new chair Warsh has a very political sort of environment they're walking into, and it's very unknown. But we don't expect interest rates to come down. We don't expect to cut this year.
Do you expect them to go up?
I don't think so. But again, we really don't know what's going to happen when we look at 4, 5, 6 months out. And it's interesting because, when we take our consumer confidence index, it's a flashpoint in time. It's a 2 or 3 week survey period. So there's times when, just in the last month, things felt like, okay, they're getting better. Labor market numbers are looking good. Yep. There's a truce. And then, a few weeks down the line, a month down the line, and we're entering 12 weeks of this conflict.
Do you see numbers from you, Mitch, and just roll your eyes? What's that survey all about? Record lows. I struggle to get my head around that.
There's room for different numbers and different points of view.
You're not biting, are you? Never mind. All right, Erin, thank you. Erin McLaughlin there at the conference board. I imagine they are. Like, here's you, Mitch. Here they go again. Record lows. I really struggle with that survey. Record low sentiment, all the bad things that have happened in the last 40, 50 years.
People have looked at that survey and said increasingly it has a political element to it. It speaks more to the polarization and the sort of tribalization of politics. I'm just still thinking about this idea. If people don't have a sense of inflation coming down, and if potentially there's another shock that could come later, why would you delay a purchase? If you don't have faith that that price is actually going to be lower in the future. This is the kind of concern. Welcome, Fed Chair.
That's why consumer expectations are so important.
Right, that's the reason why people are watching these things.
We're looking for clarity from Kevin Walsh, from the Fed Chair, the incoming Fed Chair, and I think it's really important. That's a feature, I think, of the bond market today. That's where we've lost one of those anchors. We don't really know the reaction function of Kevin Warsh, the Fed chair, because he didn't really articulate too much of it in the hearing. There was a failure, I think, in the hearing of the individuals there for various reasons on a Senate Banking Committee who didn't really get to I think, the bigger issues about how he'd respond to incoming information at any given time.
That's why there's a tension right now. You've got the front end of the yield curve implying rate hikes, but you have the S&P implying rate cuts or just rates on hold for the longer term. And then you have longer term rates, which are determined by a global trend that really has been whipsawed by some of the oil pricing that we've seen. So you put this all together, it is kind of messy and is ripe for some sort of shakeout one way or another.
It's going to be a big meeting in the next month, which is why I'm off for vacation to watch the World Cup. But, you know, it's going to be a big meeting.
You're not going to the World Cup, are you?
Let's give you an update on stories worldwide with your Bloomberg Brief. Yahara has more. I'd never pay that, but I will watch it on TV. Hey, Yahara.
Hi, John. We're seeing Cerebra shares falling 4.25%, but that's after surging yesterday 68% in its trading debut. The AI chip maker raising $5.5 billion in this year's largest IPO yet. The surge driving the company's market value to upwards of $67 billion. The NFL releasing its schedule for the 2026 season, kicking off with a Super Bowl rematch between the Seattle Seahawks and the New England Patriots. The season opens on Wednesday, September 9th. And workers at the Long Island Railroad are threatening to walk off the job tomorrow. Contract talks between New York City's transit system and the nation's biggest commuter railroad hitting a snag over cash payments versus wage increases. That's your Bloomberg Brief. John.
Yahara, thank you. Thank you for this morning and the update. Up next on the program, we'll set you up for the day ahead, plus we'll touch base with Scott Kroner, the city, on why NASDAQ has more room to run. From New York City this morning, good morning. You're watching Bloomberg TV.
What's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the world world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
You're seeing, the memory name is basically saying they're entering into 3 to 5 year long-term agreements with the hyperscalers because there's so much demand for it right now. And why that's so important is because it reduces the, price volatility, and it gives us much more earnings visibility than we've ever had before.
That was Alistair Pinder of HSBC, bullish on this equity market. HSBC, one of 6 names since the start of this war to upgrade their price target on the S&P 500 for year-end. Equity futures pulling back from all-time highs this morning. We're down by 1.2% on the S&P. On the Nasdaq, down by close to 2 percentage points. The jitters, the epicenter for them, coming out of the bond market this morning. 2s, 10s, and 30s. Yields up across the curve. 2s through 4%. Up by 5 basis points now, and the pickup continues, now up by 8 on 10s as we get closer and closer to the cash open.
But this is a global issue as a result of oil prices being higher, but also the idea that growth isn't slowing materially enough to offset some of those inflationary pressures with demand destruction. The result globally is a bond sell-off, the likes of which we haven't seen, at least in certain places, since 1996.
Almost 10 basis points higher in Germany, almost 20 basis points higher in the UK, in Japan. PPI coming in really, really hot. Problems are building. This bond market at the moment, not so much treasuries, but elsewhere, certain pockets of it on the global scene, just feeling a little bit untethered at the moment.
How much is the Bank of Japan saying we should have just hung on to those bonds? Why did we let the market out of our control? Yeah, this is what happens when you let them run free.
That's the bond market this morning. That's what a market is, right?
Something like that.
They're always thinking about stepping in. Anyways, we can't get down to the opening bell. Coming up over the next few days, your trading diary looks like this. Today, Fed Chair Jay Powell's term coming to an end, and Philadelphia Fed President Anna Paulson will be speaking, so look out for all of that. Looking ahead to next week, earnings, NVIDIA, Wednesday, the big one. Then you've got Target and Walmart in the mix as well, so some interesting detail coming out of the retailers in the next week or so.
Yeah, right now we're going to see whether we got the same kind of retail demand that has been the real hallmark of the past couple of weeks. Although, how much is it also the K-shaped in the retail sector, the haves, the have-nots, with some of them really deploying incredible technology?
Should we talk about the NASDAQ? What a record run. Scott Crone of the City with this to say. We view the NASDAQ 100 as a preferred play on the AI build-out fund program. We've heard the complaints. We've seen people nitpick at the NASDAQ and the tech names, say it's too narrow, too concentrated. Scott, what's the pushback? Why stick with the winners?
Well, I think that what this market is doing, for all the noise that we're contending with, whether it's the inflation, the macro outlook, the Iran conflict, oil prices, so forth, I think the guiding light here is that as go earnings and earnings growth, so goes stock price action. And that's what you're getting out of the Q1 reporting period, is it is improving visibility and confidence, therefore, in this mega cap growth cohort that is attached to AI. So if you're looking at a sort of a mixed macro backdrop and you want to go to where the fundamentals look like they have room to continue to improve, this is where we're dialing in. It's big cap tech. And I think the NASDAQ is probably the best direct expression of that.
Scott, there's always this itch to rotate. You could feel it at the start of the year. Rotate into the other names, rotate and broaden out the rally. That happened to some extent at the start of the year. What changed once this war started?
Well, once the war started, you took it down a different path. Remember, we went into the year, Jonathan, looking at sort of a Goldilocks economic backdrop, soft landing with room for the Fed rates to come down. And what do we have? We have the inflation spike that's most likely triggered by the ramp in oil prices, and we've been talking about duration of conflict as mission critical. So as we're looking at going into 3 months now of the conflict, elevated oil prices, and the obvious inflation read-throughs, you have a dual-pronged bifurcated market right now where you've got tech beating to its drum around the AI infrastructure spending wave, but then the rest of the market is acting much more like you'd expect around this nagging concern around higher for longer oil price influences.
Scott, does it make you nervous that NVIDIA rallied 20% in 7 trading days?
I think on a short-term basis, Lisa, sure. You always, when you see moves like that, you have to expect that there's going to be a time and a pause to digest that move. But when you look at a stock like that, you look at the price action for the past 8 months has been mostly sideways. So what are the ways that had been the leader for some time? You now have other options in terms of how to position for the picks and shovels play within the AI construct. But I think essentially, yeah, on a very short-term basis, you have to be wary of the price action. But underlying the structural component here is still a pretty decent-looking outlook in terms of the next couple of years for sure.
Not to end on a philosophical note, Scott, but how worried are you that we don't really have an endpoint in terms of what the ultimate goal is? When is enough AI? When is it sort of the ultimate endpoint where we see the new world in an AI construct that we can determine who's going to be a winner and loser, not just in tech, but also in corporate America and beyond?
Yeah, it's a really good question, and I think we're going to be grappling with this for the months and years to come, probably. I think and we've been talking about this, Lisa, there's certainly inertia right now in every C-suite in America to make sure you've got your AI strategy and you're pursuing it. But you have to expect that along the way, there's going to be, some pause in terms of how you look at the implementation of it, how quickly you can find solutions that drive productivity, and then we're going to have to be on the other side looking at how this plays through to the labor condition. So I think what your point's spot on, but what we have to be prepared for is that the underlying inertia right now looks like it's pretty set to continue for the foreseeable future. But this isn't going to go on forever, right? So we do have a window here where we're going to see this spending benefit drive the fundamentals, but ultimately, gosh, we were talking about this a year ago, where we have to get to is a point where the AI influence is really along the lines of lessening some of the historic earnings volatility that we've seen in much of corporate America. If you can do that, then you end up justifying a higher for longer valuation for U.S. equities.
Scott, 30 seconds. Can your bullish call live with 450 on a 10-year?
No, I mean, look at so 450 probably, okay. We've learned in the past couple of years, 480 on the path to 5 is no good. So as we hit this 450 level-ish, we're going to have to be very careful in terms of what the trajectory is going here. But there's no doubt that I think the interest rate backdrop is certainly going to be a headwind here. And again, what I would say, Jonathan, is that one way you offset the valuation implication of higher interest rates is stronger earnings, right? So we are going to have this tug of war going on. But yeah, as we push through 450, I think the caution flags start going up a little bit.
Seeing that this morning. Scott, thank you, sir. Scott Conant there of Citi. Thank you very much. Coming up next week, stacked lineup on Monday. Look out for that from New York City this morning. Good morning. Have a wonderful weekend. This was Bloomberg Surveillance.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Some people have written that your bank, Revolut, is worth $75 billion. Have you ever thought of taking your organization public?
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks to external investors.
So you've done secondary sales for your employees, so employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank, it's super important to have trust. And then public companies are trusted more compared to private companies. So that's the reason.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start in the third floor or the lobby. You actually have to start in the basement.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
30 minutes till the start of the cash trade on this Friday. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, the global bond sell-off accelerates as inflation fears flare around the world.
And that aims putting a halt to the AI rally that has pushed stocks from one record high to the next.
Plus, from NVIDIA to Boeing, a look at the biggest winners and losers from President Trump and President Xi's Beijing summit.
Also at that summit, nothing really new when it comes to chips. Nothing really moved the dial, and that plus higher bond yields hitting these stocks pre-market. Let me show you. I'm looking at NVIDIA and Intel. NVIDIA down almost 3%. Intel's down 5%. I mean, they've just had a massive run in the past week. NVIDIA has jumped more than 20% since last week. Michael Hartnett at Bank of America says this is a market ripe for a pullback, so maybe just a blip today.
Yeah, Intel, I was just looking, since March 30th, it's up 181%.
Wild.
So it's tripled. No big deal. President Trump hopefully has some of that stock. Figma is soaring after raising its guidance on promising traction with AI monetization. Cerebras is falling, but that after a 68% jump in yesterday's IPO, which was already priced well ahead of the range. It's the biggest debut of the year so far, a market cap of more than $60 billion. But, of course, we have SpaceX coming soon. Bloomberg spoke with the CEO of Cerebras, Andrew Feldman, yesterday about their growth through partnerships.
In the last 4 months, we announced a deal with OpenAI that's north of $20 billion for 750 megawatts of compute. We also announced a major engagement with AWS, where our equipment would be deployed in their data centers. I think those are obviously the largest, but there are dozens of others that are in what used to be a big deal in the $10 to $50 million category. And so there's just an extraordinary demand right now for fast inference.
Bloomberg Tech's Ed Ludlow conducted that interview and joins us now. I mean, there's so much excitement over this IPO, 68%. I mean, it maybe is not that strange that the market is pulling back this morning after just such a big run, not just in Cerebras, but for chip makers as a whole.
Yeah, and the pullback's quite modest, right? You know, if you just go with the IPO price of 185, we're still, I think we're up beyond 70% if shares are at 305, 306, 307. You know, Mr. Feldman used the word engagement about that contract with AWS, and in the moments that followed, I pushed him really hard, like, come on, what does that even mean? Engagement, what are the numbers? When is it real? But Cerebras, you know, is in a position where, like everyone else, the demand vastly outpaces its ability to supply. So in raising $5.5 billion in the biggest IPO of the year so far, they're going to get moving. Because remember, the distinction between a Cerebras and an NVIDIA, for example, is Cerebras builds the whole server, top to tail, including the custom silicon with the memory embedded. Matt and I went into detail on that yesterday. But they take on the risk and the margin profile of doing that. And they still have to convince the market that long-term that's going to work.
Yeah, I mean, and I think the idea is even if they can't get the higher margins of someone who just makes the chips, the demand is still enough to incentivize that business model. It's at least unique.
Yeah, and so one question that I did not ask, and Dina Bass, our colleague, asked me to, and I'm sorry, Dina, that I did not, is what is Cerebras? Is it a chip maker? I asked him, would they sell their chips as standalone? There were reasons why they can't. Is it a server maker? Or is it a data center operator, even a hyperscaler? Because to answer your question, Matt, they could rent capacity in the same way a cloud computing company does, which is a much higher margin business, rather than just do the hardware as a like, here's a server, have at it yourself kind of deal.
All right, fascinating interview. Fantastic job, Ed. Look forward to your coverage today as tech stocks go the other way. We've gone from an equity euphoria tape to a nervous about rates tape. You can catch Ed Ludlow today at 11. And on Monday, as you can see on the screen, Ed's going to speak with the CEO of NVIDIA, the big daddy, Jensen Huang, as well as the CEO of Dell, Michael Dell, about their partnership at 2:30 p.m. New York time, an interview you don't want to miss.
Meanwhile, stocks are generally down today. As we've been describing, it's not just chips coming off the highs that they've had, but a global bond sell-off worsening on inflation risks and political instability out of the UK. And investors are selling bonds with the price of crude holding above $107 per barrel. Let's discuss with Bloomberg macro strategist Cameron Kreis. Cameron, there had been a narrative. I mean, we've listened to HSBC's Max Kettner, for example, saying earnings are so strong that yields at this level can't actually matter. At what point, and are we seeing this now in a sustainable way, that inflation concerns, high yields are enough to really pressure risk assets?
Yeah, I mean, it's been interesting because traditionally, when bond yields rise, you tend to see stocks sell off thereafter. And that has not been the case this year, given how strong the whole AI semiconductor narrative has been. But it feels kind of like the elastic is snapping. And as you alluded to, there's a few reasons for that. One is, yeah, the political instability in the UK in terms of Labour Party leadership. The UK has a big fiscal issue, as indeed does the US. But that's put the yield to the long end of the UK gilt curve their highest level since 1998. At the same time, Japan, again, another indebted, highly indebted country with a bit of an inflation issue, has seen the long end there go to its highest level ever, with 30-year JGBs now above 4%. The oil price is stuck above 100. There's no real sign of a breakthrough there. And we're kind of getting to the point where you have to wonder if a lot of these worries that the geopolitical experts have discussed in terms of the ultimate impact of the closure of the Strait of Hormuz on energy prices is going to start to be realized in terms of shipments that did get out before the start of the conflict have basically now been delivered. And so it's kind of now when the lack of marginal flow out of the Strait is going to be felt.
You know, I think it's also notable that we get the handoff from Fed Chair Jerome Powell to new Fed Chair Kevin Warsh today, and we're already seeing, beyond just the rates conversation, pushback from some, Michael Barr, for example, saying you can't be shrinking the balance sheet at the risk of financial instability. That is, of course, one of the things that Kevin Warsh has been pretty vocal about. Do we expect even a rate hike from this Fed, Cameron?
Well, it depends on, I was going to allude to this because historically there's sort of a tendency almost for the market to kind of haze, you know, like in a fraternity sense, new Fed chairs. And by that I mean they're often tested. Greenspan had the '87 crash. Jerome Powell had obviously the Volmageddon incident in February of 2018. Ben Bernanke had a little thing called the GFC. And so this is kind of Warsh's test already. Now, do people think we're going to get a rate hike as the next move? That's what's being discounted. Of course, the price you see on your screen doesn't necessarily reflect what people might actually think. It could reflect risk management decisions or hedging requirements. And sometimes you trade because you have to, not necessarily because it reflects your view. And it can be a little hard to distinguish between which of those is at play in terms of market pricing. But it's indisputable that we're now discounting the next move as a hike, which is one of the reasons why we've seen the 30-year bond yield move above 5%. It's had a real tough time sticking above that threshold, even during and since the inflation episode of 2022. So it's going to be kind of telling if it manages to hold there for a few days. Bond operators may well take that as a signal that we are moving into a sort of new regime.
Yeah. I mean, I guess Fed chairs getting tested, but it's rare to see them get tested so early, like literally before they even take the chairmanship. Cameron, thank you so much. Bloomberg macro strategist Cameron Kreis. Our other top story this morning, President Trump heading back to the U.S. after 2 days of talks with China's Xi Jinping. Xi hailed a new bilateral relationship between the two powers, while Trump touts fantastic trade deals.
This has been an incredible visit. I think a lot of good has come of it. We've made some fantastic trade deals, great for both countries.
President Xi's an incredible guy. Got along, made a lot of great trade deals, including over 200 planes for Boeing with a promise of 750 planes. We didn't discuss tariffs. I mean, they're paying tariffs. They're paying substantial tariffs.
Joining us now from Beijing is Anne-Marie Horjern, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. Anne-Marie, what is Trump coming home with after this trip?
Well, here's the thing. There's a lot of smiles here in Beijing, but there's still a lot of questions about the substance of these meetings. The president is touting a number of deals, whether or not it's the Boeing jets, whether or not it's soybeans or other potential energy or agricultural products. But we're still waiting on more details, especially confirmation from the Chinese side. And when it comes to some of these items, how big are the volumes going to be? What length are they going to be? I did speak to Trade Ambassador Jamieson Greer, though, earlier this morning, who did paint a picture about some of these trade wins and how big they could be when it comes to the agreements that were reached here in Beijing. Take a listen.
Coming out of this week, you heard the president today talk about the Boeings and hundreds of Boeings being purchased by China. We already have a soybean deal with them from our prior meetings of 25 million metric tons a year over the next 3 years, and we expect to also see an agreement for double-digit billion purchases of ags over the next 3 years per year. We want to focus on non-sensitive goods. We think we should be selling them. Things we think we should be buying from them, trying to facilitate trade in that area, and then from there, we'll be able to interact with our Chinese colleagues and negotiate with them.
At the end there, Ambassador Greer was talking about this idea of a board of trade. And remember, they are in the middle of a détente that ends in the fall. He said potentially, if this willingness on both sides continues, he could see that extended. Maybe we would get that sort of confirmation in September when Xi Jinping is slated to come to the White House.
You know, the concern, I don't know how widespread it is, but the concern that you hear from the left, from the Democrats, is that President Trump would trade some big headline deals for a little bit more leniency on Taiwan, right? We have an arms deal that we're scheduled to make with them. We would commit normally to defend them in the event of an attack. How is the reality on the ground? How did it unfold?
Well, this $14 billion arms package that's waiting in the wings, the president said he's going to make a decision on that in the coming days. This is what he told reporters on the way back from Beijing. He's en route now to Washington, D.C. on Air Force One. And probably the biggest takeaway from his briefing with reporters on Air Force One was that he said Xi Jinping asked him today, will you defend Taiwan? Because a reporter asked him that exact question. Would the U.S. defend Taiwan? And he said, I'm the only person that knows that, and I was asked that today. And he said he was asked that today about Xi Jinping. So he's trying to be sensitive without giving too much away in terms of this question. But potentially when he comes home, he's going to face Republicans and Democrats that want him to have a more forthright answer regarding Taiwan, or at minimum make sure that in the next few days he does sign off on this $14 billion package. I think it's important to understand some of the context surrounding this. It is not unprecedented for prior presidents to not go ahead with a huge arms package to Taiwan ahead of a big meeting or summit with China. They want to make sure that this is delicate, and they do not want to implicate some of the potential outcomes that could happen with a meeting with China. What is going to be telling is what Trump does and says when he gets back to Washington.
All right, Anne-Marie, thanks very much. Bloomberg's Anne-Marie there on the ground. Anne-Marie Horton there on the ground in Beijing with the Trump delegation. Now, coming up, Samba Nova CEO Rodrigo Liang discusses its work with Intel, Samba Nova's work with Intel, as well as competition with Cerebras and plans for an IPO. This is Bloomberg Open Interest.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
There's just an extraordinary demand right now for fast inference. We're the fastest, not by a little bit, but by more than an order of magnitude. You know, we're 15 times faster than the next nearest competitor. And as AI has become useful, everybody wants it to be fast. Nobody wants to wait.
That was the CEO of Cerebras on Bloomberg Television yesterday after the biggest IPO of the year so far. Joining us now is Samba Nova CEO Rodrigo Liang. He is a direct competitor of Cerebras. And Rodrigo, why don't you explain to us first exactly where you compete and where you differ? Because Ed Ludlow was telling us earlier that Cerebras is in a number of different businesses. They could be, on the one hand, a chip maker. They put together the servers, and they also could be a neo-cloud company of sorts.
Thanks for having me. Yeah, we're a chip maker. We build AI chips for inference, and so we're very focused on driving inference into the highest performance space. And so if you look at Cerebras, where they're demonstrating that they can actually run really, really fast on smaller models, we run the spectrum. We think that the battleground is going to be in the large models, and where the frontier models are, and even the open source models are now trillion parameter models. We're very focused on taking those big models and running them really, really fast.
Rodrigo, I just wonder how much the world has woken up to this idea that inference is about to get really expensive, and it's a problem that SambaNova obviously solves for. Just think about Uber a couple weeks ago that blew through their entire inference budget for the year in just a couple months. It was something like $500 to $2,000 per engineer per month on AI API calls. I just wonder, are we about to experience this kind of second wave of disruption for these companies that are using AI that maybe the models haven't fully passed along the cost of just how expensive it is yet?
Yeah, well, as we know, the AI market is going to be dominated by inference, and now you're seeing why, because the cost structure of using these models continues to rise, and so the need for more cost-effective solutions, the need for faster solutions that allow you to actually compute faster is really important. So we're driving that change as well, that this wave of really efficient computing, fast and energy efficient, is going to be incredibly important in driving that cost down.
So who gets access to your chips, right? There are now a number of smaller chip makers that solve for specific problems like SambaNova, and not everyone can have them, right? Your supply constrained. So how do you decide who gets them and who doesn't?
Well, that's a key thing. Supply chain is a battleground, and we're already taking orders into next year. But the really exciting thing about this right now is as we actually make these models more efficient and we map them against chips like ours, where we can run them 10 times faster than, say, a traditional GPU, you can make more tokens available to people. And so today we're driving them into enterprises. We're driving them into sovereign clouds because we think that the market is much broader than just the frontier models or just the hyperscalers. And so we love the collaboration we're making with some of these big model companies, but we actually want to see this broadly adopted into the enterprises and into many countries.
Rodrigo, just given you know, the supply crunch for a lot of this stuff and just the rate that you're building out, how deep are your capital needs? You obviously had recently U.S. regulators clearing the way for Intel to increase its investment in SambaNova. You have an investment from Vista, the private equity company. You see your rivals like Cerebras going to public markets in order to raise more. OpenAI CFO saying our capital needs are really intense. Just how intense are yours right now?
Yes, I mean, Sam, look, the growth is just so tremendous, and so we're in a transformative phase for the entire globe, and for all the excitement that you see, the enterprises, if you think about the banks and the retailers, they're just getting going, right? They're just getting the transitions to AI going, and so the build-up continues, and it's going to actually go for many more years.
It does seem like the valuations have gone parabolic, right? I mean, with Cerebras, they were offering shares at 150 to 160, which was already pretty punchy compared to their last valuation. They ended up selling them for 185. At one point, they were trading for more than double that yesterday. Doesn't it feel like you're leaving money on the table by not going public now?
Well, you know, it's we've got to build our business in the way that our strategy aligns, and so we're super excited about where we are. We just took a private round. We've got a lot of interest, and investors continue to come into to support the company. But hey, a public company is something that might be in our future. But look, you know, it's a tremendous validation into the space. The battleground is in inference, as we've talked about for a while, and I think you're seeing investors come in and validate that.
I just wonder, Rodrigo, if there is something to all of these AI-related companies, whether it be the labs, be it Cerebras, going public to solve kind of what we were just talking about, this need for capital. Does there come a point when there is just such intense needs that you do need to tap public markets, that is a necessary sort of cog in this wheel, or is there enough private capital out there in the world to continue moving on?
Well, I think at this scale, I think you're starting to see this build out that for us at this stage, we are at a point where the business is starting to grow organically, and you're able to actually get growth through that way. I think you're going to find that it's incredibly important for business to actually make a profit and drive gross margins and to grow organically. But there is going to be a point where you kind of think, when do I actually need to go build out? You know, one of the interesting things about SambaNova is we don't build our own clouds, which is incredibly expensive. SambaNova, we're in the business of actually moving racks. We're in the business business of delivering technology for others to build their cloud. And so that allows us a level of efficiency in our business that others don't have. And so if you are in that incredibly expensive business of building out these data centers and getting all the energy supply and getting all the land, all of that is going to be much more capital intensive.
I'm just thinking of, I'm still stuck on the valuations, right? Because I'm looking at Cerebras, the valuation in a round that they did at like the end of 21 was less than what you did at the beginning of 21. And so if they're worth $60 billion now, maybe SambaNova is worth 100. What would you venture to guess?
I don't know if I guess. Look, I think ultimately it's about our business and how you execute the business. You know, what I'm really excited about our business is that we have this broad customer base. We're tapping into a lot of enterprises, a lot of neoclouds, you know, with dozens and dozens of people building out their clouds in the world. And so we think that over time, that's the right way to actually deploy technology that is, you know, has a broad reach and across a broad set of use cases. And so they're so excited about that. But we think that there's a lot of value when you actually build out a business that is that broad.
Rodrigo, I only got about a minute, but I want to ask about the future, because obviously right now you're building chips for agentic AI. What happens if we realize the dream of AGI? Just how far behind are we on capacity, compute, inference to get to that world?
Well, I think these factors are all kind of turning over now, where you're building more lines in order to support. I think the change in the world has happened so fast, and it takes a little bit for the fabs and the production lines to actually scale. But all the major manufacturers are scaling their production, and so I think in the next year or two, you're going to see a lot of catch up.
All right, Rodrigo, thank you so much for joining us. Always a pleasure to have you on. SambaNova CEO Rodrigo Leon. Let's get a check on your markets this morning, because they're looking pretty rough. We're down, I mean, it's only 1%, but it feels bad.
We went to 7,500 and change yesterday.
I know, but it feels bad when I, like everyone else, just, you know, is used to a market that gravity doesn't apply. And gravity is like kind of applying today. The NASDAQ is down more. Those chip stocks are selling off because they've rallied the most. The pain this morning is in this bond market. 2-year yields above 4%, 10-year at 4.5%, 30-year at 5%. It's even worse in Europe, some levels that we haven't seen in some time. That 30-year yield in Japan, that's the highest it's ever been since it debuted. UK 10-year yields at the highest since 2008. Brent crude also adding to the pain. Cost of energy moving higher, up 2% above $107 a barrel.
You know it's serious when we're showing you UK and Japanese long bonds.
Something's gone wrong.
You know, 5 minutes ahead of the U.S. Open. But keep in mind, we did close over 7,500 yesterday on the S&P, and for Pam Bondi, more than $50,000 on the Dow.
Right.
So we're back up on the Dow, at least, to another record, and have well surpassed. Since the end of March, we're up 20% on the S&P 500.
Yeah, and you know the crazy thing? That we're still at like 8 times forward earnings on Micron. I can't get over how, like, price to earnings, these things still look cheap, even though you've had this rip-roaring rally.
Right, because as the P rises, the E goes up as well, and maybe even faster in some cases. AMAT, for example, gave sales and profit forecasts that exceeded analyst estimates, but its stock is down today. That shows you what rates are doing to tech.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up. I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are moments away from the start of trading on a day that interest rates all of a sudden matter. This is Bloomberg Open Interest. I'm Matt Miller. You can see S&P futures down. We're not even down 1% after closing at 75.01. I mean, the rally has been face-ripping, especially in tech stocks. The NASDAQ right now down 1.33%. But of this huge rally that we've seen, I think 1,200 points since March 30th. NVIDIA itself alone is worth 200 points of that. The top 10 companies in the S&P 500 are worth 2/3 of the rally. So it's really concentrated. Ringing the opening bell at the New York Stock Exchange is Horizon, apparently celebrating a suite of ETFs. That's what you call it when there's a bunch. It's a suite of ETFs.
Not a pod or a murder of ETFs?
Not a murder of ETFs. And Strive, I'm looking for Vivek Ramaswamy. Maybe he's no longer connected to Strive, the daily dividend company, but of course he co-founded it. And is he running? I think he's running for governor of the great state of Ohio.
Sounds right to me, but I think you'd know more about this.
Yeah, he's from Dublin.
You would know more Ohio things than I would ever dream to. I'm looking at NVIDIA and Intel shares just here at the open. Intel getting hit pretty hard, down more than 5%. NVIDIA is down 3%, but it's been a massive run just in the past week. NVIDIA's jumped more than 20%. Since last week, it's been this hockey stick shape for all of the chip makers. So some of the air coming out today also after that Cerebras IPO yesterday, Matt.
Yeah. Could that mark the top? I don't know. Figma is a company that also is or has been soaring after raising guidance on promising traction with AI monetization. Here you see the shares, and they're up 8% in a down market, so really swimming upstream. Cerebras is falling, but only not even 6% after a 68% jump in yesterday's IPO, which already was priced well ahead of the range we were looking at. It's the biggest debut of the year, a market cap of more than $60 billion. But it will be paled by SpaceX when they raise $75 billion next month. Joining us now is Laffer Tangler CEO and CIO Nancy Tangler. And Nancy, you're the perfect guest to have on because, well, for one thing, you're long invested in a lot of these big winners, and it has been a tale of equity euphoria. Today, it's a concern about global rates rising. So does that make sense? Like, at what point does the Treasury yield actually hit a 7,500 S&P?
Yeah. Hi, Matt. Thanks for having me. I guess I'd say this. In the 90s, we had a 10-year that was between 7 and 8% on average for the decade. and a Fed funds rate at 5%. Now, I understand this is not that. We were in a decelerating interest rate environment back then, and that was maybe a different environment. But productivity is still the underlying story as far as we're concerned. So if the 10 years at 4.5, 4.7, 4.8, I mean, all the way up to 5, we're not worried about it. But we're not the entire market, so we have to pay attention. I think I'm more concerned about some of the euphoria, you mentioned it just now, around IPOs, because those kinds of events do mark market tops. However, I don't think we're there. Let's wait and see what happens with SpaceX, and Cerberus will be a distant memory. But I think you want to be picky and selective, just like during DeepSeek, we've talked about this. We were buying NVIDIA, for example, at $108 a share. We added to it at the end of March. That's how you make money in stocks.
Even so, you look at something like the Philly Semiconductor Index, Nancy, and it's had this huge run up, but you can really make a fundamental story to say why it deserves to be there, that earnings are exploding in a way they never have, that maybe semis and chip makers have broken out of this typical cycle that they have, that yes, it's richly priced, their forward earnings are something like 29, but it peaked at 44 in March of 2024. So how do you disaggregate what is the right price for, yes, compelling narratives, but things that have climbed quite significantly?
Yeah, I mean, Danny, to that point, I have been befuddled by the run-up in Intel. And so this recent sort of deflation makes much more sense to me because it was not driven by fundamentals. It was driven by narrative. I still don't know when Intel is going to catch up with anybody on anything and where the foundries are in terms of production. So we have stayed out of that name. It hurt some days, but we've been adding to names over the last couple of months like Micron, AMD, and NVIDIA. And we've been longtime major holders of Broadcom. So I think as an investor, you have to take advantage of these run-ups and trim back the names, which is what we've done with Broadcom. It became grossly overweighted in our portfolios. And we will be doing that with AMD, which has also appreciated quite dramatically. So I think that's how you have to play it because we're still in that cycle. I don't think suddenly these names are not going to be cyclical anymore. I've been around too long. I've heard that for too long and too many times. So I think you want to be selective.
I think, Nancy, that's a really important point. That's the question I was just going to ask. You know, if I pull up the MRR screen on the S&P, that's the members ranked return, just to look at the individual moves that we've seen year to date, for instance, right at the top, you see SanDisk. It's up 470%. And this is a company that used to make the little cards that would go into digital cameras before cameras were in phones, right? I mean, I think everyone had forgotten about this stock. Intel is right behind it, 195% year to date. Seagate, Western Digital, Micron. These are companies that make commodities. You know, they're vulnerable to cycles, like the most vulnerable of any other company normally on the index, and they're doubling, tripling, or quintupling year to date.
And then like Lumentum and Corning make optical stuff for AI data centers. So it's like everything in there is something related.
It's pretty amazing. And when you see this kind of, does that not represent froth when you've got 10 stocks that have more than doubled in the first 4 months of the year?
Yeah, and I think that's also the opportunity. I agree 100%. This kind of movement is often coupled with a sell-off. And so I suspect what we'll see is a shift, and I talked about this the last time I was on with you, a shift back to software. We've seen some of that. But remember, this is the algorithms in the hedge funds, because they're investing for the next 2-3 weeks or months. We're investing for the next 3 to 5 years. So we're going to look for opportunities, and we've been trimming back. We own Lam Research, for example. It's the largest holding in TGLR, despite the fact that we keep trimming it back, and that we will continue to do that because that, again, is how you make money in stocks instead of chasing these things. They are cyclical names. The spending will slow at some point. It's not going to slow in the near term. So I think you hold on to these names, but you don't let them determine your asset allocation by just riding them up and then riding
Nancy,
them back down.
someone's trying to steal the spotlight from you. If you could move over and make a little bit of room for those pups. See, you've diversified with looks like a black lab and a brown lab there.
It's a mastodon puppy, so it's going to be bigger than you, Matt.
Oh my goodness. I was going to say.
She appreciates growth.
I hear you loud and clear, Nancy, but I'm quite distracted because whatever they're doing looks absolutely adorable, and I want to see more of them. If they come back over, feel free to introduce them. Feel free to introduce them to our viewers worldwide, Nancy.
I got Pudge. Pudge is the puppy, and Sammy's the black lab.
Oh.
So she's teaching him the ropes. I'm terribly sorry. They were asleep when we got on.
No, we love. Everybody loves dogs. If you don't love dogs, you have no soul.
It's so true. Please don't be sorry, Nancy. Anyway, back to this. But again, happy to be interrupted by Pudge again because what a good name. So for all of these, Nancy, I don't know, like the kind of the issue that I personally am struggling with is that is basically the right tail is so big. Like the promise of this stuff is so huge, especially if you're AGI pilled, as the kids say, and you get even more rapid advancements and you need all this stuff. How exactly should we think of the left tail? Is it overbuilding? Is it we find efficiencies and we need less of these chips? Like what is the thing that makes the music turn off?
I think it's both. I think we will overbuild. I don't think we're there now yet, but it's the human condition. People see people making money, and so they jump in. And we've seen it in the housing market in Scottsdale and all over the country where you get these bubbles. And so I think we will get there eventually, and we will improve efficiencies, and that's important as well. So to the spending. So strap in, use discretion, and sell some of your winners or trim them at the very least.
Nancy, so wonderful to have you on. Send Pudge our best. That's Tangler CEO and CIO, Nancy Tangler, and 2 guest stars. All right, let's get a check on your equity market this morning. About 10 minutes into your trading day, and we are lower by 1.2%. 300 stocks are down, only 200 are up. The up days have been led by pretty slim breath. It's been just a lot of the chip makers. On the upside, Bill Ackman posting on X saying that they are taking a stake in Microsoft. That's getting a boost this morning. Netflix is higher. I think this is one of the companies that President Trump apparently bought as well. Visa, MasterCard had bad days yesterday, so some of those card companies doing better to the downside. I mean, it's these giants that are inevitably going to pull the whole market down with them. Nvidia down 4%. That's pretty painful. They're going to have earnings next week. Broadcom down 3%. Amazon 2.25%. Micron down 5.5%. But again, that pales in comparison to just the huge amount that they have run up so far this year. Then if you look at the sectors, it's going to be no surprise that tech is at the bottom of the pile with those AI-related names having a bad day. Again, higher yields also having an impact. Consumer discretionaries down there. Materials on the upside. Energy as the price of oil moves higher. Staples and healthcare. So a clear flight to safety with some of the stocks that are performing this morning, Matt.
All right, really interesting markets here. I will note that, you know, since the bottom in March, we've had a pretty broad rally, even though the gains have been driven primarily by the top 10 stocks. More than 300 are still up. I've been messing around with the history button on my...
Yeah, but there's stats that are like the S&P 500 is above its 50-day moving average, but the majority aren't above their own moving average.
Yeah.
But I think that's just kind of the recent leg up versus the March bottom.
No, for sure. We've been making, more companies have been making new 52-week lows than 52-week highs, many of the last 5 or 6 trading days. Coming up, President Trump got the pageantry that he wanted in China, but who were the real winners and losers in the trip? What are the details of the deals that we actually got? We'll explore that next. This is Bloomberg Open Interest.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
AI.
Here's your higher yield induced sell-off of the morning. S&P is down 1 1/3%. NASDAQ down 1 3/4%. Brent crude's also moving higher, not helping with fears of inflation, higher yields, et cetera, et cetera. Let's get some of the top calls, though, this morning, about 15 minutes into your trading day. Here's what the sell side is saying. Applied Material shares are falling after its earnings, but you do have firms like TD Cowen, Jefferies, and Citi who are out with bullish comments. They're pointing to a strong AI-driven chip demand and visibility into consumer spending through 2028. So maybe if you believe them, it's a dip buying opportunity after their earnings. Next up, RBC, they're upgrading Texas Roadhouse, saying that easing beef price pressures could help improve margins over the next few years. The firm also sees strong customer traffic continuing and more people choosing the restaurant over grocery stores and other competing steakhouses. Shares unchanged this morning. Finally, analysts are getting more bullish after Dexcom's Investor Day. Firms point to strong long-term growth targets, bigger buybacks, and a clear pipeline roadmap. We're going to be talking to the company's CEO in the next hour at 10:30 a.m. New York time, Matt.
All right, now, winners and losers are emerging fast from President Trump and Xi's Beijing summit. And Boeing landed on the wrong list. The aerospace giant was hoping for a massive China jet order, talked about as much as 500 planes, and instead Beijing committed to less than half, a mere 200 planes. Let's get more insight now from Benedict Campbell, Bloomberg's managing editor for global aviation, my good friend out of Berlin. So, Benny, what do we know about the winners and losers? And Boeing specifically seems like it didn't get nearly as much as we thought.
Yeah, this is a really strange one, Matt. There's a couple of things we do know. You just said it. We think it's 200 planes. We think it's 200 big planes, to use Trump's words. But we don't know what type of planes. We don't know when they will be delivered.
Dreamliners.
And there's maybe, could be 737s. It's all around sort of the Trumpian mystique, shall we say. So you sort of come into this, you dangle something, you maintain the anticipation. And that's very much what we're at now. So we came into this trip, and Kelly Ortberg, the Boeing CEO, was with Trump on that trip. We came into the trip hoping to see something along the lines of 500 737 MAXs, that's the single-aisle plane, and maybe a top-up with Dreamliners or with XXXs, maybe another 100 on top of that. Where we are now is 200 planes of an unspecified nature. That's all we know from Trump's interview with Fox News. And then to add to the confusion on the way back on Air Force One, he said, if this first part of the deal goes well, then maybe China will throw in another 750. But again, no details. We don't know what type of planes. We don't know who they're going to. We don't know the timing. So there is that sort of a promise of a big order still out there. So, but right now people are seeing this as more of a loser sort of bucket rather than a winner bucket. And you can see it in the shares.
With all these sorts of deals and Trump's visit to China, the backdrop has been two countries that are trying to become more independent from one another, whether it be on chips, whether it be on rare earth minerals. Benny, what is the status of China's own homegrown airplane manufacturing capabilities? I mean, just how dependent are they still on Boeing and the more efficient planes, especially as the price of fuel goes higher?
Yeah, I mean, it's still very much in its infancy, that industry. It exists. There is the Comac 919 that looks very much like an Airbus A320 or a Boeing 737, but it's built in very low numbers, and it depends on Western technology. So the propulsion, for instance, is GE. A lot of the aeronautics come from companies like Honeywell or Safran in France. So over time, the idea obviously is that China will be able to wean itself off the suppliers in the West, so Boeing and Airbus, but at this point they very much depend on these two manufacturers, and particularly on the wide body side there is no product out there, so that's a big part of the market. So this was important for China to bring in these planes, but it's also very important for Boeing to win these orders, because over the last decade they really haven't done very well in China. They've delivered far less than Airbus has. Airbus has a local production facility in China, which Boeing does not have, so they have that advantage. And sort of politically, Airbus has also had an advantage. You know, the relationship between China and the US has been problematic, and Boeing has suffered from that. So the hope was, going into this visit, that they could sort of cut through that Gordian knot, and that finally this big deal would materialize. It might yet, but we don't know at this point.
Benny, thank you so much for joining us. That's Benedict Campbell with the latest on the China-U.S. trade discussions around Boeing after that visit from the president. Coming up on the show, it's ETF Friday. We're going to discuss the funds trying to capitalize on trades tied to figures like Nancy Pelosi and Ted Cruz. That's coming up next. This is Bloomberg Open Interest.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Where?
Wall Street is turning politics into a trade with ETFs for both parties, but not all of these political funds are making it into the market, including a so-called government grift ETF. Joining us now is James Safer, ETF analyst for Bloomberg Intelligence. James, so you have what are the Nancy Pelosi's, what are the Ted Cruz's of the world trading on? What's up with this political grift ETF?
Yeah, so the two ones that are you mentioned, it's Nance and it used to be Cruz. Now the ticker is GOP, which I guess is better, but in my head I still think of it as Cruz. And they tend to track like either what are Democratic politicians doing and what are GOP politicians doing. The grift ETF, it's still in limbo. That one is basically just gonna look at who's closest to the president, what politicians have actually had their stock portfolios perform best. So who has been the best stock picker? Their picks will actually get a higher weight in the index. But what's happened is NYSE, NASDAQ, CBOE have all declined to list an ETF, which is the first time it's happened in history. We've talked about it on TV before. So basically, the last hope is that the new Texas exchange might list it. But yeah, that is the one that everyone's looking for. And it's why aren't they allowing to list? It might be too on the nose. The ticker's what's going to be GRFT. Government grift isn't exactly something I guess these exchanges want to be promoting.
So I was typing in the old ticker for the GOP ETF, Cruz, as you noticed, what you think about, and this one popped up for me, and I just kind of didn't realize how many categories there were of like strange political ETFs. This one with the ticker YAL, and it's called the God Bless America ETF, and it basically just will not invest in anything that leans politically left or does liberal political activism. It's been underperforming the S&P by a lot, it's up some 3%, the S&P's up 10%. Is this a more recent breed of ETFs, these very clearly politically leaning ETFs, James, just coinciding with the political environment we live in now?
Honestly, no. I mean, they become more in the spotlight at times like this, but they've been around for a while. There's a bunch of ESG and left-leaning type ETFs as well. They tend to be smaller, they tend to get hundreds of millions. It's a smaller category compared to the big beta things where we're measuring things in hundreds of billions of dollars. But these things have been around for a while, and they obviously find an audience with certain people that want to not be putting their money with things and beliefs they don't believe in. It kind of goes back to socially responsible or religious things. I kind of put these all in that sort of category, whereas I would say the grift type ETFs, the GOP and Nance ones are more like trying to bet on the idea that these politicians have insider information in their portfolios outperform the underlying market. But again, it kind of falls under that umbrella of your personal belief system putting into your portfolio, which over the long term isn't necessarily the best way to choose your investments.
Any chance that we get a Trump ETF? I mean, there's a Bloomberg story today on the trades he's doing, and I was shocked at that the president's allowed to do these trades with individual names, especially the ones that he's making decisions about, and how much he's trading or someone is trading for him. Can we track that?
Yeah, I would assume those trades are going to go into something like the GOP ETF. Like what he's doing and his disclosures are probably going to go into what's going to happen with those holdings, I would guess. It would definitely impact what would happen if the grift ETF ultimately launched. But yeah, he's bought a whole bunch of tech stocks. He bought Boeing. He actually bought a bunch of Bitcoin-related companies. I mean, he made some massive trades, and he made a lot of them. And these issuers would love to have something that they could talk about this for. I mean, look at it. We're talking on TV right now, so it's a great advertisement.
Yeah, James, always great to have you on TV. James Safer there, Bloomberg Intelligence. Tune in, by the way, to ETF IQ. It's every Monday at 12 p.m. New York time, runs for a whole hour. In the next hour of this program, Sarah Ketterer joins us from Causeway Capital. Plus, we'll talk about Elliot's new stake in Dexcom with the CEO, Jake Leach, and Sumer Sports with the CEO, Larissa Horton.
cidade estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
From ABC News, I'm Chuck Severson. The Beijing summit leaves questions and issues seemingly unresolved. President Trump told reporters this morning on Air Force One flying back from China about new trade deals, but Chinese officials confirmed nothing. Mr. Trump says he made no promises to President Xi about whether a major U.S. sale of weapons to Taiwan will go through.
He feels very strongly. I made no commitment either way. We'll see what happens.
Questions remain about what progress was made here. The president came to Beijing hoping to convince Xi to use his influence over Iran, one of China's closest allies, to open the Strait of Hormuz.
We did discuss Iran. We feel very similar to Iran. We want that to end.
But it's unclear if Xi agreed to pressure Iran.
Beijing, ABC's Mary Bruce. Sources tell ABC News President Trump might be preparing to drop a lawsuit he filed against the IRS. It was in relation to the 2019 leak of his tax returns. The proposed settlement would create a $1.7 billion fund for claims from January 6th rioters. ABC's Catherine Falders.
The settlement terms that we're told, they're expected to prohibit Trump himself from directly receiving payments related to his legal claims, but entities associated with him are not explicitly barred from filing additional claims.
The House Judiciary Committee's top Democrat calls the idea a giant affront to the rule of law. In a statement, Jamie Raskin of Maryland says Trump has no authority to conjure up billion-dollar compensation schemes. Sources tell ABC News the fund would pay out claims to those who say they were unfairly targeted by the Biden administration.
ABC's Stephen Portnoy. Almost a third of the membership of the Congressional Black Caucus, 19 of 62 members, are at risk of losing their seats through the 2028 election cycle as Republicans in southern states where they control the legislature redraw congressional maps after the Supreme Court dealt a blow to the Voting Rights Act. You're listening to ABC News. Warnings to high schoolers and their parents after a senior game nearly ended with a shooting in Michigan. A teen holding a water gun that looked a lot like a real weapon was face-to-face with a police officer, sprayed him before realizing he was a cop. From the officer's body camera.
Hey, dude, sorry. Get on the ground. Get on the ground. Get on the ground.
This could have been tragic. He had a millisecond to make a decision to shoot or not shoot, and he made the right decision.
Davison Township Police Chief Jay Rendon says the game is Water Wars or Senior Assassin. The two people aboard a small plane that crashed into a house in Akron, Ohio were killed, police say. Colton Lodato was in the house with his wife and kids when the plane hit.
Just a loud bang, almost like a train, I guess is the best way I can describe it, kind of hit the house, and it just, everything just shook. And I just ran upstairs and I grabbed both my oldest and my youngest out of their crib and out of their bed and just ran outside with them.
Also being investigated, a medical transport plane crashed in the mountains of New Mexico, leaving 4 people dead and igniting a wildfire. Parents across the U.S. who are worried their kids are getting too much screen time in schools are lobbying educators to go back to pencils and paper. Hundreds signed a petition in Pennsylvania's Lower Merion School District near Philadelphia to allow parents to opt out of digital devices for their kids in schools. School board members say the technology is essential to the curriculum. Chuck Sievertson, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well. Scarlett Fu and Paul Sweeney with the Bloomberg Intelligence Program. Markets are on the move. We'll get to that in just a moment. We're going to check in first with Tyler Kendall, Bloomberg Washington correspondent. She is in Beijing. She's been reporting on the Trump-Xi summit. We'll get the latest reporting there. Julie Beal is going to join us, Chief Market Strategist at Kane Anderson, to get her thoughts on these markets. Rob Barnett, Bloomberg Intelligence Senior Energy Analyst. We got energy moving higher, oil higher by about 2-3% today, moving higher. We'll get on top of that. Anurag Rana, Bloomberg Intelligence Senior Technology Analyst, figure out what's going on in the world of tech. We've had some earnings out of Figma as well. Randall Williams, Bloomberg Business and Sports Reporter, is going to join us here. Got a lot going on in the world of sports, and we'll break it all down there. Maybe some ownership movements in some of the major big sports leagues, and we'll see what the valuations are there. Through the roof is what I'm going to guess here. All right, let's kick this whole thing off with John Tucker and a Bloomberg Business Flash.
All right, guys, happy Friday. This Bloomberg Business Flash brought to you by IBKR. Will the Fed raise rates by 25 basis points in June 2026? Trade your predictions alongside your stocks and options at ibkr.com/predictions. Last trading day is June 17th. So we're going to end the trading week with the major average pushing lower. S&P 500 and the NASDAQ did end at records yesterday. This morning, in the driver's seat for investors, inflation been pushing higher. That means yields are higher. The 10-year right now is the benchmark, 9 basis points higher. We are at 457. Remember, mortgages are kind of tied to this, so that's going to hurt. NVIDIA shares, they've rallied 20% over the past 7 days, but they are pulling back this morning, 4% lower. It may flirt with $6 trillion valuation. That would be a first for a company. Cerberus Systems, those shares jumped. Cerberus, we're going with. Oh, that's
like
that's how you tell. Okay, they jumped 68% in the trading debut. $5.5 billion is what they raised, the biggest IPO this morning. They are lower, down close to 7%. Starbucks cutting an additional 300 corporate jobs. Latest move to hit cost reduction targets. And those shares this morning up on that news, up 1.1%. Meantime, Lori Calvasine of RBC Capital Markets, she remains bullish of equities.
We still have a constructive outlook for U.S. equities, but it's really driven more by the strength of the earnings outlook, which in turn is driven by the strength of the AI story. And we think that the U.S. can continue to climb higher.
Right now, the S&P 500 down 86 points. The Dow down 424 points. The NASDAQ down 438 points. Is there really a lead when you're tied with 6 other guys.
Yeah, exactly.
So Scotty Scheffler, part of the 7-way tie atop the PGA Championship after 3 under 7. So this is the first time they've had a tie like this with so many people.
Course is playing pretty tough.
Since, what, 1969. Yep. 48 players within 3 shots. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Hi, Scarlett.
Hi.
Hi, Paul.
The band is back together.
Exactly.
Both wearing red. Is there something I missed?
Well, there's a lot of red on the screen today.
Yes, that's very good. I like how you typed that in there, John Tucker. Appreciate that, as always. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Red headline crossing the Bloomberg Terminal. Xi to visit U.S. in autumn. That's according to Xinhua, I think it is. Maybe their national news.
Yep, they're the official Chinese news agency.
There we go. So that's official that President Xi will be in the U.S. So hopefully that is a good thing. As John Tucker's reporting, we got stocks selling off here today. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at today?
We have to start off with NVIDIA. That's ticker NVDA, dropping now about 4% for its biggest intraday drop since April 30th. That's after President Trump said that China hasn't approved purchases of NVIDIA's H200 chips because they want to develop their own. He also said that just really wasn't a topic of conversation, and that has been driving NVIDIA and also other chip names lower this morning.
And of course, NVIDIA will be reporting results pretty shortly next week as well. Let's talk about another company that reported results.
Yes, Figma, another tech name, that's ticker FIG, climbing now about 16% for its biggest intraday rise since February. That's after the software platform reported first quarter results that beat expectations, and it also boosted its full year forecast. Analysts say that the report is helping to ease some of those concerns about AI disrupting its business. JP Morgan's note really stuck out to me. They said that Figma's beat and raise shows that there is an AI monetization layer that's beginning to emerge. And it's still worth noting that Figma's shares still remain down more than 40% this year.
I have no idea what Figma does for a living, but that's okay, because Anurag Ran is going to join us later.
Adobe tried to buy it.
Adobe tried to buy it.
This is true.
Okay, so software company?
There you go.
Boom, there you go. Okay, now I'm up to speed, so when Anurag comes, we can ask him some intelligent questions. What's next?
That's a basic description.
That's all I need. I built a career on very superficial level knowledge. All right, how about Papa John's? This I know.
Yes, this is ticker PZZA, very fun one. Currently jumping about 7%. That's after Reuters reported that the investment firm Earth Capital is working with the pizza chain's largest U.S. franchisee to potentially take the company private. This isn't the first time that we've heard this. Papa John's has been in active discussions for at least the past year about a potential sale. And BTIC is actually saying that they remain highly skeptical and don't see any obvious solutions to repair the fundamental business. Also noting that they find it interesting that these reports tend to emerge every time the stock drops down to the lower 30s. I don't know if there's anything there, but kind of interesting.
I don't think I've been to a Papa John's, but that's because I'm from the New York tri-state area.
Yeah,
so,
me neither. No,
I don't even eat Domino's.
No, there was a period when we had when my son first, he's now 30, when he first learned how to use an app. I guess Pizza Hut was Domino's Pizza was one of the first apps. He mastered that, and we had Domino's stuff coming at all hours.
It is good value, Domino's.
I guess, I don't know. All right. Very good. Avalon Purnell, thanks so much. Appreciate that. As always, for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's get right back to Beijing. Tyler Kendall is still there. Hopefully she can get home soon. Tyler Kendall's a Bloomberg Washington correspondent. She's been reporting on the summit between Presidents Trump and Xi. Tyler, what's kind of, with a little bit of hindsight here, any takeaways here from any major events or announcements, or what's the feeling in Beijing right now?
Well, Paul, at this point, it became very evident that the deliverables out of the summit was more of the same, keeping that strategic stability that both sides have characterized the U.S.-China relationship at the moment, rather than substantial progress on some of the top issues. Though, as you noted at the top of the program, we are getting some breaking headlines over the terminal right now, including Chinese state media seeming to confirm that Chinese President Xi Jinping will travel to the U.S. in autumn, in the fall. that tracks with what President Trump had announced earlier this week, that he had invited Xi for a state visit on September 24th, which does align with the UN General Assembly that happens in the U.S., of course. So perhaps this goes to that same narrative that the dialogue is going to continue. Both sides have said that there is this potential that the two leaders could meet face-to-face 4 times this year as they try to make progress on some of these other issues. I was struck by some of the other headlines coming from Chinese state media from China's perspective on how this visit went and some of those deliverables, including that China and the U.S. addressed concerns surrounding agricultural products. We have been waiting for some more firmer details on what Chinese purchase commitments would look like related to agriculture, like soybeans, like corn. In fact, we were seeing soybean futures fall off basically the expectation that there was going to be an announcement, but we really didn't get any, though the USTR Jamison Greer did tell our colleague Anne-Marie Hordern here in Beijing earlier today that the U.S. is expecting a substantial purchase order when it comes to U.S. agriculture. But then finally, Paul and Scarlett, this one, which I'm sure we'll talk more about, but Taiwan is the most important issue right now between China and the U.S. That really underscores what the perhaps unresolved tension was during the meetings here in Beijing after we heard Chinese President Xi Jinping yesterday say that that issue does risk derailing the U.S.-China relationship.
Yeah, I think China's thinking back to when, during the first Trump administration, President Trump made a phone call to the leader of Taiwan, very symbolic move from where Beijing sits, and this was a pretty sharp warning to the president. However, having said all of that, our understanding, Tyler, is that the U.S. has not changed its position. Marco Rubio, the Secretary of State, made clear that the U.S. has reiterated its stance on Taiwan.
Exactly, Scarlett. And President Trump also seemed to echo the position of deliberate ambiguity that we've heard from officials. President Trump saying that only he ultimately knows what the U.S. would do in terms of protection around Taiwan. He says that he was asked directly by the Chinese president during their private meeting yesterday. The question then becomes regarding arms sales to Taiwan, as we know that Congress is queuing up another $14 billion weapons package. Our own analysts at Bloomberg Economics have said that China could try to use some of its strategic leverage, including when it comes to export controls surrounding critical minerals, to try to pressure the U.S. one way or another. But you're right, so far the U.S. has signaled that there is not going to be a change when it comes to official policy stance or the future of weapons packages to Taiwan, as we know that the U.S. Congress has been broadly supportive of making sure that our ally gets their necessary military assistance.
Tyler, we had Bob Hormats on surveillance this morning. He's vice chairman of Kissinger Associates, and he's got decades of experience negotiating with China on behalf of the United States. He said to him, this summit marked, in his opinion, the first time China sat down with the U.S. as equals. Does it feel that way in China? Is that how China and the folks in Beijing see the relationship at this point?
Well, that was very evident by some of Chinese President Xi Jinping's own comments yesterday, including how he had opened up that state banquet with these executives there and talking about the risk of an emerging power versus an already established power. But it's very clear that China came to the negotiating table this time around feeling more emboldened. In fact, our own analysts, again, at Bloomberg Economics, looked at a few different factors here, including that China so far has really weathered the trade war with the U.S., including the recent Supreme Court decision that struck down tariffs in multiple lanes related to IEEPA, including those on fentanyl, as well as those broad-based tariffs that China had been facing. And that perhaps gave China a stronger negotiating position going into this, including also that we know that the war in Iran is building that domestic pressure on President Trump to come home with perhaps some more deliverables to the American people that he was hoping that he could bring back with this trip. With that said, of course, we did get the announcement in regards to a Boeing purchase commitment. That is something that the president and U.S. officials are touting, as well as progress in terms of a potential U.S.-China Board of Trade, a Board of Investment that could help grease the skids to have more reciprocal trade between the two nations.
And to that end, Tyler, as you're speaking, there was a red headline crossing the Bloomberg. According to Xinhua News Agency, China and the U.S. have agreed to set up this trade and investment board, these councils that U.S. officials had anticipated. Tyler Kendall, our Washington correspondent, on the road in Beijing following the Trump and Xi summit there. And of course, the Chinese president due to visit the United States in the autumn as well. So the talks continue, Paul.
Yep, and that's a good thing, I think, across the board.
Yeah, absolutely. Investors' focus have shifted, of course, back to markets. Yields are higher.
headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Only 2 of the 11 major industry groups in the S&P 500 are higher. Energy, best performers, oil prices remain higher today. We have Brent crude, the international benchmark, up 2.4%, so that's 108.26 a barrel. Material stocks, worst performers among the major industry groups. And in a sea of red, Dexcom, best performing individual stock in the S&P 500. This is the diabetes device maker. They had a growth outlook, kind of impressive for analysts, and Elliott Management also taking a stake in the company. Bill Ackman says Pershing Square has built a new stake in Microsoft, taking advantage of the decline in the company's share price to invest in a business that he says is stronger and more resilient than investors think. And you have shares of Microsoft as a result of that. They are up right now 2.2%. Overall, S&P 500 down 56 points. That's down 0.75%. The Dow down 325 points. The Nasdaq Composite Index down 284 points. These are all concerns about inflation and rising yields, and they are rising. The benchmark 10-year Treasury yield right now up close to 9 basis points. We're at 4.57. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, good stuff. John Tucker, thank you so much. And of course, we are looking at stocks in the red, and you would think that this would be risk off, which would mean bonds would be higher, but that's not the case.
Bonds are selling off here, and we got yields pushing much higher here.
Much higher, and it's not just the U.S., it's global. You've got yields in Japan, yields in the U.K. also surging. They have their own issues, but of course, the common denominator is rising oil prices, reigniting those inflation concerns. Let's bring in Julie Beal. She is Chief Market Strategist and Portfolio Manager at Kayne Anderson Rudnick, joining us from sunny Santa Monica, California. Julie, good to speak with you. Equities have come off their lows. They opened sharply lower, and they've been paring their losses steadily in this first hour or so of trading. I'm curious to get your take on what you see happening here. Clearly, the bond market kind of set the tone for equities today, but is the move higher in rates a threat to U.S. stocks?
Yeah, absolutely, because I think right now we're in a real growth mode. And when we're on a real growth mode, the things that were driving the market, they tend to be higher valuation stocks, or we've seen a real valuation in lower quality stocks that are connected to the AI theme. And so the minute you have higher interest rates, it kind of calls into question whether those stocks should trade at those multiples. And also, if the debt markets start to become a little bit trickier, can we still do this huge AI build out that everyone has really just latched their hopes onto?
So how concerned are you? How concerned are your clients about this prospect for inflation, maybe keeping rates higher here?
I think right now, to me, when I look at the mix of pressures on inflation, at least in the US, they are more contained just because the intensity of oil in our economy is so different than it was in the 1970s. But I do think that there is a kind of slow burn pressure that we could see on inflation in terms of what it means for transportation, what it means for input prices, and what it means for food. And the other thing that gives me a little bit of pause is that if we look at the inflation index and break it out, the place where we're seeing the heat right now, right this moment, is more on the services side. So we haven't even really seen how oil prices infiltrate. That said, I do think, broadly speaking, that there's enough deflationary pressures from technology that can offset some of this. So while I don't think spiking inflation is a huge risk, I do think it's something that everyone should be paying a lot of attention to.
Julie, we're starting to get a lot of these anticipated IPOs coming to the market. This week we had Cerebras, and that traded crazy good. People are looking for SpaceX and maybe Anthropic and some of those types of things here. Does that signal anything to you, to the market? Does that signal a healthy market, maybe a frothy market? How do you think about that?
I think it kind of depends, right? Because if we think about SpaceX, Anthropic, OpenAI, we're going to add $2 to $3 trillion to the market cap, but not really any earnings. And so that changes a little bit the dynamic of the types of companies that are coming to market. And I have a little bit of a concern that when these S1s are put together with proper audited financials, and we're looking less at just ARR and all of the metrics that these companies really rely on to get investors excited, when we're starting to look at GAAP earnings, I do think that there will be some questions raised as to, okay, what is the real fundamental profitability of these companies? So I have a little bit of worry that that could put some cold water on the excitement around a lot of the AI themes. I would love to see a healthier IPO market. We really need to replenish the store of younger companies, especially in the small cap space. But I'm not 100% sure that these are the IPOs that are going to do all the work for us.
Yeah, far from it, because these are going to be gigantic companies, SpaceX, starting with SpaceX, and then, of course, moving on to OpenAI and Anthropic. We've seen the exchanges and the NASDAQ in particular make moves towards including SpaceX in the NASDAQ 100, which would then mean it gets included in the queues, which would mean that a bunch of passive funds would then need to buy SpaceX. What does that do to the earnings potential of something like the NASDAQ 100?
Yeah, it's. I think the way that the deal was structured with the Nasdaq in terms of the inclusion in as few as 15 days, that's quite a bit of pressure. We normally wait a year to see how these stocks kind of mature and settle down, and we know these companies are coming and they're sub-profitable because they're still in this kind of hyper growth phase, and so it is going to change a little bit of the earnings quality of the index when you have pretty large company that's coming in and is not going to have any earnings. So I think that's going to create kind of immediate noise. You know, it's smart to ask the indices to be included immediately, right? Because no matter how the IPO price is, if people know they're going to be in the indexes, there's going to be a lot of buying activity and support. What remains to be seen is what is going to be the appetite for investors to wait and be patient for profitability to really come through in that business.
Yeah, very well said. Julie, thank you so much for joining us today, and have a great weekend. Julie Beal is Chief Market Strategist and Portfolio Manager at Kane Anderson Rudnick, giving us her stance on the markets. And of course, what's driving a lot of the market action, particularly in the bond market today and all week, has been the steady rise in oil prices. Brent hovering just below $109 a barrel. It did get beyond that point earlier today before pulling back. Let's bring in Rob Barnett. He is our Senior Energy and Commodities Analyst joining us from Miami. Rob, is this simply a case of investors refocusing on the fact that the Strait of Hormuz remains not open, and you know, the Donald Trump, Xi Jinping summit was kind of a nice distraction for a while? There are a lot of hopes that there will be progress made, but without any kind of concrete details, everyone's refocusing on what's not happening.
Exactly. When we were watching the headlines from President Trump's visit to China, we didn't really see anything on the energy side to change the narrative much. And when you zoom back out to the oil market with the Strait of Hormuz closed, thank goodness we have inventories, and we're drawing something like 5 million barrels per day out of those inventories. And every single day we get closer and closer to depleting what stocks we have. And until we have the Strait reopened, you're going to be in deficit mode. And even once you get it reopened, it's going to take a long time to sort of normalize things and replenish some of those inventories and stocks.
So, Rob, count me in the camp. I'm kind of surprised we're not higher, like a lot higher, because it goes to the issue you were just mentioning. Whatever inventories we had either on land or floating around somewhere on some ocean somewhere, those have got to be getting down to dangerous levels. What do we know about the just global inventories?
Yeah, so I think you're right. And so to frame the pricing question, I think if you had proposed this idea of a shock before the conflict, where the Strait of Hormuz was closed, and sort of asked people to sort of speculate on what prices would look like, I think they would have said much higher than where we are today. And that is really because oil demand in the short run is very inelastic. There's not much you can do. Maybe over time you could buy an electric vehicle, you could take steps to insulate yourself from that commodity, but in the short run you just have to bear it. And the real saving grace has been the inventories, but as you note, they are sort of rapidly declining. Our estimate is something like 5 million barrels per day coming out from those inventories. And so we can continue to go for a while yet, but if the longer and longer this crisis holds, the more you have to start thinking about what price is needed to really start curbing demand, and it's not obvious we are at anything near what those price levels could be.
What kind of price level might that look like for WTI versus Brent, the global benchmark?
Yeah, I think, depending on who you ask, you probably look at numbers north of $150 a barrel, so quite a bit higher than where we are. But the counter, the thing to keep in mind is, once you get prices to that level, you have to start thinking about the macroeconomic consequences, because this could start to drive you into a recessionary mindset. And so everything right now is sort of based on the idea that the economy is well functioning, but as oil prices tick up, you might have to challenge your macroeconomic assumptions.
What are our good buddies in the oil patch in Texas and Louisiana and Oklahoma? What are they doing with production? Are they taking advantage of some of this and cranking up production?
Yeah, it's a good question, and I think you are seeing some shifts starting to occur where maybe you're going to see CapEx start to tick a little higher. Folks might be thinking, particularly here in the U.S. or North America generally, if you look up to our neighbors in Canada, you could start to see a growth mindset occur, but that's not universally appreciated. Many of the large E&Ps are still very focused on shareholder returns versus boosting CapEx. What I will say, though, that's quite interesting outside of this region is big news item from today is that the UAE is planning to double its pipeline capacity by next year that would allow them to bypass the Strait of Hormuz. So I do think we're seeing a lot of clever things like that happening in the market that will probably have longer term implications, but these things sort out over years instead of months when you're talking about something like that.
Yeah, and I know Paul was asking because he wants to fulfill his landman ambitions.
Yes.
Right? He's been talking about this for a while now. Very quickly, Rob, you mentioned that the UAE looking to, increase its use of pipelines. Canada has talked about this as well. But again, when we say that these are years-long moves, are we talking, 2 to 3 years or something more akin to 8 to 10 years?
Yeah, so the UAE is moving very fast. We were talking about it on the team, and just the idea that you can get a pipeline permitted, built within a 2-year time frame, because they're talking by 2027.
Oh.
I think when you come to North America and think about the pipeline landscape, things just do not move nearly as quickly. So I know Canada is very interested in boosting its pipeline capacity. They could have higher volumes,
right.
But things are probably not going to move in a 2-year or 18-month time frame up in Canada.
Rob Barnett, Bloomberg Intelligence, Senior Energy and Commodities Analyst on what we're seeing in the oil patch. And of course, oil prices are elevated today and for the week. WTI up about 3% at 104 a barrel. Brent did get to past 109, but just below it at the current moment, now up about 2.7%. U.S. stocks are in the red right now. The S&P 500 losing 0.9%. The NASDAQ losing 1.2% as bond yields surge around the world. This is Bloomberg Intelligence on Bloomberg Radio.
hits, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Well, it's risk off today. Pairing some of the earlier losses for the major averages, investors have these inflation jitters. We had these two reports this week, raising the specter of the Fed holding pat, even shifting to rate hikes maybe next year. So the benchmark 10-year Treasury is up right now close to, 9 basis points. We're at 4.57 on the 10-year. The laggards in the S&P 500, they include Intel and Micron Technology today. We have shares of NVIDIA also falling, down 3.5%. The Philadelphia Semiconductor Index down 3.2%. It's not all red. Shares of Figma among the standouts, up 17%. This is the creative software platform. First quarter results beating expectations, also raising the full-year forecast. Meantime, Amy Silverman at RBC Capital Markets says it is too early to say if the recent market rally is fizzling.
With NVIDIA reporting next week, that could definitely bring another inflection point in the market. There's been a lot of momentum building towards that print as well. And so I think, we have to wait for that before we kind of call the end of peak froth or not.
Right now, the S&P 500, 59 points lower, down 0.8%, 7440 on the index. The Dow down 383, and the Nasdaq Composite Index down 298 points. So I will give I don't have anything new. I was doing the story this morning, but the threat of a strike on the the country's largest commuter rail line, the Long Island Railroad, still there, could happen tomorrow if they don't come to some sort of an agreement between the railroad workers unions.
They've been talking for a long time.
They've been talking for a long time, and it was interesting to hear New York Governor Kathy Hochul really take aim at the Trump administration because the federal mediators, to some extent, were in charge. She says they blew it or just didn't even try. So anyway, we'll see. That's 300,000 commuters going to be affected by that.
We've got the subway series out in Queens this weekend.
Oh, I didn't realize that.
Yeah, so the 7 train will be your only option because we wouldn't be able to take the railroad there, which I always take the railroad out there because it's so much faster.
Well, the advice to non-essential workers, if this does happen, is work from home.
Yeah, we can do that.
So anyway.
If you can. I mean, not everyone can. That's the thing.
Yeah, so it'll be interesting to see. We check the markets for you and other stuff right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
I mean, the MTA just had, remember the Summer of Hell? It was like 2017, I want to say. I can't remember. It seems like a decade ago. But that was when all the trains were really late. And then now you have potentially another Summer of Hell for folks in Long Island if this doesn't get resolved.
Yep. New Jersey Transit, thankfully things are quiet more or less, although we have a little problem with the fire.
He just jinxed it.
I know.
Shouldn't have said
a good
anything.
point. Let's talk a little technology. John Tucker was just reporting on Figma. Let's start there because I have no idea who this company is. Never heard it before. So I'm going to go to Anurag Rana, technology analyst. He gets paid to know about this stuff for Bloomberg Intelligence. Anurag, tell me about what this company Figma is. Why don't I know about it? But they had some pretty darn good numbers here. Talk to us about Figma.
Yes, Paul. So you may remember Figma when Adobe tried to acquire them a few years ago. It was one of the biggest acquisitions by Adobe. To be honest, I went and criticized Adobe for such a big acquisition with no real revenue. But this is a phenomenal company. It does design software. So if you're designing applications, this is a place where you're going to go design the application and the workflow, and then you're going to get coded with it. They came out public last year, and you've seen the stock down around, let's say, 80% since then, because, again, high growth company right in the smack middle of being disrupted by AI models. And, when you had a brand new company, your financials are not the best. So this has been the one that has absolutely been crushed over the last 12 months. But last night they showed that the growth rates are actually picking up. Their AI consumption is improving, and they are not, they're working closely with large language models and helping out their customers.
And I'm so glad you bring out the point that the stock has gotten absolutely crushed, because you take a look at a one-year chart. On August 1st, 2025, it was trading at $122. And of course, yesterday, or prior to this earnings release, it was trading below $20. Now it's above 20, but still a long way off from those highs back in the summer of 2025. You had mentioned, Anurag, that Adobe wanted to buy it, but was stopped by regulators. Is this a takeover target? is it still a takeover target for anyone?
Well, Adobe would have been the right fit at that time. And again, I go back and say when it happened, I would really criticize Adobe for it. But I seem now it looks like a very good design software. Now, I don't know if it can be acquired now because, as I said, there was some regulatory issue. In the little market that they operate in, Figma operates in, they actually have very high market share. They are the predominant vendor with very little competition from any of the bigger guys. But here the discussion was, the reason why it got crushed was people said, well, why don't I just go into a Claude or an OpenAI and start designing my application over there? And these guys are saying, listen, it's not that simple. You can, coding, you can do it anywhere, but designing requires a different skill set. As I said, they have probably the best product that's out there in that category.
Hey, Anurag, to what extent is what we're seeing today in Figma kind of emblematic of what maybe a lot of software companies need to do, which is, hey, people have sold your stock, concerned about the AI competitive threat. The only way to get around that is just to perform and put up good numbers. Is this kind of a template for some of these other software companies?
Yeah, Paul, you really nailed it in the head over there. That's exactly what needs to happen. But it was probably a little easier for Figma because the base of revenue is small. And even one or two days signed a very large client with one of the hyperscale cloud providers. So what happens is when you sign that big of a contract, your growth rate goes up. But when you're a larger company, let's say if you're a Salesforce or a Workday, one or two clients really don't do it for you. That's really a macro play. And, believe it or not, macro right now, tech's doing very well, but macro for non-AI tech is not good. We think things are going to be tough for Salesforce and Workday when they report in a few weeks, because, if you see what's happening with deal activity being pushed up because of the war, because of all the uncertainty around rates, I think, the large software company won't have an easy time to show a rebound in growth rates. So the real kicker has to be that the declining growth rate needs to improve, but it's going to be hard for the larger ones to do it.
Anurag, I want to switch gears and get your take on what's going on with Apple and OpenAI. They have a 2-year partnership, but it's starting to become frayed. This is according to our reporting, Mark Gurman of Bloomberg News, reporting on this. The startup OpenAI is failing to see the expected benefits from the deal, and there's now talk of possible legal action here too. Does this go back to the idea that Apple has had a kind of a tough road here figuring out how to deploy its AI strategy?
So I'll take a slightly different angle on this thing. Apple, I think, did a good job at that time to tie up with OpenAI because OpenAI was the best model. And it did, kind of at that point for a short term change the narrative that Apple's embracing. But frankly speaking, if you look at what OpenAI did, they basically started a new firm where they're going to try to do a device that could compete with Apple someday. They've been poaching, engineers from Apple. And frankly, you don't do that to Apple. In fact, Elon Musk also learned it the hard way, a long time ago. You have to work closely with Apple. Apple went out and said, you know what, we're going to license Google model for our models. We're going to allow, and Mark's also reported on that same framework, that when they announce their Worldwide Developers Conference on June 8th, they will showcase that consumers can use all the models and not just OpenAI. So I think there was a little bad blood over there because OpenAI wanted to, compete with Apple, and, Apple controls, I think, one of the most important distributions for consumers. And I think it's going to be very tough to work with them.
Anurag, real quickly, just kind of came across recently, Bill Ackman takes a stake in Microsoft stocks up a couple of % here today. He says tech deeply embedded into the ecosystem. What do you make of Ackman and Microsoft?
Yeah, maybe you read a note from back in January when we said, they're just being punished for no reason. They are being punished because they're part of the software bucket. But Microsoft is dead smack one of the most important companies as we see AI grows.
Yeah, interesting. Bill Ackman, again, taking a stake in the company, which is interesting.
Well, it's part of his larger ambition to be, the Gen Z Warren Buffett, or the Warren Buffett for Gen Z investors. Let me put it that way.
Perfectly. Yeah, and it's a good company to start with.
Yeah.
Anurag Rana, technology analyst, Bloomberg Intelligence, from the growing tech hub of Chicago is where we have Anurag embedded there. Coming up, we're going to check in with Randall Williams, Bloomberg Business of Sports editors. Lots of stories to talk about in the world of sports. The World Cup's coming. They keep telling me. So we'll get ready for that. S&P down 70 points, 0.9%. The NASDAQ down 355 points. That's 1.3%. Yields higher. Oil higher. More coming up. This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Check us out there. The business of sports, let's get right down to it. There's a ton of stuff going on. Must be good to be Randall Williams, U.S. sports business reporter for Bloomberg News. You got a bunch of them. I'm starting right with the Mavericks. What's going on there? Sheldon Adelson's son-in-law, Patrick Dumont, has big plans for the team.
Yeah, I think we all remember where we were when Luka Doncic was traded last year on February 1st or 2nd, depending on what time zone you were in. And it just set off an incredible sort of events for the team. We've never seen a team go from the NBA Finals to then lottery the next year and also get the #1 pick. And so he's had to rebuild some things in Dallas. And as part of that, he's also trying to bring gambling there. The timeline of building a new arena in Dallas and building this luxury resort that he wants probably won't match up at this point in time, but he's not going to stop trying.
And are advertisers on board with this? Are the other investors in the team on board with this? Are fans on board with this?
I think the reality is that everybody has to move on from it. Like, there's a world where I think that there are some Mavericks fans who are Luka fans who now might be Laker fans because of the fact that Luka was traded. But
Cooper Flag, dude. He's the future of the NBA.
He is. He is an incredible player, and he was very kind to me when I spoke to him for all of 5 minutes and walking down the hallway. But I think in terms of business value, if Dumont and the Mavericks start winning again, I think that a good portion of fans will forgive him because all is forgiven after winning.
You mentioned that they want to turn, Mavericks to kind of like a Vegas type of situation. I want to stay with that Vegas idea because you also have the Las Vegas Raiders potentially selling a stake to Egon Durbin. Who is Egon Durbin?
Egon Durbin is the co-CEO of Silver Lake. He slowly but surely acquired a good portion of the Raiders. It started, I believe, in December 2024. He bought 7.5%. He can, with a partner who then acquired another 7.5% to get to 15. Then in March, he acquired a path to control, and now he's buying out even more limited partners. So he has a good portion of the Raiders, and if the principal owner of the team, Mark Davis, ever decides to sell, then Durbin is in line to purchase the remaining shares.
But that hasn't happened.
No, and Mark Davis has come out and said he has no plans of that right now. But listen, if teams are passed on at some point, and I think Durbin is next in line.
Mark Davis, the best haircut in the NFL. No question asked. Valuation here. Values the Raiders at $9.9 billion.
A lot of money.
Wow.
A lot of money.
It's just a great market. I mean, have you seen a market embrace so many sports teams so quickly?
Oh, no. I mean, in 10 years, they'll have everything. Yeah. I think if they choose to get the NBA expansion team or if the NBA grants them that, then they will have everything. And, of course, the Athletics, of course, will be there someday, hopefully.
Yeah. Moving franchises is hard. Like, you think, or just having franchises like that in Florida. Nobody roots for the Tampa Bay Rays because they're all from New York or Philadelphia or whatever like that. But you go to Vegas, they support teams that come in from other markets.
It's really interesting. The Golden Knights have been the most successful team along with the Las Vegas Aces. And the other teams haven't performed well. Like the Raiders haven't been good in a very long time. But if they were, it would be an incredible market and be even more supercharged than they were maybe in the 80s.
Does the city have the infrastructure to support all these teams?
We'll find out. I think that T-Mobile Arena is right there. And so if an NBA team were to be granted, or an NBA expansion group were to be granted a bid, they could be played there. An expansion group could offer to build another arena. And then, of course, the MLB, they tore down the Tropicana Hotel in order to build a new stadium there. And so I think that there's a possibility that I think Vegas could become sportsed out, but in all reality, winners win. And if the losing teams don't win, then I think that the crowds will be empty.
All right, you have another story out, dude. You've been busy, man.
Very busy.
Take a breath here. You got a story out there on the 2026 World Cup. Other than John Tucker, I'm not sure people are paying attention to it too much, at least in this town, which we've got so much going on here.
There's been a lot that's been made about, the New Jersey Transit, which I'm actually about to get on and go to MetLife just to experience what it's like today versus what it'll be like when they play there.
I want a live blog of this.
And I think, listen, like the World Cup comes around and it does seem like the U.S. only cares within 14 days of it. And there's been a lot of drama surrounding it. I mean, FIFA's president awarded President Trump a peace prize, the first prize ever. And I think things like that are a bit, in my opinion, performative. But when it gets here, we'll see what happens. So long as Trump does not meddle in the World Cup too much, I think it'll be fine.
And the halftime show, there's a halftime show which kind of blew my
yes,
mind,
they
right?
announced earlier this week, or maybe it was late last week. It'll be Madonna, it'll be Shakira, and BTS.
So appealing to different demographics.
Yes, I'm in the Madonna demo.
Yeah, me too.
Okay.
Then there's Shakira's like the millennials, and then BTS.
I was hoping for Credence, but
I'll be there just clapping and singing along and hoping for a good match.
Right,
I think in a perfect world for FIFA, that this electrifies the European football / soccer fan base in the U.S. That's in a perfect world. But what has to happen in order for that? Is it a Team USA run to the round of 16?
I feel like it has to be, yeah.
I do too, but we'll see if any of these international stars can electrify audiences the same way that U.S. stars across all sports do here as well.
Dumb question, but is Messi playing?
He hasn't come out and said so yet. It's a big elephant in the room, but there are stars globally, and I think it would be fine without him. But also, it would be a bit disappointing if he decided, like, I went out on top in 2022, and that was it.
Right.
But can you blame him?
Yeah.
Probably not.
Yeah, all right. Go over to the swamps of Jersey. That's where it's all going to happen, baby.
How much are you going to pay on New Jersey Transit?
$98. It came down from $150, so everybody be grateful.
Cost me $12 to go to a Giants game, but there you go. All right, Randall, thanks so much. Appreciate that. Randall Williams, U.S. Business and Sports reporter. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
TGIF, good Friday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is Bloomberg Intelligence. Paul Sweeney, Scarlett Fu, and John Turker all together again in New York this time.
Absolutely. We had a fun time out in San Francisco, but we're back.
Yeah, we made a sojourn out to the West Coast.
You guys had a fun time.
Oh, that's
John
right.
held the fort down here in New York. We've got a lot to cover here because it might be Friday and it might be late May, but there is a lot of market action to get you up to date on. And we're going to kick things off with Ira Jersey, our interest rate strategist here at Bloomberg Intelligence, on the sell-off in bonds, not just treasuries, but around the globe, in the UK, in Japan, across Europe. We're also going to check in with Tyler Kendall, our Washington correspondent. She is on the ground in Beijing to wrap up the President Trump and President Xi summit that took place earlier this week. We're going to check in with Kunjan Sobhani, our senior semiconductor analyst. He's going to preview NVIDIA. NVIDIA has not yet reported earnings this earnings season, but it will do so tomorrow. And he's going to tell us about the IPO that was a blockbuster hit this week, Cerebras, as well. And check in with Dana Dioria. She is co-CIO and group president at InvestNet Solutions to get her take on what rising bond yields mean for stocks. Right now, it's a big down red arrow. First, let's get over to John Tucker for our Bloomberg Business Flash.
All right, major stock averages, they are lower. Risk off as Treasury yields climb on inflation concerns. Not a big jump in yields, more like this creep higher. You did mention NVIDIA. That's after the regular day on Wednesday, close of regular trading on Wednesday. Ahead of, I don't know why they report outside of everybody else, but right now ahead of that, those shares 4% lower. Dexcom climbing 8%. The activist investor Elliott Management taking a stake in the medical device firm, best performing stock in the S&P 500. Again, those shares up 8.3%. And then you have pizza shares, Papa John's up more than 5%. The investment firm Earth Capital is working with the chain's largest franchisee to take the company private. Sebastian Page at T. Rowe Price, meantime, has been taken aback by how well some companies are performing.
You know what? The earnings, they're amazing. We thought we'd get 13% year-over-year growth at the end of March. we're trending at 30% year-over-year growth. Those are massive, massive earnings surprises.
Well, the S&P 500 right now down 75 points. That's a 1% decline, 74.25 in the index. The Dow down 554 points. The Nasdaq Composite Index down 374 points. Energy, one of the best performing individual major industry groups in the S&P 500 as that climbs higher. Brent is up 3%, WTI up 3%, both of them well above $100 a barrel. Somebody paid more than $9 million. This is back to have lunch with Warren Buffett, and as kind of a kicker, Steph Curry is going to be there. The auction intended to revive the event.
So the headline attraction is Warren Buffett, or the headline attraction is Steph Curry?
Who would it be for you?
Do I have to say this out loud?
Yes, yeah, that's all right. He won't be offended.
Probably Steph Curry.
Buffett hosted it for more than 2 decades, raised $53 million for the Glide Foundation. That's the homeless charity in San Francisco. So they're trying to continue that. It's going to be in Omaha. They did have it down the street here at the steakhouse, but yeah. So anyway, close to home for Warren. He doesn't have to go too far for it.
That's good.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
John Tucker, thank you so much. Appreciate that. Scarlett Fu and Paul Sweeney here. All right, for all the aviation geeks out there, this question has been vexing me for the last couple of days. Can Air Force One fly directly from D.C. to China? Why are they stopping in Alaska and refueling? Answer from the AI overview of Google. Yes, Air Force One is capable of flying directly from Washington, D.C. to China without a refueling stop, as it can refuel mid-air. However, based on a reported travel from May 2026, the flight frequently includes a fuel stop in Anchorage, Alaska.
But why?
I think maybe they're just saying, hey, you know, why take the risk of an aerial refueling? Let's just land this thing and refuel. It's more safer to do it on the ground. That's the only thing I can guess. That would be my next question to, ChatGPT. While you're working here doing this, I'll start doing that.
Okay, yeah, get back to us on that.
All right, but let's, we got some selling out there in the marketplace, as John was just talking to us about. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at?
Yeah, a whole lot of red. We have to start off with NVIDIA, that's ticker NVDA, currently sliding about 4% for its biggest intraday drop since April 30th. That's after President Trump said that China hasn't approved purchases of NVIDIA's H200 chips because they want to develop their own, and also saying that it didn't really come up with China during his summit. That's been driving NVIDIA and also other chip names lower today. And it's kind of interesting, since when Jensen Huang joined Trump for the summit, a lot of those chips names outperformed on the hopes that a deal could ease the memory crunch, but seems like that's not going to happen.
Well, there were a lot of hopes tied to everything in the equity market these days. All right, and as John Tucker was telling me earlier, NVIDIA will be reporting after the close next Wednesday, the 20th. NVIDIA, the last of the Meg 7s to report. But next up on your list,
Boeing, another story out of the China summit, that's ticker BA, currently slipping about 2.7%. That's after the airplane manufacturer received a smaller than expected order for jets after Trump's China summit. Trump said that China would buy around 200 aircraft, though he later suggested that there's a possibility of them buying up to 750 planes. Again, no specifics. Kind of murky. Melius Research writing that while China is a very large market, they don't believe it is a strategic market for Boeing anymore, because there can't be 100% certainty that these planes will even get delivered, whether that be from trade tensions or geopolitical tensions with Taiwan. I thought that was kind of interesting heading out of the print today.
Speaking of Boeing, I did some more work here. How often does Air Force One do mid-air refuel? Air Force One rarely, if ever, refuels in midair during actual presidential missions, with reports indicating it has never done so with a president on board. I'm just kidding.
Interesting.
So there you go.
Okay, I feel like I've seen it be refueled midair, but I think I might be remembering watching a movie.
It is capable of doing so in emergencies or for training, but standard operations involve landing at military bases to refuel. Boy, I just answered so many questions for so many people today.
Why did we care about this again?
Because for Air Force, I mean, aviation geeks out there, it's just keeping them up at night. One more for you, Avalon.
Yes, Dexcom, that's ticker DXCM, currently rising about 7.8% most intraday since February. That's after activist investor Elliott Management took a stake in the diabetes device maker and also struck a deal to name 2 independent directors to the board. Separately, Dexcom also gave a really rosy long-term growth outlook at its investor day earlier this week. Also worth noting that we did have Dexcom CEO on BTV earlier today, and he said that customers taking GLP-1s have higher utilizations of these continuous glucose monitoring devices. That's been a big worry for investors about how GLP-1s are going to impact diabetes device makers like Dexcom, and that move is making them one of the top gainers on the S&P 500 this morning.
Wait, I have another question. Could they have transferred Jensen Huang air to air without landing?
Oh, that would have been pretty cool. You could make a movie out of that. I think Tom Cruise did that in the movie.
That sounds about right. Jensen Huang as played by Tom Cruise.
Right.
All right. Thank you so much, Avalon Purnell, with our movers this morning. And for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. It's available on Apple Podcasts, Spotify, or anywhere you listen. All right. We have Treasuries and global bonds around the world selling off. That is pushing yields higher. And we're talking about multi-year highs for a lot of these bond yields. It's not just the U.S., and that gets people's attention. Let's bring in Ira Jersey. Ira is our chief U.S. interest rate strategist here at Bloomberg Intelligence. And Ira, how would you characterize what we're seeing around the world today with these rising bond yields? They were fairly steady kind of throughout the week before really picking up today. Is this orderly? Is this panicked selling?
Well, it's not panic selling here in the U.S. I mean, treasuries right now are being driven by what's going on in the U.K. and Japan, right? So when you look at the move today in the 10-year, and we were looking at this, and there were some people telling me, oh, look, we have big problems in the U.S. with oil prices up by $3. Our yields went up 3 basis points when Japanese yields were going up 10, 12 basis points, right? So we have to remember that the developed market bonds can move in tandem quite frequently. And, a beta of 0.5 is not that unusual these days, especially when you get these 14, 15 basis point moves in Japan and England. I think the oil price story is still what's affecting the markets, right? People are still worried about inflation, but more importantly, and what's gone on more recently, is really the fiscal situation in a lot of the developed markets. And Japan and the UK are at the epicenter of those questions.
Boy, a tough time, arguably, for Kevin Warsh to assume the chairmanship of the Fed here. He's presumably got I'm not going to call it a mandate, but certainly, some encouragement from the president to lower rates. Yet the data's not helping him out here, is it?
It's not at all, Paul. And it's very likely that the Fed's going to be on hold, even if Kevin Warsh talks dovishly and tries to convince some of the other members to, ease interest rates. He can maybe make the case that, easing interest rates might help the, growth a little bit. But, the data that we've gotten recently has really been quite strong, right? So obviously we had a pretty strong inflation prints earlier this week, but most of that was energy related, right? So the Fed is going to at least look a little bit beyond that. But when you look at core inflation measures, even excluding things like some transportation, you're still talking about inflation that's running above the Fed's target. So it's going to be difficult for, I think, Kevin Warsh to convince the other members of the FOMC to actually lower interest rates in this environment. And he can make that excuse too. Like, look, if oil prices go back down significantly to $80 a barrel or something like that, that would give us more room to think about cutting. But right now we can't.
Right now we can't, and this is something that Fed Governor Michael Barr really hammered home, that inflation is the overwhelming risk facing the economy right now. Michael Barr, in his comments, also pushed back against Kevin Warsh's proposals or his comments about wanting to shrink the Fed's balance sheet. What problem is Kevin Warsh trying to solve by trying to shrink the balance sheet right now?
Well, there is a number of economists and others who think that the Fed's balance sheet being so large is having an effect on markets, maybe keeping either volatility too low or that there's some crowding out that the central bank's doing. Personally, I don't look at it that way. So what I look at is how much of the various markets does the Federal Reserve own, right? And the Federal Reserve owns about the average amount of treasuries outstanding that it always has. So the Federal Reserve, from the time it was started to institute policy in the way that it has in the 1970s, has basically owned about 20% of the treasury market, pretty much what they own now. What they do own a lot of are mortgages, right? They own a lot more of the mortgage market than they ever have owned. I mean, they only started buying them basically during the global financial crisis about 15 years ago. But so at the end of the day, shrinking the Fed's balance sheet is going to be really difficult, and also how do you do it, right? And so I'm with Mr. Barr. I don't think that they can or have to shrink the balance sheet at all. I think it will create more problems than it really solves in doing so. And look, we can get really wonky here, but the problem with with shrinking the balance sheet today is all of the bank regulations. The reason why the balance sheet has to remain so big is because banks need a lot of the bank reserves that exist. There's $3 trillion of bank reserves out there. Whenever we get down toward 2.8, 2.7 trillion, which we did late last year, you start to see funding markets, that most underappreciated of markets, the repurchase agreement market and other short-term funding markets, start to go haywire when we get to that 2.7 level. So they're not going to be able to lower that without, basically sweeping changes to some of these regulations.
Boy, sounds like there's a big to-do list if he wants to go down that path. All right, Ira Jersey, our Bloomberg Intelligence Chief U.S. Interest Rate Strategist, joining us from Princeton. Thank you so much. Let's go from Princeton to Beijing. Tyler Kendall is our Bloomberg Washington correspondent, and she has been tracking the president's moves during this Chinese-U.S. summit that has just concluded. The president, of course, in the air right now on Air Force One due to stopover in Anchorage, Alaska.
They're down on the ground now.
Oh, they're on the ground now. Thank you. Okay, Paula's been keeping track of Air Force One for all of us, wondering why Air Force One needs to make a fuel stop in Anchorage. But Tyler is in Beijing right now. And Tyler, just give us a sense of what the feel is, the vibe is in Beijing in terms of what this U.S.-China summit accomplished.
Well, Scarlett, at this point, it seems like the big accomplishment is that this summit went off and that there was a rather cordial visit between the two leaders, considering that we know that this trip had been delayed over the conflict in Iran. In terms of deliverables, there hasn't really been that many details regarding them, though we can confirm that Boeing officials were here still in Beijing on the ground just a few hours ago, meeting with one of China's top economic planning committees in what is considered to be a positive sign for that deal that was highly anticipated, as we wait for some more confirmation from the Chinese side on just exactly how many Boeing planes will be purchased and which types of jets. Beyond that, I was just speaking with Ed Ludlow and Caroline Hyde about how there had been such a big expectation that maybe we could see some other movement regarding NVIDIA's H200 chips, for example. But while President Trump says that that issue was discussed behind closed doors, ultimately he indicated that China doesn't have an intent right now to buy those greenlit chips from the U.S. because they intend to develop their own. So there were a lot of issues where we thought maybe we would see some more progress, though the U.S. at this point is projecting optimism on a few different areas that we are waiting for details on, including U.S. agricultural purchases as just one example, as both sides have now confirmed that they are working to establish a U.S.-China Board of Trade as well as a U.S.-China Board of Investment that would essentially seek to fast-track investments in the U.S. that don't deal with national security concerns and may get caught up in the CFIUS review, the Committee for Foreign Investment in the U.S., that can sometimes stall the process. So some progress was made in that sense, but the overwhelming feeling here is that because there is stability, that is considered to be a positive sign amid a summit that could have gone awry over a number of tensions.
One of those tensions, Tyler, certainly from the Chinese perspective, is Taiwan. Do we know of any movement forward between the U.S. and Taiwan and China as it relates to Taiwan? Did that occur?
Well, we got a few headlines actually breaking within the last hour, one from Chinese state media, which reaffirmed that China does feel that Taiwan is that top issue among U.S.-China relations, and then a transcript that came out from President Trump's interview with Fox News, where he reiterated that the U.S. position regarding Taiwan has not changed. But if I could read a quote from what he said, he added, quote, "I will say this, I'm not looking to have somebody go independent, and you know we're supposed to travel 9,500 miles to fight a war. I'm not looking for that. I want them to cool down. I want China to cool down." So U.S. officials are maintaining that their official stance of deliberate ambiguity towards Taiwan has not changed. But when he was then pressed about what this visit could mean for the U.S. sending weapons to Taiwan. President Trump was non-committal, and we know that the U.S. Congress right now is waiting for him to approve an already queued up $14 billion weapons package. So that is going to be something to watch really closely, because Paul and Scarlett, our own analysts at Bloomberg Economics, have said that China could use its leverage related to critical minerals and export controls to try to maybe exert some sort of concession point when it comes to weapon supplies to Taiwan.
Yeah, those are some pretty powerful levers to pull then. Tyler, thank you so much. Tyler Kendall, our Bloomberg Washington correspondent on the ground in Beijing on the heels of the summit between President Donald Trump and Chinese President Xi Jinping. This is Bloomberg Intelligence on Bloomberg Radio. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash, brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty-free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. It's a broad market sell-off. The major average is down close to 1% or more. And technology shares right now, they're taking the brunt of the selling today. The concerns have grown that the effective closure of the Strait of Hormuz is going to deepen the energy disruptions, push oil higher, and fuel more inflation. Those inflation worries have yields higher, and that's primarily the big driver today. 10-year, which is the benchmark, up 9 basis points higher. The yield up to 4.57. Let's call it 4.58. The long bond is at 5.11. The yield right now. Ford's blistering rally that has come to a screeching halt, down 7% today. Remember, we were telling about this yesterday. The enthusiasm of the automakers' potential to benefit from the boom in energy demand for AI, that has cooled off. That had to do with batteries and a battery production factory that Ford was building. NVIDIA, again, reporting after the close of regular trading on Wednesday of next week. Right now, those shares down 3.3%. And after its initial public offering yesterday, and the big pop it got yesterday, Cerebras shares, they are down right now 2%, still $304.89 a share. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Munis in Focus is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. And that's where we're going to go today. It's Friday. That means we talk muni bonds. Who doesn't do that? Amanda Albright joins us, municipal finance reporter for Bloomberg News. Amanda, let's focus a little bit on the higher education. That's one of the areas that has been kind of flagged as potentially some risk out there. You've got a story out there. The Bank of America has got an investment in a shuttered college campus in Ohio. Talk to us about that.
Yeah, so about around 2008, Bank of America invested in an Ohio college, and it bought bonds directly from a private liberal arts school called Notre Dame College, not to be confused with the other Notre Dame that everyone is familiar with, but this is a small Catholic institution that ended up closing in 2024. Last year, B of A filed a lawsuit seeking to sell the school's campus after its closure, and last week we got some insight into what that campus is worth. A buyer offered $8 million for it, but B of A's outstanding investment in the school is more like $18 million. So it looks like they are not going to recover the full value of that investment a long time ago.
And it looks like Bank of America is the sole debt holder of this college's debt as well. Amanda, what's interesting, of course, is the reason why this small Notre Dame college closed. And it's a familiar one for those of us following the higher education story, right? It's small, it's declining enrollment, and obviously a lot of debt. But the fact that there does not seem to be a change in the fortunes of more students applying to the school is really not just something that's affecting this particular college, but a lot of colleges across the U.S.
Exactly. This is a major theme that our team here is covering, is just these enrollment challenges that all sorts of institutions are facing. They all have different profiles. Some of them are religious institutions. Some of them are arts focused. Some of them are just plain old liberal arts schools. And all of them are just contending with fewer 18-year-olds, fewer high school graduates, and more students that are questioning why they would pay high tuition prices when the job market is changing and maybe they could go into a trade and it'll be easier to get a job. There's a lot of different factors that are kind of working against these institutions.
You know, one of the factors is, which is different from my generation, kids today, and including my kids, they're going, like in here in the greater Northeast, they're going down to University of South Carolina, University of Alabama.
These are public schools that cost a lot less, too.
Yeah, but I mean, they're all going to these big, Pac-10 schools, but all these SEC schools, and I think that's hurting some of these Northeastern liberal arts colleges that had historically drawn those kids. Another story you guys are working on, and this is kind of in the metro New York area, Northeastern University, which is based in Boston, taking over Marymount Manhattan College. This turned into a pretty good deal for Northeastern. Tell us what happened.
Yeah, Northeastern is one of those institutions that's thriving right now. The large colleges are doing pretty well, and Northeastern in general is a major success story. They've been expanding across the U.S. and into Canada, and they have been actually buying other colleges as part of their strategy. One of the schools that they bought, or they announced that they would merge with, is Marymount University in Manhattan. That was 2 years ago, so that deal is supposed to close soon. But as part of that, they are expected to add over $200 million in assets. Most of that is from real estate in New York, given that the college had a lot of, or had some student housing space that Northeastern really needs as it grows its enrollment. And so this deal has kind of been a no-brainer for Northeastern. We also saw them buy Mills College in California, which was also another deal that added a bunch of assets for Northeastern. Another stat that I would highlight on Northeastern is that they saw about 106,000 applications for the fall. That's not quite at NYU's level, but they're getting pretty close to NYU.
Well, they're based in Boston, and their model of having kids complete these co-ops during the school year really resonates with what people are looking for from a college education these days.
Like when I was growing up, Northeastern, I knew about it.
It was a commuter school.
Yeah, but now it has morphed itself into this major institution.
Yeah, definitely. And by buying these schools, Mills College in Oakland and now Marymount Manhattan, Northeastern needs to borrow, right, Amanda? I mean, it's set to borrow a lot of money.
Yeah, and these this upcoming borrowing that Northeastern is doing is actually just related to typical campus projects. They're overhauling their arena. I think they have some Boston projects, and so they've really been able to manage this expansion in a way that hasn't, hurt its credit rating. They've really only seen all of the metrics that investors look at. They've only seen improvements in revenue and fundraising. So they've really managed their expansion very well. A lot of credit, of course, goes to their president, who has really kind of been the brains behind this. We had a 2024 story looking at we called them M&AU, looking at how smart this strategy was for Northeastern, and we continue to see that pay off.
And of course, he's been very, very smart about how to make sure that Northeastern ranks higher and higher on all the different metrics that they use for the best colleges and universities in the U.S.
I mean, they acquired real estate. The acquired real estate includes 4 buildings totaling 285,000 square feet on East 71st Street. That's valuable.
Yeah,
I would think.
absolutely.
I know some that area. Also, a 55th Street residence hall with 32 floors of student housing. So some prime Midtown Manhattan real estate. I think that's a good thing. Amanda, thanks so much for joining us. Really appreciate it. Amanda Albright, municipal finance reporter for Bloomberg News. I'm going to talk about the new issue market because we had a big IPO this week. Cerebras, I think, is kind of how we figured out how to pronounce it.
We've said it every which way at this point.
Bailey's advice to me yesterday, I went up, he was on TV afterwards, and I said, how do you pronounce this? Because I got to do the story. He goes, just pronounce it both ways. That way they can't accuse you.
You say it correctly. As long as you say it correctly one time, that counts. That's what I believe.
Okay, Cerebras. Anyway, they went public yesterday. $185 was the IPO price. It traded up to like over $300 bucks. Just extraordinary, trading off 1 or 2% here this morning. Bailey Lipschutz, he joins us here. He covers all this IPO stuff and all the equity markets. So, Bailey, if you're looking to go public, this was a good first one to come out the door. I mean, if you're thinking about SpaceX and Anthropic and all those other ones.
Yeah, it really does kind of serve as a quite large appetizer, if you will, in terms of just the sheer size of it. Again, north of $5.5 billion. I don't know if we've confirmed that they've exercised the green shoe. You have to imagine that happened almost instantaneously. So this would be the largest chip IPO of all time here in the U.S. And the big focus is, again, in a few weeks, what happens with SpaceX looking to raise $75 billion and how the market can digest that capital, and just thinking through how that does set the table for an Anthropic and OpenAI potentially later this year. Just given that across those 3 deals, it's pretty much an entire record year of IPO proceeds.
Yeah.
And there was a lot of drama surrounding this IPO because we had reporting that showed ARM Holdings and SoftBank, which owns ARM, the majority owner, wanted to buy this company a couple of weeks before the IPO.
Yeah, it's kind of unsurprising. For all intents and purposes, the interesting thing from that reporting from Ed Ludlow and team is kind of the question around the cash and stock component. And when you think about the fact that right now, Cerebras, however you want to pronounce it, is about $65 billion in market cap. Yes, ARM is $225 billion, but there is an interesting kind of financial gymnastics that would have had to be kind of accomplished to complete that deal. And the question then going forward is just how large would the company be?
I mean, the selling point Cerebras has, or Cerebras.
Cerebras.
Okay, let's just settle on Cerebras. The benefit it has is that it's an AI chip maker, and that hits on so many different things right now. Is it a competitor to NVIDIA?
Yeah, that's how they're billing themselves. And
But is it actually?
Yes, in the future, potentially. I mean, it goes back to what is a TPU and how does the market kind of evolve over time? And the big debate when you talk to folks on the buy side, whether they were interested or not in Cerebras in 2026 or even back in 2024 when they wanted to go public the first time was, okay, how large can this company be if we say NVIDIA is worth $6 trillion? Is there a path to $100 billion? Is there a path to $200 billion? And just using essentially basic math is, if there is going to be a real competitor for NVIDIA, and it is Cerebras, then the valuation can make sense. Again, based on the trailing data, based on what they've actually attained for now, it is one of the most expensive, if not the most expensive.
That's kind of where I wanted to go. I mean, we got a $65 billion market cap, trailing revenue, $500 million.
Yeah.
So, I mean, what are we doing here? Was there any pushback on valuation? I'll answer that. No. So
we saw them launch initially with a range of like 115 to 125 bucks, as you mentioned. It prices at 185. According to the people around the deal, they had $10 billion of demand before it formally launched, which is not something you see. The vision going forward, though, is OpenAI is now a customer. They are diversifying away from G42, which was kind of one of the bear cases a few years ago for the company. So if you're buying into the idea that these hyperscalers are going to spend, then investing in the companies that are actually producing the products that they're selling at least has the upside, because they're not going to bear the cost if we are over-indexing and overbuilding like many people are fearing.
Is there a cornerstone investor in Cerebras?
No, not that I.
In my day, we didn't do cornerstone investors. We just
that's a thing in the 2020s.
Yeah, we worked for a living. Real quick, SpaceX, is that a June thing potentially?
Yeah, we expect the formal filing to go public next week. That would set the table.
Gonna be nice.
That's going to be a lot of fun for us. I will be on vacation starting Wednesday, so I'm getting out of the country. But yeah, so expecting that formal flip next week. That'll set the stage for a listing likely before Juneteenth.
And then 15 days after that, perhaps an entry into the NASDAQ 100 and the Qs.
Oh, I see what you're saying there.
Yeah,
okay,
passive investors need to buy in.
I mean, talk about interesting. It's going to be fascinating to watch, I don't know, a double or triple levered SpaceX ETF, day 3.
There's already filings for all these ETFs, for companies that haven't even gone public yet.
There's a levered Cerebras ETF, and it's T plus 6 hours.
ETF.
Bailey, great stuff. As always, Bailey Lipschulte covers all the equity markets, the new issues, any of the crazy stuff out there. He is our person to go to. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're brought to you by Chapter. The average couple spends over $300,000 on healthcare and retirement. Want to know how much of that you could keep? Find out today in under 20 minutes with one free call to Chapter. Go to askchapter.org to get started. Well, happy Friday. This is actually the ugliest open for the S&P 500 since back in early April. Tech and materials leading the declines right now amid renewed concerns about rising energy prices and how that's going to push up the rate of inflation. And that is also reflected in rising yields. This was actually worth a red headline across the Bloomberg just a couple of minutes ago. The 10-year yield, 10 basis points higher. We are up to 458 on the benchmark. I know you're trying to refinance, but ain't going to happen.
Nope.
Let's note that tech stocks, they often falter in the run-up to NVIDIA's earnings, and a few days afterwards, we're going to get those results from the tech giant Wednesday after the close of regular trading. Tech bull Dan Ives at Wedbush Securities is pushing back. I know this is shocking. Pushing back against the idea this is a frothy market.
I mean, this is an AI revolution. And when it comes to the chip trade, that's going to continue to move higher because demand to supply, and we've talked about it from NVIDIA, 10 to 1. And that ripple effect is across the board from inference to infrastructure. And that's what investors are focused on around the world.
And he was speaking at a tech conference in Poland, Dan. S&P 500, 70 points lower, down 0.9%. Dow is down 1%, down 481 points. The Nasdaq Composite Index down 310 points. That's a decline of 1.2%. You better learn to use AI in your job because you're being watched. United Health tracking how often some employees use artificial intelligence tools. The company monitoring whether some workers in the Optum Services division perform at least one query a day with programs such as ChatGPT. And AI has become kind of central to United Health's plan to rebuild confidence on Wall Street after the profits collapsed last year. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube and at Bloomberg.com as well. We're talking about Mr. Ackman, Bill Ackman. He's out with some more social media posts on X. We sold Google and bought Microsoft. So there you go. From Bill Ackman. Let's look at these markets as John was just reporting, selling off on the equity markets. We've got yields surging higher, energy grudgingly moving higher yet again. Not bueno for some of the risk assets out there. Let's check in with a professional here. Dana Dioria, Co-Chief Investment Officer at InvestNet Solutions, joining us up there from Hartford, Connecticut via Zoom. Dana, you see a day like today, put it in context, these markets have just been ripping higher here. What are the conversations you're having with your clients these days?
Yeah, so it's interesting because it certainly is a lot of back and forth, right? I think clients are, and we cater to advisors, and advisors then, kind of working directly with end investors. And, there's obviously a concern around, does this at some point, this exuberance kind of die off, right? And what's the thing that what's the catalyst that can kind of drive that? And it certainly hasn't seemed to be geopolitical risk, right? I mean, we just, consistently the market has shown that it's willing to look through the geopolitical risk. We have no end in sight to the blockage in the Strait of Hormuz. And, you have any number of experts who will tell you that we're going to have lagged effects from this. And yet, we hadn't seen a lot of concern. Of course, now you have, bond yields are starting to step in. And I think, most people in the industry know that when the bond market is upset, there's, you potentially have a problem. 4.5 is typically a level that you would be worried that, you're starting to have impacts on the equity market, and we're there.
We are there. In fact, we got to 4.58%, and we're at session highs at the moment. The 30-year yield is now at 5.12% as well. Talk us through what happens now that we are at that level, and if we stay at these levels, what kind of allocations changes to allocations are investors likely to make or thinking of making?
Yeah, what happens when, you start to, you swing from this FOMO, right? And gotta be in, and oh my goodness, it doesn't seem to matter all these warning signs that, we perceive. Inflation is obviously, heating back up and et cetera. But the AI trade seems to be powering everything, fantastic earnings season. So you have everybody sort of in equities, right? And kind of not wanting to miss out. And then, at some point this happens, right? And you say, okay, maybe some of this, maybe the check is going to come due. And what tends to happen is advisors start to get calls around, should I be going to cash? Should I be taking money out of the market? Should I at least be taking some risk off the table? If I'm in a 80-20 portfolio, 80 equity, 20 fixed income, should I be moving down to a 60-40? And 60-40 is, like the typical, right? If you took the average across all the allocations on the platform, you'd land somewhere maybe a little higher than a 60-40. So maybe it's a 40-60. But, advisors in this moment have to start taking these calls, and they have to try to parse out, is this just somebody trying to time the markets, but they're in the right risk tolerance for the long, how long of a horizon they have? Or is this somebody who, if I don't get them out or at least take some risk off the table, they're not going to be able to manage this volatility?
Dana, the bulls will come back and say, yeah, we know the breadth has gotten a little more narrow like it was before, and it's focusing on technology companies. But the bulls will say, yeah, but look at the earnings. That's where the earnings are. How concerned are you with the lack of breadth in this market here?
Yeah, I do think it's a problem, right? And you're talking to somebody who first principles, kind of looks across the market, looks at price, right? Tend to lean toward value investing for what that's worth. So I do think it's something of a problem. And of course, if we're higher for longer and now even the prospect of an interest rate increase is back on the table, that's obviously going to be painful to smaller companies. That's going to narrow breadth, because they're more reliant and, oftentimes have more floating rate debt. So that's not a good sign, for breadth for sure. And, look, we've been contending with this concentrated kind of top heavy market for a long time now. And, there is a storied history of this market where, trying to outsmart what the overall market cap weight is, doesn't always, oftentimes does not benefit the individual investor. So if all the assets are on these companies, you kind of have to, you can see the bull's point. But at the end of the day, when you're investing in a retail audience who this is their retirement money, this is long-term necessary money, you want to try to diversify as much as possible. It's not because you're not here to hit out the lights, right? You're here to try to get to an end that's reasonable and a steady state of return. And so not seeing the breadth is a concern. Yeah. And investors should try to allocate to where they can elsewhere.
So very quickly, Dana, we have, of course, earnings as the rationale for why equities can continue to move higher, at least stay at these levels. Earnings season, for the most part, feels largely over. We've got the retailers due to report, and of course, next week we have NVIDIA as well. This is where it gets difficult, right? Because the retailers, the consumer-facing companies, there's some pain that they're seeing from their consumers.
Yeah, I would say that I would pay close attention to the comments around what's coming in terms of just these supply chain effects, and are they going to be under kind of more pressure? I think obviously these earnings seasons, it's always backward looking. So if lagged effects haven't hit yet, it's not going to show up in the earnings, right? So to the extent you're seeing some pain already that you're alluding to, that might not be the worst of it, because they might be facing cost pressures at the same time, obviously, that consumers need to pull back because energy, they're paying more at the pump, et cetera. So there could be some trouble there for sure. And I think it goes without saying, where goes NVIDIA, in large extent goes the market. So yeah. Exactly right.
All right, Dana, thanks so much. We appreciate getting a few minutes of your time. Dana Dioria, Co-Chief Investment Officer at InvestNet Solutions here. The market's off the bottoms, but let's be honest, we're selling off pretty hard here. The S&P is off about 1.1%. The Nasdaq's off about 1.4%. So some movement there. Oil up about 4% here. So you got WTI just above $105. Got Brent right around $109. So that's higher by about 4% for both of those. 10-year Treasury yields up 10 basis points, 4.58%. 8% on your 10-year. This is Bloomberg. Good morning.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Also streaming live at Bloomberg.com. You can go Bloomberg.com/video. That's where you'll find us here. Taking a look at Boeing right here. Boeing, as you know, the CEO of Boeing went with President Trump over to China, in large part looking for some business, presumably. And I guess President Trump put out on social media yesterday, Trump said China would buy 200, quote, big aircraft. I don't know. The stock traded off about 4% yesterday, off about 3% today, so maybe a little underwhelming. But let's check out what's going on with Boeing and China, a huge market for Boeing, of course. Sid Phillip, Deputy Team Leader for Global Aviation, joins us here. Sid, were you surprised that the stock has been trading down on news that China's going to be back buying some Boeing planes?
So on the face of it, Paul, it looks like a really good deal for Boeing, given the fact that it's a 200-plane order. At the same time, the expectations were much higher for this order from China. And so the expectation was that they would order 500 737 MAX jets, as well as a large number of wide-body jets. And unfortunately, the details still aren't clear on what the order comprises, what the aircraft types are, what the timing of it, and both Boeing and China have not really talked about what the order entails. And so the market is a little underwhelmed by the order, given the fact that the possibility was much larger.
So just give us a little history here about, for Boeing, how big is the China market for them, and how has that market evolved over the last year or two?
So for Boeing, China is a really important market. China is the world's second largest aviation market, and given the fact that Comac, which is the Chinese rival to both Airbus and Boeing, isn't really producing airplanes at such a large scale. So for Boeing, this is an important market, and a market that hasn't really seen any order momentum in the last almost a decade, since when Trump was last in China. So for Boeing, this was the moment that they would get their next big break from China. Unfortunately, that hasn't happened. I mean, Airbus in that meantime has secured over 700 plane orders. And so for Boeing, they're sort of really playing at a much smaller level in terms of the overall market in China.
But given, as I understand it, the China aviation market continues to be in serious growth mode, can Airbus fulfill that growth, support that growth, or does China at some point need Boeing?
But China definitely needs Boeing. I mean, the Chinese airlines that are looking to secure their next generation of aircraft or replace older aircraft with more fuel-efficient ones will definitely need to order Boeing planes. And so it is something that the Chinese airlines have expressed a need for, and it is in Boeing's interest to sort of supply those aircraft. So especially at a time when jet fuel prices are rising, like fuel-efficient aircraft are really valuable. And so for the 737 MAX, this is an important market both for the Chinese carriers as well as for Boeing.
So let's just say it's even at this lower than expected number of 200 aircraft. That would still be would that be the first real order from China in almost a decade?
It will be. It will be the first major order by China in almost a decade if this order materializes, even if it's just for 200 planes. And then Trump, on his way back, talked about the possibility of up to 750 planes. And so again, specifics aren't clear, and it's not really clear what the order entails, because Trump said that it depends on whether Boeing is able to fulfill the 200 plane order, and then they would order another 700, up to 750 aircraft. So details are sort of murky at the moment, but it could be a sign that there may be a thaw towards ordering those Boeing planes from China.
Before, I mean, I guess without the help of the executive branch, whoever that may be in office, what can Boeing, it looks like Boeing doesn't have much influence or ability to shape the conversation with the Chinese, because again, as you mentioned, they have gone almost 10 years without a sale.
Yes, so China, especially for its state-owned airlines, tends to order planes in bulk. And so whether that's from Airbus, whether that's from Boeing, and so those big orders from the Chinese carriers depend on government-to-government relations. And Boeing has featured prominently in most of President Donald Trump's negotiations around the world. I mean, remember in Qatar where there was that massive order, the biggest order by value for Boeing planes. And again, like Boeing planes have featured prominently in trade announcements, trade deals. And for China, getting those Boeing planes is sort of valuable, and they need to get it done. So we do expect them to buy it, but timing again remains unclear.
All right, well, if the Chinese are listening, I just flew 2 flights on a Boeing 777. That thing is a beast, man. That is huge, and it gets you where you need to go. So I'm a big Boeing fan. So hopefully they can get some of these deals done. We can get some details from some of these potential orders coming out of China resulting from this summit. Sid, thanks so much for joining us here. Sid Phillip, Deputy Team Leader for Global Aviation, Bloomberg News, joining us via Zoom there. Again, looking at Boeing stock here today, it's down about 2.8%. It was down about 4% yesterday when that news came out of the potential order of 200 planes, which again, as Sid Phillip was just letting us know, was probably less than, or certainly less than the street had been anticipating. So again, until maybe we get some more clarity on a potential order, a little bit of weakness there in the Boeing stock, off another 3% today. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment as this market continues to sell off. The S&P off 78 points, that's 1%. The Dow's off about 485 points, that's about 1%. And NASDAQ a little bit more, off about 360 points, that's about 1.3% sell-off here. Bonds moving higher. 10-year Treasury yield up 10 basis points. Wow, 4.58%. And WTI crude oil, it is higher. We're now north of $105 per barrel. This is Bloomberg. Good morning.
ABC News. I'm Mike Dubusky with that high-profile summit with Chinese President Xi Jinping now in the rearview mirror. President Trump is touting areas where the two countries agreed. ABC News Chief White House correspondent Mary Bruce.
Trump, who brought along with him over a dozen top American business leaders, also touting what he claims are, quote, fantastic trade deals, saying China will be buying American soybeans and 200 Boeing planes. But the Chinese have not confirmed these commitments.
Trump also says both sides agree that Iran should never have a nuclear weapon. As the president makes his way back to the U.S. right now, he's telling reporters on Air Force One that he didn't ask for China's help with reopening the Strait of Hormuz, but that China has an interest in getting that key waterway open.
I don't need favors. I think he will. I think automatically he'd like to see it opened up. He gets about 40% of his energy or his oil from that.
ABC News has learned the president is preparing to drop his $10 billion lawsuit against the IRS, which accused the agency of leaking his tax returns. Instead, he says he's going to create a $1.7 billion fund that would pay out taxpayer money to alleged government victims of government weaponization. ABC News national correspondent Stephen Portnoy has more from Washington.
The House Judiciary Committee's top Democrat calls the idea a giant affront to the rule of law. In a statement, Jamie Raskin of Maryland says Trump has no authority to conjure up billion-dollar compensation schemes. Sources tell ABC News the $1.7 billion fund would pay out claims to those who say they were unfairly targeted by the Biden administration, including those who were pardoned for rioting at the Capitol on January 6.
A newly unsealed criminal complaint in New York accuses an Iraqi national of firebombing a Bank of New York Mellon building in Amsterdam, all in an attempt to stop the U.S. and Israel from waging war on Iran. Prosecutors say he's aligned with the Iran Revolutionary Guard Corps. You're listening to ABC News. Cuba facing more pressure from the U.S. with CIA Director John Radcliffe's sudden visit to Havana. ABC's Matt Rivers has more.
This surprise, unannounced trip to Cuba comes at a time of some of the worst tensions between the United States and Cuba that we have seen in generations, as a U.S. oil embargo continues to put near unprecedented strain on the island, choking off its fuel supply. Blackouts, which have long been a problem on the island, are now worse than ever. Just yesterday, half the island's power grid failing, and we know Donald Trump has threatened military action against the island for months now.
The CIA told Cubans they need to stop allowing adversaries like China and Russia unfettered access to the island. The Census Bureau's latest estimates show some of the nation's biggest cities are shrinking, while smaller ones are growing. New York City is still the biggest city in the country, but its population shrank by over 12,000 between 2024 and 2025.
Meanwhile, Charlotte, North Carolina added 21,000 people over that time. And the fastest growing city in the nation for the second year in a row.
Our small town's not so small anymore.
Michaela Everson runs a bakery in the Dallas suburb of Salina. And while constant growth has its drawbacks,
Now that I have a business hat to put on, that makes me really happy.
Salina grew by nearly 25% in the Census Bureau's latest count. Jim Ryan, ABC News, Dallas.
A strike deadline is looming for the Long Island Railroad, the busiest commuter railroad in the country. The center of the dispute? Pay. I'm Mike Dubusky, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump leaves China without making a commitment on Taiwan. Welcome to the Friday edition of Balance of Power, as the summit with President Xi wraps with an unprecedented conversation about Taiwan's independence. Little, though, in terms of deliverables, and we'll get the latest from Bloomberg's Tyler Kendall, who's still in Beijing. The stock rally hits a wall today with rising interest rates and oil prices. Bank of America pointing to capitulation arriving in June. We'll get into it with Edward Harrison from the Everything Risk newsletter. And as South Carolina moves to redraw its congressional maps, we'll talk gerrymandering with our political panel. Rick Davis, Jim Kessler are with us. As for Wall Street, let's see how the markets are faring here at the lunch hour in New York. Charlie Pellet has the latest from world headquarters in New York. Hey, Charlie.
In a word, lower, Joe Matthew. The Dow, the S&P, NASDAQ all very much in the red. A sell-off in global bonds halting a rally in stocks. Concern is intensifying that central banks will be forced to tighten policy. As a result, we do have stocks selling off. S&P right now retreating back below 7,500, 74.21 where we stand right now, down 80. That is a drop of 1.1%. We've got the Dow down 525 now, all below 50,000, down by 1%. NASDAQ Composite Index down 358, drop there of 1.3%. The VIX back above 18 with a 10-year currently yielding 4.58%. The 2-year 4.07%, and look at the 30-year, 5.11% now on the 30-year. Gold down $116 the ounce, down 2.5%, 45.35 the ounce, while West Texas Intermediate crude holding above 105 a barrel, 105.52. WTI up today by 4.3%. Brent crude 109.52, barrel of Brent right now up by about 3.6%. After earnings, we do have Applied Materials shares right now trading lower, down now by just about 0.6%. And Bill Ackman says Pershing Square has built a new stake in Microsoft, taking advantage of a decline in the company's share price to invest in a business that he says is stronger and more resilient than investors think. At the PGA Championship right now, topping the leaderboard, we've got Alex Smaller with right now 1 under par. So again, recapping here, S&P 500 index down 82. That is a drop right now of just about 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, the voice of Friday for us today. Thank you, Charlie. He'll have more coming up in about 15 minutes. Here on Balance of Power. Yeah, you made it to Friday. Welcome to the threshold of the weekend, and thank you for meeting us here on Bloomberg Radio. If you want to see what we're talking about, get on YouTube. Watch the radio on TV by searching Bloomberg Business News Live. If you've got your Sirius XM, it's channel 121. Now that Charlie has told us how not good the markets look today, Bill Ackman's buying Microsoft? Has he talked to Donald Trump about this? We'll get into it later on this hour, but new disclosures about the president's own stock trading. He sold Microsoft. And based on the action that we've seen in that stock, well, I guess that was a pretty good move because this was back in February. Sold between $5 million and $25 million each of Microsoft and Amazon. That latter one he might have regretted. And he piled into NVIDIA February 10, days before the company announced a multi-year partnership with Meta, his disclosures show. The fact of the matter is, though, you remember the old saying, sell in May and go away. And that might, in fact, be the refrain. According to Bank of America, a market ripe for profit-taking in early June, says Michael Hartnett. We'll get into this a little bit later this hour with Edward Harrison. Growing price pressures having a broad impact to the U.S. from energy to transportation to rents that will eventually cause this rally to come to an end. And maybe today is the beginning of that. It's going to take us a little while before we know. As we try to read the tea leaves here and figure out exactly what happened in China, the president's in the air right now, wrapping up the big summit with President Xi, a 2-day affair. They're both declaring success for what it's worth. Progress and stabilizing our not always great relationship. They had tea at lunch. Do you think Donald Trump has a lot of tea? Was there a Diet Coke button in Beijing? Top aides, translators, all in the room. Very formal, above-board affair. Nearly 3 hours of talks before they wrapped up the 3-day trip to China. An incredible visit, said the president. When he spoke about this later on, he put a good shine on what was accomplished. Here's President Trump from earlier.
This has been an incredible visit. I think a lot of good has come of it. We've made some fantastic trade deals, great for both countries.
President Xi's an incredible guy. got along, made a lot of great trade deals, including over 200 planes for Boeing with a promise of 750 planes. We need to discuss tariffs. I mean, they're paying tariffs. They're paying substantial tariffs.
You know, Boeing shares are lower again today, and well, so are shares of GE Aerospace, because that Boeing deal left everybody wanting more. We talked about it at this time yesterday. 200? They wanted 500 in the market. President says if it goes well, maybe 700. The market's not waiting around to find out. After that, well, we're not too sure what we have to show for this meeting, other than a warning from about Taiwan from China. We told you about the warning yesterday in their first meeting, and apparently when they sat down over tea, President Xi asked Trump directly if he would defend Taiwan if the mainland were to invade. Trump telling reporters on the plane he didn't answer. It was a pretty remarkable moment, historic moment. What it will lead to, we don't know. And that's why Tyler Kendall flew all the way around the world to Beijing to cover this historic summit, for better or worse. And she's with us right now, picking up the pieces now that the administration has left. Tyler, you've been great keeping us posted here. Is there anything new that I'm missing?
Well, Joe, no, I think you did a great job setting this up. And I know you said earlier in the week that we weren't going to use the phrase pomp and circumstance, but there was a lot of pomp and circumstance and more symbolic gestures. But there wasn't really a lot of deliverables in terms of what came out of this meeting. Now, some analysts have said that's not necessarily a bad thing, though, right? A lot of this was about maintaining the stability in the U.S.-China relationship, which, as you alluded to, hasn't always been stable. Just look at where we were about a year ago amid the height of the trade war between the two countries. Instead, this visit very much felt like laying the groundwork for progress down the line, right? Both sides have confirmed that they have agreed to establish a U.S.-China Board of Trade, a U.S.-China Board of Investment. That doesn't mean that that mechanism is established yet, but they are going to get that going. They both said, actually including Chinese state media reporting, that they did address concerns on agricultural products, something that we've been waiting for. The USTR Jamison Greer telling Bloomberg Television earlier today that the U.S. is expecting billions of dollars worth of agricultural purchase commitments, but we haven't gotten those details yet. So this felt a lot like keeping tensions calm, though, of course, you did mention Taiwan, which we could talk about. But broadly speaking, it was a relatively cordial summit here in Beijing.
Mm-hmm. Let's talk about Taiwan then. The president said he made no commitment over Taiwan. He wouldn't answer him directly when he asked if the U.S. would come to Taiwan's defense. But he also said that he would soon make a decision over this planned $14 billion arms sale to Taiwan. That's significant, Tyler, that he would not confirm that sale, is it not?
It is, considering that we know that Congress is already broadly in support of it. We won't get into the wonkiness of how this would actually work, but Congress has essentially greenlit this package, and they're waiting for the president to authorize and send it over to them so that it can go through the appropriations process. With that said, U.S. officials have been very careful and clear that the U.S. position regarding Taiwan's independence has not changed. But, Joe, I will point you to a nugget in the analysis by our analysts at Bloomberg Economics that say that when it comes to China's leverage going into this meeting, if they want to extract change regarding U.S. weapon sales to Taiwan, we should look at how they are using export controls, and that our analysts think that maybe there could be a threat related to the licenses around critical minerals and magnets that could apply pressure to the U.S. With this said, though, we should make clear the administration says that there has been no decision on this. President Trump has said that he hasn't decided yet. So there may not be a change when it comes to this, but it's definitely something to watch because it would upend what has been decades of diplomatic practice when it comes to the U.S. making sure that Taiwan is supported, including through weapon sales appropriated by the U.S. Congress.
Well, let's hear the president's framing of this. Tyler, as you know, he went to the back of the jet, went to back of Air Force One to talk to reporters in what was at times a very contentious conversation. Here he is on China and Taiwan.
He doesn't want to see a movement for independence. He says, look, we've had it for thousands of years, and then at a certain period of time it left, and we were going to get it back. Iraq, they had the Korean War, a lot of things happened. We have the whole history. But on Taiwan, he feels very strongly. I made no commitment either way.
I made no commitment either way. It's really interesting, Tyler. A great piece by our colleagues Jeff Mason and Skylar Woodhouse on winners and losers from the summit talks. Winners, they write Xi Jinping, Jensen Huang, even though he didn't get a big deal that we're aware of. Visa, Iran, a big winner. The losers, number one on the list is Taiwan, followed by Boeing and others, including congressional Republicans. This is going to be a big debate when you get home, Tyler, about what to do with these weapons shipments, no?
No, definitely. And Joe, we should also highlight the fact that any sort of delay, including the delay that we're already seeing, considering this package was queued up back in January, just adds to what is a conversation that we often have about the lengthy procurement process, when it comes to actually making and shipping weapons out the door. And that perhaps will also add to some of the tensions here. I'll put a little bit of finer point on President Trump's point here, because he also spoke to Fox News before he had departed, and he was pushed on what he is looking for in terms of to give that approval for this weapons package. And his response was, I may do it, I may not do it. And then he was pushed and he said, but what's your hinge point? He said, well, I'm not going to say that. I may do it, I may not do it, but we're not looking to have wars. And if you keep it the way it is, I think China is going to be okay with that. President Trump went on to say that he wants to see both sides cool down the tensions, but it is hard to see how the tensions will cool down, where, as you're highlighting, there is going to be this focus on Capitol Hill when it comes to the future of weapons procurement packages to be sent over to Taiwan.
Well, what an exercise. Tyler, thank you so much. She'll be back in our second hour here on Balance of Power before we finally let her come back to the United States of America, Bloomberg's Washington correspondent in Beijing. Hey, at least maybe a movie will come out of this. You see Variety reporting that Brett Ratner was on the trip, the man behind Rush Hour, said to be the president's favorite movie franchise. Was Chris Tucker on the plane? Jackie Chan? Yeah, Brett Ratner was there, according to the South China Morning Post, on hand to scout locations and prepare for production of Rush Hour 4, which the president personally requested the studio make. This is the same man, of course, behind the Melania documentary. Commander-in-Chief reportedly requesting that Paramount revive the Buddy Cop series. We'll have more on this for you as we learn it here at Bloomberg. I'm Joe Matthew in Washington. Edward Harrison in next. Balance.
It's 12:20 on Wall Street. We do check markets all day long here at Bloomberg. We've got a sell-off underway on this Friday with the Dow, the S&P, NASDAQ. They're all very much in the red right now. S&P 500 index on the week, however, looking at another week of gains for the week right now, looking at an advance of 0.4%. But today we are selling off with the S&P down 1% right now. We've got the S&P pulling back from a record, back below 7,500, down 74 points right now. A sell-off in global bonds, halting a rally in stocks. Our Ed Harrison will have a whole lot more coming up in just a moment. The Dow down 476, lower by 1%. NASDAQ retreating from a record as well, down by 1.3%. The NASDAQ 100 index also down by 1.3%. The 10-year currently yielding 4.58%, with a 2-year 4.07%, and the 30-year 5.11%. Bottom line here, equities selling off again, bears repeating, the S&P down now by 1%. Spot gold down $114 the ounce to $45.38, down 2.5%. West Texas Intermediate crude is surging 3.9%. WTI back above $105 a barrel. Brent 109.25, up by 3.4%. Job cuts at Starbucks. The coffee chain is cutting an additional 300 corporate jobs, its latest move to hit cost reduction targets. Starbucks shares, they're up by 0.4%. And Papa John's International shares are now up by 5.1%. Reuters is reporting the investment firm Earth Capital is working with the pizza chain's largest U.S. franchisee, who controls around 10% of its domestic restaurants, to take the company private. Again, shares of Papa John's, PZZA on the ticker, up now by 5%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Charlie Pellet's always making us hungry here at the lunch hour on Bloomberg Radio. PZZA has to be one of the best ticker symbols on Wall Street, right? Charlie, thank you. He'll be back with more on the markets in just about 20 minutes' time here on Balance of Power, as we keep our eyes on the president's own trades. Seems to be doing a lot of trading at the White House, as we learn in these new disclosures to the Office of Government Ethics. And those disclosures once again came late and will result in a fine for Donald Trump. I think he'll be able to afford the $200 fine. Although the president is required to publicly disclose stock transactions exceeding $1,000 within 45 days. He was fined for the same infraction in March and in August, and now again, as we learn that he sold between $5 and $25 million each in Microsoft and Amazon stock back in February. And he was doing a lot of buying at the time. With those proceeds, presumably, he also purchased NVIDIA stock February 10, just days before the company announced a multi-year partnership with Meta. Company shares up 2.5% after the deal. He also purchased shares of Microsoft and Amazon months before the Pentagon announced deals to deploy their technology in classified computer networks. It's just interesting, as we talk so much about Nancy Pelosi. She's got an ETF, right? The Nance ETF. You want to get rich? Follow Nance. Well, maybe we should follow Donald Trump, although I think some people already are. We won't get into crypto here with Edward because we have too much to talk about. You heard Charlie mention the interest rates. And that really does seem to be the story today, the bond market driving stocks lower, because God knows we've seen higher oil prices than this, and we still ended up at record highs. Has anyone told Pam Bondi we're not at Dow 50,000 anymore? Crude oil in New York right now, just if you're keeping score, $105 a barrel. Brent's at 109. They're both up more than 3.5%. But the conversation today is about interest rates. And if you read the Everything Risk newsletter, you probably saw this coming. The man behind it, Bloomberg's Ed Harrison, senior strategist. Great to see you, sir. Welcome back. Walking through this market is a bit of a minefield today. When you see 2-year treasuries above 4% and the 10-year above 4.5%, what does it tell you?
It tells me people are coming back to reality that in an economy where you have large deficits, you have an AI boom, and you don't have a whole lot of layoffs, that there's enough growth that inflation becomes the prevailing risk for the Fed. In fact, if you look at the markets, they're actually pricing in a hike next year. Yes. Kevin Warr says he wants to cut, right, but the markets are saying that there is a chance that, they've fully priced
more likely than
25 basis points next year.
You buy that, though, or is this the market
I didn't buy it before the earnings and before, like we saw the capital production today, which was off the charts high. I think that the U.S. economy is doing so well as a result of those two factors, that is government largesse and AI, that it's very difficult to puncture that. And in that case, the Fed will have an inflation problem, and they may have to hike.
So sell in May and go away was the old refrain. I don't think any of this stuff matters anymore, right? Because it's such a different market now. But it might end up being a strategy that works this time. Did you see Bank of America this morning? Market ripe for profit taking in early June. Michael Hartnett is out with the note here. Really interesting. A series of key dates next month, he says, have the potential to spur caution in equity markets. You've got the next OPEC gathering, start of the World Cup, G7 summit, first Fed meeting under Kevin Warsh. I don't know if you agree with that idea here, but are we going to see Warsh dissenting in his first meeting as chair?
I don't think he will dissent in the way that Stephen Myron was dissenting. I think that he will take a more measured approach. His real question is if the economy still holds and therefore the market is still pricing in these rate hikes, how does he shift the balance towards a more sort of neutral perspective? The real question now for interest rates is we've already seen real rates go up a decent amount.
Yeah, right.
Inflation expectations haven't gone up that much yet. If the Fed continues to say, you know what, we may cut, markets will think that's bad for inflation, and inflation expectations will go up as a result of that.
Right.
So we'll have the opposite effect of what they wanted to have, and that could send 10-year yields up to as high as 5%.
5%. And now we've got a real alternative to stocks, as we've seen repeatedly when that happens, and that's your sell-off in June that you just laid out the ingredients for here, right? So when you look at these markets at all-time highs, considering the fundamentals out there, yes, earnings are really strong, but the headline risk is so high right now with China, with Iran. Would you plow new money into this market?
If you haven't been plowing money in, you've been losing out. I mean, if you think of it from a money manager's perspective, and why the market is going up, having to chase the winners because they weren't fully invested. It's a very difficult market, especially given the differential in the price-earnings ratios of, say, the Mag 7 companies, which is something like 35 times, and the rest of the market, which is 25 times. It's very difficult when they're doing incredibly well to not just chase that.
Otherwise, you're missing out, to your point. But if you look at a price-to-earnings ratio on a stock like Micron Technology, like these memory stocks have just been straight up like a rocket ship. When you look at the chart, you say, oh, my God, I wouldn't go near this thing. But Micron's getting cheaper as it goes higher because it's experiencing a massive earnings boom thanks to a shortage in memory. So when you think about everything risk, do you go to the technicals or the fundamentals on something like that?
Ultimately, the market doesn't really fall out of bed until you have a significant economic slowdown.
Okay.
And these stocks are the ultimate cyclical stocks. I mean, if you look at what happened during the internet bubble, it was just a disaster for the semiconductors. Again, same thing in 2008. Complete disaster. And because a lot of their earnings profiles back at the back-loaded part, because their growth is so high, if you take, 50, 100% growth and you turn that into a flat or even declining number, that has a huge impact on the valuation of that company. So you can lose 50% or more as a result of that.
Wow. And it can happen fast, Edward. Were you a Dow theory guy in the olden days? I don't know if you're a Dow theory guy, but if you look at the transports, right, they're supposed to lead the way. This is not good. J.B. Hunt, the rest of them are paying over $6 a gallon for diesel. Is that an indicator in itself?
It's an indicator that the stresses are building. I would have expected by the end of this month that we would start to see earnings misses, or not earnings misses, but earnings projections that are going down. We may not see that, and if we don't, it's just another sign of the resilience. But the longer the Strait of Hormuz, and it's incredible, no one's talking about that, remains closed, the more these oil prices will go higher. Eventually, that will catch up to the U.S. economy, irrespective of AI, irrespective of the deficit spend.
Well, after, I guess, arguably a parabolic first half, and I know that there have been sectors not included, in real estate among them, could we be in for a terribly volatile second half because of all of this? Is that your expectation?
As long as the Strait of Hormuz remains closed, the volatility will increase because that's a situation that needs to be resolved in order for these stocks to go higher on a sustainable basis.
Sure.
It can't remain closed because if it does, $100, 105, and 109 that you mentioned today will become 130, 150, and at some point that's going to be demand destructive, and that's where we see all the things that we're talking about in terms of the numbers starting to fall apart, and of course, obviously, yields will be going higher at that point.
Imagine being somebody who bought NVIDIA 2 days ago. All-time high, $235. We're going to the moon, baby. And then it goes straight lower for 2 days. We're down at 228 now, down 3%. And it's ahead of earnings. NVIDIA earnings are next Wednesday. With your everything risk hat on, do you go near a stock that's hitting an all-time high less than a week before an earnings report?
Yeah, I wouldn't necessarily add to it, but I wouldn't go away from it.
Fine, but some people bought it this week, Edward.
Well, let me give you an example. During the internet bubble, a friend of mine, he was very negative on on stocks like Juniper Networks and Cisco. So he had some shorts on Juniper. The earnings came out. This was after. This was probably in November of 2000. They beat, the stock went up, he had to cover it. And, these stocks, the volatility is going to be very high. You really don't want to be trading on the negative side because you could miss, and especially because the stock's been coming off into the earnings. That gives it even more upside momentum potentially if it does pop.
We've got 1 minute left. Earnings season's wrapping up. If NVIDIA's reporting, we're at the tail end of this thing. What's the next catalyst? Does it just come down to what happens in the Strait?
I think the next catalyst, besides the Strait of Hormuz, is IPOs.
Okay.
On Wednesday,
you're going to freak everyone out now.
We had the first AI IPO.
Cerebras blew the doors off.
So
is there more? Only 30 seconds. Is there enough money in this market to get SpaceX, Anthropic, and OpenAI off the launch pad?
Yes.
Without blowing a hole in NVIDIA and Tesla?
It all depends on the float, because we know that when these floats are very small, there's going to be a frenzy of people looking to get into those stocks, and that will automatically bid them up and cause other stocks to come onto the market.
But they're going to pull it all out of Tesla and NVIDIA, right? This is the problem. Edward, come back when that happens. Well, hopefully sooner. Love talking to Edward Harrison. The Everything Risk newsletter is available on the terminal and online, and it feeds our conversations right here on Bloomberg Radio. I'm Joe Matthew in Washington. We'll assemble our political panel next. Live from the nation's capital, this is Balance of Power, only on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are selling off. The Dow, the S&P, NASDAQ, all very much in the red. The catalyst, a sell-off in global bonds, halting a rally in stocks. Concern is intensifying that central banks will be forced to tighten policy to keep inflation in check. Right now, the S&P is retreating from yesterday's record, back below 7,500, 74.32 right now, down by about 0.9%. Dow Industrials down 430, lower by 0.9%. The NASDAQ Composite Index down 312. For NASDAQ, a drop there of 1.2%. The VIX just above 18 right now with a 10-year. The 10-year, 4.58%. The 2-year, 4.08%, and the 30-year, 5.11%. Gold is down $106 the ounce, down 2.3%. Spot gold at $45.46 the ounce, while West Texas Intermediate crude just above $105 a barrel, up now by 3.8%. Bitcoin back below 80,000, 79,278 on Bitcoin, down now by just about 2.6%. So again, the Dow, the S&P, NASDAQ, all declining, with a 10-year currently yielding 4.58%. Round 2 of the PGA Championship underway in Newtown in Pennsylvania. At last check, Hideki Matsuyama of the U.S. of Japan sits atop the leaderboard right now at just about at 3 under par. And for our listeners in New York, Boston, and Washington, D.C., yes, we'll bring you live play-by-play coverage of the PGA Championship starting right here after the closing bell on Bloomberg Radio. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, many thanks. Happy Friday to you, my friend. He'll be back at the top of the hour, 1 p.m. Eastern Time, as we welcome our global television audience to the program. And Kaylee Lyons, for that matter. She'll be with us coming up at 1 p.m. Eastern as well. Producer James has said it more than once. It's going to take years of therapy to unpack all of this. And he's apparently not alone. You fight about politics with the family, with your brothers, sisters, your parents. Do you avoid certain people so you don't have to get into it? You dread the holidays because you know how the conversation's going to end. You are not alone, as it turns out. Great story in Politico magazine that made me think of our panel today. With anxiety over politics reaching new heights and crises flashing across our screens, mental health professionals say they are seeing an influx of patients distraught about the news coming out of Washington. It's pretty wild. Veronica Calkins, a clinical director at Pacific Mind Health, says it's the first time we're actually seeing people initiate therapy because of political anxiety. It started after the president's second inauguration. And there's polling that might make some of this feel justified. 65% of Americans, you know, we always talk about what issue they favor. Check this out. 65% of Americans say politics is a significant source of stress in their lives. This is the American Psychological Association doing polling on politics. More interesting than that, the leading cause of stress, concern about the future of our nation, 76%, outranking the economy or work or money. Maybe we're getting to something. This is why we have a panel every day. It's somewhat therapeutic for me, and we should bring them in now. Bloomberg Politics contributor Rick Davis, our Republican strategist and partner at Stone Court Capital, is with us. And delighted to see Jim Kessler, Democratic strategist, executive vice president for policy at Third Way. And these two guys used to work together and fought a couple of battles in the olden days, so it's always a lot of fun to put them back together here. Rick, I don't think you're the type to seek therapy. You're the guy upsetting everybody, right? You're a political strategist.
I'm afraid I may be the cause of some of that crisis in the therapy. In fact, I've avoided talking to therapists for fear that I would destroy their careers at the same time. I'm sure Jim feels the same way as I do. But yeah, I get it. Come on. It's supposed to be stressful. Politics is a blood sport. You want to get in it? You want to pay attention to it? You're going to pay a price.
Are you surprised to hear these numbers, Jim? Maybe not. 76% say their stress is about the future of the nation. What does that tell us about the environment we're in?
I wrote those numbers down as you were saying them because I'm going to use them. I think it feels accurate to me. And I'll just quick anecdote. We have a second home in Cleveland. And when Donald Trump won his most recent, the second term, my wife said to me, "Kid, you're on your own. I'm heading out there." And we basically live in separate places and see each other maybe, 10 days out of 30 in a month, typically.
Oh my
Because she's
God.
like, "You fight them, I'm done."
Well, Jim, it's come to this. You're living the life of a lawmaker. You never thought it would happen.
Exactly.
You see your spouse 2 days out of the week. Well, this isn't what we came together to talk about, but I guess the thing that concerns me is we're just starting the midterm campaign cycle here. And it's all coming with this massive effort to redistrict the country, and I'm guessing this is adding to a lot of uncertainty and anxiety as well. Look no further than South Carolina, where the Republican governor, Henry McMaster, is expected to announce a special session today to push forward a 7-0 gerrymander to basically remove Democrats from the map. Rick, we've been going back and forth on this state by state. Will South Carolina be the next one?
Well, just to be precise, remove one Democrat from the map, Jim Clyburn, who may be one of the most powerful Democrats in Congress today. So this is a big one. And I think everyone's going to watch with bated breath. The governor, Henry McMaster, great guy, chose not to call a special session. The Senate couldn't pass a 2/3 vote to call it themselves. Now he's flipped, probably got a few calls from the White House. And he's calling them back today. Come on back, guys. We're going to vote to do this. But I must admit, the people who don't want to do it are Republican rank and files who are sitting there saying it's going to create more vulnerability for our districts by trying to grab one Democratic district. And we'll see how the fallout occurs. This could be either a very wise decision or a very foolish one.
What's your view on South Carolina specifically, Jim Kessler? Because if you talk to the man who holds that seat, Jim Clyburn, he says, go ahead, redraw it. I'll win it anyway.
You just may. And there's a very real possibility that if they redraw the state the way the Republican maps look like, it'll go from a 6-1 state to a 5-2 state. Democrats could possibly pick up a seat. Now, that's because the environment is so bad for Republicans right now. Donald Trump is so unpopular and he's underwater on a lot of issues that even in South Carolina, at a seat that might be like a Trump plus 10 or 11, Democrats could win that seat. So I agree with Rick, beware what you wish for because you might not get it, in this case.
Well, Rick, you mentioned blood sport, and I think more people are getting the tune here. There's a new political poll out specific to redistricting, gerrymandering. The poll shows both parties believe that it is influential or decisive and back it to counter the other party. For Democrats, 63% either support or strongly support an effort to neutralize Republican gains. Only 8% oppose it. Republicans, not quite as much, but 54% either support or strongly support an effort to match or neutralize Democratic gains in redistricting, with 10% against it. We're just going to redraw the whole country here, right? It's not just this cycle, Rick. They're going to keep redrawing maps going into 2028.
Oh, for sure. I think that Virginia's a classic example where they didn't do the process early enough to be able to make this cycle based on what the court said. But for sure, they'll do it for the next cycle. And they'll be followed by, many, many other states who aren't getting it done this year. Who will try to do it next cycle. And by the way, a poll like that is just a recitation of the party's talking points. If you're listening to Republicans on Fox News, you're that 54% saying, yeah, we got to stop the Democrats. And if you're a Democrat listening on CNN, you're saying, oh my God, the Republicans are stealing the election. We got to do this. So, it's not like the people are waking up every morning worrying about redistricting. They're hearing the talking points on the networks that they watch that only give them the party, point of view, and they're now regurgitating that to any pollster who will, call them up.
Yeah, to be clear, this isn't about supporting the concept in a vacuum. This is about neutralizing what the other party is doing, to Rick's point. I want to ask you both about Texas, because the president was asked about it on the plane back home last evening. Of course, a massive and very important Republican primary. It's gone to a runoff there between John Cornyn, Ken Paxton, the attorney general. Whoever wins that will go up against a Democrat by the name of James Talrico. And you've actually heard him on this program. He's become a bit of a cult hero on the left, thanks to his interviews with Joe Rogan, Bill Maher, etc. The president's obsessed with his diet. The fact that he used to be a vegan, apparently, and in Texas, that's a problem. I guess he's not a vegan anymore. I did some research on this. This goes back to a talk that he gave to the Texas Humane Legislation Network about 4 years ago, in which the seminarian said that his State House campaign was a non-meat campaign. They only purchased products from local vegan businesses. Well, but a storm was created here. So they've been trying to turn this around, because I guess he eats meat now. He went to a state fair, ate a hickory smoked Big Tex turkey leg, bacon and egg breakfast tacos. He caught fried alligator in his mouth. The president still calls him a vegan, although he doesn't say it that way. Listen.
I'm looking at it first of all. I like them both. I mean, I'll tell you what I do think. I think the Democrats have a weird candidate. 6 genders, a real hit on Jesus. I mean, this guy is bad news with his mask from relatively recently, and he's a vegan. He's a vegan. All of a sudden, he's not a vegan. He was a vegan. Now all of a sudden, he's not. Texas doesn't like vegans. I do believe either one of them will easily win the race.
I'm so confused. 6 genders, he said. A real hit on Jesus. This guy's bad news. He's a vegan. A vegan. The fact is, he was asked about endorsing in this race, and I guess he's not ready to. Rick, is he going to whittle this down between Cornyn and Paxton? What's going to happen in Texas?
You know, right now it seems satisfied to let them, ballot out and let the voters of Texas, at least the Republicans, decide who they're going to put up. And actually, this is quite unusual for him to even weigh in on this race. It's probably one of the most important Republican races in the country, and he's really kind of left it alone. So. He also then started talking about, oh, gosh, I beat all those guys in Indiana. And maybe he's going to pull a Venezuela if we're not careful about this, right? Yeah, it worked so well in Venezuela. I'm going to try it in Iran. Who knows what he's going to do? But the clock's ticking. The primary's going to occur soon, and it may not make a difference one way or another. And the last thing he wants to do is endorse someone who might lose, wrecking his perfect track record on endorsements. So that's probably what's going to drive most of the outcome here.
The comments about Talrico reminds me of when Trump was insulting Afton Bain, the candidate in Nashville, because she hated country music, apparently. Can you get elected in Texas, Jim, if you're a vegan?
You know, the ad maker who created Where's the Beef ad passed away yesterday, so I think this is all very topical.
Fantastic.
So I just want to go, I think Talrico has a real shot. I think if Paxton's the nominee, he's got a better shot. But I also want to put this in perspective. To win in Texas, a Democrat needs to win 74% of self-identified moderate voters. That's not impossible to do. There have been Democratic candidates who have won upwards of 75% of the moderate vote. But that's what you need to do there. That is the ideological breakdown of the state is such that is your task. And, as compared to, let's say, in Maine, Graham Plattner needs to win 51% of moderates to win the state of Maine. Roy Cooper needs to win 64% of moderates to win North Carolina. So it's a tough race for any Democrat in Texas. The wind is at our back because Trump is so unpopular. Even in Texas, he's not that popular. But vegan or not vegan, that's what you have to do, and that's hard.
Yeah, fascinating. Joe Settlemeyer The auteur behind the Where's the Beef ad, Indeed, has passed at 92, directed nearly 1,000 comedic commercials. This one for Wendy's, we will never forget. Well played, Jim Kessler. Rick Davis with us, too. We've got a great panel today, and they'll be back in our second hour here on Bloomberg. Where's the beef? Right here on Balance of Power. That's why you're with us. Kaylee will join shortly. We'll welcome our global television audience to the conversation and continue our view into what took place or didn't take place in China. Tyler Kendall standing by in Beijing with the deliverables. The president's on the plane home right now. I'm Joe Matthew in Washington. This is
from Washington, D.C. This is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump says he will soon decide on weapons for Taiwan. Welcome to the Friday edition of Balance of Power as the summit with President Xi wraps up with an unprecedented conversation about Taiwan's independence and little to show in terms of deliverables. I'm Joe Matthew alongside Kaylee Lines in Washington. Remarkable, Kaylee, that President Xi directly asked President Trump if the U.S. would come to Taiwan's defense.
Yeah, and the president said that he was uncommittal. Basically didn't answer him either way. It raises the question, what was committed to over this summit? Yes, Boeing planes, perhaps a couple hundred of them going to be bought by China. They're going to open the door again to beef coming from the United States, but not necessarily as many tangible deliverables in hand as the president makes his journey back to Washington as maybe some expected or hoped for as he headed off to the summit.
And now suddenly questions about whether a multi-billion-dollar weapon shipment to Taiwan is in fact supported by the president. It certainly is by congressional leaders on Capitol Hill. And when he comes home, this may be the next conversation that we have. All the while, big questions about the impact on the economy with an ongoing closed Strait of Hormuz. Kaylee, that part hasn't changed, and the summit didn't seem to change the contours of our standoff with Iran. Oil prices are back up and interest rates are too.
Yeah, in a massive way. Huge selling pressure in the bond market today. Right now, we're up 11 basis points on the 10-year yield, just shy of 460 once again. Clearly a market that is growing increasingly concerned around persistent inflationary pressures and wondering what it's going to mean for monetary policy on what just so happens to be the very last day of Chairman Powell's term at the Federal Reserve. Of course, it's Kevin Warsh's challenge to inherit. It's a tough
Welcome to the party. By the way, does Jay Powell get a cake or something? Is there a handing of the gavel? Nothing formal on the schedule over there?
Maybe they could give him a cake in the shape of a hard hat.
That would be cool, I think.
That would be cool. We might have to arrange that. Hey, Charlie Pellet liked my joke. Charlie, let's check on the markets on this Friday. How you doing in New York?
I was thinking pretty much the same thing, but you beat me to it. Just kidding here, Kaylee. The Dow, the S&P, NASDAQ, all very much in the red right now. We got a sell-off in global bonds that has halted a rally in stocks. Concern today intensifying that central banks will be forced to tighten policy to keep inflation in check. So here's where we stand. S&P 500 index right now lower by 71, 74.29 where we stand. That is a drop of 1%. You recall yesterday trading at a record above 7,500, a retreat today. The Dow also pulling back, was above 50K, down now by 430 points, drop there of 0.9%, while the NASDAQ Composite Index down 326, a drop there of 1.2%. We've got the 10-year currently yielding 4.59%, the 2-year 4.08%, and the 30-year 5.11%. Keep it locked into Bloomberg for the very latest on these fast-moving markets. Spot gold down 101 the ounce now to 45.30, drop there of just about 2.2%, while West Texas Intermediate crude, another concern for the market, WTI up 3.8%, 105 even a barrel right now, barrel of Brent just above 109, Brent crude up by 3.2%. Bitcoin back below 80K, Bitcoin at 79,233, Bitcoin down by 2.6%. Bill Ackman says Pershing Square has built a new stake in Microsoft, taking advantage of a decline in the company's share price to invest in a business that he says is stronger and more resilient than investors think. Microsoft shares on a down day for a lot of tech names, on a down day for much of the market. Microsoft up now by 3.7%. Briefly after earnings, we got Applied Materials down now by 0.6%. Just getting word from the Justice Department, it will seek the death penalty for Elias Rodriguez. He's accused of fatally shooting 2 Israeli embassy staff members in Washington. He will face federal hate, crime, and murder charges. Round 2 of the PGA Championship underway in Newtown in Pennsylvania. At last check, Japan's Hideki Matsuyama sits atop the leaderboard at 3 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet checking on the markets and golf for us. I wonder if President Trump has the PGA Championship on the plane television on Air Force One on his way back from China. I would imagine so. It's a long flight. You got to entertain yourself somehow. In part, the president did that by speaking to the reporters on Air Force One as he journeys back from China about the trip after we heard him speaking next to Chinese President Xi Jinping in the last day of their summit together today, where we understand much was discussed, yet not as much formally committed to. But this is how President Trump has characterized things.
This has been an incredible visit. I think a lot of good has come of it. We've made some fantastic trade deals, great for both countries.
President Xi's an incredible guy. Got along, made a lot of great trade deals, including over 200 planes for Boeing with a promise of 750 planes. We didn't discuss tariffs. I mean, they're paying tariffs. They're paying substantial tariffs.
But they, of course, did not talk about tariffs and any number of other issues, according to the Chinese. And there's a bit of a back and forth on what exactly was said because the readouts don't completely align. There was a deal, as Kayleigh mentioned, to sell 200 Boeing jets. There does not seem to be a purchase requirement or guarantee, whether it's jets or beef. Also, beef imports resumed. So the news seems to be surrounding Taiwan and the conversation that these two world leaders had, which is where we start with Tyler Kendall. Bloomberg's Washington correspondent is still on the ground in Beijing, picking up the pieces after this 3-day summit. Tyler, will Taiwan be the takeaway?
At this point, Joe, it definitely was the largest point of contention. And in fact, just breaking in the last few moments, we're getting a statement from Taiwan, apparently in response to President Trump being non-committal about that $14 billion weapons package that is queued up for his approval. Taiwan's Foreign Affairs Ministry reportedly saying, in part, quote, regarding arms sales to Taiwan, this is not only a security commitment to Taiwan, but also a joint deterrent against regional threats. This definitely dominated the conversation and did threaten to derail the mood here in Beijing, which was rather cordial, if you will, considering that both sides had said that they were going to prioritize stability. And I think that's the other big takeaway from the meeting that happened here in Beijing, which is that the dialogue is going to continue. The two sides were stable enough that they're going to keep the conversation going. As Chinese state media confirmed earlier today that Chinese President Xi Jinping will accept President Trump's invitation to come to the U.S. this fall. Because beyond that, a lot of the deliverables, as you're outlining, didn't have that many firm details. Yes, we got the Boeing deal. In fact, we can confirm that Boeing officials were still here on the ground in Beijing today, meeting with top economic officials in an apparent good sign for that deal. But we didn't see many details around agricultural purchases, for one example, or energy products, as President Trump had pledged that there were conversations around these items. In fact, there had been an expectation, right, that we could even see some movement on NVIDIA's H200 chips, considering that NVIDIA CEO Jensen Huang last minute attended this summit. President Trump did say that they spoke about those chips behind closed doors, but ultimately not about whether China would be a buyer, allow companies to buy those chips, saying that instead China wants to develop them on their own. So still a lot of questions here, but it is clear that the conversation is going to continue.
All right, Bloomberg's Tyler Kendall live in Beijing for us. Great work throughout the last several days, Tyler. Thank you so much. And we want to go live to Capitol Hill next as we're preparing to be joined by Republican Congressman Vince Fong of California. And I want to begin with the issue of Taiwan. As Tyler was just talking about some of the tension that existed in the remarks around Taiwan here, let's listen to how President Trump characterized what she asked of him and what his response was earlier.
Doesn't want to see a movement for independence. He says, look, you know, we've had it for thousands of years, and then at a certain period of time it left, and we were going to get it back. They had the Korean War, a lot of things happened, and all this. But on Taiwan, he feels very strongly. I made no commitment either way.
On Taiwan, he feels very strongly, I made no commitment either way. And that's where we bring in now Congressman Vince Fong, as I mentioned, representing California's 20th District, the Republican joining us live here on Bloomberg TV and radio. Congressman, welcome. The president also apparently has not decided whether or not to commit to a $14 billion arms sale to Taiwan. He suggested he will be making a decision about that soon, knowing, of course, Congress has already greenlit that sale. Do you hope that he decides to move forward?
Well, this is certainly going to be a flashpoint that will continue on to the future. But yes, I mean, we need to support Taiwan. You know, you see the great powers competition that the United States is engaged with China. You know, China is trying to dominate and outcompete America in a variety of areas, whether it's AI, whether it's in technology, quantum, whether it's on space. You know, you look at biotech as well, robotics. And so, you know, we are going to have to deal with this relationship for the long term, but you know, we need to support Taiwan, and it's going to be a continuous challenge for us as a country.
Well, I'm just trying to figure out, Congressman, we appreciate your joining us here, if anything has actually changed. We've heard some tough rhetoric over the past couple of days, but should America's friends in Taiwan be more worried today than they were before this summit?
No, I don't think so. I mean, certainly, look, the president is going to China in a position of strength. Again, as I've said before, China, the rise of China and the great powers competition. I mean, this is going to be the issue that will dominate our relationship in the global relationships across the world when it comes to stability for the next century. And so we are going to have to confront this challenge head on. The president is certainly tackling that. He is going to China. He is confronting the president. He is going to negotiate. He is going to talk. He is going to address these issues forthrightly and bring them to the forefront. I mean, we can't hide from the fact that this is going to be an issue that we're confronting. But at the end of the day, we have a president now that is willing to address it immediately with a sense of urgency.
Well, and it's understood, Congressman, that just the act of talking, of participating in a summit like this is important in and of itself. But is the president walking away with enough firm in hand? Where are all the deals that we expected to come from this? The commitments to China that China we thought might make when it comes to purchases of U.S. products. Are you disappointed?
No, I mean, look, this is the first of many conversations and many interactions between the United States and China. The president is going in with his eyes wide open. Again, China is not our friend. And so when we look at the competition that we're engaged in, look, they're stealing our IP. They're terrible on human rights. When you look at the challenges right now in cybersecurity, we just had a briefing on Mythos and the vulnerabilities that it has exposed. China is actively trying to develop those same AI platforms to exploit our vulnerabilities. When you look at commercial space, they are trying to be dominant in that arena. You look at emerging technology, biotechnology. 80% are probably the reagents and the things that make our medical devices and our pharmaceutical products come from China. I mean, think about this: if we were back in during the Cold War, we would never allow the Soviet Union to make 70 to 80% of the things that make our economy function. Fast forward to today. China does make 70 to 80% of the things that make our economy function. So the president is trying to put an industrial policy together. He is trying to rebalance the relationship, ensure that America is strong in a variety of industries. This is going to be an important thing, and the president is leading from the front.
What do you make of some of the analysis today from Bloomberg? A paltry set of deliverables underscoring the rushed and chaotic planning for the trip as he grappled with the Iran war and a range of domestic issues. Axios, nearly every force shaping U.S.-China relations is in fact pulling them apart. And the Washington Post, in pageantry and politics, China summit yields Xi's goal, equal footing with the U.S. It's that last point I want to ask you about, Congressman, the image of these two superpowers on similar footing, what the president referred to as the G2 in an interview yesterday, seems to favor China, does it not?
I don't think so. I mean, I think that's a lot of rhetoric. We're going to look at the specifics, but again, the president is leading. I mean, you look at the previous administration and the administrations before that. I mean, we are dealing and confronting a real challenge. We are in a great powers competition. I mean, as I said before, China is going to be the challenge. They could either be a force for good in partnership with us, or they could be a force for instability. And so this is something that our eyes are wide open when it comes to Taiwan, when it comes to the entire Indo-PACOM region, when it comes to our competition in a variety of industries. I mean, we have to lead. And when you look at the president's investments in bringing back manufacturing, when you look at the use of tariffs to expand our leverage, when you look at the investments when it comes to hardening our supply chain, when bringing back critical minerals to the United States, when you look at our leadership in AI, all of this is to confront the growing threat that China poses to us.
Congressman, finally, as you have a seat on the Transportation Committee, I'd love to ask you, as we consider another geopolitical challenge the U.S. is facing, it's obviously how to extract ourselves from the conflict with Iran and how to get the Strait of Hormuz back open and energy flowing out of the Middle East once again. The president has floated an idea of a federal gas tax holiday. Do you support it, knowing it could mean a hit in the fund that funds so much of our critical transit infrastructure?
Well, we're looking at it. I mean, certainly affordability is probably the top issue facing Americans right now. Gas prices, number one. In California, gas prices has surpassed $6. As someone who advocated for suspension of the state gas tax, we should look at the suspension of the federal gas tax, but it's not a permanent solution. We certainly have to look for ways to keep the Highway Trust Fund solvent. So we're looking at every single angle to fund our roads, but we have to bring back the price of gasoline. The solution to the price to reducing the price of gasoline is to expand supply, to invest in energy infrastructure, to expand our refining capacity. These are the things that President Trump is doing. Contrast President Trump's energy policy to the policy of Gavin Newsom. No question, Gavin Newsom has made California weaker and more vulnerable. We cannot follow down that path. We need to follow President Trump's lead in expanding energy production. That is the long-term solution to reducing gas prices and making America energy secure.
Congressman, it's great to have you. Thanks for being part of our conversation today with us live from Capitol Hill. Congressman Vince Fong, California's 20th district, as we assemble our political panel for their take on what we just heard. Bloomberg Politics contributor Rick Davis is with us, Republican strategist and partner at Stone Court Capital, alongside Democratic strategist Jim Kessler from Third Way. Jim, what do you think about that response on a gas tax holiday? It doesn't appear the leadership is in favor on Capitol Hill. Does this see the light of day?
It's hard to say. Gas this time last year was $3.19 a gallon. Right now it's $4.55 a gallon. And it is purely because a war of choice in Iran that was a bad idea, it's going to take months and months, perhaps years longer than anyone anticipated, and it's not going to achieve its results. So, gas tax, I believe, is 18 cents. And, that would be nice to go from $4.55 to $4.37. It would drain our resources in which we fund roads and bridges. But, this is a problem of Donald Trump's making, and frankly, nobody else.
Well, Rick, I know that you see the political opportunity for basically anyone who's in elected office right now to pursue a federal gas tax holiday. My question is, how quickly do you think it realistically could happen? How quickly would it need to happen to have the desired effect?
Yeah, I know I disagree with many economists who say it's bad policy, but it's good politics. And the reality is that Congress has done little to help support the Americans who feel the pinch on cost of living, and this is one area that they can at least side with the American public. The reality is that getting, the feeling of it is the feeling of action, not the feeling at the pump. I mean, Americans are never really going to be impacted politically by a couple cents at the gallon coming down. But if they see Washington at least making an effort to try and take over their priorities of cost of living, of affordability, and doing something about it, it can soothe what is right now a pretty grumpy, angry consumer.
All right, Rick Davis and Jim Kessler will be back with us for more in just a few moments as we continue on here on Balance of Power. We'll also be bringing you a taste of what will be on Wall Street Week this evening. Bloomberg's David Weston is going to join us just straight ahead right here on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We've got a steep sell-off for the U.S. equity market with the Dow, the S&P, NASDAQ all falling. Yes, a down day for the S&P 500 index, retreating from a record. We are on track, though, for another winning week for the S&P. Here's where we stand. S&P currently at 7440, down 60, drop there of 0.8%. A sell-off in global bonds is halting a rally in stocks. There is concern intensifying that central banks will be forced to tighten policy to keep inflation in check. The Dow back below 50,000, down 399 now, down 0.8%. The NASDAQ Composite Index and NASDAQ 100 Index are both down by 1%. The VIX back below 18 now with a 10-year 4.58%, the 2-year 4.07%, the 30-year 5.11%. West Texas Intermediate crude oil $105 a barrel, up 3.8%. Brent, the global benchmark, at 109.11, up now by just about 3.2%. Round 2 of the PGA Championship underway in Newtown in Pennsylvania. At last check, South Africa's Aldrich Potgieter sits atop the leaderboard at 4 under par. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie, many thanks as we keep our eyes on President Trump returning to the United States from a 3-day summit in China and exactly what the United States has to show for it. When we consider the analysis at Bloomberg News, the paltry set of deliverables underscored the rushed and chaotic planning for the trip as he grappled with the Iran war and a range of domestic issues. The market clearly not getting a lift out of what we heard even yesterday. Shares of Boeing and GE Aerospace were lower on disappointment over a deal to sell jets to China. Both of those stocks are lower again today. And of course, oil prices have resumed their climb because, well, we haven't been talking about it all day. The Strait of Hormuz, yes, remains closed, and it appears that China will not be helping us reopen it. David Weston joins us now live from World Headquarters in New York, of course, the host of Bloomberg Wall Street Week, who's delving into the matter that the president was discussing, many of the matters with President Xi following this summit, what it means for the world's 2 biggest economies. And David, it's great to see you. That Bloomberg News analysis may be a bit between the eyes, but there is something to be said for what appears to be the lack of advance, the lack of agreements before these 2 gentlemen sat down.
Yeah, it's interesting, Joe. I'm not sure exactly what we expected, what the markets expected, how much they expected. We had talked to people beforehand who said, don't expect too much coming out of this. The goal might just be stability. I mean, if you remember, it wasn't that long ago, we were at daggers drawn over a thing like rare earths. At least they weren't fighting over those. I mean, President Xi wasn't threatening things. So I'm not sure exactly what we expected to come out of this, but I think it's fair to say that there were no big breakthroughs, at least from the United States point of view.
Well, so if there was no big breakthrough, David, no big fundamental changes, what does this mean for an investor who already has had to navigate previous trade wars with China, try to figure out how to make decisions around this relationship in the 2 largest economies?
As always, there's a short term, Kaylee, and there's a longer term. In the short term, I'm not sure how much difference it makes. It may stabilize things. We're not increasing our tariffs. Maybe they'll buy some more soybeans, buy some more Boeing planes, although not as many as we would hope for. But then there's the larger, longer term issues about exactly what happened. And although there were no breakthroughs, there might have been some fundamental changes just in the nature of the relationship between the United States and China. We see a China that is more assertive, certainly, as you saw, when President Xi came out of the box, according to their readout, starting with Taiwan. I mean, that was not a shy move on his part. And so we sat down with Ray Dalio, who, as you know, is a student of China, spent more than 30 years going there. He was there just within the last couple of weeks meeting with leadership in advance of the summit to get their perspective. And it was really important, at least for me, that Ray has a different perspective on how the Chinese regard it. We think of it as a zero-sum game. Are we up, are we down? They have a longer-term view based on their history that basically has to do with a tribute system, is the way Ray put it. This is part of what Ray had to say.
So this tribute system is a hierarchical system. It recognizes that there are differences in power and that the important thing in dealing with other countries is how it affects you in your trade and your safety. And so we're now entering, I think, in their view, a period in which there will be a tribute system type of arrangement in which the relative powers are what matter. Okay, we don't have a world court that's going to resolve our problems and so on. So it's a relative power question. The desire is not to take over and conquer They view that as a Mediterranean concept. But it is to have your family well, your country well, and then to operate with the rest of the world where there's the recognition of relative powers. Therefore, the United States, and there are comparable relative powers. I think they think the United States is declining and that they are sort of winning that relative war. But also in the region, there's the recognition, in their view, that there is an environment where the countries in the region have to recognize and respect that power. And so now you're seeing that happen.
Whoever is winning or losing, in terms of that relative power that Ray is talking about, let me give you one statistic that I find interesting. When President Trump last went to China, Chinese GDP was something like 25 or 30% of U.S. GDP. Now it is 60%. So in terms of relative power, economic power, there's no question, but there's a big shift. And President Xi is really aware of that as he's saying it. And then we can conclude for ourselves whether President Xi thought, in fact, President Trump was coming to pay tribute, as it were.
It's a really nuanced view, and it's important that you bring it to us here, David. Of course, balance of power is followed by Bloomberg Wall Street Week, and we'd love to know what else you have in store tonight.
Well, we have more China, which is actually the race over energy for AI. We have Hank Paulson on, who's concerned about that, as well as Nick Burns, whom you know well, former ambassador there, because China is really advancing quickly in power on renewables as we've cut back on renewables. And then we've got a favorite for us all, which is taxation, and particularly Miriam Mamdani's battle with Ken Griffin over that so-called pied-à-terre tax, and whether that really is going to make a lot of difference to New York City. So we talk about that as well, near and dear to the hearts of all of our audience, I suspect.
God knows.
Indeed. We're looking forward to the show. David Weston, host of Bloomberg Wall Street Week, which you can catch at 6 p.m. Eastern Time on Bloomberg TV and radio. Thank you so much, as always. And absolutely fascinating to hear from Ray Dalio about this concept of relative power when it comes to the U.S. and China, because this is also something we explored in an interview on Balance of Power last night with Democratic Congressman Jake Auchincloss of Massachusetts, who was also talking about the power dynamics at play here. He doesn't think that they favored President Trump. Listen.
The videography and the symbolism has been more interesting. This is the first time since World War II where a president has been in a room and it wasn't clear who the most powerful person in that room was. And that is a statement about how badly this president has mishandled his strategic calculations. He picked a trade war with China last year, lost it. Picked a kinetic war with Iran this year, lost it. And now his loss of power and prestige has been evident by the fact that he is in a room with a bunch of tech titans and Xi Jinping, and arguably all of them actually have more power and influence than he does over the grand current events that are dictating American life right now.
Let's see what our panel thinks about that as we welcome back Republican strategist and Bloomberg Politics contributor Rick Davis and Democratic strategist Jim Kessler of Third Way. Rick, I would love to know what you think of Congressman Auchincloss's remarks there, the suggestion that Trump was potentially the weakest player in this room.
Yeah, I don't agree with that. I think that it's very easy to create a scenario where Trump himself as an individual, for whatever reason, came out of this looking weaker. And some of the pandering that he did to President Xi may actually give people the impression that he was kowtowing, to use a Chinese phrase. The reality is his presidency has probably been seen as the most powerful execution of American power, both economic and militarily in our lifetime. And it has shown the degree to which the United States can hold sway over markets and security around the world. China has never exerted that kind of financial and militaristic influence around the world. They have been choosing a different path to do that, and so I don't buy the argument that somehow the United States is weaker because Trump appeared weak.
Joe Biden's China director on the National Security Council echoes the sentiment of Jake Auchincloss, Jim Kessler, saying Xi has done something Chinese leaders have been working toward for decades, bringing an American president to Beijing as an undisputed peer. Do you agree?
I do agree with that. And look, I think there's a dichotomy here because on the one hand, I agree with Rick Davis in that Donald Trump does project power. America has been projecting power clearly, like Venezuela, other places, throwing its weight around. On the other hand, and the Bloomberg article you cite gets it exactly right, Xi Jinping was prepared and Donald Trump was not prepared. And this summit was a disaster for America. And Xi Jinping just laid the wood on him right away on Taiwan. And Donald Trump gave the wrong answer on it. And, you know, this is a situation like you want stability, but you don't want stability on China's terms. And look, I think the reality here is Donald Trump doesn't really care about Taiwan. He said this in August of 2024 that it's 9,000 miles away and it's only 100 miles away from China. And, you know, he's given indications that he doesn't really care. Well, that's a major change in the balance of power in that region. And with China, which is fair enough, China is, and the United States, we are the G2. And we are competitors and we don't want to be at war with China, but we also don't want to boost them. And I think this summit was a disaster for the United States.
Well, as we hear Jim say that the president didn't give the right answer on Taiwan, the president said he didn't give an answer. He wasn't committal either way. But is that telling in and of itself?
Yeah, why not just restate the same policy the U.S. has had for decades? And by the way, which would have been a real slap in the face to Xi, because that's the last thing he wants to hear from an American president. And I agree with Jim in that this was a really bad summit. It doesn't reflect on my view of the power of the world, power of the United States around the world, but this was a poorly planned, poorly executed summit on our behalf. Fundamentally, if an American president comes to your country, it should be pre-negotiated well in advance what's going to come out of that, because the power and the prestige of the United States going to Beijing is an important and symbolic measure that only we can bestow on a country like China. China coming here, nobody's really going to care. But when a president of the United States goes to Beijing, all the world's eyes are upon it. And in this case, it really wasn't very well planned. I don't even know why the president was there, because there was no perceived goal other than stability. We had stability before he went there. In fact, today I would say there are a lot of people scratching their head wondering what message did Xi get from Trump being there unprepared.
Wow. I think they agreed on a lot here, actually. Yeah. Rick Davis and Jim Kessler, really fascinating. Thank you both for the insights and a great panel. Rick, of course, Bloomberg Politics contributor, a Republican strategist. Jim Kessler, Democratic strategist from Third Way. We've got an important conversation ahead for you. I want you to stay right where you are with Bloomberg TV and radio. It's the last day for Jay Powell as chair of the Federal Reserve. And Kaylee, we have the perfect voice for the occasion.
Yeah, Lael Brainerd will be joining us, of course, former Fed vice chair and former director of the National Economic Council during the Biden administration. Wonder what she makes of the moves we're seeing in the bond market today as well. That's next here on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all very much in the red. Stocks are falling as inflation jitters lift bond yields. Right now, the S&P under 7,500. You recall it closed at a record yesterday. We are on track for a winning week, but right now looking at losses with the S&P down 0.7%, lower by 53 points. The Dow back below 50,000, 49,641 on the Dow, down 0.8%. NASDAQ Composite Index also down by 0.8%. NASDAQ and the NASDAQ 100 Index are both retreating from records. The VIX right below 18 right now. The 10-year, 4.58%. We've got the 2-year currently yielding 4.07%, with the 30-year at 5.12%. Gold is down $89 the ounce to $45.62, down 1.9%. West Texas Intermediate crude right around 105 a barrel. WTI up 3.9%. Brent crude 109.13 barrel of Brent, up now by just about 3.2%. Just getting word that the Equal Employment Opportunity Commission plans to cut employer data reports on race and gender, that according to B-Law. Also, word of job cuts at Starbucks, the coffee chain cutting an additional 300 corporate jobs, its largest move to hit cost reduction targets. And Papa John's international shares are advancing, up by 6.2%, after Reuters reported that the investment firm Earth Capital is working with the pizza chain's largest American franchisee to take control of the company and take the company private. Recapping, S&P down 58 right now, down 0.8%. The 10-year, 4.58%. Also, we've got the 30-year at 5.12%. Round 2 of the PGA Championship underway in Newtown in Pennsylvania. At last check, South Africa's 21-year-old Aldrich Potgieter sits atop the leaderboard at 4 under par. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie, checking on the markets for us. Thank you so much. And what a story the bond market in particular seems to be telling today. As Charlie was running you through upward pressure that we are seeing, yields up about 10 basis points on the 10-year. The 2-year yield, as Charlie mentioned, back above 4%. The short end of the curve is not signaling that it expects easier monetary policy to be coming anytime soon. In fact, there's a live conversation as to whether or not the Federal Reserve is going to find itself in a position in the not-so-distant future where it has to consider tightening policy and hiking rates once again, even though clearly that is not what President Trump has been pushing for, not what he is hoping that his new Fed chair, Kevin Warsh, will deliver. Because yes, it will be Chair Warsh, no longer Chair Powell. Today is the last day of Jerome Powell's term on top of the Fed, and what a time he has had, from a few inflationary events like a trade war, COVID and the emergence from the pandemic, the shock emanating from Russia's invasion of Ukraine, the whole story around transitory inflation, and then, of course, a whole separate story unrelated to the economy itself around the renovation of the Fed's building here in Washington and the pursuit of him as a result. Let's just get a recap of the chairmanship that was Powell's.
Thank you very much, Mr. President, for the faith that you have shown in me through this nomination. The spread of the coronavirus has brought new challenges and risks. In response, we have eased the stance of monetary policy to provide some more support to the economy. The effect on inflation will be neither particularly large nor persistent. We expect that they'll be transitory or temporary. The word transitory has different meanings to different people. I think it's probably a good time to retire that word.
It looks like it's about 3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
I haven't heard that from anybody at the Fed. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. I won't see you next time.
All right, hold your hard hats. We're joined by an important voice on this final day of Mr. Powell's tenure as chair, and that would be none other than Lael Brainerd, as we told you. With us in studio, the former director, National Economic Council in the Biden administration, former vice chair, Federal Reserve, now at Georgetown. It's wonderful to have you with us here, and we have many questions about Jay Powell's tenure, your firsthand experience, but I do have to start with what's happening here in the bond market. This is overwhelming the stock market today. Is this everything about the PPI, CPI we saw this week? Is it about the concern of it getting worse because of a closed Strait of Hormuz, or is there more going on here?
Well, I think there are a number of things going on. Obviously, there's some carryover from overseas where the UK government dynamics are carrying over into the U.S. at the very long end. But as you say, both CPI coming in very hot and PPI, input prices, freight, suggesting that we're going to see additional pressures, upward pressures on consumer inflation in the months ahead. And of course, really very few people expect the Strait of Hormuz to be open and that oil to be moving into global markets, certainly not before the end of May, probably not well into the summer. And that means that as Kevin Warsh enters the Fed, it is a inflationary set of risks that he has to contend with.
Well, therefore making it very difficult to pursue rate cuts. But how high is the bar in your mind to actually tighten policy further? How hard would it be to hike rates, knowing that this also could ripple down and have a potentially negative growth impact?
Well, I think the day one job for Kevin Warsh walking into the Federal Reserve is to move the Fed away from the easing bias that has now been in place since late last year. It's no longer appropriate. We've had a massive inflationary shock. It's piling on top of earlier inflationary shocks, and we're seeing that core PC inflation is moving up, likely to come in around 3.3%. So the first business for Kevin Warsh is to actually move away from that easing bias. And of course, that's exactly the reverse of the reason the president gave for trying so hard to replace Jay Powell.
I was taken by your op-ed in the FT, in which you talk about inflation pressures in the future. When people expect inflation to persist, you write, it tends to change pricing behavior by businesses, and a temporary shock becomes a persistent one. You know about this because you've lived it. What does it mean for the second half of this year?
Well, I think we started to see some of that in the PPI data with margins going up. Okay. And that is the kind of behavior when consumers expect gas prices to keep going up, then those gas station margins can go up as well. We are seeing it in freight costs. Everything is going to be affected by diesel, packaging costs for food. So we still have some inflationary pressure coming for the consumer in the months ahead. And when I talk to consumers, and you can see it in the consumer surveys, their inflation expectations have jumped much higher, but they also just are very resigned to prices never coming back down. So they say, I hear about tariff refunds. I'm never going to see those refunds in lower prices. I see gas prices going up. When am I actually going to see some relief? So I think that concern about a series of supply shocks really leading into changing inflation expectations is one that the Fed has to show they're taking seriously.
Well, and of course, for consumers, if your wages are not keeping up with this, it feeds into the sentiment downdraft we have been experiencing. We saw that borne out in the CPI with wages being outpaced by inflation for the first time in 3 years. When do you expect that this starts to have a greater impact on the economy itself, on consumer demand overall, on demand for labor as the Fed contends with the other part of its dual mandate?
Well, what's interesting, as you said, average hourly earnings actually negative for the first time in a very long time this month. And it does affect consumers on the lower end. So what we are seeing, I think, with consumers on the lower end, I hear from them that they are using, where they have access to credit, they're using credit more. They're running down their buffers. When you look at those overall retail sales numbers, though, those were very strong, I would say, given where we are with oil prices. And that just speaks to the K-shaped economy, the very top of the consumer income kind of distribution, really driving that ongoing uplift to consumption. So that's why we're seeing, I think, this big vibe chasm, consumer sentiment being extremely negative, but consumers continuing to power growth.
Speak to the significance of this day for Jay Powell. I don't know what happens inside the Fed on a chair's last day. Are there fireworks? Is there a cake? We're wondering. Maybe there's an official handling of the gavel. But as we recall the stylings of Jay Powell and the challenges he faced in dealing with this administration, will the relationship between the chair and the president ever be the same again?
Well, I think that will be the biggest legacy of Chair Jerome Powell, is just the integrity with which he led this institution and really protected its independence during a time when the president mounted a series of unprecedented actions, firing a governor, undertaking a criminal investigation. So I think the chair's legacy is really going to be around preserving the independence of the Federal Reserve. And I think he actually gives Kevin Warsh a much stronger position to start from than might have been the case otherwise.
But what does it do to Kevin Warsh's starting position that Chairman Powell's still going to be hanging around, not as chair, but as a governor? He says he wants to keep a low profile, but what impact do you expect that will have inside the Fed?
Well, I certainly know from working with Chair Powell when he was Governor Powell that he's very constructive. As he said, he will be low profile. I really expect that to be the case. So I imagine, and he of course worked with Governor Kevin Warsh, I expect that they'll establish a good working relationship. What it means, of course, is that the consistent dissenter, the CEA chair for President Trump, Stephen Myron, is rotating off, at least for the time being. And so that actually makes Kevin Warsh's job a little bit easier if, in fact, he decides he is going to move away from that easing bias and recognize there may be two-sided risks to rates.
Speak about the cultural shift inside the Fed when a new chair shows up. This is obviously a very close group of people. You go behind closed doors and make very difficult decisions, but I'm sure that there's a camaraderie there and a style that's impacted by a new person holding the gavel.
Well, the staff are absolute professionals. I mean, these are people who have deep expertise, but they understand that they are providing advice and depth. But the policymakers, the chair is leading on policy. And so they will offer up that same sage advice, uncolored by their own views, to the incoming chair. And similarly, I think board members and the regional presidents tend to be very serious. They take the data very seriously. You've heard how they're parsing the data right now, how they themselves are shifting, but they are also very collegial.
Well, of course, a lot of conversations do happen behind closed doors, but we also hear frequently from Fed governors or officials on the FOMC, and it seems Kevin Warsh thinks it maybe is too frequent, at least judging by his testimony in his confirmation hearing, not even just in terms of speeches and the like, but in putting out a summary of economic projections, for example. I wonder what you think we might expect in terms of a shift in the, at the very least, amount of guidance that financial markets are given by the Fed.
It is possible, given that he will now be making the recommendations on the statement and will also be making recommendations on what kinds of communications the committee's making. There are a number of things he could do. He could decide to put forward a statement that doesn't include forward guidance at all. He could decide to drop his press conferences or move to every second press conference. He could guide the committee over time to decide to no longer issue summaries of economic projections. So those are all things that he could do. The question mark, so I think that is the question mark, if in fact he wants to be leading the Fed and providing that voice that is the kind of preeminent voice on Fed policy. He may find that he wants some of those tools. And in particular, the every meeting press conference has raised the chair's voice relative to other members.
We all remember trying to gauge what Alan Greenspan was going to say based on how fat his briefcase was. We would have paid good money for a news conference back then. Do you expect that regular news conferences will follow each meeting?
I think that was one of the question marks that his testimony left open. What he won't be able to change is the number of times that the regional presidents and board members speak.
Right.
And so it would be, I think, to his disadvantage to retreat from the field and leave the markets to interpret based on other members of the committee alone.
All right, so great to have you, the former vice chair of the Fed and former director of the National Economic Council in the Biden administration, Lael Brainerd, here with us on Balance of Power. Thank you so much. And of course, we'll have more in the late edition at 5 p.m. right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed. This is Carol Massar, Tim Stanovic live here at Bloomberg headquarters in New York City. What a week. So much going on. And then you take a look at what's just going on this Friday. We've got a global bond sell-off. We've got yields surging from Japan to the United States, rising oil prices once again, spooking investors. We've been talking about this a lot around this table, but you definitely saw it play out.
It's almost like it's finally catching up.
Yeah, I mean, you look at the
oil
the
prices
charts.
have been high for 11 weeks.
Well, and everybody says, listen, none of this is going to go away, right? Anytime soon. People are talking about the end of the year. They're thinking about higher gas prices, and all of that plays its way through the economy.
Okay, so that's just part of the backdrop. We got a great roundtable to talk about this global bond sell-off and the macro. Priya Misra is here from J.P. Morgan. Martin Norton joining us too from Empower.
Looking forward to that combination. And it's a wrap on President Trump's visit to Beijing, what you need to know. We're also going to get into how Andy Jassy is rewriting Amazon's playbook for the AI age. It is the cover story of Business Week.
Brad Stone going to be joining us. He literally wrote the books on Amazon. So looking forward to that conversation. Also, a read on the consumer.
Yes.
Food costs.
Yes.
Wine costs.
Spirits costs.
And what our summer picnic might look like and might cost.
With Blake Leonard. She is over at Stu Leonard's Wines and Spirits. She's president, but she's getting ready to take over, co-take over, I should say, and lead the company into the next generation. Let's get you going, though, with a check on that trade, including what we're seeing in the Treasury trade here in the U.S. Here is Charlie Pellet.
Hi, thank you very much. Lots of red on the screen today for the Dow, the S&P, and NASDAQ. Pulled back from records, but interesting to point out that it looks like, as of now, that we could see another up week on the S&P 500 index. Here's what's going on right now, though. Red on the screen with the S&P down 49 at 74.51. This time yesterday, we were right around 7,500, a drop today of 0.7%. The Dow Industrials down 403, drop there of 0.8%. And NASDAQ lower by 194, drop there of 0.7%. All of this with the VIX back below 18 and the 10-year now at 4.59%. The 2-year, 4.08%, and the 30-year, 5.12%. Our coverage will continue. Right now, we've got spot gold down $92 the ounce, 45.59, drop there of just about 2%. Crude pushing higher, WTI 105.13 a barrel, up now by 3.9%. Brent crude 109.07, up now by 3.2%. So bottom line here, stocks are falling as inflation jitters lift bond yields. Bill Ackman says Pershing Square has built a new stake in Microsoft, taking advantage of a decline in the company's share price to invest in a business that he says is stronger and more resilient than investors think. Microsoft shares are up now by 4.5%. Round 2 of the PGA Championship underway in Newtown in Pennsylvania. At last check, Aldridge Polgieter of South Africa sits atop the leaderboard right now at 4 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
It is indeed. All right, Charlie. We'll be checking in with Charlie throughout the hour. Want to get to a bunch of stuff that's going on. But before we do that, we kind of need to set the macro of one of the big stories of the week. And that was the meeting between U.S. President Donald Trump and, of course, Chinese President Xi Jinping. There were a few deals. I feel like a pledge of stabilization, Tim. But the risk for both, and it was very clear, is Taiwan.
Taiwan, also Iran. That's a side issue as well. Just a meeting between the leaders of the two largest economies in the world. Investors, though, I think, want more. On the ground with the president throughout his trip, Bloomberg News Washington correspondent Tyler Kendall. She joins us from Beijing. Tyler, what was the most important takeaway from this meeting?
Well, Tim, I think you guys just hit the nail on the head there. It appears that the takeaways have been dominated around the developments when it comes to Taiwan. We had Chinese state media reporting right after President Trump took off from here in Beijing that China feels that Taiwan is the #1 issue in the U.S.-China relationship. Now, U.S. officials made very clear that their position on Taiwan has not changed, but President Trump did appear non-committal when pushed about a $14 billion weapons package that has been queued up. And we're starting to see some pushback from Taiwan, even breaking within the last hour or so a reported statement from Taiwan's Foreign Affairs Ministry urging President Trump to move forward with that security assistance. That was really the biggest point of contention amid a summit that we saw both sides really trying to push forward this idea of strategic stability. And perhaps that's the other big takeaway here, which is that the dialogue is going to continue, and it's going to have to continue because we're still waiting on a lot of details about some pledged investment deals or purchase commitments. In fact, you saw soybean futures falling because there was this expectation that we would see a firmer announcement around agricultural purchases, but that never ended up materializing. So a lot of big questions here. Yes, we got that Boeing deal, but there was an expectation that we could see some sort of breakthrough around NVIDIA H200 chips since Jensen Huang was on that trip. That didn't happen either. But Tim and Carol, both of the sides did seem to commit that there will be this U.S.-China Board of Trade and Board of Investment. But again, that is just basically a commitment to kickstart the process for that more formal mechanism to usher in more trade and investment between the two countries. I will quickly add that we did get confirmation from China earlier today that Xi Jinping will travel to the U.S. this fall.
Promises, and lots of pomp and circumstance. We'll see ultimately how this all plays out. Tyler, we know it's been some long days for you. We really appreciate it. Have a super safe trip home. She is, of course, our Tyler Kendall. She's there in Beijing for Bloomberg News. All right, so investors maybe not getting all that they wanted with the meeting between President Xi and President Trump. I think some were looking for more deals. What investors, though, did get today, a global bond rout as investors shed government bonds around the world, propelling borrowing costs to multi-year highs amid intensifying fears that war-driven inflation will force central banks to pursue higher inflation and higher interest rates, I should say. And I got to say, you're seeing it play out. There's a little bit, Tim, of a pullback in terms of the equity side of things. Not necessarily coming undone completely, but some of the high flyers that are certainly
the stocks.
Yeah, exactly. are much more sensitive to higher interest rates. You're definitely seeing a pullback. So let's get to it. Priya Misra is with us, portfolio manager of the JP Morgan Core Plus Bond ETF, here on set with us in New York City. Also, Marta Norton. She is chief investment strategist at Empower, and she is in the Bloomberg News Chicago Bureau. We do have a lot to get to. Priya, I've got to start with you. 10-year real yields headed for 7-week closing high. You just look around the globe and you see this rising rate environment. I do think about it. Is it just something that goes away if this U.S. war in Iran stops, or not necessarily?
Not necessarily, because, we need the strait to open. So the strait's not open, which is why energy prices are rising. We also need the global, so there's a global term premium increase. You see this in UK, you see this in Japan, now you're seeing this in the US. I think concerns around debt and deficits, that's a global issue. That's why
and
term
that
premiums
doesn't go
are
away like that.
Exactly. Wars are expensive. Wars are inflationary, wars are expensive. It's not clear that, sort of governments have figured out a way to deal with this debt. So I think that is with us. I think the rate range is higher. I do think that the rate move has now reached sort of more of a, I would say danger zone, meaning now risk assets are paying attention to it. I think there's a self-correcting mechanism here. As you see the tightening in financial conditions, I think then the market starts to move from, is this just inflationary to is this stagflationary? Do we start to see that growth impact? So I think now every other market's paying attention to the bond market. The fact that we've sort of broken those psychological 4.5% on the 10-year, I think now it becomes a little bit more dangerous, not just for the bond market, but also for the broader risk complex.
Well, that's a perfect segue to bring in Marta Norton of Empower, where she's chief investment strategist. Marta, as Carol mentioned, some of the higher flying areas of the equity market taking a little bit of a hit today. The stock's down about 2.2% right now. I'm curious what you're seeing in the macro that's supportive of stocks or not supportive of stocks. What's your view?
Well, I think when we're looking specifically at those high-flying areas, I mean, the rally has been fierce, not just from April 1st. If we're looking at, a semiconductor index somewhere around 55% over this short period, but over the course of 2026, this has been one of the areas that investors have flocked to. So I think the idea that we would see a pullback in some of those areas that have just been bid higher, I think that makes sense regardless of what's happening in the bond market. But there's no question that when we start to think about higher rates, you know, a 4.5 on the 10-year. That, of course, is an impact to borrowing costs, and that's a concern for valuations. And valuations outside of select areas, valuations for the broad U.S. market are not all that cheap. So I think there is some risk more broadly to what we're seeing in the bond market.
Well, you know, Priya, come on back in here, because I think we keep talking about this disconnect between records on Wall Street versus sentiment not so great. We saw inflation numbers, of course, this week, and we're just trying to make sense of what's right, why the disconnect. How do you reconcile the differences?
So I'll say 2 points there. One is the AI revolution that we're under. I think we are somewhat hypnotized by the fact that we're seeing AI earnings, we're seeing AI capex. You know, if that's going to revolutionize the way we do business, and you're seeing companies, invest a lot, earn from it. I think that's the reason why equities have done so well. You take AI out, capex of the rest of the economy is actually not that strong. The cyclical sectors, I would argue, the labor market is stable. It's not decelerating, but it's not exactly re-accelerating. So I would say that's one. The other one is the K-shaped economy. I mean, there's a lot of evidence. The New York Fed's done some great work to show that K-shaped economy is at play even right now. The upper part of the K is able to continue to spend. The lower part of the K, that inflation really starts to bite. At what point do the tax refunds sort of run out when the lower part of the K continues to weaken and the upper part starts to falter? I think that's the point where, that disconnect that you're highlighting starts to unravel, because then, we have to question, okay, the AI thing might still be ongoing, but the rest of the economy is now starting to struggle with the energy prices.
Priya, it's something Tim and I talk about. Like, when does those who are struggling start to have an impact on this economy, and we start to see it play out? Marta, come on back in, because the AI trade, though, has been tremendous, the CapEx, and we increasingly see, the big hyperscalers tapping the debt market to pay for all of this. Was it Alphabet, $3.6 billion selling of bonds in the biggest ever yen deal by a non-Japanese company? They've raised close to $60 billion. Okay, I get that. But when the rest of the economy, or a big chunk of the economy, isn't enjoying some of that spend or that exuberance, doesn't that come to roost at some point?
Well, it's so fascinating because it's not something that we're used to seeing. When we think of the U.S. economy, we think of the U.S. consumer. And now, all of a sudden, we have this dark horse running alongside with AI spend, and we see that in the GDP numbers, right? We're seeing way more spend from the AI side supporting the U.S. economy. And what I think is really interesting in this is that we can have some pressure on the U.S. consumer, and yet I don't think that necessarily means that the AI capex slows down. So we almost have this second engine to the economy that I think maybe gives the U.S. economy a bit more shelter, or maybe more resilience than what we would expect overseas, and potentially means that some of these areas within the AI trade still have some value, especially those that haven't been bid to the same degree as say the chips.
Marta, if I can just question you on beyond the AI side, when you think about companies, you think they can pass on the cost increases? Because I think that's what it's going to come down to. As we're thinking about, will the Fed have to come in and hike? If you start to see core services inflation starting to pick up, or core goods inflation pick up, you think companies have the ability to price to increase prices here?
Well, what's interesting is, we did see the PPI number and the CPI number, and we see this major move in PPI. And the question, to your point, is whether we're going to be able to see those companies pass along the price increases. Now, maybe there is some cover in the sense that inflation is high and companies can arguably justify, hey, inflation is high, I need to pass along a bit of the price increase. But there is a little bit of just fraying along the edges for the consumer. So I think there could be the possibility, like we've seen in the past, where companies do eat some of the pain from inflation, but earnings are quite strong. And so maybe there is the potential for them to eat some of the extra cost pressure, but maybe not see earnings collapse altogether.
Priya, one thing that we are promised as folks who, I guess, whether we like it or not, if you buy an index, this is what happens, productivity increases as a result of these investments. When will we see those, if we haven't already, and how will they materialize broadly?
Great question, and one that actually, it's important for the macroeconomy. It's also important to understand what is neutral rate, because if you listen to the new Fed Chair Walsh, she's talking about these productivity gains actually potentially lowering that neutral rate. You know, I go back to the 80s and 90s. We had the computer age, 80s, 90s. Robert Solow actually came out and said, you see computers everywhere except in the productivity statistics. It takes a while for that to show up because, number one, companies have to start to absorb AI. Number two, you have to restructure business processes, and then it has to show up in the data. So number one, I don't think we're seeing it in the data. If you look at the productivity statistics, they are high, but they are high across the board. They are high because companies realized after COVID that they have a shortage of labor, they have to automate. I think that's what we're seeing in the productivity statistics. We're not seeing AI. It could take a while for that to show up. So, and you know, again, then it has to be measured as well. So I think right now we're in this sort of low hire, low fire. We're seeing GDP statistics being high because it's driven by CapEx. Let's start to see AI being adopted by the rest of the business world, you know, corporates that are not technology focused. And then we start to see what are they doing with labor to get a sense of, are we seeing it in productivity? You know, I am a long-term AI productivity bull. I just think that might be 5 years down the road, and it could take us a while to figure out how, you know, do we first actually invest a lot more in order for us to use that AI before we start to say, here are the productivity gains. So I think we're a long ways from there.
Well, more to come on back, because I do think we're also, you know, we're watching this spend. There's a lot of excitement. It does feel like it's going to take some time. Is there any signs where you see that AI trade a bit stretched? Some questions out there, especially where we have Cerebras, right, coming out with their IPO. Might they challenge, you know, NVIDIA? Like, I just feel like it's early going that maybe some of the leaders today might not be the leaders of tomorrow.
I mean, absolutely, that's the case in my view. It's very hard. We're in a very long race. So when we're looking at a marathon, we don't know who the winner is at the second mile or the third mile. We really have to get closer to the end game. And I think that's absolutely right, that when we look at AI deployment, we're very much in the early stages of that. Right now, I think a lot of companies have employed some measure of AI work to help improve maybe some PowerPoints and the like, maybe some research processes, but we're not really seeing it embedded in the workflows. And when we think about the AI trade, it has broadened out over the past year. So, you know, we've started to include memory chips, obviously, in the AI trade. But the real broadening out is when it extends to the broadest of the economy. And I think we're still a ways off from that.
Just got about 50 seconds, so 25 to each. Marta, first, we've got NVIDIA, we've got a G7 meeting of finance ministers. What are you watching out for next week?
Well, I can't help but keep my eye on NVIDIA and just see what this looks like as we get that final mark on the AI trade.
Yeah, I agree. Sentiment will definitely be affected. What about for you, Priya?
Retail earnings. I want to see what are companies doing. Are they able to price, you know, extend those price increases? Are they eating it in the margins? Because here's the thing, the labor market is not allowing consumers to pay a lot more. Wages are actually decelerating while we know inflation's picking up. So is it a margin story or is it actually inflation picking up?
All right, good stuff. Can you guys just come back every Friday? Please, please.
Absolutely.
Okay, well, we would love it. Really appreciate it. Of course, Priya Misra joining us right here. She's portfolio manager of the JP Morgan Core Plus Bond ETF. Marta Norton, chief investment strategist over at Empower out there in Chicago. We're coming back in just a moment.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all declining. Stocks are falling as inflation jitters lift bond yields. Right now we got the 10-year 4.58%. S&P pulling back from a record yesterday, holding above 7,500. Right now 74.41 on the S&P, down 60. Drop there of 0.8%. Dow Industrials down 462 on the Dow, a decline of 0.9%. NASDAQ and the NASDAQ 100 index also retreating from records. They are both currently lower by 0.9%. The Bloomberg Mag 7 index is down 0.6%. All of this with the VIX just above 18. The stocks, by the way, the Philadelphia Semiconductor Stock Index trading lower by 2.6%. The 10-year 4.58% now, with the 2-year 4.07%, and the 30-year at 5.12%. Gold down 2%, $45.56 the ounce. West Texas Intermediate crude up by 4.1% right now. WTI 105.34 a barrel. Barrel of Brent 109.33, up now by 3.4%. A day after its 68% surge in its first day of trading, Cerebras Systems giving back some of its gains yesterday. Right now, that stock is lower by 4%. Round 2 of the PGA Championship underway in Newtown, Pennsylvania. At last check, Aldrich Palgiter of South Africa sits atop the leaderboard at 4 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, gotcha, Charlie. Well, it is one of the largest market cap companies. In fact, I think it's the 5th largest. We're talking about Amazon, founded by Jeff Bezos. He's still chair. It's now run by CEO Andy Jassy. He's now 5 years.
I can't believe that.
Since he took over as the chief executive officer.
It seems like just yesterday.
It does. Oh, how time flies.
It really does.
Hey, and what's interesting is Jassy was, as Brad Stone writes in the cover story of Bloomberg Business Week, he was once Jeff Bezos' deputy and the head of Amazon's cloud computing arm, massive computing arm. 5 years into his tenure as CEO, he's killing projects, cutting staff, pleasing Wall Street, and steering the everything store through its greatest challenge yet.
His impact and role at Amazon. It's the cover story of the new issue of Bloomberg Business Week. It's also the Bloomberg Big Take. For more, let's head to the Bloomberg News San Francisco Bureau. It's where we find Brad Stone. He's the editor of Bloomberg Business Week magazine. You can read it online at Bloomberg.com, on the Bloomberg, and pick up on newsstands. Brad, also the author of several books, too, about Amazon, including The Everything Store. Brad, so much coverage when it comes to Amazon, especially of the post-Bezos era. The thing that I want to know is why Andy Jassy still drives himself to work every day in a 1998 Jeep Cherokee. Like, seriously.
Is the Maserati at home?
I mean, but also, like, even, I don't know, like, I thought CEOs these days, from a security perspective, like, everything was so tight and secure, and, like, I know Bezos had a minivan for years, too, but anyway.
Yeah.
That's
I
something
thought that was interesting. They've got these corporate values that they promote internally and externally, and one of them is frugality. The idea that you're saving every dollar for the customer. Walmart does the same thing, and I think the way Andy's such a Amazonian. It's where he's worked his whole life. He embodies the principles, and so I think it shows up in his personal choices, which include, he wore to the Business Week photo shoot what he called his 8-minute jacket, and it's a sport coat he literally bought in 8 minutes in a scramble for a customer meeting once, and so it's just the kind of guy he is.
All right, so you know this company like no other, and Tim mentioned you wrote The Everything Store, you wrote Amazon Unbound. Why is now a really good time to be writing about Andy Jassy?
Yeah. I mean, for tech companies right now, there is only one thing that matters, and that is where are they in this great AI race? And do they have the leading models? Do they have the right partners? What kind of money are they spending on data centers? And this is what investors are watching and with bated breath because the numbers are so large. And Amazon got a slow start. They had an opportunity to invest in Anthropic early, which they didn't. Some of their early models that they developed in-house haven't really been considered state-of-the-art. But I think it's become apparent over the past few months, maybe the past year, that Amazon's catching up in a number of ways. One, they've gone and Andy has formed partnerships with Anthropic, with OpenAI. OpenAI renegotiated its Microsoft deal essentially to avoid the exclusivity contract, so ChatGPT models could be on AWS, Amazon Web Services. Amazon redid Alexa. They call it Alexa Plus now. And they're making these chips, these Trainium chips that are in some ways competing with NVIDIA. And Amazon's offering is very Amazon-like. It's come to Amazon, you'll have a sort of menu of all the models, and you'll do it more cost effectively than you might elsewhere. And frankly, like AWS is now growing at a pace that it hasn't grown in a couple of years. Like the market has sort of turned, and so it does happen to be 5 years for Andy Jassy, but you can make an argument now that Amazon has caught up, and it is one of the names that is leading us, whether we like it or not, into this new era.
As you write in the piece, Amazon invented this category with AWS and cloud computing. Andy Jassy and Jeff Bezos sort of conceived this together years ago, and he was the head of AWS before he became CEO of Amazon. How did what he saw happening at AWS as a result of AI inform the way that he makes decisions about AI at Amazon?
Mm-hmm. Well, I mean, I think they have a very good sense for what customers want, what the demand signals are, and no surprise, I see this in my own kind of personal habits. I'm experimenting more with AI. I think everyone kind of feels it, and what Amazon saw probably earlier than most is that customer and corporate demand for AI services was maybe even higher than folks even anticipated. And so they're spending $200 billion in CapEx this year alone building data centers. We visited one of them in Mississippi. It's the lead to the piece outside Jackson, Mississippi. These massive buildings that are rising up from the clay. And basically, one thing that Amazon can do better than almost everyone, because they are so early to the cloud computing movement, is stand up these data centers, and they're doing them all across the country. They're putting their own chips in them, and they're promising that capacity to companies like Anthropic and OpenAI, who can't even themselves get enough compute. So it does seem to me that Amazon's pretty well positioned right now, particularly for the bull cases and AI adoption.
So does he have his LA-raised girlfriend, now wife, to thank for him being CEO of Amazon?
Right. So I don't think so. I mean, we talk about Andy Jassy's history, and it was almost a peculiar set of circumstances that got him to Seattle in the first place. You're right that his wife wanted them to spend a couple of years earlier in their careers on the West Coast, and maybe Seattle was a bit of a compromise. But he went early to Amazon. He joined in 1998. It was just a bookseller. Andy Jassy pioneered the at the time it was CDs, so the music category on Amazon. He was early on the marketing team, and then he was the first shadow or sort of technical advisor to Jeff Bezos, which is basically the person that's going to follow the CEO around. And he became a kind of disciple. And then when they conceived Amazon Web Services together, he broke off and ran it with a lot of autonomy for 15 years. So it's this extraordinary story, probably lots of good fortune that he was there at the beginning of this momentous internet revolution.
But it wasn't always totally without speed bumps. You point out in the piece that, Bezos admonished him at one point publicly in a meeting, and, he basically said, "Why should I ever listen to you about anything ever again if you get these numbers wrong?"
Ouch.
I mean, it probably wasn't personal. It was the sort of comment that, Jeff demanded excellence in meetings and had a brusque way, particularly early on, of conveying that. But, Jassy tells that story to illustrate to young people that, this resonated with me, that even if, what are you concerned about when you go into big meetings with your superiors? Well, you're concerned that, you'll look foolish. And he said that there were instances when that happened, and the next day everything was fine, people moved on, and so he didn't end up worrying about that anymore, and it gave him new confidence.
I am curious too about the relationship between Jassy and Jeff Bezos, and I think increasingly we see people like Jeff Bezos or Tim Cook of Apple, like they are the ones who are dealing with Washington and all of those issues, and then there are other folks like really running the company. But talk to us about, I mean, is Jassy involved in the politics and so on and so forth? Because Amazon, of course, as you know, has its fans and it has its foes, like of people who are really critical of the company.
Yeah, I mean, I think Andy does have his own relationship, certainly with the president and the White House. But I want to make one distinction, which I thought about a little bit and wrote about in the Business Week Daily newsletter this morning, which is we are surrounded by leaders in corporations and even political movements who are kind of, inextricably linked to their organizations. And so you can't imagine, say, Tesla without Elon Musk or the MAGA movement without Trump. And, Bezos really did architect an orderly and model CEO transition. And he did it 5 years ago. He's kind of stepped out of the way. He's executive chairman. He's very involved as an executive chairman, definitely probably helping Jassy to manage Washington, introducing and talking about evangelizing for new technologies. But, you have to give them credit, in this day and age when the key man risk, to use the SEC term, is so high at companies. Like he gave Jassy the reins and he really stepped out of the way. And I think it's worth saying at a time when, you've got Palantir or Tesla or SpaceX going public, where you can't even imagine what happens to the market value of one of these companies if the key guy, the key figure is no longer there.
And Brad, you make the point in the piece too that early on in the transition, he had to make some really tough choices as a result of some overhiring during the pandemic, a somewhat bloated corporate workforce that I think many would argue. How was he seen internally and externally as he was doing that, and what exactly did he have to do?
Yeah, probably not, very, very popular. He's laid off a good percentage of the company because of, as you say, there was overhiring during the pandemic. Andy also felt like Amazon was too bureaucratic. He wanted to remove layers. And then, of course, somewhat spoken, somewhat unspoken, you've got AI making the company more efficient. And, when you take opportunity away from people or you reduce the ability to promote, or people feel like promotions are closed off, it creates conflict and this is not unique to Amazon. This is probably across business, certainly across Silicon Valley right now. So he made some unpopular choices. He also killed some prominent projects like the Go store, that just walk out technology in supermarkets, Amazon Fresh grocery stores, different robot delivery, drone, delivery robot projects. But he's also placed bets elsewhere, like the satellites. They're creating a satellite internet service, and they're going to be opening a new supermarket, new superstore in Chicago. Right. So, I think there's a lot of people who have a lot of respect for him, and like with a lot of companies, it's not unanimous.
Great deep dive. As you know, this company like no other. Brad Stone, editor of Bloomberg Business Week magazine. Brad, thank you. His story, it is the cover. Find it on the Bloomberg and online at Bloomberg.com. He's, of course, the author of many books, including 2 on Amazon. Tim and I back in a moment.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red right now. The S&P 500 index pulling back from yesterday's record, now trading below 7,500, 74.34 where we stand, down 66 for the S&P. That is a drop right now of 0.9%. Stocks are falling as inflation jitters lift bond yields. The Dow down 480, back below 50,000, down 1%. NASDAQ and the NASDAQ 100 index also retreating from records. They too are down by 1%. The VIX just above 18 with a 10-year at 4.59%. We do have the 2-year currently yielding 4.07% and the 30-year 5.12%. Gold, $45.57 the ounce, down now by 2%. West Texas Intermediate Crude, $105.55 a barrel. WTI now up by 4.3%. Ford shares down almost 7%. Its blistering rally screeched to a halt today as a broader market sell-off cooled enthusiasm over the automaker's potential to benefit from the boom in energy demand for artificial intelligence. This slump, by the way, follows a 21% two-day rally for Ford. Again, Ford shares right now down by roughly 7%. Round 2 of the PGA Championships underway in Newtown, Pennsylvania. At last check, three-way tie at the top. Alex Smalley of the U.S., Aldrich Polgieter of South Africa, and Australia's Min Woo Lee, all 5 under par. Recapping, S&P 500 index down 69. That is a drop right now of 0.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. So about a year ago, we were kind of coming off President Trump's Liberation Day, higher or uncertain tariff environment. We were kind of up in the air about a lot of things. And at the time, we were forecasting, put out a story at Bloomberg just ahead of Memorial Day, that the price of a cookout was going up.
Beef prices were an issue then, too.
Yes,
yeah.
right? And that was, well, the story got into a lot of the issues were domestic ones that were impacting the prices of things. And then I think about this year, Tim, what's going on?
Okay, U.S. war in Iran, higher energy prices, higher gas prices, inflation prints just this week reminding us that inflation is outpacing wage growth. Not so good.
Not so great. So what does it mean for our summer picnics as we get ready? Please, to kick off summer. It's just around the corner.
It was felt like 45 this morning. That was the feel-like temperature. 51 degrees in New York.
I still had layers. I hear it's going to be like 80 degrees on Sunday.
Yep.
For more, let's head to Stu Leonard's Wines and Spirit store. It is in Norwalk, Connecticut. That's where we find Blake Leonard. She's the president of Stu Leonard's Wines and Spirits. She's also part of the next generation that will take over running the store founded by her grandfather. She will take the reins as president along with a cousin from her dad, Stu Leonard Jr., keeping it in the family. I love that. You are a certified sommelier from the Culinary Institute in Napa. You've worked for many other families, too, in the wine business, including the well-known Gallows. Blake, welcome. How are you?
Hey, thank you so much for having me today. And, since it's Friday, I wanted to start off just cheersing you with an Aperol Spritz right here.
Oh, my God.
I feel like she's seen Stu Leonard do this a few times on our show. Learn from the best.
I love you, but I do resent that there wasn't one sent to us. That's all I'm going to say.
I know.
I'm just going to say.
I think the interstate liquor laws, it's a big issue. Truly.
That is true.
Yeah.
I don't know.
Okay. Maybe we can pick some up.
We're right here in spritz season now, so I'm excited.
Hey, talk to us though about the environment before we get into the summer season, what people are interested in terms of wines and spirits. But talk to us about the consumer, what you guys are seeing.
Yeah, well, I was the other day just visiting one of our wine suppliers, and he was saying that it cost him over $2,000 more just to get a container of wine here into the U.S. right now. And that's, just one part of the whole transportation piece, for getting wine into our wine stores.
Wow. So you couple that with actually selling the wine in a time when we're hearing more and more about young people not drinking as much, this idea of dry January actually lasting the entire year. What does that mean for the overall business?
Well, you also see customers here on the store, and I was just talking to a lady the other day who was just talking about how much more it costs her to fill up her huge, van that she drives with all her kids in the back. So, everyone here on the store floor is definitely feeling it. I think one good thing, and I was hearing all the stock prices before, but about being a family business is that we can, work with our suppliers and hold those costs. in a lot of instances, we'll split, that transportation cost with our suppliers so we can keep prices here on our store floor family friendly.
And you guys have not yet seen price increases, my understanding is, due to fuel, correct?
Yes, we have not. Here in the wine business, as you started off with the tariffs, that was big last year. And for this year, really no one wants to raise the price of wine right now. And I always look, this is a great new rosé that just came in. It's a new fresh vintage, but we're retailing this under $15. And if I were to go and sell it over $15, what happens to sales is they go down. So you really have to be price sensitive with those barriers there. And we look at it as hopefully a temporary thing and, trying to look at the longer picture.
Is the idea on it with a product like that, and if I'm thinking about margins correctly, that you take a little bit of a hit there, but you get people in the store to buy that, and then they buy other things that don't have that have bigger margins?
Yes, well, and one of the things that I love doing is I'm like a little, wine detective out there, but I love going every year. We go to a wine show either in Paris or in Italy, and we get to meet firsthand with a lot of these multi-generational families who are making unbelievable wine, and we get to bring them back and sell them in our stores. And really, they're wines that over-deliver for the price, and we often say they taste like they're twice the price. So really trying to bring not only the price point, but also the story back for our customers, because we think that now more than ever, that's what customers want to hear about.
I'm always amazed, like when you're over in Europe or Paris and you just order, I don't know, just a little wine, nothing big, and it's just great. Like, I feel like over the years, and this industry, like, it just feels like, we keep getting told you don't have to spend a lot of money to get a great bottle of wine.
Yeah, no, you don't. And right here, this is a Corsican rosé that I have, and this is also one of our best sellers. It's a Provence rosé, under $15. A female winemaker. She won the top 100 winemaker. One of the top 100 winemakers in the world. She was awarded a couple years ago. So there's great value out there. You do have to, spend time looking for it, but that's what we really strive to do for our customers here on the store floor, as well as educate them.
So let's talk a little bit about the next generation of Stu Leonard's and sort of the timeline for you and your cousin taking over. And also, I'm curious about, with a background in wine and spirits, what you can then do in your approach to the grocery business, a historically low-margin business, a very challenging business that, you have to work with the ups and downs of the economy and the macroeconomic environment. What is your plan for Stu Leonard's when you take it over?
Yesterday, all of my cousins and my dad, it was work, but we got to spend the day all together in the city listening to other family businesses talk. And it was a really awesome day. But one of the biggest takeaways I had listening to Jim Perdue speak, and we got to meet him afterwards, and hearing Enterprise as well and Panda Express, they all stick to their core values. So no matter what happens is sticking to their core values. And when I look back at our business today, I grew up drinking milk from Stu's, and my kids today, they're also drinking milk from Stu's, but it's organic. And so, if we had 20 years ago tried selling organic milk, it would have been way too expensive to really, for our customers at that time, but we've evolved. And so it's kind of just a slow evolution over time. And that's, one of the things that always sticks out to me is that my kids are drinking organic whole milk now.
Blake, I just want to mention, we have a headline crossing from Reuters. SpaceX picks the NASDAQ as its listing venue for its massive upcoming IPO. On that, do you guys ever think about going public?
We've definitely had offers, and we have, offers to either go into partnerships or to be purchased. And it's always something we think about, because in my generation, it went from 4 in my dad's generation now to over 13 of us. And now in the 4th generation, there's over 22 great grandkids. So it's definitely something we always think about, but really what we want, and my cousins and I all just met recently to talk about this, is we really want to keep this a family business and want to continue, the decisions we get to make every day are really, ones that we don't have to rely on anyone else for that. So
listen, so fun to catch up with you. Stay in touch.
Thank you very much.
Especially as we kick off the summer season. Blake Leonard, she's the president of Stu Leonard's Wines and Spirits, joining us out there in Connecticut.
Coming up next, stocks on the move. Once again, a redhead crossing the Bloomberg terminal. According to Reuters, SpaceX picks NASDAQ as its listing venue.